And we're back. Monday, June 30th is the last day of June you're going to get
All right.
for another 11 months.
Well, that just added a ton of pressure. But
Yeah.
good thing I'm feeling up for it. Feeling good today.
We've
How are you?
passed we did this like 2 weeks ago, I think, maybe like a week and a half. The solstice, we're already past it.
Oh, yeah, the 21st, the longest day of summer gone behind us.
Okay.
But we still got like 8 p.m. sunsets, so nothing to be
It's pretty sick.
worried about.
I caught a flight yesterday from San Francisco it left at 6.
In the morning?
Yeah. I left my brother's apartment at 4:30.
No thanks.
Sun wasn't there quite yet. Brutal. I don't
Sorry
know,
that you're already feeling this whole...
I don't know why I do this to myself, but yeah. So
bad.
how many of the days of the year does Frank wake up when it's pitch black out still? And how bad is it for your health?
Can't be good. Can't be good.
It's just not how we were designed, dog.
No, I have one of those like timer lights. That's a godsend.
Okay.
But then, yeah, it's still dark outside. How was your weekend, San Francisco? Where's your disco?
It was all time. San
Weddings.
Francisco.
You love
What's your
weddings.
disco?
It's a song.
Okay. I love weddings.
What's your favorite part?
I love love.
Getting people extravagant gifts or traveling? Which one's your favorite?
I don't get people any gifts.
Okay.
Actually, this is my brother. I give people money. I am trying to incorporate every time I see the list of like, oh, we want, these like tumblers or whatever the hell these people want, which is like wild to me. It's just like, here's my Amazon wish list,
Go
daddy. I'm always looking for the QR code to just give them some Bitcoin because I got all this crypto and it's just like, I have more crypto than cash, my
Please
friend. Can
let
I
me
please
help
just give you that instead? Not there yet. We're getting there. Not there yet. I gave them money, which in this instance, honestly, I appreciated this because, like, I'm going to San Francisco, and it's like, all right, of course I haven't bought a card or gone to an ATM, which still exists, yet.
Sure.
And I'm already in San Francisco now. I'm more worried about, like, okay, what hikes can I get in? What sushi can I get in before I have to go to this wedding? And so I'm not worried about getting the cash at all. I look up the list of things. I'm like, I'll just buy one of these dumb things like an iron or whatever they want. and the first thing there, honeymoon fund, click that link, and it's literally just
Load the boat.
just send a Venmo to Matt, the guy who's getting married. And I'm like, awesome.
It's all going to the same place.
Because I was literally in my head, I'm like, can I just Venmo him money
Right.
and just be like,
Is that crass?
happy marriage, like whatever? Or yeah, is this like one of those things where it's like,
Faux pas.
no, like it's very Goodfellas style. We've got a big sack of envelopes and you have to bring an envelope and we're all going to open them at some point and be like, oh, there's Frank's name. Like, wow, what a nice guy. Wasn't
Easy.
that. So that was easy. I stayed with my brother to both visit and conserve money. If you're going to a
for
city
one.
where one of your siblings lives, just stay with them. It's cheaper that way, and they think that you're being nice, but you're really just using them. He told me that when he has to travel for a wedding, he doesn't bring a gift, which is chaotic. And now he's getting married next year, and I was like, you understand how bad you're gonna feel when all these people give you gifts.
Oh,
and
like he just doesn't even give them a...
not a cent, nothing.
But, I mean, sounds like a fun guy to have at your wedding. Might be worth it.
He will absolutely drink a lot of your booze and eat your food.
Perfect. Back in the plus column.
And might either offend or
Oh, God.
Or make like a fun personality to the olds at the wedding, to like your parents and whatever, depending on your depending on your general vibe and acceptance of homosexuality. But he won't bring a gift. Wild to me. Could never do it. But he's very confident. I feel like if you're just confident in it,
Unfortunately, you get away with it.
there's no truth.
But,
like
yeah.
his friends are like, oh yeah, that's like just Jim, and they're like totally
Aw,
okay
man.
with it. And it's like,
No.
how do I pull this off?
Well, or I hope he's inviting a ton of people who he hasn't gone to their weddings yet because he might get no gifts.
No, no, they're all married.
He's already married.
He is getting married.
Oh.
And he has not brought them gifts in the past.
So he might just get no gifts.
And they're normal people. No, they will bring him a gift, and he'll have to feel like, I mean, you got to learn one way or the other.
This is true.
You know, but the wedding was good. Big Sur, California. I don't know if you ever heard of it.
It sounds pretty glorious. I think it's been one of my Windows screensavers.
It's pretty sweet. It looks beautiful. The drive is very beautiful. My only thing with Big Sur is like the hikes.
Not it.
Mid.
Just because it's the same cliff you're walking.
It's like
along?
one of those places. I went to Arches last year, maybe the year before.
No, I think last year. Yeah.
Yeah, last spring.
Yeah.
With Callie.
Utah.
Great vacation. Went to a bunch of national parks. Arches though, beautiful, and of course you see Indiana Jones and the whatever one where.
The Lost Arch.
Joaquin Phoenix's brother is the Lost Arch, Raiders of the Lost Arch, and River Phoenix he's Indy, and he's like running around, and they're at like one of the big arches in Arches National Park. It looks beautiful, but all the hikes are like, oh, here's like a 2 mile out and back where you go see a beautiful arch, and then you come back, and it's
Thor's
like
hammer
and like
back.
and it's basically Disney World, like. No offense to anybody's physicality or ability to hike or do whatever, but there's like a lot of people where it's like, man, you probably shouldn't be hiking. Maybe like a couple rounds around the block is what you should be doing. It's not true. I'm looking for like 7 to 12 miles, a lot of elevation, like maybe like a couple thousand feet elevation.
Have to clip in once in a while.
Yeah, a hike has to have at least 1 or 2 moments where it's like, oh man, if I mess this up, I'm tumbling down the mountain.
It would hurt
and not coming back. And none of those really in Arches.
Or Big Sur.
Or Big Sur. Again, very beautiful. Like it's like, oh, you hike like half a mile, and then you look out and there's like these crazy rocks that are coming out of the ocean. The waves are smashing them. And it's like, that's beautiful, but like, I don't feel like I've done anything. Like I want my body to feel like it's close to expiring. But
well,
yeah,
I'm looking forward to your Everest climb. It's only going there, right?
Maybe. I don't know.
That'd be pretty cool.
But yeah, it was pretty sick. California. I also went to Point Reyes. Did some hiking in there. Elk.
Live elk. That's pretty cool.
Very beautiful.
Redwoods?
No.
Oh.
Jim was like, my brother was like, oh, let's try Point Reyes. And I was like, okay, but I really would prefer kind of like the 50 different hikes that we could do in, redwood forest. It was cool. It's apparently like thousands and probably millions, I don't know, years ago. It's like a slab of earth that was attached to Los Angeles, I think, and over millions of years. I don't know how the planet necessarily time frames, like it doesn't even matter.
Yeah,
also, if someone's like, actually, it was 400,000 years, it's like,
okay,
sweet dude. Jesus was here like 2,000 years ago. Like it's not humanity's not that long, but the Earth, has over however many years slid up to now San Francisco. And so, like, it's just weird because you cross into this little area, and, like, it is different landscape than San Francisco.
You see that little guy?
We saw a coyote. Is that a coyote? What is that guy?
Oh, these are your guys.
Yeah, those are the dudes.
The Tool elk.
It's funny that the dudes hung out with dudes, and the women hung out with women. It was like...
classic.
Yeah.
Tale as old as 400,000 years ago.
8th grade dance elk.
Okay, so this is just a slightly more interesting coastline?
Yeah, again, like, I'm not one for... Yeah, we went through that thing, whatever that ridge is. No, not that. I don't care about it.
Oh, that's a little steep.
Some man-made stuff. Next to it, that stuff. Like, hiked over that, like, area. It was cool, man. But, yeah, I'm not, like, a big site guy. I'm a big, like... I go to Barry's, dog. Like, right. I'm trying to push it. But yeah, it was a good weekend. Always good to get to California, see some mountains.
Very
And then
nice.
get back here where it's just like, if you get like onto a 4-story building, you can see like Evanston and O'Hare and like
So sick.
everything. Because this is the flattest place on earth.
Yep.
What's up with you, dude? Did you do anything sick?
Oh, legendary. I went to a concert. Went to a concert. Got
James
my hair.
Blake.
James Blake was wild. Disclosure killed.
James Blake DJ set.
Yeah, it was experimental, but
Nice.
pretty good. And then got my hair cut. Went to bottomless brunch. Then went to all you can eat sushi. And then went
Dude.
to F1 the movie. So yeah,
Oh, nice. Rank them.
Perfect. Concert 1.
Okay.
Sushi 2, F1 the movie 3, bottomless mimosas 4.
Yeah, that's good.
At the time, maybe I would have said 1, but
This is the best. 30 minutes later. I don't know if that champagne was very good.
no, yeah, we looked it up. They got us.
F1, is it worth seeing? The
I think
trailer
so.
was very loud when I
It's-
saw Mission Impossible.
Well, that's
so.
the cool part about it is it's the cinematography very well done.
Is it better than Ford versus Ferrari?
Yes,
Okay. Wow, that was a pretty good movie.
I mean Brad Pitt is just he's still got it.
He's great.
He could just talk about cars for 2 hours and I'd be strapped in.
When he snaps and he points to Jonah Hill, and then Jonah Hill is just like, he gets on base. It's like, this is the best. I could watch him snap at
So, yeah.
scouts all day.
I'd recommend, and your boy Tom Cruise is at the premiere, so
Oh,
stamp of approval. That's all
Okay.
you need.
all right.
yeah.
Well, good stuff, man.
Enough about us.
Let's
we
get into
are-
it.
We are back, and Forex markets rarely sleep, but they were sleeping over the weekend.
Okay.
And they're still a little groggy if we can hop into the platform. Big movers of the morning. We've got my favorite, U.S. dollar, Swiss franc, still getting hit.
Bouncing around.
Down to the tune of almost 0.25%. We've got USD JPY also moving lower. US dollar weakness continues. Man, nothing can save us. It appears that way.
We're gonna get a bounce back at some point.
This is
It feels
Canadian
like
dollars, the one
It feels
where
like it could be this week. Man, that's a pretty wild move there. On,
we had some buzzer beating price action here to end the week on some tariff related headlines. Canada no deals. Trump so mad. They tried to tax.
Trump's mad at Canada.
They tried to tax our tech. We said no. And now I think deals are back on the table. So short-lived,
Okay.
but you got some unique prices if you wanted to get short down here. Got a much
We've
better.
started to see some range, even though, yeah, like U.S. dollar, those prices that you just showed for U.S. dollar are not good. We've started to see some back and forth
Mm-hmm.
at these dollar lows. And yeah, CAD here, you got down to 136, up to 138 for literally, I don't even know if we touched it there early part of last week. Right back down below 137, getting close to 136 again, middle part of last week, and then a pretty nice bounce. So you're getting some back and forth at these lows. And even, I mean, as we were talking there, I was looking at the prices, and it's even looking like this morning that dollar yen and dollar Swiss franc, it looks like they were lower just a second ago, a couple minutes ago. And so it'll be interesting to see if they start to bounce around as well, because these are closer to the lows for the last, like week or so of trading. As you can see, a different hourly chart than dollar CAD in here. Now, granted, 145 was actually the high in this market for the last couple of months until we ripped up to 147, 148. So we'll see. Dollar pretty firm in this yen market again. It seemed like we were threatening 140 a couple of times for that April-May trade, and now since they got up to 147 plus last week, it'll be interesting to see if they can take this market down below 145. But the Swiss franc of it all, that is obviously one of the weakest dollar markets in here. And yeah, actually no bounce in this market whatsoever. This is the daily chart. Yeah, we're trading below 80, and man, yeah, they haven't since we broke this, going back to, it looks like last Thursday, no bounces.
Zero. But I feel like we've been talking about the same story for a couple weeks here, so why don't we hop over to some slides, because we have a segment here that could be more actionable for everyone involved, as opposed to just looking at some sliding charts. Today we've got, begs the question, when is the best time to get long the US dollar? Because, in your words, US dollar getting smoked right now. Here we're looking at the daily chart year to date in this euro dollar market, and from the lows we are up over 13%. The euro is against the dollar. That similar trend across the board here, especially European currencies, but across all major currencies, US dollar not doing so hot. And over the long term, as we know, a lot of FX markets tend to be more mean reverting than any sort of positive or negative drift over time. So that's the background here as to why we're looking into it. And what did we do to look into it? We looked at the past 6 years of price data, looked at 30-day trading periods, and we analyzed the major pairs, euro, pound, yen, Australian dollar, Canadian dollar, Swiss franc, and New Zealand dollar. So we looked at all of those popular US dollar pairs, and we came to some interesting conclusions looking at the average returns over those time periods. So looking at the past 30 days and what the next 30 days would look like. And we filtered the data to get some interesting results here after down moves, looking at the largest underperformer, and tried to find some historical trends here.
Before getting into the data, I do want to highlight that, of course, this looks like a pretty straightforward study, right? US dollars getting smoked. Why don't we look at not only a handful of ways that you could, if you're a contrarian, get long, if you're a trend follower, get short, in all of these pairs, but also let's look at different environments historically for which one you might get long, when you might get long, whatever. Looks pretty straightforward, but you have to highlight the context of this is not your equity asset study, which is, of course, like everybody likes to joke about, like, oh, buy the dip, buy the dip, buy the dip. But it's not a joke. It's a sound strategy. If you look at pretty much any amount of data going back the last 100 years in the Dow,
and
in
push
whatever equity market, because guess what? It tends to go up and to the right. And so if the stock market's getting hammered, it's probably a good buy. In the long term, in the short term, you go back to 2008, 2009. Obviously, that was a down market for several months, and it would have taken a couple of years to get back to scratch if you had bought at those highs or bought the first dip, whatever. You get the picture. This is different in so many ways because, one, there isn't upward drift in these markets. If you were to look at the average 30-day move in the S&P, in the NASDAQ, in the Dow, whatever, you're going to see that be positive for pretty much any set of time because all those equity indexes are right now close to, if not at all-time highs. The market goes up and to the right, and so the average 30-day time window, 5-day time window, 60-day time window, 90-day, it doesn't matter, is going to be pretty positive. Here, you're going to expect that to be pretty unchanged because put all the data, go to tastylive's platform and put all the data in your chart for Eurodollar, 30 years, maybe it's more than 30 years worth of data, and you're not going to see like, oh man, back in the 90s, it was trading, 120, and now it's trading 250. It's like, it doesn't drift one way or the other. But also with that, you get mean reversion qualities. And so I'm interested to see which currencies, do all currencies, all these different pairs, or which ones, in what environments do we see that mean reversion the most, which is to say, if the market gets hammered, does it bounce back very quickly? Which pairs does it tend to bounce back quickly? Which pairs am I looking for, a big down move or whatever kind of environment, given those mean reversion qualities. Because this is, at the end of the day, yeah, we're looking at long U.S. dollar strategies in a down U.S. dollar market, but it is kind of an exercise in testing mean reversion in Forex.
100%. So first, just want to give you the backdrop of all environments here. So across all the data we collected over the past 6 years, a lot of unch, what a long U.S. dollar position would yield 30 days later. So a lot of unch across the board. U.S. dollar, Japanese yen, the one real outperformer in terms of positive returns. Now, you could even contextualize this further and say 6 years of data isn't enough for a market like that trended in the U.S. dollar.
Anybody
direction.
out there saying that maybe has never traded in their life.
All right.
Just because, like, the person who's like, well, that's not enough data, or like, I didn't get the exact data that I wanted, is just like, dude, like,
it's all
good luck then.
It's
like,
all history.
Like 6 years, it was 7 years enough? Is 8 years? And it's like, well, actually, currencies have been trading for like hundreds of years, and it's like, I don't know how much data you want. 6 is pretty good, especially for 30-day time windows. A lot, thousands and thousands of data points.
Agreed. And so we're looking at Japanese yen. We're also looking at the Swiss franc, which is the biggest down mover.
And that makes sense. And keep in mind that all these numbers that we're looking at take the long U.S. dollar side.
Correct.
And so that positive 0.08% in Aussie is if you had shorted that Aussie every 30 days for the last 6 years, what the average performance would have been. And of course, if you look at that chart for the last 6 years and scroll out, you're going to see a down Aussie market over that long term, in the same way you're going to see dollar yen over the last 6 years moving higher. Now, what's interesting is obviously that dollar yen, if you were to look the last 6 years, where it was 6 years ago to date until now, it's drastically higher. But the 30-day performance, obviously you get a lot of down dollar yen markets, up dollar yen markets. But same thing with dollar Swiss franc. Dollar Swiss franc right now, lowest it's been the last 10 years plus. And so, of course, the average performance is going to be slightly negative. But yeah, on the whole, you're seeing a lot of unches. But the best U.S. dollar performance has been against those commodity currencies and against the yen.
But what's more interesting, looking at long U.S. dollar after a down move, so when the U.S. dollar is down over the past 30 days, what an average return for a long U.S. dollar position would be. This is interesting to me because every trend we're seeing from all environments, we're seeing just a magnified version of that. So that's quite interesting. Positions against the yen and New Zealand dollar. Yen the same as it was across all environments, but New Zealand dollar double the positive returns there. And we're seeing those European currencies, perhaps can we say longer trends in those markets, because you're seeing magnified losses there. And what else do you make of this?
Yeah, it's a couple of things. One, keep in mind, we're just looking, if the last 30 days were negative for U.S. dollar, what's the next 30 days of U.S. dollar performance? And so what you're seeing here is if Aussie or Kiwi or CAD outperform USD in a 30-day time window, the next 30 days, that USD actually, on average, that's some pretty strong performance, 0.17%, 0.25%, 0.15%. Those might seem like small numbers, but like, again, these are a lot of data points averaging out over the last 6 years. That's some edge in there. Now, when you're looking at euro and sterling and Swiss franc, and the fact that, okay, if the last 30 days US dollar is down against euro, it's down against sterling, it's down against Swiss franc, the next 30 days, it has kind of continued that move. Maybe not the best market to buy the dip in USD.
Agreed. But now we're taking a slightly different lens here, looking at buying the underperforming pair. So if you were to take these 7 markets and look at the biggest underperformer from the US dollar perspective, which currency has appreciated the most against the US dollar in the last 30 days, then that's across all environments, not necessarily US dollar being down. We're getting this rightmost column here, and we're seeing some interesting things there. I've also highlighted that right now, if you were to take this data, you would be looking under this filter, you'd be looking at euro dollar.
Gotcha.
Over the past 30 days, down almost 3%.
This starts to get real. First of all, some of those numbers start to get really big. I mean, that when CAD is the outperformer against USD, or when that USD CAD pair is the worst performer of some of these major currency crosses that we're looking at, that type of performance on average is pretty strong. Obviously, you might say we get to this case and it's like, oh man, like, okay, so if pound is the outperformer of the group, then I should just be buying pound. I don't know if maybe, but you start to get to a point here where like some of the data maybe doesn't tell a full story in there, especially that Kiwi thing. Maybe that's like a small sample size thing. That doesn't mean so much to me, but it is interesting to see some of these flip to positive, that euro and that Swiss franc. And especially right now where we're seeing euro and Swiss franc being some of the outperformers of these. Historically, we've seen some mean reversion. And again, it's the same as anyone who's looked at, equity sectors or individual equities in their own right. And you might say, oh, the stock market is up 2%, but like tech is up 10%, or healthcare is up 10%, or whatever, and I'm going to look for some mean reversion. Maybe I'll sell some tech and I'll buy S&Ps against it and look for it to come back here. It's kind of the same here, only the pairs are ingrained in themselves, where it's like, okay, the dollar is down right now, but the euro is really up against the dollar, and so I'll short some euro, long some US dollar. Or, of course, you could short some euro and buy some Aussie, or you could just do the short euro Aussie pair in and of itself. But interesting to see some mean reversion when you're looking at the worst performer against USD.
So there you have it. Key takeaways here. Looking at average returns, you see that the US dollar bounces back the strongest over a 30-day time horizon against the yen and the New Zealand dollar. Those European currencies, weakness tends to continue at least over this 30-day time horizon. We tend to see longer slides there. And then that Canadian dollar, when it is the outperformer of the group, tends to have the strongest US dollar comeback, whereas British pound and New Zealand dollar strength tends to continue for the next 30 days.
Some interesting results.
I agree. More to come on those as we investigate these US dollar markets, and more to come today. We've got Tom and Tony back. So stay tuned. We'll be right back on Tasty Live.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Eddie in Texas, what's up?
I'm trying to determine whether or not I should actually feel experienced enough to grow my account. I've been trading for about a year and a half, done all the homework. I'm not sure if it's just a market that I got lucky in the past 2 months.
Like, how many trades have you made?
This year so far, about 100.
Yeah, so if you've made 100 trades and it's working for you, then that's not luck. No. That's not getting lucky. That's being freaking smart and doing the right thing. Because you took advantage of an opportunity is not getting lucky. You made 100 trades already. Back when we started building this kind of software, an active trader made like 20 trades a year. What used to be 5 years, you've packed it into a few months. I mean, I wouldn't discount anything that you've accomplished so far at all.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Woo! Get tasty, free market. Come on, you know it, can you feel it? We got some things to talk about. Free market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Ah, look who's back. The boomers are back.
The boys are back. The boys are back. The boys are back in town.
Now the boomers are back. What's up, boomers? I missed you guys.
You bet you did.
No, I didn't.
Do you believe her? I don't believe her.
Oh, yeah. Yeah.
Nah, I don't believe you.
Yeah, we're
I don't
back.
believe you.
We're back, bitches.
I knew he was going to say that.
How's your hot girl summer?
It was hot. I will tell you that. It was freaking hot. It was like every day. I don't think there's a cloud in the sky. I think it was 92, 93, 94, whatever. It's hot.
So where did you end up going?
I went to Sardinia.
Ooh, and that's off the coast of Italy?
Yeah, it's an island off the coast of Italy. It's about an hour flight from Milan.
How was it? What do you rate it?
I was there when the Kardashians were there, and Jordan.
Oh, for the Bezos wedding! Oh my God, girl!
Sadnov, tell everybody you went to the wedding. Go ahead, tell everybody. What did you think of her dress? What did you think of the carpeting?
No, I didn't actually even look at it, so I have no idea. But I saw that the Kardashians were in the same town that like the same time I was there, but they were there pre-wedding. It was their wedding.
Oh my God, Chloe's facelift looks amazing.
What do you think of Tom's facelift?
But I will tell you.
What did you do in Sardinia?
Nothing. I mean, nothing other than just lie around in the sun. I mean, there's nothing really. I don't know what else there is to do. But
your wife loves a church. She loves a museum.
We didn't. No museums, no churches on this trip. You
kept her captive?
It's actually not. I don't think it's. I didn't even know if we even made it to any towns. Really, it's just kind of like
you're that much in love.
Yes, we were locked. We locked ourselves in the room and never came out all week. We had our own pool, so I could swim.
That's not the text message. That's not the text message I got. Sushi landed. She sent me a text that says, "He's all yours, big boy." He should be in a good mood, but he's all yours. That's what she said.
We had our own pool.
How is the food?
We had our own pool, so I could swim naked. So just so you know, so you can picture that. The food, my take on Italian food.
Oh boy, here we go.
But wasn't this more Mediterranean? It's more Mediterranean though, right? Than pure.
No.
Oh, okay.
No, it's a little more, maybe a little bit more fish, but for the most part, very Italian. I would not call this like Greek or anything else.
It wasn't Chinese food.
Oh, I have to tell you, just because you brought it up. So the last night when we were in Milan, Dylan, myself, and Rich, we did the show that night. We got done late, and there was a Chinese restaurant right next to our hotel. So I go, you know what? All we've been doing is eating Chinese food. I mean, all we've been doing is eating Italian food. Breakfast, lunch, and dinner. Let's go for some Chinese food. It's right next door. Let's do it. So we went to this Chinese restaurant in Milan. I would say that was quite the adventure.
Was it good?
Chef does not recommend.
Oh no.
What was good about it? I mean, who drew the long straw? Who got to sit next to you?
Oh, I don't think that really
mattered. Power seat.
I think we had like a little lazy Susan. I think we were good.
But I mean, who was next to you though? That's the one, like, that's the power couple right there. Was it my friend Rich or the dark horse Dylan?
You're weirdly invested in this.
Yeah, you're overthinking this thing. What I didn't realize about Milan is Milan's actually. I was there one or two other times, but I always thought it was this massive city. And when this time I realized it's actually a pretty small city. Dylan
says it's the business capital of Europe.
Yeah, Dylan. Oh, Dylan is great. Dylan, first of all, he speaks Italian now, so he's like he acts like he knows what he's doing. I'll give him that.
Yeah, he gets by. That's awesome.
He can get by. He can definitely get by. The first night we were there, he took us to his favorite local. I guess it's like a local Tuscan steakhouse, but it's right in his neighborhood. And so he goes there all the time. So we went there, and it wouldn't make it in Chicago. Let's put it that way. But
oh my God,
you are so bad. Savage, man.
You really are.
We did go We did go to one really fancy restaurant in Milan that has the pasta in a cheese wheel, type thing. And
oh yeah.
And it was great. And that restaurant was probably the best meal we had by far. And the food in Sardinia I wrote about it. My best meal was.
Did you get your affogato with the ice cream and the espresso?
No,
no, he doesn't drink coffee. Remember?
No.
Yeah, but he likes ice cream.
I know.
It's gelato. I'm sorry. It's scusi. It's gelato.
I will say one thing. There's no question, Tony. The food in Sardinia is the most expensive place I've ever been. I think a pizza
more than Iceland. Iceland is expensive.
Oh, I don't know. I've never been to Iceland, but a pizza is $90.
$90 for a pizza?
For a single pie, yeah.
Oh, they saw you coming a mile away.
I don't think so, because it was printed on the menu.
Come with a dancing girl show or something like that? What do you mean?
Nope.
$90.
It was 90 euros.
90 euros.
Or 90 American dollars.
90 euros.
Wow. I thought London was expensive too. I mean, I thought traveling was.
We did have great. I asked Dylan when we were in Milan. I said, Dylan, take me to your favorite pizzeria for lunch, because we were gonna go lunch. We said, let's go. Just take me to your favorite pizzeria. We went. It was great. So we did get a great pizzeria. We went to a great place in Milan for pizza. So I'll give him that. Very much like Spacco Napoli, almost like you couldn't tell the two apart. It was that kind of place.
Wow.
Really
I'm
good.
excited for all of the luxury goods you brought me back from Milan. Can't wait to see my desk tomorrow when I'm in office.
You're going to be really disappointed. But I have to.
You're going to be disappointed 2 times over. I'm not going to lie.
2 times over.
Like a luxury little purse that is so small. Doesn't take up any space, Tom. Come on.
But I'm going to tell you something. I wasn't going to come clean, but I got to come clean. So one of your fans, a really nice guy from Switzerland, gave me something to give to you.
Ooh, is it a bank account?
It's a Swiss bank account.
But I got bad news. It got confiscated at TSA, at whatever, they're not TSA, whatever they use,
Customs?
At security at the airport, because it was over. He bought you remember on air you were talking about how you loved you like sunscreen from Europe. So he bought you one, but it was bigger than the amount you could take in, and they took it away.
Oh, that was so nice.
I'm calling bullshit on this whole thing. Sazonov used the sunscreen, and that's why his skin is glowing the way it is.
You should use sunscreen, though. You should use European sunscreen.
I did buy some.
Oh, that was so nice. So thank you.
We got lots of really nice gifts in Italy. People were incredibly generous.
So you really didn't pack a bag under the plane. You really carried on.
Yeah. The whole way. And yeah.
Yeah, I bet you smelled.
It's
wow.
To be fair, it's pretty casual everywhere. It's pretty casual.
Yeah, but I mean, 2 weeks worth of clothes in a 4x8.
They dress nice in Italy. Italians and Londoners too they dress nicely.
Well,
London, yeah, everybody. I went to the office in London. It was nice. I mean, the district, the area was nice. London, they're a classy group. I gotta give them some props.
Yeah.
What did Vinny think of Europe?
Vinny had a great time. They served him beer and alcohol everywhere we went, so he was happy as can be.
Yeah. They'll serve you. They won't check your
24-year-old Hispanic man.
Yeah,
they won't check anything.
You can drink as a kid there.
Oh yeah. One place asked, "Can he have a beer?" I was like, "Sure, he can have a beer." But everybody else, the flight attendant just handed him a bottle of wine. I mean, it was good. Wow. He had fun. Yeah. He had fun. It was good. No complaints. I loved it.
I rented a boat.
I kept saying "si" instead of "mercy."
Oh my God.
Merci. I was that guy. Totally. My wife was so embarrassed.
The French just want you to speak English. The French don't want you to attempt to speak
French.
French.
They want you to say like buongiorno and,
buongiorno, not in France. Bonjour. Okay.
I said a lot of buongiorno.
I kept messing everything up. So
okay.
We had fun. It was a good time. Good time had by all, Saz.
I did rent a boat, Tony. You would have been proud.
You did.
Yeah.
Just to try to get on the wedding. Is that what it was?
No, just to go around the islands and stuff. So.
And how did you do?
I had to jump in 3 times.
Oh no, you didn't drive the boat though.
No, you can't drive the boat there.
Okay, thank God. Oh my God. Okay.
No, they're too big. And but I jumped in off the back 3 times into the Mediterranean, and each time it took me a while.
Where are your photos of your hot dog legs? I want to see them.
No.
But
no. I have one picture. I have one picture of his hot dog legs he sent me.
I had to
give it to me, Rachel.
Oh.
I want to see Tom in his caftan on the back of a yacht.
Oh, too good, Sadnov. Too good.
They drop you off in like between 10 and 15 feet of water, and I don't really like it.
Well, they're sharks.
I don't think they're sharks, but I don't know.
No, come on.
I don't think
sharks.
So how do you swim? Or did the salt content keep you up?
Not well. That's for sure.
Did Corinne grab you by the neck and like kind of save you and paddle you in?
No. I grabbed one of those like noodles.
One of those noodles? You need the water wings.
Yeah.
Oh my God, Thomas.
I don't want to float out in the middle of the Mediterranean. It's too, you could swim to the beaches, but you can't take the boats into the beaches.
Right. Because the beaches are in, private. Anybody can use it, but you can't get your boat on there.
Right. Yeah.
That makes sense.
Those boats can only go to, I think he said 3.5 meters.
Mm-hmm.
So
how did you guys find trading while you were in Europe? What were some of the issues that you encountered?
Time constraint, the different time zones. Jet lag is for real.
Taylor Swift says jet lag is a choice.
I think she's right. And by the way, that video of her playing where she walked on it at
in Nashville at Tight End University. Let's talk about it, girl.
I watched that like 20 times. That's great.
So did you see her sing Love Story with George Kittle?
I saw it.
It's
Oh
great.
my God! Wait a minute. I didn't see this, but you saw this video, but you didn't see all the flooding in Paris. Like, what does your feed have on it, Sadnov? Is it just like
it obviously has a lot of Taylor Swift?
His algorithm is set to basic.
Did you pick up a Labubu while you were there?
It didn't have any flooding. It didn't have any flooding in Paris. That's for sure. I had no idea.
Did you get a Labubu? Did you get a Labubu? I got a Labubu.
You got one?
You want one, Vanetta?
Yeah, I want a Labubu.
All right, I'll get you a Labubu. You got a Labubu.
Yay! I want to go to Pop Mart and get one and get all the accessories for it.
What is
I'm
a
surprised
boo-boo?
you know what a Labubu is.
I don't even know what it is.
I didn't know it. I didn't know what a Labubu was until I got to Paris and my wife started telling me.
Look at you being all hip. Yeah, there's one in Schaumburg. There's a Pop Mart in Schaumburg, but I'm not going out to Schaumburg. But
there's a little doll that women are putting on all of their purses and stuff like that as like an ornament. I don't know.
Yeah, but the secondary market for Labubus is insane. So
sell it now. I remember when the Beanie Babies were hot too.
Well, I'm glad to have you both back on the show. Do have to give a shout out to Mikey and Nikki and Liz and Jenny. Did a wonderful job along with our research team and our production team. We were trying new things. We were doing the most. So shout out to everyone who worked really hard to make sure things went smoothly. Also, shout out to the crew in London who was very helpful when we were live streaming between there and running the events globally. And so good job.
Yeah, thank all those people for doing their jobs. Good job out of you for doing your job. Vanetta, I will say you went above and beyond with your little horsey that you did.
Your son and Mikey are good sports.
Did you see that one, Tom?
I did.
He did. He liked it.
That was a good one.
See? We have fun when the cat's away. So, but now everyone wants to know when you guys are gonna recreate it.
We can recreate it. I don't know if Sadnov can hop on my back though. I don't know if we can get it. We would have to have him jump from a chair.
We will figure out the logistics later, but headed for you at the top of the 8 o'clock hour, Options Jive. I know you missed Kai. We present Kai's Research Corner. Kai kind of gives his outlook for the markets for the week. That's at 8 o'clock. Then 8:40, Dr. Jim in the house. The Skinny on Options Abstract Application. What is alpha? Dr. Jim's first live show of the season is going to kick off, I believe, July 13th. So registration is open for that. His Options Crash Course Live. Of course, you can see all of our events. Tom and Tony are back stateside. They are headed to Denver, I believe. So you go to tastylive.com/events. But yeah, still lots more events coming this summer. Then 9 a.m. market measures, Jade Lizard or Iron Condor. Let the numbers decide. Ooh. Interesting. And then live from the trade desk, all of the boomers are reunited. Scott Sheridan is going to be in the house counting down the top trending tickers over at Tasty Trade. So that's the run of show. We got a really good show. You guys want your daily dose?
Sure.
All right, hit me with my theme music. Let's go.
Our leading story, breaking news, coming across the wire.
This
leading story,
just in.
top story, just in.
In
today's headline,
This just in.
breaking news.
All right, everybody. Today is a magnificent Monday. It is June the 30th. This is the part of the show I like to call the Daily Dose, where we talk about today's financial news and headlines. You guys missed me.
We did.
You know, Tony, I forgot.
Not as much as I missed Kai. Not as much as I missed Kai, but I missed you.
I didn't think about right now until how much I miss Kai.
Until you mentioned it,
for Kai.
Until you mentioned it,
the market recap on Monday with Kai, I really did miss it.
I
in general.
Out of sight, out of mind. I can't believe how much I miss Kai. But you know what? Today is the last day of the month too. We forgot about that.
Yeah, I was gonna mention that. I'm gonna get to it. Yeah, we get to it. Let me get to my first story. Okay, hold on. Bat, are there any earnings?
You could look at STZ, which is Constellation Brands, but I don't think you'll find too much unless you have a directional bias in there.
So my first headline is a 2-month rally has pushed the stock market to record highs. And then it's like, watch out for these random risks in July. But July, historically, normally a very good month for stocks, but it is the last day of the month. And we have a little contest here at Tasty Live because we are at new highs in the market. Who's going to win the game in the office?
Just so you know, Bat will be closest as far as Tom and Tony are concerned.
Okay.
First time in a long time for him.
It's not what have you done for me forever. It's what have you done for me lately, Sadno. If you're only as good as your last trade, I win.
By the way, these flags, I'm very conscious of these red flag, green flag, blue flag.
What do you mean? In the water?
Yeah.
Okay, Dr. Seuss.
all of a sudden, he's a boater.
I know. Like, you do have to be careful. Like, the water is nothing to mess around with.
Sadnov, how is your leg in the water? Is it more aquatic or is it more on the land better? What's better?
Ooh, good question. I feel like I'm not really sure what my swimming skills have. I'm not really sure where I am on a scale right now of between.
I think when you swim, you look like a corgi.
I will say,
big one.
I'm not incredibly confident, but my biggest fear was getting back on the boat.
I could see that for you.
Yeah, that's not sexy. You kind of just flop over there.
Yeah. No.
But can we talk about the market in July normally and what that entails for you in terms of liquidity or volatility or opportunity?
Well, I actually wrote about it in my cherry bomb last night. What I felt like are some of the red flags. I'm glad you put a red flag up here because I actually use that term, red flag. But we've had a huge rally, and I think that this is an interesting opportunity here, potentially. But we'll see.
Yeah, 25 or 30%, 27%, whatever the number is off of the lows in April. I think we were up 3% or more last week alone without
Yeah. That's why I said I think it's an interesting opportunity here if you want to nibble a little on the short side.
You mentioned I'm sorry, Vanetta. You mentioned complacency in your cherry bomb, Tom. There was definitely complacency, but really no capitulation, right? You didn't see any kind of
except Friday.
Upside.
Except Friday, there was. I don't know if you looked at the volume numbers on Friday, Tony, but they were.
I did not see the volume numbers on Friday, but I know for the rest of the week it was pretty light, at least on the S&Ps.
You're exactly right, and on Friday it was significantly higher, almost 25 to 35% higher. And I felt like people were like selling puts with abandon. But, listen, we're always early, but that's my call.
22 of the largest banks in the U.S. are well positioned to weather a hypothetical severe economic downturn and continue with lending. Those are the results of the U.S. Central Bank's annual stress test of large banks. They find firms remain resilient in the face of a potential recession. Of course, a lot of the financial stocks are, of course, doing very well. Are you guys doing anything specifically in like a JP Morgan, Goldman Sachs, Wells Fargo?
No, but I think that this is exactly the other thing that I wrote about is that this is the probably the most lenient regulatory environment for banks ever. That's why 22 banks passed. And that's what's scary to me because I think the industry does better when there's some, fear or some concern about stuff. When it's like all systems go, I don't trust these banks.
But I was going to say, what do you think the banks are hiding, though? Because they have been under that regulatory pressure for
so long. It's not a question. It's not.
When could they have gotten out of
line?
No.
It's never a question about, it's not a question ever about what they're hiding. It's a question about how stupid they are when you give them all that leash, when you give them a green light. So when they have some guardrails, they have to play by the rules. And you see what happens with banks in 2007, 2008, when there were no guardrails, and they basically imploded the system. Banks get incredibly greedy. They're way worse than like financial service companies like brokerage firms and stuff like that. Brokerage firms have pretty tight regulations. Banks, on the other hand, oh man, they scare me because
and two, now consumers really don't have an avenue for recompensation if they do step out of line. So
I just, in the past, left to their own greed, banks have self-destructed. This is what scares me.
But it is
So how
nice
do you
that the
play it?
downside testing is passes with flying colors, is it not?
Yeah, that's what they did in 2007 too.
they're just waiting for you to go to sleep, Bat, and then they're going to get you.
Uh-huh.
But then how do you play this, though, then?
Oh,
If they can act with impunity, then.
I don't think there is a direct play in there. I think it's just a red flag. I mean, first of all, even if you knew that the banks, I don't think there's a play there at all.
All right.
JP Morgan's actually up $1 or so and change. America, 4th of July weekend. Whoop, whoop.
So over the weekend, the Senate passed through all of their amendments on the big, beautiful bill. And the only thing I do want to talk about is they basically annihilated any government subsidies for solar and wind energy. But now the new version that came out of the Senate is actually going to add a tax on solar and wind energy to the puzzlement of lots of people on both sides of the aisle, because there's green energy jobs. This, of course, creating clean energy. This could raise energy bills by 30%. We've seen the decimation in these solar stocks, but now also need to look at nuclear stocks, because that's not going to be, that's in the crosshairs now, too. You're looking at AI demand and what does all of this mean? We could have been the leader in solar panels, and now you can just go to China because it'll be cheaper. But what are you looking at? I'm talking just the energy part of this and energy stocks.
You mean what are we trading? The only one I have a position on is Enphase right now.
Enphase. Okay.
And it had a huge rally, and now it's sold back off a little bit. It was trading like 34, 35. Now it got up to in the mid 40s. Low 40s. Now it's back to like 40. It's a $40 stock with high volatility. That's tradable. Not great though. It's tradable. Easier to trade than First Solar, but those are really.
I was going to ask about First Solar or Solar Edge.
Those are the only two stocks we really trade. First Solar a little bit, but I currently do not have a position there. And then Enphase, ENPH, which again, if you've never traded it, just be careful, because even though it's a $40 stock, the markets are a little wider than you think.
Yeah, all these stocks are not quite, and they got good volume to them. Like they have decent open interest in all the options, but the markets are very wide.
Yep.
I'm not sure any
a
of
defined risk trade is probably prudent.
Yeah, if you trade Enphase, you'll be surprised. You'll look at those markets, it's a $40 stock. You'll see markets that are 40 cents wide.
Yeah.
Not sure if you're trading any of the nuclear stocks either.
I am not.
Okay. I just wanted to ask.
Nope.
Hey, in other news, commodities, oil falls on the prospect of more OPEC plus supply and easing risks in the Mideast. What are you guys doing in oil now that you're back?
We've been short premium in there this entire move. It was costly on the way up. We made it all back on the way down. Now it's pretty good. So no complaints.
Yeah, oil IB rank at 38 is pretty good in this low volatility environment across the board in the equities. Oil's been going sideways here at 63 and change. So the last week or so has been good for premium selling.
Yeah. It's been one of our biggest positions for the last 2 weeks, I'd say.
In other commodities, gold edges lower amid trade deal hopes and risk appetite. What are you guys doing in oil?
You mean gold?
I'm sorry, gold.
Gold, you mean gold.
Gold. Yeah, I know. I haven't had
oil. Gold and oil to me are both short premium plays. The difference in gold, though, gold had almost an 80% implied volatility rank like 2.5 weeks ago. Now it's down to the mid 20s. So it's lost a little of its shine.
Love and feeling.
Yeah, no, Tom's right. And it's under 3,300 now. Remember, its high was closer to almost 35, 34 and change. Yeah. So it sold off a little bit and volatility's contracted, which is normal on a commodity, right? As it goes lower, volatility usually contracts.
It's a borderline. Gold's, we have a position on still in there, but If the IVR drops any more, we're going to cover.
Yeah.
John, before you put up the next slide, do you guys want to guess what the best performing stock in the S&P 500 was for the month of June?
Oof.
Would we know this stock?
Yeah, you trade it. Yeah.
The best performing stock in the month of June. I'm going to say Coinbase.
What do you
I'm going to say
Matt?
Nike. I'm going to say Nike.
It's Coinbase. Look at you. I can't believe you got it. You're annoying. Coinbase is the best performing stock. It's a 43% gain in June. The surge comes as investor attention shifts from Coinbase's core business and trading to stable coins. So just a massive rally in the stock.
I actually wrote about this as well. I think the premium in Coinbase now relative to Bitcoin went from being way under to ridiculously over on this stablecoin stuff. So I do not like Coinbase here. I think they've pumped in so much stablecoin premium into Coinbase's, price. It doesn't make any sense to me.
Earnings not until August 7th. Ivy rank of 30. The stock is up about $6 this morning with Bitcoin and Coinbase both higher.
What are you guys doing in Circle? Have you seen that shenanigans?
We haven't traded it yet.
Come on, step on in, lose some money. Let's go.
No, I haven't traded it at all.
Yeah, I haven't either.
What are you waiting for? Like, what are you looking for?
Well, the markets were crap. I haven't looked in a while, but last time I looked, they were untradeable.
Taking a look now.
I haven't looked, honestly, in a while.
They're still untradeable. I mean, in my opinion, $2 wide markets are tough. Let me look at the open interest here. Open interest is light.
Last time I looked at the stock, the markets were $2 wide. I mean,
they're still $2 wide, and
you can't trade it.
Okay. Well, bigger, better Bitcoin hodl. This financial advisor says it's time to have 10 to 40% of your portfolio be in crypto. Is he so for real?
Well, who the hell cares what Rick Edelman says? Who the hell is he?
No, but what are your thoughts though? But is it time
why would I respond to somebody?
Allocation?
I know, but you're saying like, we never heard of this guy. Who the hell cares what he says?
I know you've never heard of this guy, but I'm telling you, it opens a larger conversation about what your percentages look like in this current environment. That's all.
So you're going to so let me ask you a question. So Rick Edelman, you're going to manage, let's say $1 billion. I don't know how much he manages. Let's say he manages $1 billion, just to give it ballpark. So you're going to put 100 million to 400 million in an asset class that's less than 5 trillion. I think it's idiotic.
It's not clocking to you that he's standing on business.
I mean, I think it's just a stupid thing to say, and he's just trying to get a soundbite.
So what would you say, though, to get your soundbite?
I would say that anybody that says to put 10 to 40% of your portfolio in crypto is an idiot.
So, but what's your number? Is it 1%? Is it 5? Is it 7?
Well, I think given the size of the asset class, which is relatively small, I think you got to be careful if you're going to go much over, 3 to 5%.
Okay, that's all I wanted from you. See, was that so hard?
Yeah, we actually talked about this in years past. Actually, said that a small percentage of your portfolio should be in crypto. I mean,
that's what I was saying, but I was wondering if that allocated amount had increased. That's all I was trying to get into. But this dude has massive beef. Did Rick Edelman steal your girl?
No, it's just like, who cares what some random yin yang says? I mean, 8 years ago, we did a study showing that you should have 1 to 3% in crypto assets because of the higher volatility. Now that number is probably 3 to 5%, but 10 to 40 is idiotic.
See, this is like a nice little sound bite, and then now we have it. There it is. It was just very arduous to get there, but that's fine. Hey, CEOs are saying the quiet part out loud when it comes to AI. CEOs in public like to sound reassuring, saying that generative AI will enhance productivity or streamline operations. But in actuality, they're coming for your jobs. A couple of examples as of late. Amazon's Andy Jassy says we will need fewer people. Duolingo's CEO CEO says headcount will only be given if AI can't do the job. Mark Benehoff from Salesforce says AI is doing 30 to 50% of the work. Shopify says, why can't AI do it? Like, the reality is AI is coming for our jobs. How concerned are you?
I mean, I'm not very concerned, but somebody else might be. I don't know. I mean, it depends what you do. I think you shouldn't be that concerned.
Oh, because I'm so original and unique and irreplaceable? Thank you.
I listened.
That's not quite what we had in mind.
Somebody sent me over the weekend, over the last couple of days. I don't remember what day I got. I think I got it on Friday. But somebody sent me an AI interview with myself. And
that's crazy.
I know. And I had absolutely, it was two people and me were talking, you know, like just carrying a conversation, all this stuff. And it's interesting, but I don't think it replaces anything that's live. Like there was nothing in there that was new. It was all stuff that we'd said before. So it wasn't, to me,
sure,
it wasn't interesting. It sounded.
But you're always talking about culling the herd. Do you see AI culling the herd of companies, whether it's in fintech or whether it's in blockchain or whether it's in some other space?
Well,
journalism.
I have not seen. We here at Tasty have not seen AI impact our hiring process. I can't speak for other companies.
That is good to know. Hey, NVIDIA hit a new all-time high while you were gone, making it the most valuable company. And insiders have dumped more than $1 billion in stock over the last year. Jensen Huang started liquidating some of his positions, but those are full from disclosures with the SEC. What are you doing in NVIDIA now that you are back and it is at all-time highs?
Well, first of all, I don't have a position on NVIDIA right now. And second of all, I mean, I know this is going to sound a little weird, but somebody selling $1 billion in NVIDIA is like somebody selling $100 of our stock. I mean, I don't really think I don't think it's the same. You know, when you start to put the numbers around it, what is it, almost $4 trillion right now? I mean, $1 billion is nothing.
That's a good way to contextualize it. Yes.
Yeah, you're right.
What's NVIDIA doing this morning, Bat?
NVIDIA 158 and change, up about $1, 80 cents to $1.
Oh, okay.
So it's making a new high, as you would say.
Chinese search giant Baidu says they are going to make its Ernie generative AI open source starting today. It's going to be the largest public AI drop since DeepSeek. And remember, when DeepSeek came out, it rocked the U.S. markets. But it's not just a Chinese story. Every time a major lab open sources a powerful model, it raises the bar for the entire industry. What are your thoughts? And what are your trades in Baidu?
No trades right now in Baidu for the first time in a long time, only because it just hasn't been in play.
I'd be ranked a 6, Osno.
Yeah, that's why no trades in Baidu. But I think this is good for us as consumers and good for us, you know, good for our business in general. Just having one more, you know, potential AI platform to write to. The question becomes, you know, it's a lot of work to choose what AI engine you're going to actually write to. And so I'm wondering when there's going to be some kind of like a matching engine that routes your AI questions to the cheapest source and the best source. Like it's becoming almost like, so who do you pick? You know, like why would you pick? Oh,
sure, but people have their favorites already.
No, I understand they have their favorites, but I'm saying there's going to come a time very soon when it just becomes more efficient to be able to send your AI request to whatever the best, you know, whatever the cheapest response is.
Gotcha. Yeah. All right.
It's way more complicated than that, but I'm simplifying.
Are you guys doing anything in Microsoft? Because that's like our OpenAI, but you can't trade OpenAI, but you can trade Microsoft.
Yeah.
Blah, blah, blah.
Yeah.
Yeah. Okay. I tried.
$4.98, up around another $2 or so, $2.50.
Get ready to feel old. Tesla's IPO was 15 years ago. This week, Tesla debuted on the NASDAQ. The stock is up 300-fold since then. The IPO price is equal to a split adjusted price of $1.13 today. The stock closed on Friday at $3.23. A $10,000 investment in Tesla at the time of its 2010 IPO would now be worth $3 million.
You did make me feel old with that 15-year comment. So
right, it was like Vinny wasn't even born. Like Tesla IPO, like that's bonkers.
Yeah, you're right about that. Tesla's actually down about $2.50 this morning. One of the few I've seen so far that's bucking the move to the downside. Ivy rank of 31.
And I'm sure Tesla will go on to get studied at business schools across the nation as a very interesting case study in just how a company and its leader can evolve. I'm going to just leave that there. Tom, what are you doing in Tesla?
I do not have a Tesla position currently.
Okay. Are you surprised that it's been 15 years?
I mean, not really. I can't believe a lot of things are 15 years old, like this network.
Yeah, that's true. But I was like, wow, 15 years for Tesla. That's crazy. Hey, maybe sort of kind of President Trump said in a Fox News interview on Sunday that he had found a buyer for TikTok. He says, actually, it's a group of very wealthy people, but his identities won't be revealed for about 2 weeks. Okay, he made the remarks in an interview on Fox News. The deadline for TikTok keeps getting kicked down the road, but TikTok is right now safe. But do you believe that there is a wealthy group of buyers?
I'm not even going to comment on this. It's so ridiculous.
But you love TikTok, though. Like, this is what's going to save it for you. You need to believe this.
Yeah, I'm not hoping that Susquehanna can save TikTok. Let's put it that way.
All right. Well, you can't trade TikTok, but you can trade Meta. What's Meta doing this morning?
Ooh, good question. Meta's been on a little bit of a 745 right now. It's been on a little bit of a run. This is close to a high that it made back in February. So it's trading around 745. If it opens at 745, it will be a new high. So it looks like it's up around $12 this morning.
That's crazy.
It
Tom,
is
what are you doing in Meta?
I'm long.
Ivy rank at 22. Earnings of July 30th.
I'm long some put spreads that I bought about a month ago. I need the stock to drop about 200 points.
Good luck with that. Good luck with that. Hey, with the intense Formula One race car drama, Apple finally has a theatrical hit on its hands. The company dominated the box office over the weekend, and the movie was on track to make over $55 million at the domestic box office, with $144 million in global ticket sales. The movie utilized some like iPhone camera technology to get like really intense close-ups in some of the cars. Bat, your son saw this. He said it was great. He really liked
great
it.
Reviews. Yeah, definitely.
Yeah.
I mean, listen, you got Brad Pitt, you got race cars. I mean, it's a pretty good formula to win. No pun intended.
Yeah.
Apple's trading 201 and change, up around 80 cents too. Apple can't get out of its own way here.
Apple cannot get out of its own way.
Yeah.
In something that makes me irrationally angry, Hertz, yes, that scam, Hertz, is now using an AI scanner to find damage to your rental car. One customer was charged $440 for a scuff on the rental car's wheel, but talking to a human employee wasn't easy. Remember the rule? It used to just be, okay, if it's larger than a credit card, like the scratch or ding was, then you could get charged for it. But this is using like microscopic AI sensors to find damage, and because he dropped the car off, and he honestly was like, there's nothing wrong with this car, but then he got hit with this massive bill. I hate everything about this. What are your thoughts?
I mean, how can they charge you for a tire scuff?
Well, it's on the car. So, like, if you turn and hit a curb, hi, I'm just a girl. But if you turn and hit a curb, that can scuff up the rim of the the tire's fine. It's fine.
I don't know. I mean, this sounds like it's. I don't. This sounds like it's going to be tough to argue with these guys.
I'm never renting from Hertz.
That's how you do it. That's true.
Yeah.
I don't like renting cars.
Yeah. Well, I don't know. It's stupid. Hey, sad news to report. While you were gone first, Gale Street Inn is closed. So that was sad.
Mike North is in mourning.
Yeah, I know. But this hit me hard yesterday. The Violet Hour is closing. An iconic Chicago spot is gone. Wicker Park's game-changing Violet Hour announced they are closing after 18 years. Literally one of the best bars in America. It was very cool. There was no sign out front. There was no address. You had to know where it was. I'd been there just a couple of times. Had the best experience going there with my friends, but just the end of an era, literally.
I never been to the Violet Hour, but I was at.
You're not cool enough, sweetie.
I never heard of it, so I'm not cool enough either. But wait a minute, the Gale Street Inn closed?
Yeah, you guys were in Europe when it closed. Yeah.
I went there with Mike North. We had ribs one night. It was great.
Yeah, me too. I've been there numerous times. I'm sad.
Yeah,
it was really good.
No.
I think it's like a staffing issue for them. I'm not sure. You'd have to go back and look it up, but yeah, it's sad. It's hard to operate for, so long, because you're always, fighting with your landlord, or you're fighting with, labor, or doing other stuff. I don't know. It's hard. This is crazy, because I tried to get tickets, but the Savannah Bananas sold out Sox Park twice as fans are clamoring for the hottest ticket in town. 182,000 people applied to a lottery, was one of those people, for a chance to buy tickets to see the Savannah Bananas play at Sox Park in the debut of Banana Ball in August, but less than half who applied got awarded a chance to buy tickets. All 81,000 tickets sold out for the Savannah Bananas. So guess what? On StubHub, you want to guess the range of what these tickets are going for?
I cannot believe how successful this is. I don't know. I'm going to guess. I don't even know what the price was to start with.
They're not expensive. I think they're like $20 because he's trying to be they're affordable.
$30.
Oh,
yeah.
So maybe 200. I don't know.
What do you say, Bat?
I think the range is $150 to $650.
$221 to $4,796.
Well, that's just somebody putting a number out there.
The Bananas have sold out 17 Major League Baseball stadiums and 3 football stadiums so far this year.
That's great.
I think I tried to get tickets.
Uh-huh.
But I was like, they need to have it somewhere like bigger. I don't know where else they could have it, because even Soldier Field is like small. It was like one of the smallest NFL stadiums. But I'm gonna have to maybe pay a couple $100 to go see the Savannah Bananas.
Uh-huh.
But Tom, you'll pay for it, right?
You can watch us. You don't need them.
That's fine. John, I'm going to my viral video. It's been crazy hot here the last week, over the weekend today. But it's fun to find interesting ways to cool down. And this dog is SMRT. Check out this happy pup. I like dogs.
Smart dog.
Look, he's trotting. I got amused by it. Nice. Okay.
Smart dog.
Yeah, look at his little tippy taps.
Yeah, not bad. Give it that.
Hey, that's my time. I'm glad you're back, I guess. I don't know. Pat, what's coming up next?
We're going to take a quick 90-second break and come back. We got more Tasty Live with Confirm and Send next. We'll be back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, 2 female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send, my friend. But before we do, let's take a quick look at the market. Even the S&Ps continue their run of last week. You can see last week here we've rallied about almost 4% now, with up around 20 handles to 62.43, about 12 or 13 handles off of our highs.
It was a good week to go on fishing.
It was a good week to go fishing. You're right. NASDAQ is about 70 handles off of its highs. Russell is up 9 and change, and the Dow is up 200. Everything up around half a percentage point. Volatility, although low at 1860 or so, really kind of stayed bid a little bit, Sadnuf. I thought last week, watching the market rally, it didn't really collapse under 19 with a lot of movement to it, meaning like a lot of velocity to the downside. But you can see here the last 4 days or so steadily going lower. Bonds up 10 ticks, but kind of going sideways at the high end of its range, 114.26. Bitcoin up $670 to 108 and change, trying to make some highs, still off its highs of 109.5 earlier today. Oil down 10 cents, gold down $7.60. That's all I got, Sal.
Up,
what do you think here about the market?
Up.
I'm sorry, up $7.90 gold. Sorry about that.
I covered my bond position this morning. It's been a nice run. We've caught it really well. We haven't had a single loser in the bonds this year, so fingers crossed we keep the dream alive. If they go back down, we'll buy them again.
Yeah, you've been buying the dips in bonds by selling puts or using futures.
Yeah, I just covered my last puts this morning. Other than that, yeah, it's been a crazy rally. Like I said, good week to not be around here, and I hate those 1,000-point rallies when I'm away. Usually, I want to jump off a mountain when there's a 1,000-point decline when I'm gone, but when the 1,000-point rally, I'm all for it. Yeah, so I'm just starting to nibble on the short side. A little bit last night, a little bit this morning.
But you've been scalping it looks like.
Yeah, a little bit, but I really want to get short up here. I have a few short deltas for the first time in a while, but I haven't loaded anything. Not at all. I think it's time, but we'll see. Anyway, we got to go. Confirm and send. Let's see what we got. Monday, June 30th, last day of the quarter. I live abroad, and I'm wondering if I can keep my free cash in a currency other than U.S. dollars. I know the U.S. dollar is scaring the children if you live abroad because of the huge decline in the U.S. dollar. I think it's probably a decent time to actually buy U.S. dollars, but the simple answer here is not yet. We are working on a solution for this. We're not working on a solution because the U.S. dollar is weak right now. We're working on a solution because we have a lot of customers around the world that want to convert, that want to be able to keep their money in their local currency and just convert on a per trade basis. I think we should be able to do it in crypto. I think we should be able to do it in any currency. So we are working on it right now. Scott thinks that we'll have something hopefully by the end of Q3 of this year. And it's been
good. I actually didn't know that.
It's been a project we've been working on for the last year, and it's quite complex to be able to allow people to trade in multiple currencies and to keep to keep their capital in different currencies. But we're working on it, and we hope to have a solution, by the end of the next quarter.
Very good.
Let's go next slide. Do you manage all your Greeks in an account at the portfolio level? For example, is there a target gamma number that you aim to maintain?
Wow. I mean, we came out with a lot of numbers in the past about this. We really have kind of not really revised that in quite some time. So I would say no. I think keeping my account size on each position under 3% or so has been the most effective thing. And rolling at 21 days has been the most effective for me.
We tend not to. It's impossible for us to say that we don't manage our Greeks at a portfolio level, because I think that in the big picture we do, but there is not a target gamma number that we aim to maintain. There's a target theta number that we do, and it depends on different levels of volatility. There's plenty of research on that in the Tasty archives, but given whatever level of volatility we're at, we have a target kind of theta number and how much capital we want to use. So, for example, those two go hand in hand. Like, for example, if the VIX is right where it is now, which is like a long-term mean, maybe you want to be at, 35, depending on your account size, somewhere on the low side, 25 to 30, maybe the high side between 40 and 50% of your account, depending on how aggressive you want to be. And then there's a theta number that's attached to that, which is like, let's call it, between 1/10, 2/10, or max 0.3 of 1%. And when you start to extrapolate that out, that gets you to a gamma number that's right in line with everything that we do. So if your theta is in line with the amount of capital you're using, your gamma number will be fine. That's what retail trading is all about. Let's go to the next slide. If I do a poor man's covered call using an at the money or an in the money leap, how far out in time would you place the long call?
I mean, for me, I stick to the mechanics. I think 45 days is optimal here. I mean, if I was doing this trade today, I would be in August 15th with 46 days would be exactly where I would be. So it stays the same. I'm looking to roll that. Let's hope that the stock goes higher. Your call goes, in the money, and then you roll it from there if you still have a bullish bias. It's a winning scenario at that point.
Yeah, I mean, this is something that's, open for a lot of interpretation and discussion. We've had this, we've talked about this for God knows how long on the show. how far out do you go? The shortest period of time would probably be, in that 70 to 90 day range. If you're talking about, the long side, usually with a leap, it's 90. And the furthest would be 150 with an average being 90 to 120. That would be what my answer. There is no right answer. There's no, our research shows 90 to 120 days, but 70 to 150 in that range. So you pick your poison. Let's go next slide. Since holding certain leveraged ETFs loses money over the long term because of the drag, then as a premium seller, it would seem like a no-brainer to just keep continually selling calls on these underlyings indefinitely. It seems like guaranteed money to me, or am I missing something? Oh, you're missing something, all right.
Yeah. You're mentioning the drag here. And you're saying, let's do it from the call side here, which would be taking advantage of that drag. Now, remember, if you know about that drag, the pricing of the options know about that drag, so you're not getting any benefit by doing. You're not maximizing anything that nobody else doesn't know here. What you're missing here is the leverage part of it and how much that upside move can be. So it looks like a lot of risk for very small reward, the way I look at it.
Yeah, Tony, just what Tony said here. If you know about it, so do the people that are making the markets. You're not one-upping somebody, okay? Everybody understands exactly what that drag is. It's already priced in. These markets are incredibly efficient. So it's an interesting concept. There are people that try this, but I guarantee you over time, it's theoretically accurate. I don't hate the strategy. If there's something you don't like, or if there's something you want to be short, of course, go for it, and give it a shot. It's not like it's a negative. It's just there's no edge to it, but there's no negative.
Sure, it becomes a directional trade.
Yeah, it's a directional trade, exactly. Let's go next.
And on that poor man's covered call, I was answering it from where would the short strike be, and you answered it properly. They were asking where should the long strike be, so I apologize.
Yeah, no problem. I found a specific strategy that works well for me. About 1/3 of my trades use this strategy. Is this okay, or am I too strategically concentrated?
This is again a hard question to answer, because you found a strategy that works well for you. So if you found a strategy that works well for you, I would continue doing it and continue doing it until it doesn't work, and then I would continue doing it a little bit longer. Strategies work because the market accommodates. Whether your entry criteria is on fire, which is also a plus to this strategy, you're good. But for me, I keep doing what you're doing. 1/3 of your portfolio in one type of strategy seems to be a little bit heavy, but I've been there myself, so I have no problem with it.
I have no issue at all. 1/3 of your trades using a strategy you like. I do that all the time.
That's working.
Working.
If you said it's not working, I would say, all right, well, maybe we got something, we got to look into here. But it's working. I'm all for it.
Listen, this is simple. If you have a strategy that's working and it's only 1/3 of your trades, if you said 90% of your trades, I'd be like, oh,
yeah.
But 1/3 of your trades, that seems totally normal to me.
Yeah.
I have no issue with that at all. Let's go next slide. And it's the last one. Oh, no, it's not. I take that back. I often see on the follow page that the Tasty team finds some really good premium. And I was wondering what factors, other than high IVR, one could consider while looking for these opportunities. As an example, I saw some trades for HIMS and CRCL, both showing up with high IVR and collecting a lot of premium. But other than binary events and high IVR, what would you suggest that we should keep an eye on while looking for high premium?
Yeah, market liquidity and the options would be the second thing. Of these two you mentioned up there, HIMS has relatively tight markets, 10, 15 cents. It is a lower price stock than CRCL, which is, 180 or so. But they have $2 wide markets in CRCL. So of the two, I would probably default to HIMS more than CRCL. But high IV rank, Market liquidity, meaning the bid-ask differential between the two. If you are going to trade a CRCL with wide markets, I would be looking for a vertical spread as opposed to any type of naked option in there. The binary event, really we only look for earnings, and that's clearly marked on the platform.
This is a very fair question, because when IVR is low, it is hard to find trades, and it's hard to sometimes find really good premium. So what other factors will we look for? Well, like Tony said, you're going to obviously look for liquidity, but that in itself is not enough. And so another thing that I look for sometimes when volatility is low is sometimes I'll look for price extreme. It's very subjective, but at least it gives me a reason to want to make a trade. And also another thing you can do is you can look for your own price extreme, that's 100% on you. But you can also extend duration a little bit. So rather than being something like, say, between 25 and 40 days, you go out to like 55 to 65 days. And if you extend duration, it's like artificially giving yourself a higher implied volatility. I know we've just done a lot of research on that. So it's like, it's a way of kind of avoiding some of the premium. If you think it's borderline, just go out maybe an extra month or something. It's just ways to find trades. Liquidity,
understood.
Price extreme, extend duration. Let's go to the next slide. Like, I wouldn't trade Circle even if the volatility was high. Oh, that was the last one.
That's it. Oh, good.
Oh, okay.
Let's take a quick 90-second break, come back. But don't worry, we've got Kai coming in with an option jive this week in stocks. We'll be back in 90 seconds.
Dear Karen, thank you so much for the relationship advice. Of course, since you met your husband in high school, I should obviously just go back to high school. Can't wait to win the Nobel Prize for my development of a time machine. Signed, Regina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
You're mistaking me for someone who cares.
From the smart mouths at tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing. But.
The last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
That's it. You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah. When does yours get delivered?
50,
you didn't do the sword?
$50,000. And
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
It's options. Jive.
Tomas, I know the moment you've been waiting for. That's right. We've got Kai in the house. What's up, my friend?
Not much. Welcome back.
Good to be back.
Thank you for we're happy to be here.
Nice, nice. Do you still have jet lag? Oh, it's fine. It's afternoon in London, right? It's fine.
Oh yeah.
Jet lag's over. Maybe not for Tom. Tom just came home. I mean, I've been home for a couple of days, so it's a little bit easier for me.
Oh,
yeah,
okay.
I didn't get home. I didn't get home till last night, and let me tell you
Tom's gonna
something.
feel it around Tuesday, Wednesday. He's gonna be dead.
Tuesday, Wednesday.
Beautiful.
Yeah, today I feel fine.
Yeah, today you'll be fine. Today you'll be fine.
Is it because of the market's up?
No, I'm just saying.
I'm just kidding. I'm just kidding. This is crazy.
I did watch.
Well, let's talk about last week. We got a lot to learn.
Yeah, a lot of things happened last week. Mostly to the upside.
Yeah.
Okay, so let's take a look at the summary from last week. Definitely the big news is the S&P and also the Nasdaq hitting new highs. And this is the highest level since February for SPX and January for Nasdaq. The Russell and the Dow hasn't reached the new high yet, but it's close. It's close. Let's see. And the second.
Yeah, no, I thought we were talking about 6,100 in the market because that 6,000 was that big round number, and I would say, we always go further than that. Well, we got further than that. We're 62 and change now on the E-mini S&Ps. It's been quite.
It only take less than 2 days to break that level, I believe.
Unbelievable.
Yeah.
Yep.
So
No
and also
fear.
dollar kept weakening in last week. It's actually hit the index DXY or UUP hit the lowest level since 2022.
Yeah,
that's crazy.
It's kind of close.
Yeah.
I've been a real bear on the dollar, but I'm getting close to for a shot here.
Flipping the cards over?
I mean, you kind of think, don't you?
Yeah, I do.
So are you going to flip your long euro, long Japanese yen trade?
No. I'm not. I'm never, ever. I'm going to be long Japanese yen until I die. I think the ones that are too high right here, the euro, maybe British pound, those things have gotten. The euro's gotten really strong. British pound's a little high. The other ones, not too much.
Mm-hmm.
Yep. Okay, good to know your Japanese yen's view. And the last one is crude oil. Had extremely large daily move on last Monday, and also the weekly basis is pretty large too. We're gonna see the stats in the following pages. So, all right, next slide. Talking about the four indices. It was a big up week, up 3.4%. We had a quiet week last week, the week before, and last week we had somewhere between 3 to 4% across all four indices. It's a pretty big move, considering that's only 1 week with high implied volatility. I would say the implied volatility started 20 the beginning of the last week, and it dropped to 16, which is slightly below the average for the long term.
Right. Are you looking at VIX, which is 1710 right now? Is that what you're looking at? Yeah.
So 17 is actually right at the mean over the long term. So considering we're hitting new highs right now, it's pretty decent IV level.
Yeah, you got to take everything with a grain of salt, right? I was saying the same thing on Sunday night, that volatility, although it's low, as we definitely can notice, it seems like it's a little bit higher than it should be at market highs. Now, that doesn't mean anything for direction, but it does leave trades open for premium sellers, which is kind of nice.
Yeah, probably the market is waiting for the early July's tariff unwind or whatever solution.
July 9th or whatever. Yeah.
9th or 8th. Yeah.
Mm-hmm.
Okay, we're approaching to the end of June, so I had a slide to take a look at the performance of the June monthly performance. So we saw the May. April definitely is not a good month, and May was strong, especially the Nasdaq leading, get almost 10% rally. June is also very strong. So all four indices had somewhere between 4 to almost 6% return. But look at the long-term monthly return for SPX. It's only 1%. This 1% is only for SPX. So it definitely has positive drift to the upside, but it's not as strong as 4, 5, or 6%.
Okie.
Okay. All right. Expect move. Next slide. The weekly expect move. We don't have to look at it again. It's 3.4% for SPX, definitely higher than the expected range. And starting from today, The expected move for SPX $68, 1.1% only. One of the reasons is the VIX at the end of Friday is 16, but he said the VIX is increased to 17 right now. So it's no big difference.
That's a big drop off for 1 week.
Yep, 4 points.
Yeah.
Did you know that Thursday is a half day? Is it a half day? Is that what somebody told me?
Based on our schedule, it's half day. I didn't check the
It's
stock
a full
market
day of
holiday.
trading, I believe, Sadnov.
It is a full day of trading. That's what I thought. Somebody said
full
half
day of trading.
Yeah, somebody said half day here, and I was like, I don't think so.
I believe when they said half day here, they were talking about programming.
Okay.
I don't make these. You're the big boss.
I think you're right. I think it's a full day of the markets.
Full day in the market, to my knowledge.
Yeah, I think
Because
that's right.
Good news for traders.
It can't be closed more than 3 days in a row. That'd be 3.5.
I
don't know.
have no
That's how-
idea. I thought it was a full day too.
Mm-hmm.
Nice. All right. Talking about IVR last week, definitely. We go to the next slide. Definitely to the downside. Yeah, so pretty much Euro and Bitcoin, the IVR didn't change, but for the rest of the markets, commodities, bonds, and the equity market, all the IVR dropped, especially for the SPX and indices. It dropped from 23% IVR to 11%. So this is relatively low compared to what we saw in the past half a year.
Yeah, it's low across the board. You're not going to get a lot of help from premium at these levels.
Sadnov, I stand corrected. The New York Stock Exchange will not have a full day of trading July 3rd. It will close early, 1 p.m. Eastern, 12 p.m.
So 12
Central.
noon here.
Oh, so it is a half day. All right.
It is a half day. I can confirm that. Yes. Thank you, AI.
Wow. All right. Cool.
Mm-hmm.
So one question: what is your strategy here when the market hits new high, implied volatility start to decrease, and earnings coming up for their 1 or 2 weeks window before the earnings season kicks in? What kind of
nothing is worse for earnings than low implied volatility. Nothing. It's the absolute earnings in high implied volatility we do really well in. Earnings in low implied volatility we do not do well.
So you would say reduce your size and reducing your trading activity right now?
I'm going to tell you that that's just our history. I'm not going to say what to do yet, but I'm just going to say earnings in high implied volatility, we have a history of doing really well. Earnings
You
in
take
low
your
implied,
life in your own hands.
Earnings in low implied volatility, it's been the worst trade for us.
Okay, good to know. So next, let's take a look at some major movers in different markets. Definitely the indices. So S&P Nasdaq hit all-time highs. The SPX is 0.5% from the February highs, and Nasdaq's 1.6% higher than the January's highs. And we saw 24% SPX rally since April 8th at the bottom, and the duration in between is 80 days. So we hit the new high in 79 days. We actually hit a new high on Thursday, so 79 days, hit a new high. So let's take a look at how strong this rally is. We only have 10 occurrences that the SPX saw a 15% drop or large. There's no overlaps, and the recovery time on average, full recovery, is 135 days. And this one is actually the third fastest recovery in past 20 years. Just for information. It's a very, very strong recovery. I think the fastest one is 2018, and the second fastest one is 2009. This is the third one.
Sadnov, surprised? I mean, you have to be, right? I mean, I was.
Yeah, but I'm not. Yeah. I mean,
doesn't mean anything for future pricing if that's what you're
right.
Doesn't mean right. I get that.
Yeah, just try to understand the magnitude of move and the momentum behind the market right now.
Yeah.
Okay, so next one. So yeah, definitely the news is all over about NVIDIA hitting new highs and reclaim the most valuable company in the whole world. just a little bit information. It's 5.6% of January's peak, and it's almost $3.8 trillion. The second one is Apple, 3.7 trillion. But Apple is far away from the peak yet.
Yeah, Apple is not. If Apple gets itself going, this market is going to be no stopping it. But if Apple doesn't do anything, what's going to bring this market higher? I mean, the velocity of the move to the upside has to be muted, I would think.
PLTR, the whole market's everyone's looking at PLTR right now.
Yeah. Agreed.
And the next one is the currency market. The dollar hits multi-year lows. This is the I just pulled the UUP. It's at the same level as mid 2022. It already lower than early this year in 2024. Yeah, and the euro. So just for information, because you mentioned the euro and the pound. So euro versus dollar is 1.17, highest since 2021, and same for pound. Pound is 1.37, also is highest level in the past 5 years.
Yeah, I was just there. It's not a good time to go. I missed it. I missed it by that much. I missed it by about a month.
Oh, it's so expensive right now. Yeah.
God, I wouldn't want to be going. I wouldn't want to be going anywhere like in August or something like that.
Oh, no. I'm going in August.
No, don't say that. Oh, that'll be the all-time highs. That'll be bad for you, Kai. Ooh, I don't want you to do that.
I'm a contrarian. I hope the market is going to rebound like in a month. Let's see. It's so expensive right now.
We'll see.
Okay. So next one, crude oil. Crude oil had a huge high to low move on Monday. So the range is $11.8 for crude oil. And that's actually top 0.1%. That's actually lower than 0.1% in the past 20 years. And the weekly, we dropped 7.2%. That's also ranked within the top 1%. So pretty big move in crude oil last week to the downside. Because of a lot of reasons.
I don't have positions in crude oil. It's interesting, but the IB rank in there is low now. It's kind of less interesting than it's been.
I have a bunch of positions in there. I kept them on. They're working. That's all. I mean,
yes, I'm sure they have been. Volatility's contracting.
You sure you're long?
Anywhere.
Yeah, they're working.
You long or you short?
No, I have no delta. Just short premium.
Oh, okay.
Yeah,
it's
been a good play
for neutral.
Right.
Okay. All right, last slide for the top and bottom 5 performers. Top 5, definitely Nike. We saw what happened on Tuesday, last Friday. It was up almost 20% at one point and dropped back to only up 13%, I believe. So total last week was up 19%.
And that's one of those moves in Nike where, I'm playing it from the long side with short puts. You wish you had some other position on with long delta so you could get more of that upside boom, right? It's been working for the last 2 months or so, but you miss this kind of move.
It's been a while. It's been a while. Since we start to sell puts in January or even earlier.
Yeah.
Even earlier, yeah. So the energy sector. Definitely is the opposite of what we saw the week before. And also 1 or 2 weeks before was down huge, and this week they start to rebound. So EMPH is the second highest rally, 18%, with really high implied volatility, 94. I believe probably the earnings coming up. I didn't check the date.
Its earnings coming July 22nd, Kai.
Oh, okay. Then SMCI, Coin, CCL. I believe the cruise, the next one is RCL. So all the cruise lines, all the entertainment sectors increased too. Any comments?
RCL, $310, Sadnov. The stock is poised for bankruptcy at new highs.
Enjoy your cruise.
Okay.
I actually watched on Netflix the Poop Cruise. I don't know if you've seen this. It was from a cruise back, I think, in 2014 or something like that, where they lost all power in the Gulf of America. Sosnoff. For 5 days, they had the toilets work with electricity, and they had no electricity for 5 days. So everything was overflowing. It's on Netflix. It's not enjoyable, but it is informative if you are a cruiser. That you might want to know about this. We'll take a quick 90-second break. The Poop Cruise is called on Netflix. We'll take a quick 90-second break and come back. We got more Tasty Live after this with the opening bell. Thank you, Kai.
I'll pass on the Poop Cruise.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
There's a beast in the financial world, and it's not the bull. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live at the opening bell, Sadov. The opening bell here is imminent. Evening S&Ps are up 24.5 handles. They've been hanging steady here, Sadov. Pretty tight move since we've been on the show for the last almost hour and a half. Maybe a $3 range, maybe not. What do you think?
Yeah. Well, the S&Ps, yeah. up 20.
Yeah, about a $3 range.
Plus or minus.
I'm ready, Sadnov. I'm ready, willing, and able for this market to open. I've been chomping at the bit, waiting to be on the show, waiting for something to happen, Sadnov. Is it going to be
I thought on Friday the NASDAQ was starting to get a little weak, and then they rallied it up like about 100 handles on the close. So with it 120 handles higher here on the opening today, I think that's where I'm leaning, like from the short side.
Well, understood. You're gonna be able to lean short, my friend, as much as you want.
Well, it's a little low. It opened a little lower than I would like right here. But also another quick mention that Friday was 21 DT, just for those that
are rolling positions, are staying mechanical. Mm-hmm.
Yeah, Friday was 21 DT. So just an FYI, take a quick look here on the openings.
Today, tomorrow, Friday, whenever you wanted to roll, you should be looking to roll, correct?
Yeah.
Let's look at some of the high option volume list stocks that are bucking to the down move. TSM down 2, BABA down around $1.80, Tesla down around $1 or so, Amazon down around 80 cents. Some of the oil related stocks like XOM down small, about 80 cents, Nike down around 60 cents. Let's see what the upside brings out. Up there's your big numbers. Goldman Sachs up 19, Oracle up 15. FSLR, which Vanetta was talking about, up around 8.5 or 9. Netflix and Chill up around $9. AVGO doing the same. PLTR, Sadnov, up $7 after taking a little bit of a slide on Friday, up around $7 and change. Right now, Sadnov, much like last week, volatility contracting, bonds up 14 ticks, market up 20 handles. What are you doing?
I have not made it. I scalped some futures this morning. That's about it. I haven't done anything else. Question here is, what kind of legs do you think this market has?
What now, brown cow?
Yeah,
is what the question is right now.
I think I have to make one adjustment in Google, and that's about it. And the rest I'm going to leave on the table here. I wanted the NASDAQ a little higher because I was offering about 40 handles higher, but I missed them. They never got there actually on the opening. But I think you gotta get short today.
Ooh, going into the 4th of July weekend. I mean, I think you're going to have some down moves. I think you're going to have to be nimble here, Sadnov.
Okay, I agree with you. I think it's a very tough call here going into basically a 4-day weekend with no volatility. Never sell a dull market. I feel like Friday was a little bit of a blow off, and let's see how well they. NASDAQ was up 150 this morning. Now it's up 84, so that's pretty decent sell off, at least from the highs pre-market.
Do you buy the dip, Sadnov?
I'm not buying the dip. I'm already short. I sold some NASDAQ futures right here last night at 30. Really like 36 or something, 37. They're 32 right now, so they're unchanged. But I haven't covered those.
Reddit's up $5 and change, one of the larger movers. PLTR, like I mentioned, up $7. These are just stocks you have positions in. Lilly is up $7, Sadnov, looking at what's going on.
Yeah, I don't have anything,
No, you don't have any large positions one way or the other.
No. I'm caught a little bit long ENPH here because I rolled up some. I got a little bit aggressive on Friday and rolling up some puts, but that's about it. And I might roll down a few calls today, but there's not a lot. ENPH is a hard stock to trade. We talked about that this morning.
Yes.
Yeah, definitely not my fave.
Okay. We also have guessed the market, Sadnov. This is it. This is June 30th, Sadnov. We have to take a quick look at that. I know we got some updated slides that we'll have for you today. Are we going to do this today on the morning show, or are we going to do it just in the afternoon?
No, we'll do it in the afternoon. But
you don't want to give a little bit of a snapshot, maybe before we get to my friend Dr. Jim there. I mean.
I mean, if
Or
you're
after Dr. Jim, maybe?
if you're dying for a snapshot, have a party. Let me take a quick look here and see.
Well, I think our viewers might like to see it. Plus,
All right,
I
go
mean,
ahead. Show me what you got.
I'm so much closer to it than you are. John, do you see those? Oh, there you go. Yeah, John's got it going. John knows what's going on.
Thank you, Tony.
There.
John, this doesn't do. Yeah, all right, whatever.
Oh, don't
where
worry.
are the actual
We've
picks?
got more for you.
Where are the actual picks?
The other stuff is not updated yet.
Oh.
Well, SPX is 6188, Sosnoff. And just to give you a glimpse on what you have, this would be what, the second quarter? Is this what we're looking at?
Yes.
You had 5,600, Sosnoff.
I'm pretty close. Okay.
There you go. 5,600, Sosnoff. But look at the bat. 6451, Sosnoff. That's right. I'm closer.
Well, the first quarter, I basically almost won. So the second quarter, I'm off by big deal. I'm off a little bit. We'll see.
We're off a little bit by 600 points. You couldn't be off 600. If I told you you had to be off by 600 points, you couldn't do it.
Well, you were off by 500 the first quarter.
Nah, not really.
Yeah, you were.
Look at Scott. The only good thing you have is you got Scott in your pocket.
I mean, all I can say is he must have seen my pick. That's the only reason he.
Look at my son Nick. Look at my son Nick, 63 and change.
Well,
He knows. He's a true believer.
Liz is right there.
Liz is right there at 61.85. We're 61.85 at this moment. She could nail it. Jenny's there too. It's pretty close.
Liz is on the money.
Liz is on the money. So is Chris. He's close.
Well, Jenny's closer than Chris.
Yes. Well, obviously. Thank you for the math, Sosnoff. Appreciate it. With SPX, right, you see right there, 61.84 on the bottom of your screen. Yes, I would say that Jenny is closer than Chris. Good job, Sosnoff.
Let me see where I got filled on these. Hold on a second. You're annoying me.
Sosnoff, if it wasn't for Scott, you would be the biggest loser.
Well, but I was the biggest winner last time, so you never know.
Actually, you couldn't be the biggest winner last time because Scott had 57.50. You had 57.27. So you were nowhere, Sosnoff.
I was right there. But who's picking pennies?
You were the first loser.
We'll see.
It's all how you look at it, Sosnoff. It's perspective.
There's a star next to my name. That's because I got the closest last time.
There's a star next to your name. There's a star next to your name because, wow, they're really zooming in on it. Good job out of you. All right, Sosnoff, even the S&P's up 17, NASDAQ up 81. We'll take a quick 90-second break because nothing says Monday like this, man. That's right, Dr. Jim coming in the house. Skinny on options, abstract applications. Next, we'll be back in 90 seconds.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
My dad, who was trading options in retirement, introduced me to options trading. He said, you have to check out this tastylive site. The way they taught options was very accessible and easy to pick up. I think a lot of people think that options trading is gambling, but it's not. It is simply probability and taking an educated guess. It's more like insurance. People should watch Tasty Live because you can pick up a lot of information in a short amount of time, and it's actually practical. You can use it to make money, most important part.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, Tasty Live has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. This man in all his glory, nothing says Monday like Dr. Jim the Skinny on options, abstract applications. How are you, Dr. Jim?
What's up, guys? I've got about 5 to 7% extra glory this morning. I mean, I saw you guys 2 weeks ago. I mean, yeah, we're probably about 8%, about an 8% premium here on the glory, I would say. What do you think, Tom? I mean, you know,
I'm trying to think. What look is that? It doesn't. No, it's not.
It's my look. I'm not copying another look. This is my look.
And first of all, it doesn't bother me at all. I don't think it's that long. But I'm trying to think who you look like. I got somebody. I can't place the face right now.
I don't know. Who are some of the famous mullet-wearing humans?
I get a lot of Joe Dirts. I'm getting some Joe Dirts out there.
Joe Dirt.
Like, yeah, I could see it.
Joe Dirt's not bad. It's not bad. You're in the Joe Dirt category.
Sure, I like it. I'll take it. You know, so I did the show last Monday with Liz and Jenny. And so first of all, I mean, talk about a breath of fresh air coming from you two jabronis. Like, that was amazing. But Jenny was like, Jenny hadn't seen my hair. She was blown away by my hair. And so I got another compliment from our very own Jenny Andrews.
When you say blown away, I'm trying to say... Trying to put a little context around blown away by your hair.
Oh, wait, you guys will appreciate this. You'll probably appreciate this more than I will. So I haven't seen my mom in a long time. Like, I haven't seen my mom because, I mean, they're up in Detroit.
She didn't recognize you?
She didn't know I was growing my hair out. She had no idea. Well, anyway, my brother-in-law sent her a picture that one of our viewers posted on Twitter and said, hey, have you seen, she calls me Jimmy, said, hey, have you seen Jimmy lately? And she's like, no. And she looked and she was blown away. And so she called she called Autumn. Autumn's birthday was on Thursday. So she called Autumn to wish her happy birthday. And she said, hey, tell my son, I don't know what he's doing with his hair, but he's starting to look like Howard Hughes. I didn't get the reference. Do you guys know who Howard Hughes is?
Well, he was a very wealthy recluse. I don't actually remember a picture of him. I don't know if anybody
You're like Howard Hughes without the money.
Yeah, but I don't know if anybody ever
Apparently,
saw Howard Hughes. I thought nobody ever saw the guy.
Well, that's the thing. I guess. I mean, because I looked into it, he kind of went crazy.
Yeah, he
And
went
he
crazy.
just let his hair
Right.
he just went his hair completely. It was completely disheveled. And I'm like, come on, man! Like this is not disheveled. I mean, you have no idea how much time went into this morning. You
Now
guys
you
have
got a
any
little
idea?
Andrew Agassi going soon. You're gonna get
No,
all the
Andre Agassi?
I think he said Andrew. Andrew Agassi.
Andrew Agassi is Andre's brother that didn't quite make it. Okay, he's playing. He's a pickleball player.
He's a pickleball champion right now.
Oh, that's so good. Oh, that's so good. So hey, so give me a quick highlights from London, and then of course we got to talk about the Options Crash Course live in Boston in 2 weeks.
And Denver.
Yeah. What do you want to know? It was great.
London was great. London.
I mean, it would have been better.
I read about the lamb shanks. I read about the Chinese food truck. I read about all that stuff this morning.
It would have been better in London if we had air conditioning. But other than that,
it was a little warm.
Yeah, that seems reasonable because I mean it's summer there too now, right? I mean it's the same climate basically, right?
No, the venue didn't have air conditioning.
Oh,
so, yeah.
It was
Okay.
not our best venue choice. That was the problem. It was a bad venue choice, but it was but it was a great show.
Awesome. Well, there you go. Beautiful. Beautiful. So you speaking of
Dr. Jim, my peeps are saying that you look like the quintessential Floridian midlife crisis in a small town Florida home. Like you're having a little bit of a midlife crisis. That's what they say.
I'm thinking he's more like kind of, summer off the Appalachian Trail type thing, like
kind of like the Oregon Trail that we all played like 35 years ago. Like, yeah. That's that's good stuff. That's good stuff. But speaking of great shows, we've got one coming up in Boston on July 13th. John, can you hit me here with a little promo slide? Ooh. July 13th, Options Crash Course Live. Tom, I'm going on the road all by myself. It's how I've wanted it from the very beginning, but I've had to pay my dues and travel all around the world with you. And now you have finally cut me loose by myself. And so,
no, we had to teach you how to travel, Dr. Jim. We had to, you didn't know how to travel. We taught you how to travel. Now we're letting you go.
You got Brittany going with you. You got one person.
Mm-hmm. Yep.
You still need a handler for sure.
You definitely need a handler. You can't, when you say all by yourself, you're going to be on stage all by yourself, but you can't possibly even find the venue on your own.
No, right. I've got Brittany for all those things, which is amazing. So I'm super pumped about that. But no, it's going to be great, man. Options Crash Course Live. I'm so excited. And July 13th, you can still register. I mean, tastylive.com/events is totally free. We just need bodies in the seats, Tom. Bodies in the seats. That's all we're looking for.
Love it. Well, I mean, how are your Red Sox doing? I haven't really paid attention. Are they out of it yet?
No, we got some finance to do today. John, cue us up here on the slides. Let's talk about some finance today. So, let's do it. So today we're going to talk about something the Red Sox most definitely do not have. What is alpha? So what is alpha? So this is why we get up in the morning, gentlemen. This is why we do what we do. Is that not correct? I mean, this is what we're going for. There you go. So John, hit us here on the intro slide. So the possibility of generating alpha as active traders is what gets most of us interested in actively trading the markets, where alpha is most commonly defined as earning an excess risk-adjusted return on your portfolio. But interestingly enough, the source of alpha doesn't come from the trading world at all. So how do you guys define alpha? If you had to give me a working definition of alpha, what would you guys say?
I would say it would be just the back of the envelope definition would be additional upside. 2 words. Extra upside.
Additional extra upside. Okay, so extra over and above what?
Over and above whatever the whatever the expected range is for everything else. So if the expected move, let's just say on some product is 10% for the year, additional alpha might be giving you another couple of percent.
And I would also add velocity of the move too. Like alpha seems to have a little bit of happens faster. Like it's a strategy on steroids or a happening on steroids kind of thing.
Okay, so that's really interesting. So Tony, you think a component of alpha is actually the speed of the result?
I do.
Okay. So the faster the speed, the higher that component of alpha, obviously.
That would be part of my opinion. Yes.
That's interesting. No, I like that a lot because you don't typically hear that. I mean, what Tom said, that's all the regular mumbo jumbo. There's nothing really special, nothing unique about that. But
right.
with Tony, what you just said,
get with Tom, you don't get anything unique or special. So
yeah, but we have to include him, Tony. Like I can't just talk to you the whole time.
Of course, so, for the time being.
But the speed, that's really, really interesting. Very, very interesting. Okay. So I pretty much agree. It's an excess return, on a risk-adjusted basis. You could use. The traditional benchmark would be S&P 500, but you could use a lot of different things that you might be measuring it up against. Okay, what I want to talk about here today, though, that I think is quite interesting, the actual source, the origination of alpha, the alpha that we use every single day that we're all striving for, it's actually not from finance at all, and that's what I wanted to talk about here this morning. So, John, go ahead and hit us here on the next slide. So if you look at simple statistics, right, if we were to look at just a very basic regression, this is essentially where alpha comes from. So when you have like a single univariate regression where I'm just using one independent variable to measure its effects, its impacts on some dependent variable, then the model would set up as the following: y equals alpha plus beta x plus epsilon. So x is your independent variable, y is your dependent variable, beta is going to be your coefficient on the independent variable. Then epsilon is going to be your error term. Well, what this is trying to measure is, okay, I'm trying to measure the returns on the stock market, and I'm trying to figure out how much does the size of the company depend on the returns of that stock or whatever. We're going to talk about that here in just a couple seconds. That would be one way of kind of building a regression around how do I capture the returns on the stock market. Alpha shows up in this model because here's what alpha measures. If you build a regressionary framework and you have some alpha that shows up and it's statistically significant, what that tells you from a statistical standpoint is whatever you included in the model is not fully capturing what's driving the returns on whatever you're looking at. So in other words, it's telling you that there are extra impacts outside of the model that you have not accounted for. And so again, when we start thinking, you said additional upside, Tom, something extra, right? That's exactly what this represents in a statistical framework. And this is what we see here in a regressionary model. So John, here's on the next slide. If we now turn to some academic finance, so these are two of the most famous models ever created in the world of finance. We have the capital asset pricing model, and then we have the Fama-French three-factor model. And I know Eugene Fama is your boy, Tom. Did you have lunch with him over the weekend? I think he's still alive, right?
He is still alive. He's still teaching at the University of Chicago, and we've been trying for 14 years to get him on the show. We have not had any luck.
That's amazing. That's amazing because you only had to call me once. You called me, I answered the first time, and I was there. I was there later that day, actually.
How do you say he's less desperate? Usually.
In fact, I think I showed up before we got off the phone. Like we were able to finish the conversation in person.
Usually after you win a Nobel Prize, you have a little bit more leverage.
Sure, that makes sense. And so you've got the capital asset pricing model, you've got the Fama-French three-factor model. Okay, capital asset pricing model, the CAPM model, very famous. Basically, what it shows is the biggest driving factor of a stock's returns is going to be its beta. So whatever beta the stock has, which essentially measures, how sensitive it is to overall market returns, that's going to have the biggest impact on a stock's returns. Would you guys think that's fair? Do you guys think that that's a fair point to make, with the beta being maybe the biggest factor of a stock's returns?
Ooh, I've never thought about that before, but I guess beta is, the higher the beta, the bigger the expected move, so the bigger the potential return. You're not going to get a stock with low beta to give you the outsized returns, that's for sure.
That's correct. That's exactly right. That's exactly right. And remember, beta just measures like how sensitive is this stock to the overall market. And if we think about all the main stocks in the market, they're all generally going to follow the market. Like when the market's higher, most stocks are going to be higher. You're going to have outliers. You're going to have things that obviously don't necessarily follow suit. But beta is basically capturing, okay, how sensitive is this stock to the overall market? And obviously, the more volatile names, the bigger fluctuations are going to have higher betas. Your Pepsis, your General Electrics are going to have lower betas. The second model, though, the Fama-French three-factor model, this one is interesting because not only do they use beta, so they build off of CAPM, but they also include two additional factors that they believe, Fama and French, believe are big driving factors of a stock's returns. Number one, the SMB, that's small minus big. That's essentially the size of the company from the standpoint of there's a premium to being a smaller company relative to a bigger company. And then high minus low, that's your HML. This is like a book value versus market value metric, and it essentially captures the relative valuation of the stock with the kind of the original hypothesis being lower book value stocks are going to deliver higher returns in the end. In other words, stocks that have been beaten down are likely going to give you better performance moving forward. But here's what's maybe most interesting about all this. The alpha in both of these models is not only present, but it is statistically significant in a big, big way. So again, what does that mean? That means that these models, they might begin to explain stock returns, but they're still not getting you all the way there. There are still extra impacts that are driving the stock returns that we see every single day. Does this surprise either one of you guys?
Ooh, surprise? I guess not. I mean, I can't speak.
Are you surprised that I asked you if you are surprised?
Yeah, I mean,
that's surprising. Yes.
Yeah,
I mean, I can't say that these models surprise me because I don't really understand them, but so I'm not sure what's the surprise.
Well, these are two of the most written about, most studied, most researched models in all of academic finance over the last 70 years, right? And essentially, with a statistically significant alpha in both of these models, it basically is saying the work here is incomplete. The work here is not finished. There are still things that could be driving results that we are not able to capture, that a beta doesn't capture, that a size doesn't capture, that a book value doesn't capture. And so as an active trader, this gives me tremendous, I walk away from this feeling very hopeful. I walk away from this feeling very encouraged, thinking okay, now maybe my strategy selection does matter. Maybe that's kind of part of the alpha. Maybe my management techniques do matter. Maybe that's kind of part of the alpha that's not actually captured here. And so, I bring this up all the time on the show, and I'll bring it up again right now because we have so many grad students that watch the show. They reach out to me all the time. If you're looking for a dissertation topic, this would be an amazing topic, right? Build a model around derivatives and start to talk about alpha in a world of derivatives. And start talking about strategy, start talking about management, start talking about some of the things that we talk about all the time, overstated volatility, implied volatility versus realized volatility, et cetera. And I think that you could really kind of push forward the field of finance in some brand new ways. I don't know that it's been done yet. Now, I haven't looked at academic finance. It's been quite some time because Tom typically doesn't let us do that. But if you're looking for an idea for a dissertation topic, I think this would be a great idea.
Saz, are you looking for a topic?
I'm not looking for a dissertation topic, thank God. But if I was, I kind of agree with you. It'd be fun.
I think it'd be super fun. And I know this from firsthand experience. It's incredibly hard to come up with dissertation topics that have to check a bunch of boxes. Number one, they have to be relevant. Number two, they have to be interesting. And number three, they have to be not done before. That's hard to do, Tom. That's very, very hard to do because every time I tried to look for something, it just kept saying that this has already been done by Tom Sosnoff. And I'm like, well, man, I can't do it. Tom already did it. And so it's what am I going to do?
What?
You feel me?
What is this, sweeps week? What's going on here?
Well, let's go to the next slide. So I'm in a good mood, man. I got Boston coming up in a couple of weeks. It's going to be amazing. So, all right. So what does all this mean? the existence of alpha and even some of the most prestigious financial models ever developed suggests that there are still factors impacting portfolio returns that research has not been able to quantify, which is exactly what we just talked about. Here's another thing, though, that's very interesting for all my statistics junkies that might be watching the show. There's another metric that is oftentimes looked at when it comes to regressionary models. It's called the R squared. And what the R squared is trying to measure is when I look at the model as a whole, yes, we have alphas and T statistics and P values and all these other things we're looking at to try to determine, what's worthwhile from all the output. But at the end of the day, how explanatory is this model as a whole? Is this model offering a lot of explanatory power for whatever I'm trying to study? So for us, that would be like stock returns. Most financial models, including the two that we talked about this morning, the R squareds on these models are incredibly low, incredibly low. So what that means is even if you find some statistically significant variables like size, book value, etc., that's impactful and that's helpful. But the overall model is still leaving so much to be desired, which again, that kind of shows up in a positive alpha that is statistically significant. And so, again, just for people out there, for students out there that are thinking about an idea, this would be a good, branch of research to go down. But even if you're not in, because that's going to be a very small section of our audience, obviously. As an active trader, though, this leaves me feeling very encouraged. This leaves me feeling very hopeful that, all right, there may be some things that academic finance has not been able to answer yet. And maybe, just maybe, Tom, we're filling in the gap a little bit here at Tasty.
Hope so.
Man, I hope so too. And so, let's get him.
Sound very optimistic about it, Dr. Jim. I'm not.
No, but honestly, Tony, that's about the ceiling that we can get from him, is it not?
You are.
I mean, you got to know what you're signing up for. So let's get him a few takeaways. I got to go ahead and find some pictures of Joe Dirt to bring to my stylist. So generating alpha is what gets every active trader excited about engaging with the markets, and the financial models suggest that there are still factors impacting returns that haven't been discovered yet, which could mean that a skilled enough trader could indeed earn consistent alpha over time. And there you go.
What do you think about that, Sosnoff?
I think it's a good piece.
Well, thank you. Thank you. And, also, I will say it does look here right before the All-Star break that your Cubs against my Red Sox for the better record, that's looking like a pretty decent wager on your part.
Hey, Daddy.
Well, I already have $20 cash on hand, so let's not forget that, right? And what I'm probably going to do, actually, is I'm probably just going to have John McGloin pay you, because I also have a little side action with John McGloin.
Oh, God.
The White Sox. Yeah, so I'm going to do one of those deals. Yeah.
No,
round and round
these are not fungible bets.
No.
Everything is fungible. Hey, it's 2025, man. Everything is fungible. You can find it on the blockchain, right? So my debt, you can find it on the blockchain under John McGloin's number.
And Sosnoff, don't think your payment didn't go unnoticed in the Oklahoma bet that we had. It came on time, and I appreciate it. I tweeted it out that there's nothing better than waking up to Sosnoff cash in the morning. So you paid on time and you paid in full. So thank you, sir.
You got lucky. Halliburton got hurt.
You're not kidding.
I agree with that. If he didn't get hurt, they probably would have taken it down.
It didn't look good. We're going to take a quick 90-second break. Good job out of you, Dr. Jim. We got a market measure we got to get to. So I'm going to take a quick 90-second break, come back. Even the S&Ps have not moved, so I don't know if they're up 15.
No.
We'll be back in 90 seconds. Let's Tasty Live.
They have not moved.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here.
And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast.
Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon. Every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. That's right. With this market measure sound off, even the S&P's up 14.25. They moved 75 cents for the first time.
I mean, they've been trading right here. Oh, well, I'm watching the NASDAQ now because I'm offering some futures about $10 higher, but they haven't even moved. Let's put it that way.
Yeah,
And
NASDAQ up 80, Russell up 6, Dow up 156, everything up a little under half a percentage point. Let's just call it a third of a percentage point. Hanging steady. Volatility only in by 10 cents. I don't know if it's mid-range for the day.
I know. I haven't done much. Just made a couple of adjustments. Only 17 trades so far this morning. Nothing. Anyway, I'm Tom Sosnoff. He's Tony Batista. This is Tasty Live. Thanks for joining us back. We both were on vacation last week, and for the last 2 weeks, I was on the road for a week and then away for a couple of days last week. Tony was on the road for a couple of days also, and then took some time off. So we're back, we're refreshed, and ready to go. Right? That's it.
I am. All I'm waiting for is some action. So I don't know if I'm all dressed up and ready to go. I haven't had any action yet.
That's all dressed up.
Well, you don't know. I don't have pants on, but yeah, This is about as dressed up as I got these days.
I don't need to know that. It's already more than I need to know. Anyway, happy to be back and happy to have missed a 4% rally or 200-point rally in the S&Ps last week. Now I just need, I don't know what I need here. I think I want a little uptick in the morning and then sell off in the afternoon. I think the close.
Okay, well, you haven't gotten either yet. We'll see if you do.
Yeah, I know. It's the end of the quarter on the close today, so it could get a little, I don't know, maybe a little funky. I don't know. I don't know if the end of the quarter means anything anymore. It used to, but
window dressing? No window dressing? We already had the window dressing with the 3% move last week.
First of all, what are you window dressing at all-time highs? There's no window dressing.
That's what I'm asking. Did we already have that move? That's what I'm asking.
There's no window dressing at all-time highs. Anyway, we got a market measure for you today. And let's see, do we have anything else? Jim just mentioned the show he's got coming up. Tony and I have a show we're doing in Denver in the end of July, and we're not officially into July. It was July tomorrow, right? So we're not officially
30 days has September, April, June, and November. That's right, Sadnoff. Tomorrow will be July 1st.
We haven't been to Denver in a while.
That's why it's end of the quarter today, Sosnoff. So end of the quarter would be end of the month for most people when they say that. And that's why we're doing our end of the quarter picks and winners, Sosnoff.
Well, in less than a month, we'll be at the summit in Denver, Colorado on Friday, July 25th at Work by 11. Can't wait. So
that's right, Sosnoff. It'll be my first show as a 63-year-old, Sosnoff. Hopefully I still got my good stuff.
Well, you didn't have your good stuff when you were 59, so how are you going to get it back when you're 63? You didn't have your good stuff when you were 43. 63. Oh, my God. Yeah, your good stuff. Your good stuff. You might not have had your good stuff since you were 23, right? So, good stuff. This is the problem. This is what I deal with, okay? Take a fill, Phil.
You did. You sold some NASDAQ futures. Lucky you.
Lucky me, yes. But this is what I deal with. Anyway, so hopefully, if you haven't signed up here in the Denver area, Denver, Boulder, wherever in Colorado, we can't wait to see you on July 25th. We'll be heading out the night of the 24th and looking forward to our Denver, wouldn't call it a vacation because we're going to be there for less than 24 hours, but it's going to be good.
That's right.
Anyway, let's see what we got today. A little market measure. The research team put together something. Let's see. Jade lizard or iron condor. If you knew nothing about options, you had no idea what the show is about, nothing sounds wackier than jade lizard or iron condor. And just so you know, jade lizard is a relatively new strategy. It's been around forever, but it didn't really have a name.
Sure.
So we never used it back on the trading floor. And I don't even know if I ever used the term iron condor on a trading floor. Did you?
No.
I don't think so. But that's been a little more popular for probably a little bit longer. But let's let the numbers decide. First of all, a jade lizard is essentially an iron condor with one less long leg, right? It's a short put and a short call spread. An iron condor is a short call spread and a short put spread. So they're basically the same thing, except the jade lizard has one more long put. The iron condor has one more long put than the jade lizard. So essentially, the numbers should say, I'm guessing, but the numbers should say that a jade lizard is going to have maybe a slightly better success rate, but that would be my guess. What do you think?
I'm going to go with the jade lizard too, even though the iron condor has defined risk to both sides. I think the jade lizard is probably the winner there.
Well, since the jade lizard does not have defined risk to both sides, only to the upside, that if you take more risk, you should make more money. So the jade lizard should make more money. But let's see what the numbers say. We have not looked. So we know that both of these are premium selling strategies. The iron condor uses a put spread and a call spread to define risk on both sides. On the other hand, the jade lizard is slightly more directional. It combines a short put. This is actually not written correctly. It combines a short put with a short call spread to eliminate upside risk. So this setup gives the jade lizard a unique profile, especially in bullish or neutral markets with its elevated volatility. So we're going to compare the performance between these two. essentially finding a sweet spot for jade lizards where they may shine compared to the iron condor. Let's go to the next slide.
Okie dokie. Now, but from this write-up, it doesn't seem like the jade lizard looks like the sure winner here.
They didn't make it obvious. Okay. So 10 years of research, 45 days to expiration, managed all at 21 DT. We analyzed multiple metrics to assess the trend in high IVR regimes and low IVR regimes. I'm assuming that both of these are still going to have the same results, although high IVR regimes should be better for iron condors, more so than even jade lizards. Let's take a look.
Okie dokie.
Oh my God, this is small print, John.
Small print is hard for Tom as he doesn't wear glasses because he doesn't need them.
Excuse me, I have 20/20 vision. I was worrying about you.
That was evident in London for sure.
Despite people that live in glass houses should not throw stones. Despite iron condors bringing in more premium, their lower win rate and negative average return suggest the risk-reward ratio isn't favorable over the long run. But jade lizards, while collecting less premium, deliver a more consistent and more profitable outcome, especially in low IVR environments. It is noteworthy that the high IVR improves the premium collection, but doesn't translate into better profitability. So here's what we're going to take a look. This is in the SPY. Now, we don't do a lot of, to be fair, we don't do a lot of jade lizards or iron condors in the SPY. And the reason for that is because the implied volatility is never really that high. But if we take a look and the first slide in the low IVR regime, the win rate for jade lizards is going to be high because we rally a lot. And the premium over buying power, it's going to be lower because you're not collecting as much. And the average, let's just see, the average return on capital. I think that's the most important thing. The average return on capital is just under 1%, where it's a negative 1% in the S&Ps in low IVR. We have never been a fan of selling iron condors in low IVR. We just don't do it, period. It's a high IVR trade for us, and it's not something that we do in low IVR. Now, we also don't do a lot of iron condors in the S&Ps. Now, I'm not exactly sure what, can you go back a slide, John? Because I don't know what the short delta was here. They didn't really say, did they?
No.
Can you go back one more slide for just a quick second? They didn't say here either. Okay, so I don't know what the short delta is, but my guess is they're not wide enough to create these, to make winning trades out of these. In the high IVR regime, yeah, the jade lizard outperformed the iron condor dramatically as well. Okay, but I just don't know what strikes they use, so I need to find that out. Let's go to the next slide. When we look at the last slide was letting him go to expiration. When we look at managing early, which is how we generally make all these trades, you can see that in high IVR, you can't tell from these numbers that much. While the jade lizards generally outperform on returns, as seen in the previous table, they expose the trader to much larger downside risk, especially at high IVR regimes. Tail risk profile is notably asymmetric. They can work well until they don't. Iron condors appear more defensively structured, lower rewards, but also tighter risk controls with smaller max losses and average drawdowns. This suggests their utility as a risk managed income strategy, albeit with reduced upside. And again, this is just showing losses on this page, so you can't really see the upside. Let's go to the next slide. The analysis clearly demonstrates the jade lizard's superiority over the iron condor across all measured IVR regimes. That's the way it should be if you're taking unlimited risk in one direction. The strategy shows consistent profitability, higher win rates, and better risk-adjusted returns, while the iron condor requires less buying power. Its negative expected returns make it unsuitable for deployment without significant optimization. What is significant optimization? It's wide strikes, high implied volatility, moving it far away from the at the money. Let's go to the next slide. So after the study, we found that jade lizards consistently outperform iron condors in terms of win rate and returns, especially in low IVR environments. However, jade lizards come with a higher degree of risk. Iron condors, while less profitable, offer more stable and controlled risk. The bottom line is that jade lizards can be used for better profits when IVR is low and the market is calm, like it is now. And iron condors can be used when you want lower risk or steady exposure. But again, it all depends on your risk tolerance and your trading objectives.
Good job out of you. Good job out of the team. What do you say there, Sosnoff?
Yeah, it needs a little more context. It needs to know what the short strikes are on the iron condors. We should
like where right and how wide they are.
Yeah. That's right. We'll add that in post because you need that context, Tony, to tell you kind of why the iron condor didn't work.
Sure. Because the wider it would be, the more chance of a better performance it would have had.
Yes.
If it's very tight, it's going to have a much less. If it's $5 wide, $3 wide versus $10 or $20 wide.
That's correct.
Totally agree.
Yep.
Let's take a quick 90-second break, Sosnoff. We'll come back. We got more Tasty Live. What comes up next, Soz?
Your boy. Your boy chick.
We'll be back in 90 seconds. Find out who my boy is next. We'll be back in 90 seconds with Tasty Live. My boy.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Craig in New York City, what's up?
I just want to say, I've been with you since the very early days of Thinkorswim, and traded all kinds of markets here and there. And I got to say, I could be off so much worse if it wasn't for what you guys have sort of drilled into me over years and years and years. And so I just want to thank you, because you could have easily just taken the money and run when you sold Thinkorswim, and you didn't, and you started this. And you basically have just given me this full education in this thing that was completely foreign to me many, many years ago. And so even though I've lost money in the last few days, you've saved me a lot at the end of things. Like, losses could have been catastrophic, and they're not. Cool. So I appreciate you.
I hear you.
I appreciate you guys. Thanks so much.
Thank you, man. And I appreciate you holding on the line to say that to us. So thank you.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. You know, that's what I do.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Tomas, we are back, my friend, and you know what that means. Enough out of you. The moment I've been waiting for.
COVID boy.
Does he?
Tasty Trade World Headquarters, your friend of mine. That's right. Mr. Scott Sheridan. How are you, kind sir?
I am excellent. Hope you are too. I think we need to pull a calendar out and figure out the last day that all three of us were on together. It's 3+ weeks.
Well, you've been away from.
You guys were as gone as long as I was. Oh, here it comes. We were working. I got it. We were working.
Hey, wait a minute. Okay. Wait a minute. What are you doing? Like a calendar month? Is that what you're doing? Or are you doing the
I was gone for 2 weeks,
months?
of which Juneteenth was in there, so I missed 9 days of work.
We worked the whole week, including on Juneteenth.
Please.
That's correct.
Please.
We did. We were in the office filming.
Okay,
live.
Juneteenth is only a holiday here. You don't get credit when you're not in the country. How many days? How many days were you on vacation? I understand. How many days were you on vacation?
How many days? 4.
How many?
4.
4. You weren't on vacation all last week.
No, Monday night I did a show in Milan.
Okay, how about you? Oh, by the way.
5.
By the way, I was a little hurt ass. I was with you on this one. I came to your defense.
Who are you talking to right now?
Tony.
Oh, what did he do?
What?
I heard you weren't invited to a wedding. And then I said, well, that makes complete sense that you wouldn't be invited until I found out it's Bride Daddy.
Yeah. I sent them a text message because I said, from Facebook, it looked like a lovely affair. Everybody looks very happy. The food looks fantastic. I can't wait to hear all about it the next time I buy you dinner again at EJ's.
Well said. I'm on your side for this one. Not that I would want to go. Like, to me, I'm more on Tom's approach.
Who got married?
Bride Daddy's daughter.
I didn't get invited.
I didn't get invited either. But I'm on Tom's side now. I prefer not to be invited.
He hates.
Right.
He hates.
Like, I prefer not to be invited. So that's okay.
Oh, thank
I wasn't expecting to be invited to that wedding. But Bab and Bri, come on.
I agree.
Right? Oof.
Yeah, and I'm glad we said it for the world to see, and that we can clip this out for him.
I was when your son told me, I said that's wrong. I said on a lot of levels that's wrong. You can just seat you at a different table from the former missus.
I mean, you could have eaten.
You know what? I would have respectfully declined, just because it's not about me. But I would have liked to have been asked.
You would have 100% been there. You would have said to the current missus, "We're going. Pack up the pickup. We're going."
He wouldn't have gone. Really? No.
Pack up the pickup, did you say?
Pack up the pickup. We're going. Okay. No, he went to.
No, I wouldn't have gone. I would have respectfully declined. I would have sent an extravagant gift.
Yes.
And then I would have been done.
Yeah, he would.
All right. So before we went on air, I tried to get some information out of Tom about his trip, but Tom should work for the CIA or the FBI or the mob. He could be a witness.
What do you want to know?
The mob.
The mob,
You can make
right?
a lot more money with the mob.
He's never seen anything. I don't know what you're talking about. Like, I asked him, how was it? Yeah, it was good. Like,
good.
It's good. Like, what are you working for? What is it? Like one of the travel
What do you want me
guys?
to say?
I don't know. You could say, look, you could tell me about some of the experiences. You could tell me about the hotel. You could say,
Very
Blue
nice.
Lobster sounded good.
Did she do the reverse cowgirl? Like anything. Like anything.
Oh boy.
Omaha.
All right. So anyway, Tony, I'm going to go to you. How was your trip? Did you make it to Paris? It sounds like you did.
I made it to Paris. I was not there for the floods. I don't know if you saw they had massive floods in Paris the day I left, the day before I left, the day after I left. So I missed them.
see the
which
floods
was great.
I didn't see the floods. I'm questioning this whole thing.
I'm questioning the floods
That's
myself.
because you guys are ugly Americans and you're not worldwide. You guys don't give a crap about anything if it's not on. Like, if you guys care about if the pods are good on the plane, I am a man of the people.
Oh, yeah,
and I am
people.
watching about what's happening in the world's current events.
All right. So tell me, my most pressing question. Does the prince get his own room or does he sleep on a sleepaway with you and the missus?
It's very it's very
Okay. Enough said. He's in the middle of the bed. He's either on the pullout or in the bed. Okay.
It's safe to say there was no cowgirls, reverse or otherwise, going on my trip.
All I heard him say was, and this is a true story. I heard him say to Chris, I heard him say to Tony's wife, "Mom, you don't have to do that."
Omaha.
you don't need to do that.
Ma, you're better than that.
Mom, you are better than them. I heard that. That's all I can confirm.
Oof.
Oh God, that's funny.
All right, so how was Paris? Great city.
Paris was wonderful. I liked London better, but Paris was wonderful.
Did it rain every day?
I kept screwing. I kept screwing up and getting dirty looks because I kept saying like "see" instead of "merci." I would say "see," and my kid and my wife would shake their head. It was just a mistake.
Oh, they didn't fall for your Oliver accent?
Please, sir, may I have some more? I mean, they served Vinny beer and alcohol, which was fun. He enjoyed that. So
yeah,
that was a good time in Paris. Yeah.
Do they even? I don't know. Do they have even drink?
I think you can drink.
I think you can drink. Yeah. So, but you didn't make it to Milan, right?
No.
I did not make it to Milan. I went to London and Paris. I went to London for the show, and then
Milan was a dream team.
Me, Dylan, and Rich.
Oh, nice.
Yeah.
Sadlov, you never said who got to watch.
So we
who got to watch?
Does Dylan
you
still
don't have
live
to
there?
say who consummated the marriage. Who got to watch?
Really?
Oh yeah. Dylan's a schmucker. He knows everybody.
Nice. Does he speak Italian?
Yeah.
Nice.
I mean, according to the Italians,
he does not speak Italian.
He speaks lousy Italian,
but he can navigate.
When you're sitting there with him, he's talking back and forth. The waiters, yeah, he speaks perfect. I mean, from what I can tell, according to those guys, we had a translator for the event, and he
You
laughed.
had a translator, so you were talking and then they were translating for you?
Yeah.
Oof.
It was a little awkward.
Oof. So you had to pause?
Yeah.
Wait a minute. Was the translator able to hear what you were thinking? Because if he was translating what you were saying, you screwed it all up.
It didn't matter because Rich doesn't understand half of it anyway. So we're
that's the first time you've done that, isn't it?
Oh yeah.
Translator?
Yeah. Andrea, he was great.
Wow. Why wouldn't they've just done like a screen with subtitles?
How do you do that?
There's systems that
Subtitles cost money.
There's systems that just ingest your what they'll do it.
Well, we don't have an extra screen because it's all the market buy. No, this guy he runs an option training business and he's been a taste trader for a long time. So he's very clear of all the concepts. So he wasn't like just
got it.
He understood everything.
Got it. So because if it's a hard jargon lingo, like if you don't know,
he's a very active trader.
It loses something in the translation.
Right.
He's very active. He runs an option firm, one of the biggest option firms in Italy, and super nice guy. He was great. So yeah, he was really good. There were a lot of people that flew in from all over, so that there were a lot of people that didn't need any translation, but it was nice to have.
Nice.
And yeah, that part of it was okay. It was a little weird doing it.
Because I would think it would throw you off because you're talking, you got to stop.
Yeah, it was a great facility.
Venue.
Yeah, we were there on a Friday, and 9 Inch Nails was there the next night.
Oh wow!
Oh, I like Line H. Should have stayed.
Wow. And Tony, did you take the train?
I did.
It's a nice experience.
It was great. It was a great experience. I did see on TikTok that the following 3 days later, with this flood that they had in Paris, that there was a 20-hour delay.
Oof.
Which would have been.
I was telling a story when I came back. We took, I don't know, I think 5 bullet trains in Japan. Mm-hmm. They are unbelievable. It's such.
Well, this is not a bullet train. This is just a fast train.
No. I understand, but these are bullet trains. First of all, the amount of respect they have. No, you cannot talk on your phone. They don't even want you talking to anybody. Like if you're listening to anything, put your earbuds in. It's perfectly quiet. You could hold a glass of whatever. You're not going to spill it. That's how smooth these things are. And they go up to 199 miles an hour. So on one of the trains, we're just outside the station and we stop. And they come on. They are so apologetic. They said somebody pulled the emergency alarm on the platform. We have to wait till it's all clear. 4 minutes. We were 4 minutes late. They couldn't stop apologizing, saying, we hope that this didn't interfere with the rest of your day. Then coming home, flying from Tokyo into Minneapolis to Chicago, 2 hours late on Delta in Minneapolis. Yeah, whatever. Okay. Like 2 hours, and you're going, that's pretty good. We're only 2 hours late.
How do you understand what they were saying?
I speak Japanese.
No, how do you understand? They
said it in English. They go Japanese and English.
That's weird that they do it in Japanese.
No, it's amazing because 15 years ago, not one sign, not one word, nothing in English, and now there was a fair amount of English.
So, did you just drop the 15 years ago that you were there also? Did you just like slip that in?
Yeah.
You
Here it comes.
Pretentious, pompous ass.
Not to say that I wasn't there twice in the last 3 months. There you go. Once as a guest. Once as a host, once as a guest. Both amazing.
Did you wear your shirt around when you were in Japan?
No, but I did tell that story. Who were we talking to? We were talking about the Cubs, something about that. And I did say that you had Tom Ricketts on, and the first and only question you really cared about was, is it appropriate for a guy to wear a jersey with his name on it?
It's absolutely not. It's absolutely.
He said yes. I saw the video.
He was just being nice because he felt bad for you two guys.
Well, I didn't wear it. The 6 wore it. Although I have to say, Liz and Jenny, now when I'm on with them, she's the 10. They don't allow me to call her the 6. The 6 wore it. Now, I'm not going to name names, but the guy I was with, he did wear his.
Loser.
We don't need him on the show anymore.
Yeah, well, whatever. He did wear it. So
yeah. Well.
So now
hey Scott, you know it's the end of the quarter.
I'm not that bad. Okay, I saw the list. I'm a little better than Tom, and I think
he's like all puffy chested
because he's close.
No, you're a little worse than Tom.
No, I'm a little better. I'm closer. He's lower than I am.
He's a little puffy chested because last time you missed by 600 points.
No, I just looked at it. Wasn't I 5,800? What am I?
5,600.
All right, listen.
No, I'm 50.
SPX
Q2. Sorry, Q2. 56 and Tom's 56.11. Sorry.
You know what's funny is that last quarter you couldn't get him to put this up. He's like,
right.
He tried to bury it.
Right.
Yeah.
Who's winning? My screen's blocked. Who's winning?
Discord or Liz? She's on the money.
Liz is on the money. 61.85 or 61.82.
Does Tom actually pay?
Tom? Oh, wait a minute. You didn't get paid?
Oh, no. I got paid. I was actually paid on this. No. I got paid.
Oh.
I paid 110 on the hockey, and I collected 50 from Tom on basketball, and I collected 20 from Tom's sidekick.
You don't get paid on this. If you win, you don't get paid on this.
That's wrong.
It's not wrong.
No, it's wrong.
Well, the viewers get paid.
Viewers get paid.
Viewers get paid.
We haven't showed that one yet. We're gonna do that at 2:30. We're gonna save it.
Viewers get paid, but not you losers.
Speaking of losers, do you see what the Bulls drafted?
I like that kid.
The French kid?
I like him a lot.
He's like 180 pounds. He's 6'10", 180.
Watch
He
his
might be good.
highlights?
No, he could be good. Then the big guy from Australia in the second round.
Wait to see this kid's highlights. The French kid.
Yeah, but they said they got to see whether he can shoot. That's not a good. That's not a good comment.
He's like 18 years old or 17 years old.
He's 18 years old.
Wait to see his highlights.
They got rid of Lonzo Ball.
He sucked.
Well, he didn't suck. I mean, he was hurt.
He sucked. Played 70 games in 4 years.
He was hurt.
He played 70 games in 4 years. How important a guy is he?
I didn't say he's important, but he doesn't suck.
What sucked is they offered a first-round draft pick for him last year. They didn't take it.
While he was hurt, somebody offered him.
Yeah.
Who?
I don't know. But he played 70 games in 4 years. Just get rid of him. He's
a bum.
He's a bum.
Well, let me see. Vacation made it 2 hours and 41 minutes.
I'm just saying, he's a bum.
Okay.
I mean, he's probably a nice guy. He's a bum.
All right. Let's go move on to the Bears. How'd the Hawks do? Looks like they got some good draft picks.
Love the Hawks draft picks.
Yeah, I heard they got some good draft picks. And we got the Bears coming in. What's your bid for the Bears now? 7.
Bears?
7.5.
9.
9. You're not 9-bid Bears. 9, you're getting good odds at 9. You're not 9-bid Bears. You haven't looked at the schedule.
9-bid Bears.
9-bid.
By the way, I lost the dinner.
On what?
Slappy got me involved. We had Florida against some people.
Oh yeah, I'm part of the other team.
I know. I made the reservation. Were you on that? Were you part of that?
Yes.
Were you for real?
Yeah, I'm part.
Because I did make the reservation. Tony, if you'd like to join, I'm happy to change.
Where's the place again?
You're not going to be happy. Just so you know, I didn't pick it.
Carson's.
No, I didn't pick it. I had other choices. I want to go to El Shea.
Oh, I like El Shea.
Me too. But the 2 other winners, because you weren't here, so you didn't count.
Oh, it's
the 2 other winners. Go ahead, say it.
Groves and Klink.
Yeah.
Let me
Don't
guess.
tell me they
let me
picked
guess. Let me guess.
Greektown.
No, we're not going to Greektown. It's Steakhouse. Where?
A steak.
Oh no, these guys they're so public.
Yeah.
I'd probably pick like Chicago Chop House or something.
No. More my neighborhood.
Maestros.
What?
Maestros. I figured guys like that probably think Maestros.
No, Joe's.
Yeah.
Oh.
See? I said Tom's not going to be happy.
Joe's is such a pain in the ass to get to. It's overpriced.
Where are you going?
It's overpriced. You're not paying. Steve and I are paying.
It's just.
Where are you going?
Joe's.
Oh, I was there last night.
Were you?
Well, yesterday afternoon, my brother-in-law's birthday.
Wait, the ex-brother-in-law didn't invite you to the wedding?
No, not that brother-in-law. This brother-in-law who still invites me to play.
Wait, he invited you to the Sunday brunch? Nice.
Well, I had to do the show because I work on Sundays, unlike you.
Hold it.
Oh. All right, do you want to join now that you're
Did you get the hash browns with the onions?
Oof.
Oh, they're the Lyonnaise potatoes. They're unbelievable.
That's the best thing they have. That is the
100%.
best thing.
And you know,
100%.
100% I'm ordering Dover Sole.
Oh, God. The hash browns with the onions are the best thing on the menu. Everything else.
Best thing by far.
Oh, here it
by
comes.
far.
Everything else, barely edible.
Don't get the fried chicken and embarrass
No,
us.
it's good.
Fried
it's
chicken's
good.
great. Fried chicken chopped.
6 cops walked in. They all got the fried chicken. They sat in a corner.
See? Tell me cops don't know what to eat.
Well, if you're going to get fried chicken, why would you go there?
Because you get other things. Oh, my God. How about this? I'm going to get you your own table. Be next to us. So you could we'll have a table for 4 and a table for 1. I could do that. I will get another table. You could sit by yourself and you can look over.
When is this date we're going?
Thursday the 17th. Can you clear your calendar? I'm not going to be here. Here it comes.
17th of July?
Yeah, 17th of July, Thursday. Can you make it?
Tony, when's our show in Denver?
Please tell me Thursday the 17th.
I think it is Thursday.
Please.
I think it is.
Please.
No, I can't remember now.
I'll bring some food home for you. What day?
It's the 25th, Denver.
Oh, no, we're good.
No, you're good, Sadov. Yeah, July 25th. So you don't have anything that I can see.
Thursday the 17th, I'm in. What time's dinner? 4:30?
5.
Why? You're not lying, right? It is at 5, right?
5 o'clock.
Oh, why did we should have gone to Asador Bestian.
Oh, if you
a
want to
little out of your price range.
You know what? For you, not for you. For those two, I'll do it. You're gonna have to chip in for that one. But if you want to go and you can get us in,
we should go there. It's so much better than Joe's.
Can you get us a table?
Can I get you a table?
Yeah.
Like, I've been there twice.
So see if you got a yank. I don't have a yank. I've never been there. Have you been, Tony?
No.
Astor
No, I haven't been. I don't have any Yanks. I don't know if you got 20 points on your NASDAQ, just letting you know.
Oh, thank you so much for looking out for me.
Wait, 20 points, that's a winner or a loser?
That would be a winner. I don't talk about the losers when it comes to Sadov. There are too many.
No, thank you. No, thank you. I will hold out for more.
Oof.
Got it. I know you like that.
Well, I got to tell you missed a good week last week.
To be gone.
You missed. That was a good one to be gone. That was like every day. It just did not make a difference. Just up and away. Doesn't make a difference. Bombs, rockets, missiles. Doesn't make a difference.
You know what? I didn't.
I
traded. I adjusted my position each day once, and that was it. I almost dropped my phone in the Mediterranean.
Oof.
I made a last second, got the big paw up and made a save. Kick save and a beauty.
But did she hit you?
What?
Did she hit you while you're holding her phone?
No. Hit a wave.
You know it's waterproof, right? Because I dropped mine in my canal.
Yeah, but if you're in the Mediterranean, like how deep?
He was in 8-10 feet of water. I mean, he was in nothing.
Like 30 feet. I don't know.
30 feet. He's not getting that.
No, he was in 8-10 feet of water.
What do you mean 8-10 feet of water?
How are you in 8 or 10 feet? Were you on a boat? On a raft?
Yeah,
You're on a boat.
Yeah.
Not 8 or 10 feet.
No, it wasn't 8 or 10 feet.
No, it's 30 feet. Then you got to pay the guy to go over. It's a whole situation.
Well, those guys weren't jumping in for nothing. Right. They weren't getting wet. They push you in. They don't go in the water.
Saznov jumped in the water. It was 8 or 10 feet of water.
The water? Beautiful.
Beautiful, but I had to jump in 3 times.
Had to?
They embarrassed me.
Okay, that I'm not believing.
What did they do? Did they show you? Did they move the curtain?
Go ahead. How could they possibly embarrass you to get in the water?
Well, because Corinne jumped in and like 5 times, and then they're like, "You got to go in."
Water's got to be beautiful, crystal clear.
It was beautiful, but it's deep.
Deep?
Deep.
What difference does it make?
Well, I didn't know how good a swimmer I still was. Like, I wasn't sure. And it was deep.
Earlier in the show, you said the water was 10 to 15
30
feet.
feet.
That's what you said.
30 feet is not deep.
He's lying.
Oh, no, it wasn't there. It was
lying.
10 to 15
feet. He had to
feet.
get to shore.
10 to 15 feet's deep.
Well, it was 3.5 meters. Yeah.
That's 10 feet.
Yeah.
That's deep?
Look deep.
Oh my God.
I told you.
When you jump in off the back of a boat, it's scary.
Scary. Was the boat moving?
No, it was anchored.
What was? Did you have a life jacket on?
No.
Oh my God. Have you ever gone scuba diving?
Once.
Did you do like a resort course?
Did a course in the pool in
like in Mexico.
Yeah.
Don't do that. Don't ever do that again.
That was a mistake.
Yeah, that's a mistake.
That's not a course.
Yeah, no, that's just some guy that just says
purpose.
you don't go over 30 feet. The reason they do that is because you can hold your breath from 30 feet or less. I make it up. Over 30 feet, you got a problem. That's why they'll only take you down 30 feet.
I didn't go down 30 feet.
Deepest water I've ever been in, and it was a little freaky. Scuba diving at 2,000 feet. I mean, I didn't go down. Obviously, I was down like 75 feet, but they're like, it's 2,000 feet deep. And looking down, it is a bizarre concept. Like, just there's nothing below you.
I don't like jumping in the water.
Period.
I didn't like the pool we had because it was over 5 feet deep. Okay, I think 3 feet's plenty.
Anything over the waist is too deep?
Right.
Tony, what's happened to him?
I've been trying to tell you this for years now.
I'm moving over to Camp Tony right now.
Thank you.
Oh my God!
I realize I don't really get. I know.
Wait, here it comes. I don't get why people like going in water.
No,
I really don't.
I know he has a boat, but I don't get. You don't jump off your boat, right?
Yes, we do.
Why wouldn't you?
How do you get back on?
There's a ladder in the back.
A ladder.
Oh my God. Now, I will tell you that it's always a good idea to turn the engine off so the propeller doesn't
Wait a
jump
minute. Sadnov. How did you get back on the boat? From the ladder, right?
Yeah, I know, but those ladders aren't easy. I don't get the whole thing.
Sometimes they have, if you buy a big rent or buy a big enough boat, they'll have a platform, which is nice because then you can pull yourself up, put the tush on it, and then stand up again in the boat.
Did you say pull yourself up?
No.
No, this didn't have
the
that.
ladder.
See, a platform. The problem for you with the ladder is it moves, and as the boat's rocking, it's a little hard. I know that feeling.
Nah.
Did Corinne have to help pull you in?
No, she was laughing.
Did Corinne one time in the water go, oh, help me, and then Sven had to jump in and save her?
Sven, we're in Italy. Sven, we're not in Sweden. Okay. How many Italians you know named Sven?
There are a couple in Brooklyn, but we'll leave that out.
Sven, hello. Captain, what's your name? Sven.
Oh my God.
They probably use fake Italian names. They're coming from Albania and stuff like that. Who knows?
No. These are Italians. These were all Italians.
No.
From the neighborhood, Tony.
From the neighborhood.
From the block.
How big is your boat?
71st Street and 13th Avenue.
How big is your boat? How big?
24 feet.
24 feet.
Oh, it's a nice size boat.
Yeah.
10 people.
Here it comes. I've seen bigger.
Everybody's. The
boat I rented.
With a boat.
The boat I rented was 55 feet.
Just for you?
Yeah.
Nice.
But it's not that
55 feet is just on a borderline. You need a crew. Some people who I'm not
55
good
feet's
enough.
a big boat.
Big boat.
It's a big boat.
You need a captain. That's it. And another person.
Well, 55 feet, you don't need a captain, but you have to be really good.
Yeah, you have to know what you're doing. 55 feet's a big boat.
You need a captain's license to do it.
Ski boats are 18.
You know what's funny?
18.
They didn't have any of those.
Ski boats?
They didn't have anything other than to rent, other than pretty big boats. That's it.
So nobody was water skiing?
Nobody's water skiing. You know what I did see? These people on these electric,
Not electric.
The foils?
The foils.
Jet foils? What
are they then?
The jet foil? Or did you see the ones where they go up in the air and come back down?
No, not those.
No, you're riding the water.
You ride above the water on a surfboard.
That's not good for you.
Yeah, those are electric.
That's an accident.
Those are electric, right?
Yes, I thought you meant the one that go up in the air.
That's an accident waiting to happen for you. Okay? You hit the gas, you just face plant.
I don't even know how you get on those things.
My guess is you do it like a water ski. I'm guessing. I've never done it. You probably lean back, you hit the gas, and you pop up. I'm guessing. Or the electricity, not the gas.
Because those people fly around those things, and I'm like, how the hell do you even get on them?
They look like fun.
I guess.
They do look like fun.
They do look like fun. The key is not killing yourself.
They're making boats like that now, Saznoff.
Really?
Yeah.
I'm not a boat person.
I am definitely not a boat person.
No, but it'd be nice. You could get
one and done.
Put it in diversity.
What?
Actually, you've done it. Every vacation you've been on a boat, Saznoff.
I know.
Last 2 vacations.
Everyone.
Last couple.
All 2.
Oh, last couple.
Well, he's gone twice. Before that, he never went on vacation.
I know.
It's the new Tom.
Corinne likes boats.
It is a new Tom. It is a new Tom.
Well, it makes sense because she likes cars. She likes boats. It makes sense.
She's like a man, baby.
Right? At least one of them is. Okay. Right. There we go.
Somebody has to be a top. Somebody has to be a bottom.
There we go. All right. We've changed the list while you're gone. That's how long you guys have been gone. We've changed the list.
What do you mean you changed the list?
Yeah. I could tell you, but then you wouldn't understand what I'm saying anyway because you don't pay attention. Oh, here we go. We like the ding. Top 20 symbols going through the system. First 40 minutes today, no broad-based indices or futures. Tom, for you, number 20, HIMS at a 45. For everybody else, Tesla at 27, PLTR at 23. NVIDIA at a 9, Google with an L at a 36, SoFi at a 29, Meta at a 24, Hood at a 26, Amazon at a 23, Apple at a 25, FSLR at a 53, Oracle at a 26, AMD at a 15, Goog, no L at a 36, GLD at a 23, Circle at a 56, TLT at a 17, and Nike at a 23, iBit at a 5, BBAI at a 31, and number 20 for Tom, HIMS at a 45. Any chance?
How'd the hymns work for you this weekend? Sounds good?
Better than I thought.
Scott, it was a pleasure seeing you, my friend. I really missed you. Sosnoff, I really missed you too, believe it or not. Can't wait to see you in the office. Give you a big COVID hug on Tuesday.
Oh God, don't! If you still have COVID, don't come in tomorrow.
Where did you get it?
No, I tested negative yesterday. Negative
No,
yesterday.
you need like 3 days or a week or something. Don't come in. Where did you get it?
I'm a little.
You sound like crap.
If I knew where I got it, I would have avoided it.
Well, no, because you might say, "Look, I was at a party. People had, who knows."
Well, I did meet a couple of hundred of our closest friends in London. I mean, it could have been there, but it could have been anywhere.
No, because you wouldn't. That was Were you sick in Paris? No, so it wasn't in London. No.
Yeah, I was sick in Paris. Okay, now you're gonna tell me where I was sick. You know what? I'm sick of both of you right now. I take everything back that I just said. I'm gonna take a quick 90-second break and come back. I got more Tasty Live because I missed Liz and Jenny more, and they're on next. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
I bet you work a lot of hours.
Yes. I bet you can't guess how many hours a week I work.
Really?
Mm-hmm.
60.
61.
Oh, God.
$1,000.
So
Boom!
close.
Oh,
So
my day
close.
is starting out great. Want to go double or nothing?
Let's see. What color are jeans?
Blue.
You got
Brilliant color of jeans. They write songs about it.
I thought it was tough.
Double. I win double.
Great job.
Yes, and you get nothing.
I'll pay you in love.
That's not how this one works.
I will pay you
No.
in hugs and kisses.
There is no hug and kiss worth $1 million. Cool.
I could make it worth $2 million.
I've kissed you before, and it's not that good. Woo! This is what I love. Every time the game hurts you, she gives it right back to you.
What do you mean I don't kiss good?
You're awful. You're very mouthy. Man, this feels good. Oh, this is why I do it. All right, come on, let's keep going. I'm on a roll right now. What's the matter?
I didn't know I was mouthy.
You think it would be good, but it's not. You should practice more.
Okay, my turn.
Okay. Try to make a little money back?
Okay, you want to go big?
Yeah, let's go big.
I'll get it on this man's game. I'll get in this man's game.
Yes.
$5 mil.
$5 million?
$5 million and a speedboat.
A speedboat?
Uh-huh.
This is serious. Yes, I'll take the bet.
Okay.
Oh, boy, here we go.
I bet I know the name of your childhood friend.
Nobody knows the name.
Really?
I never talk about him.
Oh, really?
Oh.
Lenny Cancelleri. Bam!
Look who's back testing. Tasty Trade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hello, everybody, and welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Deerking. That beautiful brunette to the left of me is Jenny Andrews. Hello, Jenny. I feel like I haven't seen you in a while.
Welcome back, Liz. Welcome back. You look amazing. Looks
Thank
like you
you.
just came from a spa.
I did come from a head spa. I'm obsessed with the Asian head spas.
Well, you look amazing, and I'm happy to have you back. We had some amazing guests, but I missed you. Glenn Fry. I'm going to call him Glenn Fry and I'm not going to call him Gary anymore. I'm going to call him Glenn Fry. He was great. We had a great FX segment, and TP on Friday. Amazing as always. Amazing as always.
Yeah, TP's the best too, and I've got him next week, Monday and Friday, right? Yeah, next week, Monday and Friday. He's already agreed.
Oh, perfect. Yeah, I'll be taking Lily back and forth to camp.
I will miss you, but it is summer, and there's lots of things going on, lots of moving parts. But yeah, no, I heard I heard your shows were really good.
Yeah, slowly but surely, I'm getting, knee deep into FX, and it's going well. And the cool thing is we're going to have Glenn on every Thursday. He's going to have a segment on our show now every Thursday, not this Thursday because it's July 3rd and our programming ends at 10 a.m. on Thursday because of the holiday. But going forward, Glenn's going to be on every Thursday.
Reminds me of our old days when we had Frank. Remember when Frank would come on Thursdays and we'd talk about all the futures? I can't wait to have Glenn on each week.
I know. And Glenn and Frank are like this.
Are they?
They're buddies.
You can't see that your fingers were crossed. It looks like you just went like this.
They're tight. They're tight.
I love it. So this week we've got we have a lot of stuff to do today. It is a Monday. We're going to go through a lot of stuff. It's a holiday week, and we will be at the SIBO both days, Tuesday and Wednesday. And then because the way the programming falls, and that's why 4th of July is my favorite holiday, they end live programming right before our show. So we will not be here on Thursday or Friday. Yeah, the 3rd or the 4th.
The 3rd or the 4th, we're off. So we have a short week for us, but there will be morning programming on Thursday.
Yes.
Any big plans? Any big plans for the 4th?
No, this is the first year we're not going to be at the island. So, I mean, I'm going to the local fireworks display here. We're going to go to some local breweries. I'm going to be local the whole 4th. What about you?
Okay. Yeah, same thing. We're local, getting ready, packing up Lily for camp. Her list of what she needs for camp is quite long, and we leave the Monday after the holidays. So we're just kind of laying low.
Well, it's like you're sending her to college, but only for a week. I mean, I'm not going to lie to you. If you need anything for the week, I've purchased everything that we need to purchase for a dorm room: fans, oscillators, bedding, sheets, you name it. You can borrow it for a week because I know Lily won't send it back.
I know. I'm not going to take JD's brand new stuff. Never. That's got to be. It's so funny because I remember when Logan went away to college as a freshman, I had everything. Like he had the monogram towels and monogram. I had everything monogrammed. I didn't want it lost with the other kids in the laundry room. And and everything was from Pottery Barn and everything looked beautiful. And now after freshman year, he goes with like the $20 Amazon set. It's in tatters by the end of the year. Like it was only freshman year that he actually went with.
Our friends group chat, because there's 14 of us, is hilarious because there's all these things being like, boys are disgusting. Whatever you buy, you throw out after freshman year. This is my ingenious move, and I'm sure the chat's loving this, but most of them are guys. So I have decided, I bought, I think, 6 sets of sheets, and I'm just going to put them on top of each other when I get there. And then when he needs to take it, he's just going to take one off, and then there's a fresh set underneath there. Isn't that a genius move?
That is, that I like it. I like it. The only hiccup in that plan is like, if someone throws up on the sheets, or if someone,
So you have to put like a mattress protector in between each layer.
In between each layer. There's just a little bit of room for error if something goes through the top layer, and then it's through all 7 layers.
I would just smart.
All I did for him his freshman year was I stacked his sheets up in his closet, so when he took the sheet off, he had another clean set to put on. I don't think that's asking too much.
Okay, there you go. I saw it on, where did I get that tip from? I saw that tip on like a college board. They're like, if you've got a boy, just keep layering the sheets on top of each other and they can pull them off.
Well, it's a good idea, but it's just fresh in my mind because
if you don't have a puker, you can do this.
So we were out of town this weekend. We went to a wedding, and we were out of town. My kids, we left them home alone in charge of the dogs. And I didn't know how Clarence would do without me. He doesn't do well without me. So we get a phone call early in the morning, Sunday morning, wakes us up. It's my daughter. Clarence threw up all over the bed because he was so nervous without me.
Yeah.
And so it went through every layer. Every layer.
I heed your warning. I heed your warning. It's pretty funny. It's pretty funny. How was the wedding? How was the wedding? Do you have any pictures from the wedding?
Okay, I posted one, Liz. I posted one. Let me go to it. Let me see if I can go to it here.
Hopefully it's my favorite picture.
I now I know what I'm going to get you for your birthday. And
yes.
As I said, now I know what to get Liz for her birthday. This entire wall, just glasses of Prosecco.
Oh man, I love this. And it's on wheels. Like I could roll that out at any given time.
You could roll it. We're going to roll it wherever you want to. At one point, the mother of the groom was like, "Why is this in the sun?" And she just started rolling it.
That looks awesome. I love it.
It was fun. It was definitely fun. And it was an easy way when, as soon as the ceremony ended, everyone just could go and grab one. You see, I'm the first one to grab one.
Well, and that's what I was wondering is how did they just then, did somebody run by you like with it, like, you know, when the people are playing tennis, like the ball grabber would just put another glass in there?
No, I was literally the first one.
Good job. I would have been right there with you. I love your dress. You look beautiful at the wedding. But yes, I would have been right there with you.
You know what? I don't know why. I think people were afraid to take the first one, but the bride and groom were nowhere to be found. And they had their own. They had their own, like, where they had all the glasses stacked up and they poured it and it trickled down all the glasses. Yeah. They had their own table with that for them and their bridal party. So everyone was afraid to take the first glass. But I was like, look, this is not for the bridal party. They've got their own thing going on.
I'm gonna go get myself one.
Yes.
And you got to get them before they all heat up, or you're gonna have boiling Prosecco.
Oh yeah, by the end we were plopping ice in there.
Oh, you have to for sure.
It was, you know, it was hot. It was very hot, very hot.
Oh yeah, I can't imagine. Well, you look great. Okay, so that being said, you know what is hot too? This market today is, Jenny, end of quarter, end of month.
End of quarter, end of month, but we haven't really moved. So this morning I was channeling Mikey. I was like, I feel Mikey. I'm going to buy a call spread, and then I'm going to sell a call spread, turn it into a free butterfly or a butterfly for a credit. Well, it never happened. It never happened because when I bought my call spread, spoos were up 17, and I've never been able to butterfly it off.
Oh no. So
even though I was channeling Mikey, I don't think we haven't moved. Like, we have been in this, look at how tiny this bar is. you look at our range, open 61.93, high 61.95.
So I'm looking at my son's account right now. It's down. I have it linked here, and he's got the ES trade and the ES Iron Fly, and he is like, so he put it on at about 9:05, so on for an hour, and he's got 5% profit right now. Because you're right, we haven't moved. So all that's happening is time is ticking on, and his short strikes are still not in the money.
Yeah, so we haven't moved. What I will say, and what Liz and I have seen, if you watch end of quarter, end of month, and we don't know anything. We don't know anything. But end of quarter, end of the month, if you watch those SPX 0DTs at the end of the day, daily.
They'll still have they have a lot of value in them for some real crazy reason.
Yes, today they're going to be much more expensive than usual. So if you go to the 0DT calls, and usually in the day, like these just out the money calls, $300, $350, today they're going to be more. More is usually what happens.
And usually the market is smarter than all of us, right? And so the market is smarter than all of us. When you see them super expensive, sometimes you're like, why are those so expensive? Because something's going to happen. Now, I don't know. Like, I haven't been looking at these at the end of the day, typically, but you're right. It'll if you look at the 85.90 and say like 230, it'll be $3, right?
So when was?
Oh, I know exactly. It was this time. I think it was this one last year.
But the last end of quarter, end of month was March. And I
it wouldn't wait. Yeah, it was.
Like February, March, April, May, June. So the last one, end of quarter, end of month was March. And if you looked at like the minute by minute on March 31st, I don't remember us really rallying the end of day on March 31st. I don't think we did, because I think we both bought calls. We both bought 0-day calls at the end of the day, and we both lost. That seems to be clear in my head.
Well, I you know what? I'm kind of, once again, my memory. You're talking about 3 months ago, Jenny. Like, they could have been 6 years ago. But when we talk about it, the reason we say in quarter end of month is I believe it was June of last year. I think it was June of last year when we were sitting there, and I was like, what the heck? Because I bought a call and sold it where I made, I don't know, $1,000 on it. But if I would have held it, I would have made like $8,000.
No, I know. There was one time, but I'm going to go to March 31st because I think I can. I'm going to go to March. I think I can. March 31st. Where are we?
You're in April 7th. Keep going.
Oh, here's April 1st. It only went back to April 1st. Oh, no. Yeah, April 1st. I got to go back more than 3 months.
You just missed it.
4 months. And I'm in it put me to the hourly. And I wanted the minute by minute. But in order to go back that far, I need the hourly. So if I go to March 31st, where is it? Here we go. This day. Yeah.
There's 8 a.m.
This 9? Is 9 a.m., 10 a.m., 11. So here's 3 p.m. So I guess at 1 p.m., we're down here. Then you go to 3 p.m. and it did jump up.
It did rally, but not as much as not crazy. And there's no scientific evidence behind this. We're just two traders.
We've seen it happen. We saw it happen once, and we
want in. We want it.
We saw once a huge move at the very end of the day, end of quarter, end of month, and then we put it on our calendar and said, end of quarter, end of month. We're never going to miss this again. We're going to buy these.
And we've lost every end of quarter, end of month.
Well, this might be our chance.
Yeah. So that's what we look at. Now we are going to be taking live tweets, so put the hashtag LAZJNY on there. Jenny put her picture of the wedding, which is beautiful, and I love it. And I know we probably have some Jack Tuckers because Mondays are Double Down Monday, isn't it?
Monday's Double Down Monday, and we haven't moved. So I bet most people who put on trades this morning are almost out of them already. Friday was the fastest. I put on my SPX 20 Delta, $20 wide iron condor. I was out of it in 17 minutes on Friday.
Really?
Yeah. It was crazy.
Wow. Did you? Wow.
Mm-hmm.
That's a vol collapse in and of itself.
Yeah. It was a record. I think it was a record, but it was crazy.
Yeah, that's got to be a record.
But you see what you missed last week, all-time highs.
I saw that. We breached the all-time high record.
Mm-hmm. all-time highs. And I know when we put on our SPX upside broke wing butterfly, it was far, and we were like, whoa, that's far. And we're almost there, 61.90. And do you remember at the time we put it on, we're like, wow, I don't think we're getting up here.
Yeah, I mean, we are $8 points away. The one strike is in the money. Wow. Okay.
Yeah.
How much is that down? That's down 155, 170.
Yeah, 170. Not terrible, but not terrible. Let's see. Oh, and I'm getting use tasty charts for minute by minute movements. So thank you. That comes in from Fazia, which I honestly, Fazia haven't seen her in a while. I'm curious what she's been up to. Let's take a look. Follow page. Here she is. The beautiful Fazia. What has she been? Okay. Roll to Chewy position, close to Tesla position. SoFi's been on a little tear.
SoFi has been on a little tear. And she's participating in the CRCL, so she's got a lot of stuff. That's good.
Oh, I sold puts in CRCL today. You can get very far. Remember when in CRWV we were selling puts for $1,000? I looked at CRCL today, 18-day. I said I just want $1,000. Got the 155. I think somewhere around here for $1,000 this morning.
That's pretty
good.
I
thought $1,000 in 18 days. I'll take my chances.
That's pretty good. Or you're long it at 160. It's up again today, but it's fallen from grace a little bit.
Oh, that's why this morning it was the 155 for 1,000 because it wasn't up. It wasn't up so much, but still, whatever. It's 850 now. Then you're long at $10 lower, so 145. I thought, 145. I'll take my chances. There's a lot of premium.
It has been stair stepping down from its all-time highs.
Right. It has been.
It's not bad. This is the one that's expensive though, isn't it? When you sell it, isn't it like 10 grand or something?
It was, but when you think about return on capital, if you're
I don't mind. We just can't do it in this show. This show account.
Yeah, but it is. But I thought like the same way in CRWV. Oh, CRWV, that was low margin. This one's high margin, but you're getting paid a lot to take the risk. It's a risk, but you're getting paid a lot. It's risk, and it's cash secured. It was completely cash secured.
Yeah, that's what I was going to say. I thought that was. That's why this one has always been a little trickier. Where CoreWeave had its amazing margining.
I know. So completely cash secured. Like if you sell that 150 and your break even's 144, your buying power is 14,000. Your buying power is your max loss. But when you're getting so much premium in this short amount of days, to me it made sense. It still made sense.
No, I think it makes sense. That doesn't bother me. It's just we can't do it in this account. That's the only reason I'm kind of like blowing it off is we can't do it live here because that's not something that our account can handle.
But even the $10 wide, here's the $10 wide, you're getting a third of the width.
That's not bad. That's not bad. I do not mind that, but that's real risk if it goes down because we can't afford to hold the stock.
I know.
I'm fine with it though. Let's get in because we look at it every day. Yeah. And you've got plenty of buying power that I can see. Did you guys close anything or do anything that I need to know about last week?
You know what? I'll ship this 160, 150, 335. I'll go 330. That's a third of the width. We're following the rules. 25 delta is the short, and we'll see what happens. I did close a handful of things. If I go out to activity, all symbols in the last 7 days, closed Nike skyrocketed on earnings. I don't know.
Yeah, because you closed that put for 6 cents.
Yeah. And it was an 18-dayer.
Wow.
So closed Nike, closed our TLT Zebra. We can take a look at that.
I was there for the SPX. You closed that for me. Yeah.
Yeah. 20-cent debit we paid only. We sold it for there earlier that day, 250, bought it back for 20 cents.
Pretty good.
Okay. So let's take a look at Nike because that had a huge move. It was up $10. Look at the earnings move.
Wow. What day was that? Thursday?
Okay.
Mm-hmm.
Yeah. So good. We had so many viewers selling puts in Nike or getting long Nike because the premium, the rank was high. There are a lot of put sellers out there and everyone got to take them off on Thursday.
That's amazing. I mean, to take a put off for 6 cents, that's impressive.
Yeah. And it wasn't
a weekly. Yeah.
It wasn't weekly.
Yeah. That's pretty crazy.
As far as today goes, there was only 1 or 2 things that I thought. IBIT, we have 46% on a put spread. We could take it. We sold for 95 cents.
Yeah, but we have to keep chasing that up. So we've talked about this. We don't have any other Bitcoin exposure in here. We don't have Coinbase in here. We are going to keep chasing that up.
And at this point, though, do we chase it up in July or do we go out to August?
I'd go to August. You got 18 days left.
So let's just close this, buy it back, and then we'll go to August and sell a new spread. And let's see, what strikes were we?
Yeah, but I think it's different. Isn't it a different price? Isn't IBIT a different price because it's based on the futures? No.
I don't think IBIT is. I don't think IBIT is. So then we had 58.54, but if we want to get aggressive, we could just do, if we want to get aggressive in crypto, you can do the 60.50 for 226.
What did we have? What is the 58.54 right now? Just apples to apples comparison if we were just going to roll it out in time.
$1.
Oh. Well, we sold it for $1 and bought it back for whatever. You can do it again.
Yeah. Yeah, we can.
I mean, it's slow and steady wins the race, right?
Okay, here we go. $1. Sending it. So we sold the earlier one. Oh, sorry. Again, who breaks through right during my show?
Kids? What do they do?
Yeah, my child.
The boy or the girl?
My son, who doesn't know I'm on at 10 a.m. He's in chemistry. He's supposed to be in chemistry. He's supposed to be in summer school chemistry.
Well, apparently not, because he's texting his mom.
calling. And his class goes from 8 to noon. So not sure what this is boys. What time is my dentist appointment today?
I don't know. Why don't you talk to me when I'm not on a live show? Call him back. Call him and put him on speaker.
How about you look at the family calendar on your phone?
It's too funny. But you're going to want to get filled on both of those too. You're working closing one and opening another. Give up a penny on both.
I know. How many times, Liz? How many times is he going to call me during the show? How many times? I'm going to have to turn it off. You know, I have him in like emergency. He could break through, but I'm going to have to turn that feature off.
Yeah, you're going to have to. There's only one person that can break through on mine, and it's Frank Walsh. Who's on our YouTube chat. And I have no idea how that setting he got in there. But if Frank wants to get through to me, he can. He's the only one.
Oh my gosh, that's so funny. That is so funny. Okay. All right. So we're out of July into June. Honestly, while you were gone, we missed the 21 DTE. So, you know what we could play today? Your favorite game.
Oh, you know it. You know it. You love it. While you are doing that, though, Jenny, push those through and I'll do the other side.
All right. Hang on. Let me go to today. Hold, please. Publish to follow feed. Yes. Publish to follow feed.
This is how we can do it live on air. And Frank the Great keeps us in line, because if we don't push them out right away, he's like, please push them through, ladies. And I said, okay, thank you, Frank.
I know. Oh, and you know what? We're filled on Circle. I don't know if that's gonna be a good trade or bad trade, but we're filled on.
Oh, it's gonna be a good trade.
I'm gonna put in a GTC to close this for 50%.
Okay.
So that could happen, you know, if we're not watching. And I will, and that's 18-day, but that's fine. In Circle, you're not going to get paid till the last day, or no, you need it shorter to get paid in that. You got to do it shorter term.
Yeah, we've seen that. It keeps its wings up.
So, but this was an interesting message he just sent. His chemistry class, today's day 1, goes from 8 to noon. It's 10 a.m. Chicago time. He texted me, class is already done for the day. What?
It doesn't make any sense. None of this stuff adds up.
What kind of summer school is this? School over 2 hours early?
Hopefully he gets an A.
Yeah, with summer school, it's pass failed.
Oh, nice. Well, that's an A.
Yeah, with summer school, because you're going to have a new college kid. So for summer school, the credits transfer, the grades don't. It's pass fail.
That's fantastic. Love it.
Yeah, load up. Tell JD to load up on summer classes.
Well, I'm going to. Every time he comes home, he's going to load up. Okay.
All right. What else do we want to do? Did I push out Circle?
Yeah. I got Circle too.
Since we saw Fauzi doing some Chewy stuff, I want to take a look because we don't have a Chewy position. I don't know what it's been doing. It's kind of high.
Chewy is kind of high, considering, right?
You know, it's not high.
What?
It's been painful for me because I have a decent position.
Let me see.
Did you see it?
I can't. No.
Can you?
What?
Etsy. Can you see the? Can you see the platform, Liz?
So I have a new computer and I'm moving things around right now, and so every time I push things through, it takes away my view of what's happening. So I was actually pushing, and now I can see that Etsy has taken you out for a lot.
So while you were gone, it's been going on for 2 weeks. It gets more painful every day. Today, another 52 cents.
Yikes.
So it's gone from 66 to 50. It's down 16. This little stock is down $16 in the last 2 weeks.
That's crazy.
I know.
What are you going to do? What are you going to do about this? What's a new subscriber to do, Jenny Andrews?
So we have no position. Earnings are in July. I mean, for us, the 48 put for 8. Whoa, look at the buying power.
Yeah, that seems like an excessive amount of buying power.
But why is that buying power so crazy?
I don't know. That is kind of crazy.
Let me go to July. Let me go to August. God, summer's flying by. I could do the 45.40 for $1. What do you think of this? I mean, it's not much different than we just did an IBIT.
It's not much different than we did an IBIT.
Other than we're further away and we've got a higher rank.
I mean, I don't like Etsy, but you like Etsy, and I like to make you happy on days when I've been gone for 2 days. So whatever you want to do, Jenny Andrews, if you want to take this account on with your account, I'm in.
Hey, you know what? It's gone down $16 already. Is it going to go down another 10?
Well, you probably would have said that 10 points ago.
I mean, what's going on? Why aren't people shopping on Etsy anymore?
I don't know. I don't know. Maybe everybody's all Etsy'd out.
And the funny thing is, so this morning I was going through my account, and when I got to Etsy, I said out loud, "Oh, Etsy." And then I got an ad for Etsy 20 minutes later.
Come on, really?
Yes.
Oh my God.
Yes. I'm going to do it just so it's in here and we can keep an eye on it.
I mean, that's just it. This is all about trading. And I mean, I was kind of kidding when I was like, I don't like Etsy. It doesn't matter. And I know TP used to say this all the time. It really doesn't matter what it is, as long as you're looking at what you're doing, you're using the numbers, you're getting premium for it. You're not just out there being like, I think Etsy's going up, I'm going to pay $50 for it, right? So what do you use here? You used what, like $3.50 or $4 for $4 for something, or you can go out and buy, 4 shares of Etsy.
Yeah, I used $400 to make 100. Yeah. It's August, which is a little painful. That's a little rough. Like, and we're going through earnings, but here we could do it. It'd be the same thing, but 49.44 instead of 45.40. I think we've got to follow the rules. I'm gonna try to follow the rules.
You sound so sad.
I'll try to follow the rules this week.
They're just a suggestion. I always say.
So I'm working it. I'm not gonna chase it. Oh, I did see something else we can close. Shopify. We have.
Oh yeah, for sure. 452%. No, it's because you have a 1 lot in there. Why do we have a 1 lot in there? That's a Jade Lizard.
We have a Jade Lizard and 1 contract of Shopify. No idea why. Sometimes we'll buy things to keep an eye on it. So
let's close all of it. So close that in the 1.
Yes. Good idea. So I'm going to close the Jade Lizard. Well, watch this. Once I close that 1 share of stock, then we'll see really what we got going on with that Jade Lizard.
Yeah.
Sell our 1 share. We're big time, Liz. Big time. 1 seller, 1 share of shop.
Huge. Big by big.
And sometimes it's a reminder to get in. And so shop must have been, I don't know, we bought it here. I don't know. Not getting filled on one share. That's how wide the shop markets are.
Yeah, that's crazy. I mean, it is pretty wide when you look at it. 1556 at 1563. Okay, so that's out.
So now,
and then let's close our Jade Lizard. Yeah, 30% on a Jade Lizard is pretty good.
And we're 18 days till expiration. So I think at this point we just take it.
Yeah, for sure. And we're getting back $1,000. You can use that in Circle or CoreWeave or wherever we used it.
I only used 400. What did I use? I didn't use that much. I used $600 in Circle.
That's not that bad.
Oh, we're filled in Etsy. Let me push that bad boy out.
Great. Exciting stuff.
I'll put the GTC for 50% in. See all the fun you missed while you were gone.
I do thoroughly miss these shows. And it's so funny because, I was kind of busy, but I didn't trade that much over Thursday and Friday either. So you push the,
you were busy. Well, okay. I'm not going to push out this one share of Shopify because I have no idea why that's there.
Okay, that's fine. That's fair enough. That is fair enough.
I'll push out this Etsy trade.
Push out Etsy. I've got that in there. And then we should probably pop into Twitter because we're halfway through the show and I know there's a lot of tweets coming in. And I want to see how many Jack Tucker did today.
All right, I'm going to go top down, but I'll get to the people coming in on the bottom. Hang on.
Okay.
Oh, what did I do? What did I do?
You just went to your post.
let's just
take a look at me.
Let's just focus on the wall of Prosecco.
Okay, so I think her team is new. So hope you're both well. Love your show. You had taken an Amazon Iron Condor. The call side would be tested. How would you manage it? Do we have an Amazon Iron Condor in? If not, call side's tested. So it depends on. We do. And he's correct. The call side is tested, but it's not through it. So Iron Condors are pretty tricky because it's not necessarily being tested yet.
It's the put side that's tested. It's the puts.
No, it's not. It's the calls. 225, 230. It's the calls.
Oh yeah, I thought the put said 220. I'm gonna need to go. I might need better glasses. I thought the put said 220. It's just 200. So it's okay. So it's in the middle. This is a tricky one. Because there's 18 days to go till expiration. It's trading in the middle of this spread. I say we leave it. What do you say?
Well, and that's what I was going to say. You've got 18 days to go. You got a $5 wide Iron Condor. I say you leave it too. This doesn't fall into the 21 days till expiration rule. A $5 wide Iron Condor is kind of like, hey, what do you feel like doing? I don't want to take this loss and go out and reestablish it because for an Iron Condor, we need to stay within a range. I say we sit on it. Now, if you wanted to micromanage this, Jenny, and I'm kind of deterring you from doing that, you can roll your put up a little bit, but I don't think we need to do that.
No, I don't think so. I think we just leave it. I don't think we need to put in a GTC for 50% because that's not going to hit. But
I will tell you, okay, so let me ask you this. Just kind of, we've been trading for so long. You and I would never have even opened this if he didn't bring it to our attention. So thank you very much to the tweeter. But with an Iron Condor, we know we kind of have to sit on our hands. I might put in a GTC to take 10% out of this or something because you're running out of time.
Well, and I'll tell you, I'm going to say, here is an option. So we have a $5 wide. We took in $1.34. If we buy this back, we have to buy it back for $1.85. So $1.85 we have to pay, and we had $1.84. You could go out to August and tighten it up and try to, take in at least $1.85. But then you're going through earnings, and nobody wants that. Nobody wants $5 wide Iron Condor through earnings.
No, I agree. So I think we sit on our hands. Like I said, I would put a GTC in because we're being tested and because there's 18 days for either a scratch or a very small baby profit.
Yeah, I kind of want to give this. We've only here. If we had this on for 20 something days, sure. But we put it on last week.
5 days.
We put this on Wednesday. We put this on the last day you were here. We put this on. So let's give it a little time.
That tracks. I mean,
if someone wanted an Iron Condor on Amazon and we went with July instead of August because we didn't want to cross over into earnings.
Yeah, this has got what's your assumption written all over it.
Oh, yeah. Oh, yeah.
Okay, so thank you very much. So we're just going to sit on it.
Welcome.
Oh my God, that's so funny. How many fingers am I holding up? Thank you very much. The Mayo, I'm very impressed with the Mayo Clinic. The Mayo Clinic was amazing. I'm still a medical snowflake, but things are going in the right direction. They keep ruling things out. So I'm very happy that I'm there. And how many fingers? Peace. You got 2. I have perfect vision. That's what they are shocked by, is this eye is perfect vision and this eye is perfect vision. They just don't work well together.
Yeah.
So 2, perfect vision. Isn't that crazy? 2020 in both eyes.
Did they mention, and I know this has been a no before, but did they ever mention those special glasses?
Nope. I don't need them. I don't have 6 nerve palsy, so that got ruled out. Like, you need it if you have the 6 nerve palsy, but that is one thing that they did definitively rule out. So I was very happy with that. But we'll see. Oh yeah, I was like, now I know what to get Liz for her birthday. That's the Prosecco. Well, I'll keep going down from there.
Yeah. Okay, here we go.
Do you know how happy I would be if you? You know how happy I would be if you rolled that thing into my backyard?
Rolled in with that to your house.
But I will tell you, for my next pool party, well, not just like a couple people over, but the next time, maybe when Annabelle graduates high school, I'm making that wall.
Yeah, I think we could find someone to make that.
Yeah, for sure.
Maybe a smaller version of it.
No, my brother can make that for me, and he'll make it bigger. If you ask him, he'll quadruple that size. But anytime I ask my brother to do anything, it comes in 10 times bigger than it should be.
That's awesome. And 10 times more expensive.
And 10 times more expensive. Yes. And 10 times more expensive. 100%.
Your brother has high class. That's what, whenever I have a problem at my house, a plumbing problem, I know your brother's a plumber. I can't afford him.
No, it's ridiculous. You'll have like a gold toilet if something happens at your house.
Okay. Bob on Fire, no earnings today. Tomorrow, all we have this week, Constellation Brands. And I know this looks sad, but to me, like trying to take a look at the glass half full, this means we could put on some earnings setup calendars right now.
That is a very good way to say glass half full, Jenny. And that's way to put a silver lining around that package. Okay. Yeah, let's take a look at it. I mean, vol was low. I was thinking about you and TP on Friday when I did glance at the account, and VIX was like low 16 handle. I think I saw it at like 16.
That's why.
Which means, yeah.
It is up today, which is crazy. Isn't that interesting? Like, SPOOs are up 17 and VIX is up. But
it is.
You know, I don't know. I don't know what's going on. I really don't. Again, I've been at a wedding all weekend. I have no idea what's going on with the world or the news or the, July tariffs or whatever. I really don't know.
But the VIX has been 16, 17 seems to be like it's calmed down range, right? But I saw it dip into 16 on Friday.
But up 82 cents.
So that being said, the reason I jumped to the VIX is that's when we do look at earnings setup calendars is because, wait, can you see? I can't read that red.
1612. Yeah, 1612. Liz,
I know. That's when I saw it. I glanced at it. I was like, 1612.
Yeah. Yeah, 1612 and 1611 the day before. So, it's a little surprising to see it over 17 today.
I know, right? Especially on an up day.
Okay, earnings setup calendars. We just know, like, we usually know who has the earnings in the right time. And what we're trying to do would be sell July and buy August, and we want someone who has earnings in between the two. So we saw Amazon does. IBM is usually a candidate. Boeing is usually a candidate. And that's kind of better. It's a little bit further. We kind of want the earnings in between.
Yeah, did you type in IBM already?
Yeah, IBM, yes. So, Facebook is Meta.
Yeah, Meta. These are our usual cast characters. Now, Meta's too expensive for us now. We used to like Meta right after it split. Now it's back up to $700.
All right, let's take a look at IBM. IBM, but that's kind of expensive too.
Yeah, Boeing is the cheapest one on the list right now.
Yeah, 211. Let's do the 217 earnings setup calendar.
I'm in. That's a number I can live with.
Oh, it doesn't have it. It doesn't have it.
Boo.
There's no 217, but let's do the 215.
Sure.
So we're going to buy the thought of this is, we're going to buy the option with earnings, expecting vol to increase.
You're paying about $700 for it.
And then we're going to sell the option. We can get as aggressive as sell the 25-day.
Well, I think, and then you have another sale built in if you want to try the 18. Let's see if we're getting anything for the 18.
Let's check the price.
Yeah.
That's not terrible.
That's not bad. Now see what the other one is. See what the 1 week out is, and see if you want to go with the 18-day.
213. If we have them 1 week apart, our short and our long, we're paying $215. If we have 2 weeks apart, it's $346. That's kind of a lot.
It's kind of a lot. That's kind of a lot. Are you sure the earnings? Can we look at the volatility? Are the earnings in a different cycle?
So we see it go from 33 to 36. No,
Yeah,
look, 33,
it's fine.
32.
It's fine. Yeah. Let's do the 25, 32. That's because that's a big difference.
And honestly, if Boeing goes far from here, we're okay. I can stomach losing $225 more than $350, right?
Correct. For sure.
But the risk in an earnings, the risk in any calendar is what you pay for it. So if we're paying $225 for it, our risk is $225.
Yeah, let's do it.
So buying the $215 in August, selling the $215 in July. Now, this is not one of those, we need to do the put side, downside, because we need a down move to get a boost in vol. We're hoping for a bigger boost in vol as earnings get close. And then we want that 25 to decay, and we're left with that long in the earnings cycle, and then we could do something with it.
And if Boeing is up $3 in 3 days, with these earnings setup calendars, our bar is so low, we'll take $25 out of this, 10%, 20%.
Yeah, we're only risking $225.
Yeah.
Look at this. Can I get it for $217? I know we're looking for the $217 calendar. I'm going to try to buy this calendar for $217.
You paid up for it.
No. It was like originally I had $225. Okay. The market's a little wide because we're using the weeklies. That's true too. That's a little problem. Because you can see it says mid market's 207. We're working 217. It was bouncing around.
Yeah, I can see that.
What else is you can, if you don't know, if you're like, I don't know what products we usually look at, I can go to the Tasty default.
And that's just it. Who is it? Somebody on Twitter was asking us how we find our. Oh, no. It was that I answered an email, and I was answering the email at the Mayo Clinic, and it was a very long email, and they kept saying, "How do you find your products?" And I was like, "It's on. I just go to the watch list." And honestly, I think the more you trade, the easier it is to kind of vet, where you just kind of go to the watch list, sort by high IV, and just like, nope. Yep. You know what I mean?
Was that from Fabio in Italy?
Yes.
Because TP brought all of his questions on the show on Friday.
TP got the email too?
Yeah. So
Fabio just emailed all of us.
So thank you. Thank you for responding to him. But TP brought all of his questions on the show on Friday.
Fabio. Huh. Okay.
Okay. So someone might say,
how did you answer it? Did you say we go to the watch list? That's how we find our products?
You know what, Liz, I'm lucky I could remember yesterday. I could this was the first time. I can't remember the last time I was at a wedding. Honestly, I can't remember. I know you've been to weddings. This is my first wedding of my friend's child getting married. This is like kicked him off. Now they're going to be like boom, 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 boom. Maybe in like 5 years, they'll start up like that. But it was a busy weekend. I don't know if I can.
Weddings are super fun. They're super fun. And I've been to friends' children's weddings, and they're even more fun because you're old enough to know better, but dumb enough to still make the stupid decisions.
Oh gosh, we were all saying that everyone at our table, it was all of our first wedding for a friend's kid, and we all said this was way more fun than when we were young going to weddings. When's the next one? Like, whose kid's getting married next? When's the next one?
Yes. For sure. It's a lot of fun.
Because you know what the funny thing was? We're all old now, right? So we're old now, and we have a little more money than we had when we were 25 and our friends were getting married. So all of the old people, we're staying at like the nicest resort. We're going to the nicest bar. We're at the nicest restaurants. And the young kids are we were at the Carmichael in downtown Carmel, and the kids are at the Renaissance Inn.
Western. Yeah. Yeah. That tracks. It is fun.
It was. It really was.
Yeah, we love weddings.
But it's different. It's different going to weddings now at this age than when we were in our 20s. which I kind of think the last wedding I went to was our last friend that got married.
But your kids weren't with you at the wedding, right? You were the adults,
No.
but so your kids
No,
weren't there.
our
So
kids
that's
weren't.
what I think is super fun is when, because we've been to a couple weddings with the kids now, and it's fun to go to the weddings where my kids are teenagers, but they're not the 20-year-olds yet, you know? So it's fun to see them like dancing and having fun.
Yeah.
Yeah.
This was like the entire Kelly. I felt like it was the entire Kelly School of Business on the dance floor. Like his entire fraternity was there. But like the parents, like our kids weren't invited because our kids are still a little bit young.
No, and I get it. And that's where you have to start knocking it off. You can't have I was just talking like we've been to family weddings with the kids, but yeah, you have to say no kids. And even the Rossler wedding we were at, only my kids are the only ones that are invited. And they keep being like, well, all these other teenagers, they're like, how come we can't bring our teenagers? It's because they have a friend that is JD's age. Do you know what I mean?
Yes, you're right.
Yeah.
Right.
You have to cut it off somewhere.
You have to cut it off somewhere. You have to cut it. I thought we had 200 people in a barn, and the barn was 2 stories. And I was just like bracing myself for, you know, when you see a video, it's like the top floor collapsed onto the bottom floor.
You'd make the news. You'd for sure make the news.
Okay, so back to like, how do we find these earnings setup calendars? We see July expiration is in 18 days, August expiration is in 46 days. So we need an earnings date that falls between 18 days and 46 days. So when you go to the watch list, and we've got Tasty Default, and I'm sorting by earnings date, we need an earnings date that lands, you know, before August expiration.
Yep, that's all you're looking
for. Baba, Apple, Amazon, Disney.
Disney had a big boost too, didn't it, recently?
Yeah.
So Disney's only 123. Here's another thing that I'm looking for too. I'm not a huge fan of your $700 products, like your Metas and things like that. So I usually like between $100 and $250 in a product for an earnings setup calendar.
Yeah, too expensive. So, okay. Well, there's different ways to go about it. Would you go to the 39-day with earnings, or would you go the 46-day? The further out you go, the more.
So because it's cheap, because it's $123, I'm gonna go to the 46-day.
Yeah, it's not as expensive as Boeing was. It should be cheaper, and we could see that already. It's $4.07.
Correct.
Now, where are you going to put it? High or low? Disney's been on a tear.
It's Disney. Go high or go home, kid.
I mean, I sold the 100 calls, I think, against my stock. And
brutal.
Yeah. Well, way down here, I was like, oh, geez, I'll sell these 100 calls against my stock, get an extra 50 cents.
Those are famous last words. But I don't mind. Like, just do the at the monies. Do the 125. Just do the calls instead of the puts.
Okay, so I'm gonna buy the 125 in the 46-day, and I can
do the 18. Let's keep liquidity. That's not bad.
That's not bad. If I go further out in time with this, it gets cheaper. So 322, 280.
I'll take 322 for one.
50 cents.
That's big market.
I'm gonna load up on these. I'm gonna.
No, I think that's the earnings cycle. Because remember, you went out one.
No, it's not. 39.46.
Close it up. Close. No. I mean, close the thing so we can see where you were.
I was in the earnings cycle.
Yes, that's why it's 50 cents.
I was like 50 cents. I'll take 100 of these, please.
Yeah, you're in the earnings cycle, the 39 day.
That's why it was 50 cents. I just didn't want this to be more expensive than the Boeing trade, and
just go in the 39. Go in the 39 day. Buy the 39 day.
Yeah, buy the 39 day. The 125.
Yeah.
And then the cheapest one will be sell the 32 day, the 125, $1.65.
There you go. Ship that. So
now, these we have to hold on to. We're holding on to these until earnings.
You're going to take, or it meanders up and you take it off.
Yeah. Now we're not getting filled on. I know you thought 217 was paying up, but we're not even getting filled.
I know.
Filled at 220.
220.
And then let me adjust Disney. 175. When you're dealing with these weeklies, the markets are a little wide.
Yeah, they are. Make sure you're pushing them out too.
I am. Boeing out. Did I get Etsy out?
Etsy's out.
Okay. 10:48. So that's a couple. We can look at more. I'm going to make sure we get to everything in Twitter. And also, so Eric's in with his Munchie Monday, snagging on 5 lot tranches today. And they were, we haven't moved. So these are all working today.
Yeah, they have been. Most of them are working, which is great. So good job, Eric.
Yeah, nice work. Ajit comes in June 30th. Upper table VIX, VVIX, both on the low end. 64-point expected 1 standard deviation move today. Cool. Thanks, Ajit, for sharing this with everyone.
Yeah.
Yeah. And Frank Walsh with the volume and the calendar.
I love Frank the Great. He's the best.
Yes.
Frank, we're still working on getting your nephew on. So every day, Jeff gets closer and closer and closer to coming on camera.
One of these days, Frank, one of these days. I see Frank post this. Maybe this is a question we didn't get to on Friday. Do we put GTCs on in 0 day? I do. If I'm selling an Iron Condor, I'll put a GTC to close it. Sure.
100%. I almost always put a GTC on for in 0 day. Even when you were doing the Jajun, you'd put it on, you put your GTC in.
What is Frank's? We had wedding parties in 3 states.
Oh, good for him. Frank's a partier. He's a super partier.
I mean, look at it. Just look at him in this picture. I mean, look at that guy.
He's a super partier.
I'm surprised he hasn't been to wedding parties in all 50 states.
He's the best. It's so funny.
And Liz, do you think this is ALO behind him?
It might be.
It might be.
No, is it?
I don't know. Frank, is this ALO behind you?
His name's Doug. We just learned his name's Doug.
His name's Doug, but he has come on our show as a guest. And he said he's been on the floor for a long time.
And and he's also coming on our show again, I think, this week.
Oh, yeah. Okay, this is coming in from YouTube from Kem. When the short call of a poor man's covered call is assigned, what's the best way to manage the trade for the remainder of the time until expiry of the still in the money long call all together with the 100 stack? I would just close the whole thing as a package, close my long call, close my short stack. I'd close it all as a package because now you're not waiting for any extrinsic value anymore. There's no more extrinsic value waiting to come out of that short call.
So I know, and I will say, this is I'm glad that Frank put this in there because something you and I take for granted a little bit too, because when this happens, so when your trade goes awry, Jenny's point is close it all as a package. I wouldn't wait. You're not trying to do anything, but it does look scarier than it needs to be, right? So you put a poor man's covered call on because you're trying to help with capital, and then you're assigned on one side, whichever side you get assigned on, right? And then all of a sudden the capital requirement changes and your trade, all the extrinsic value of the one that you have is gone.
And this isn't a position where this isn't a situation where, oh my gosh, I have the stock and I don't want to sell the stock. You have a poor man's covered call. So I would close the whole thing as a package. And it's and I pulled up SoFi only because I have short calls against my SoFi stock, which that's blown through my calls. All of my covered calls.
I'm gonna assume you have the stock, not a poor man's covered call at SoFi.
Yeah, but let's say you sell a call and you're playing for the extrinsic value. You sell the call, you're playing for the extrinsic value. Once you're assigned on that short call, the extrinsic value evaporates all at once. So even if it was still there, you don't have it anymore. You just have the stock. So that's why I'd close the whole thing as a package.
And it's almost as if, Jenny, I'm extrapolating here because this is not my question, but when that gets assigned, if you're getting assigned on a short call, you're coming in short 100 shares of stock. So you've got 100 short shares of stock, and then you're long a deep in the money call somewhere else.
Did it say what product?
Well, they said you're short 100 shares of stock. So that means they probably let the stock. It's very much like your Disney, as if you let Disney go and you had the poor man's covered call. And so then you come in short the stock and then you still have, your long, if it would be a long call, you definitely want to close that all together. You have no extrinsic value.
What I'm afraid of is that happened, and Kem, I don't know if it's Kem or Sem or, I'm afraid that maybe that happened because it went ex-dividend. And so that's something to keep an eye on. If you sell a call and it goes so far in the money and and then you're assigned. So, and it's a poor man's covered call. So normally if you have stock and you sell a call against it and you get assigned on your short call, it just takes your stock and you have no position. But if you have a long call and you sell a call against it, like a poor man's covered call, you get assigned on that short. So now you've got your long call, but you have short 100 shares. Then you have to pay that dividend. Then that dividend is going to come out of your account.
There's a possibility.
If you were assigned because it went ex-dividend. And I know there have been a handful of things going ex-dividend or about to go ex-dividend or.
Yeah. But I will tell you, no matter what, anytime I get to a wonky position that I didn't intend to have, I close it because there's no reason to hold it. There's no reason to salvage a position. It's not like my entire account is in that one position.
Right. I did pull up, Liz, the SIBO most active only because it's end of quarter, end of month. And I wanted to see sometimes end of quarter, end of month, you'll see some like big volume go up somewhere or some big rolls happen.
I mean, take a look at the top SPX calls. You got the 6200, 6210, 5190. Is that a butterfly?
It's not a butterfly because one would be, double the size. Like one would be double the size. 30.
Okay, so hold on one second. I just got to clarify something because Frank brought this up. They said, do you put good till cancel orders in for your 0 DTE trades? And I said, yes. We both said yes. And then Frank comes in and he said, good till cancel is for overnight orders to work. What's the point of a good till cancel intraday? It's just easier for me just to say it's just a closing order. Correct. So Frank is 100% spot on. It's just habit for me to go GTC. Right.
Like if I went like this, close position, and picked my price, it's just a closing order. We don't change this to GTC. It's just a closing order. So.
It's just honestly for me, it's just habit when I hit GTC for those SPX orders. So Frank, I'm glad you're keeping us honest.
Yeah, because if we wanted a percent and we said close profit 50%, then that goes in as a GTC.
It goes in as a G. It does. So like when you go to SPX and you say I want 10%, it goes in as a GTC.
Yeah, you don't have to put it in as a GTC. It goes in as a GTC. If it makes you feel better, you could change GTC today. It won't make a difference.
It does not make a difference, but I'm glad that I just wanted to clarify that because that makes a little bit more sense.
Frank's a stickler for the details.
I like it. Keep us honest. He's not going to let us get away with anything. But it is, you're right. When you pick a percentage, it defaults to GTC.
Yeah. Funny. 1725. This is exactly where we were when I put on my call spread of SPX to try to turn it into a butterfly. Haven't had my chance yet.
Ruh-roh. And I'm telling you, JD's order is not closing. He's up, $48.75, $53, but it's not closing.
Well, at least he's up.
Yeah. It could just as easily go away. It's so hard because watching his account is way harder than watching my account. I care more. I care that his closes and I don't care about mine. Do you know what I mean?
I know. That's why I don't have my son's account in my account. So I only see it if I want to see it.
Yeah. I watch it. I'm not doing anything. I'm going to watch him do what he's doing, but it's hard to watch.
But yeah, like you're watching his ES for his $50.
I know.
All morning.
Oh, he got filled.
Nice.
He's out.
Oh my gosh.
Woo! My job here's done. Okay, good.
10:56, he's out.
Yeah.
I want to make sure that we have nothing else we have to do. Nothing else. We're still working Disney. We never got in.
I mean, I think the problem with that is when you're looking at the non-standard options, it might be a little bit on the wide side. Yeah, weekly.
This is going to be my final offer. 180. And if this doesn't hit, I'm canceling it.
Yeah, I mean, you probably should cancel it. Everything you've done has been pushed out, though, so we're in good shape.
Shop, we didn't get out of this Jade Lizard. 78 cents. That's what we're trying to work.
I would pay up to get out.
I don't know.
I mean, 2 pennies. See if you can, just to take the $30 and call it a day. You get $1,000 in buy.
Okay.
There you go.
Liz wanted that $1,000 back.
I did, after we put it in Core Weave or Circle.
600. We sold it here, Circle. Of $10.
I'm happy about it. I think we're in it. You're in it. I'm in it. I'm glad we're in it. But we couldn't spend the $14,000 to put the naked in.
So we're out of shop. 18 rank. Yeah, now everything has earnings. So everything we're going to be looking at it, we're going to say like, oh, earnings coming up. Like, what's your assumption on Wednesday? We're gonna be like a broken record. Earnings right around the corner.
Oh yeah. So give us liquid products that do not have earnings. But Jenny, we are out of time. It's already 10:59.
I'm glad you said give us liquid products. I thought you were going to say give us liquid death. When I don't know.
I've never had a can of liquid death. I've never had a can.
I don't know what you're going to say. Time's up. I will see you live from the SPX pit at the SIBO tomorrow.
Yes, we will. Everybody have a wonderful afternoon, and remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
See you tomorrow, everybody.
Dear Cheapo Airlines, thank you so much for sending my luggage on a magical side quest instead of my planned destination. I am glad that I had the sustenance of the single pretzel I was served on board while I was waiting for my bag to arrive. Looking forward to your reply, because surely the response can't be as delayed as long as my flight was. Warm regards, Bettina.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Every day I do God's work here.
From the smart mouths at Tastylive.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are young.
Just question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing.
But last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah. When does yours get delivered?
50,
you didn't do the sword?
50 grand. And
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
I'm going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Good morning,
everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista, got my man Mikey Butler, and of course, Mr. Ryan Grace in the house with us today. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, subscribe to our videos because it helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day. My favorite hour of the day. I get to spend with my buddies, Mike and Ryan. Ryan, good morning, sir. How's your weekend?
It's pretty good. Thanks for asking. Had a baby shower.
Ah.
Yes,
nice.
for my pending baby.
Yeah. Very nice, very nice. Is that the one where you like have to like hold up the like signs and stuff and like do all that stuff? Or
I didn't participate in that part of it, I guess.
Yeah.
We showed up a little bit later after my wife's friends and everyone had that side of it, I guess.
Yeah.
But yeah, it was good.
Nice.
Parents were in town. How about you guys?
Very fun.
I was at a wedding in Rockford.
Oh, yeah.
Rockford's pretty fun.
I also had a wedding.
Yeah.
So wedding season.
Downtown Rockford's kind of a wild place.
Really?
Yeah.
Like in what ways?
It's like a mixture between a college town in the middle of nowhere and like a main street town, like when you get off the Metro. You know, like you get off the Metro at like Elk Grove Village and like that. It's like that. But then there's some other like interesting stuff going on. But
what's the drive like to get out there?
It's under 2 hours. It's like an hour and a half.
Is it?
From the city, hour 40. Yeah.
It's out there. Yeah, I can't say I've been out there.
But yeah.
We're getting some feedback from the chat that something's going on with your mic, Nick.
I'm just loud and obnoxious.
Oh,
you gotta get used to it.
Well, I think yours is off.
Oh.
Maybe.
Oh.
Gotta plug these mics in.
Tap that thing, see if it's working.
Well, we'll get that fixed. Sorry, peeps. I was also at a wedding. At my cousin's wedding on Friday, which was really fun. Played some golf yesterday. So it's good little
weekend.
Yeah, good little
all around.
Yes.
That's how you do it.
It was.
That's how you do it.
It was good.
Now we got the 4th. What are you guys doing for the 4th?
I'm heading out of town.
Nice.
Switching up the scenery. Going to Michigan. Yeah.
There you go.
Hell yeah.
UP? Up?
Not quite, but about 4 hours north.
All right.
So getting up there.
All right.
Yeah.
Nice. Family's up there, though.
My wife's family has a little cottage up there, so we head out of town and do that. How about you guys?
I'm going to Lake Geneva.
Okay.
Yeah. Lake Geneva, seeing the Lumineers at Summerfest, apparently.
Ooh.
It'll be a fun little thing.
I saw Lumineers at Wrigley a year or two ago.
Nice.
It's great. It's a great show. So
Love it.
You'll enjoy that. Very nice. Very nice.
Yeah. It's going to be great.
Yes.
Celebrating the 4th as you should.
Yes. In terms of market, also, just quick PSA. Friday, market's closed. The futures, I believe, will trade until noon.
Mm-hmm.
And then on Thursday, it's a half market day. Market closes at 12 at noon. And the futures continue on through the rest of the session. But for stock and option trading, closes at noon. So.
Do you remember when we were under 5,000 in E-minis? Do you remember that?
That like period of time?
Yeah.
Yeah, that was interesting.
It was fun.
Yeah. Is that all you
2 months ago when the world was ending?
Yeah, when the world was ending.
Or had ended, I suppose.
I had this conversation with Victor and my dad last night for the first call. Nothing ever happens. Nothing ever matters.
Yeah.
Like it's just everything's done in like a week or two. That's our new like.
It's very short-term memory this market has.
Yes, but it seems like everything is like that. It's like a week or two, and then it's on to the next kerfuffle.
Yeah. It's like everything is a instant gratification simulation we're in right now.
Yes.
But yeah, crazy times. A lot of stocks participating, some not participating. Apple can't buy a rally.
Yeah, I mean,
but eventually, I think it will. So,
Apple's dead.
Yeah,
you heard it here first from Nick.
It has been dead. It literally has pinned 200 for what has felt like an eternity. Again, the 2-week, period when you have something that sits and does nothing for 2 weeks, you think it's dead
until it's not.
Yeah, that's what it's been.
But yeah, crazy couple of days here. I mean, we've had 6 straight up days in the E-minis.
I mean, last week was just was a blur of just face ripping rallies.
And I feel like we're in for a similar story this week. We've got 3 days left, 60-point expected move through the rest of the week.
It's nothing. Guess the market today. You know
Guess
who
the market today.
is right on the dance floor?
Jenny?
Liz, 6185. We're at 6190 right now. So she is well inside the expected move.
Yeah. Yeah, I had the right idea.
Look at the doom and boomers.
Yeah.
Look at those. 5,600.
I had the right idea. 66, but the tariff stuff really messed that up. I think we would have been there if we didn't get the tariff stuff.
Yeah.
But 6,900 for Q3, that is well in play. We got to get ourselves some of that 6,900 coin.
The SPX.
Yeah.
Don't we have some in our little...
I think we dumped everything.
Did we?
Yeah.
Damn. You got to hold the bag.
At the lows, I went long rocks, Zen rock token. Yeah.
How's that?
It's doing pretty well. It went from 1 penny to 6. So yeah.
So you're
I had a rotate, fellas. I had to rotate.
There you go.
But we dumped all the meme coins, the AI agents, all that. We had fun in December, January, bag battles, and then I had to get to work.
It's okay. Hey, you are the king of the trenches. So I'm with you there. I love that. I love
Incredible.
That. Oh my God. So that'll be announced at the end of the day today. Tom and Tony will do that into the close. We'll see if we get much more movement. But right now, just to give a quick little market update, E-minis are up 19 and change here. They were up about 30 in the overnight session. The high was 62.55, so about 12 points higher from here, 31.32 to the upside. We've had about a 30-point intraday range today, the low being 62.23, so about 20 points lower, basically unchanged on the session, was the low tick. NASDAQ up 114. You got the Dow up 190 and the Russell up for a very muted day. You can see in the volumes, 500,000 contracts, but last week was very, very low volume grind fest to the upside. I expect this week to kind of continue that notion. NVIDIA has gone from red to green on the upside. We had Meta, which was higher and continues to move higher. You got a lot of the bank stocks, Goldman Sachs, JP Morgan. Those are moving to the upside. On the downside, you got like Tesla down a handful. Amazon was kind of weaker, but it squeezed into the close on Friday. Google as well. You had the whole Canada online tax, blah, 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 that got put on, put off, whatever the case may be. It's a tariff situation there. So a little bit of a whippy market there. Oil selling off a little bit, /CL 64.82, down 70 cents. You got volatility basically unchanged here at 18.75, down 10 ticks. You got the VIX itself at 17.09. We did get a 16-handle VIX on Friday, so we're back to just kind of summer doldrum here, it seems. Bonds up 14 ticks. Gold at 3,300, up $15 and change here. Silver down 18 cents. And then Bitcoin looked like it was going to zero yet again, getting below 100,000 for about a second last week. It's now back to 110.
I love that.
Risk on.
Under 100,000 now is crashing.
That's crashing, but that's when we get the zero calls.
Yeah.
Everything's going to zero. Coinbase has had an insane run. Circle kind of giving it up a little bit over the second half of last week, but is still, through the roof. You got MSTR up 18 and change here. It's we're risk on.
Mm-hmm.
Ethereum had a nice little bounce. We're at 2,500-ish. It was down to 2,000. Looked like it was going to zero. Solana was having a good week.
Mm-hmm.
We're back, baby. Risk on.
Yeah, it's been choppy for sure. But I think to your point around Apple and the VIX now back at 16, possibly moving lower, S&P at all-time highs, believe it or not.
Summer.
You're really seeing the same thing in crypto, at least in Bitcoin, if we use that as the proxy for the whole space. And I don't see why you wouldn't. Bitcoin market cap dominance is closer to 66% right now. It's been Bitcoin over everything, as we've talked about. Doesn't mean that alts haven't bottomed or that you won't see a rally at some point. But here today, it's been Bitcoin over everything. And when you look at Bitcoin realized volatility as well as implied volatility, we are at 1-year lows. We're talking about Bitcoin implied vol that's at 38%.
Yeah.
Realized on a 30-day basis, if you annualize it, is closer to 30%. So these are some of the lowest levels we've really seen in crypto.
Both implied and realized.
Absolutely.
Which is an interesting point. We've been talking about, like, last week, the kind of upside skew and volatility that exists, and kind of piggybacking off of, you know, the ways to trade it with some leverage of using those out of the money leaps. And we have a lot of the peeps are listening in on that. So
yeah, we have some trade ideas there. There's a trade idea I want to speak to that we got from Greg Magadini from Amber Data. He was on the show with me on Wednesday.
You've had him on a couple times.
Yeah, Greg's awesome. He puts out a newsletter as well, and had a trade idea around Circle selling just cash secured puts in there. You look at the return on capital and going out a little bit farther. So he's going out a little bit farther than the 45 days to expiration. But there's some interesting trades to be had there in out of the money puts if you're bullish. And I think a lot of reasons to believe that rally continues. I don't think it's just IPO kind of short term FOMO. There's some of that, but there's real catalysts in the stablecoin space, and there's a reason to believe, I think, real fundamental reasons that this is going to likely go higher. But just to speak to the vol on Bitcoin really quickly, wrote about this in our midweek market update, and I think I mentioned it over the weekend. So if you haven't signed up for the Tasty Crypto email, get over to tastycrypto.com and sign up for that. We put out a couple pieces, and they're pretty actionable each week. But for context around the volatility, right now at about like 38, 39%, let's say the price 106, 107, somewhere around there, that's going to give you a 1 week, one standard deviation move of like 5,500 to 6,000, depending on where spot price kind of trades around. But if we were to go back to the highs that we've seen, or just see volatility kind of move to the top of that range, which is 70%, you're going to get a $10,000 weekly move. So just be aware of that, right? It doesn't mean that volatility can't go lower. We know it can get cheaper. But if you do get that move, you're going to get Bitcoin again that starts to behave like the Bitcoin of past.
Yeah.
And those are much bigger moves. So just try not to get lulled to sleep with these $5,000 1 week moves or $1,000 here on a daily basis. You should expect, if we do see a change in volatility, much, much bigger ranges.
Yeah, it's kind of surprising to see the Bitcoin not as volatile as like a Coinbase. You saw, and like Circle too. Circle, which volatility in Circle has come in very, very significantly. It's still very high. I mean, it's over 100% across the board, but it was significantly higher over the last couple of weeks. But like Coinbase, IV rank at 27, and it's kind of come down over the last week or so. It's gone 200 to 350 in the span of like a month or two on the
pretty much new all-time high, or close to an all-time high in there since its IPO.
Yeah, and the talk being of kind of like bullish crypto sentiment, and to see that not really translate into Bitcoin itself has been kind of a surprise to me. Like, you think you get that sort of like sympathy sort of action in Bitcoin and probably Ethereum and some of the higher beta stuff, which is moving now, but it's not exploding.
It's not. I think that can change in an instant, though.
Yeah.
Right. We've been very range bound when you look at the multi-month kind of time frame here for Bitcoin. Let's call the range 110 to 75.
Yeah.
75 on those tariff announcement lows back in April. Pulled back. It's been pretty resilient. Pulled back underneath 100,000 when we saw geopolitical tensions increase here just the last couple of weeks with Iran. And you're right back at near all-time highs, but you haven't had that break. I think you get that break of 111 or so, and you really start to run, you could very quickly see this whole picture change. For context, like you've pointed out, Bitcoin vol 0, basically 30% here, and Coinbase realized volatility on a 30-day basis is 92%.
Yeah,
I do think it'll change for Bitcoin. It'll certainly change for alts like Ethereum, Solana, but you need to break out of this range.
Do you think it's catalyst driven, or do you think it's just when it happens and it goes? Because like a lot of the past explosions in Bitcoin have been like catalyst driven, so to speak, of like, you know, Trump's meme coin and just Trump being elected in general. And, you know, you had like the inflation numbers where we had these crazy Bitcoin moves. Do you think it's going to be like that? Or do you think it's just all of a sudden, random day, a Sunday night or a Saturday night or whatever, just a random time where it's off to the races?
I think the catalyst is the macro setup. You have a pretty conducive market environment for this, but I think to your point, Nick, it's you break some of these call them technical levels, right? We've run into this resistance. A lot of sellers have shown up in this area, but you break that. There's that FOMO. There's the short covering. I don't know what the positions look like right now, but you can look at the perpetual futures market. You can see where there will be short liquidations, and some of that just feeds on itself.
Yeah.
And so, technically speaking, you know, quite often that's how this trades, and so you could see that. But when you look at the setup here, you are coming out of or in an environment that's been pretty growth positive versus where we were back kind of the beginning of this year, February, March, and kind of what we saw with the volatility in the offsides positioning in April. Had a great May. June, we've chopped sideways here. Most of my signals are looking a lot better, so starting to inflect higher. I think you're going to see an environment where you see continued dollar weakness. You are looking at, you know, treasuries trading a little bit better, yields moving lower, price moving higher in that sense. You still have rates that are likely to come down off of the 4% level here with the Fed. You have some changes within the financial system in terms of how U.S. treasuries are held as collateral. And so you have a positive liquidity dynamic here. And I think, you know, it's sooner or later you break some of these price levels here. And when you look at the liquidity picture, I believe you could easily get to, you know, call it 125 to 150 on Bitcoin. It's not a huge move from here, given the volatility that we have experienced. But there's a lot that supports this. So will it be an announcement that all of a sudden causes the market to trade a little bit differently and accelerate higher? Possibly. I think you could certainly see some downside in the near term, right? It's going to be something that is going to correct on a risk-off headline, and those seem to pop up quite frequently. Now, I think it's a buying opportunity when you get that volatility, but in terms of, you know, are we looking for a catalyst? I think a lot of catalysts are bubbling under the surface and have been. You're seeing large ETF flows. You're starting to see some of that materialize in Ethereum as well. But I think the setup is just still there, that this bull run continues, and I believe that it can continue, you know, throughout this summer. You might have a couple more quarters in front of you.
Love it. Yeah, there's today, I know when we were like just starting the show, I mentioned the Solana staking ETF that's like sort of on the move here, or at least looks like it's going to go through. It's through Rex shares. I haven't seen this one, but maybe that, I mean, that's another thing that you've been talking about as kind of the next wave of passive liquidity, whether it be the ETH A ETF or a Solana ETF, where there's pass through of these staking funds, and that's another liquidity driver into the crypto space as a whole, like a positive.
Absolutely. I mean,
think that's going to be net positive.
Absolutely. Even a shift, you know, outside of ETFs leading to this, but even a shift in terms of financial services companies offering staking services to their users, right?
Yeah.
We do have a couple crypto exchanges that offer that today. Saw the Robinhood announcement.
Yeah.
I won't speak in detail to what else is going on here, but people are working on this, right?
Yeah.
You had guidance from the SEC in May that basically said staking or offering staking services on a proof of stake blockchain, which would be something like Ethereum or Solana. This is not viewed as a securities offering when you apply the Howey test. This is new guidance, a completely different view than what we've had before. And so that's another catalyst here. I think it supports from a macro perspective, obviously the proof of stake chains like Ethereum, like Solana, but you're just now getting there. Do you get the ETFs that pass on staking rewards in the form of the dividend? Probably. Do you see more and more brokerages offer crypto and then offer staking services and expand that crypto offering? Probably. And so you see more adoption over time. You see larger investors come into this space. You're seeing that already through some of the ETF products. More institutions are participating. The market is going to grow.
Yeah, and it looks like the structure of it is unique as well. The ETF itself, C Corp business structure.
Of which one? The Solana?
The Solana one.
Yeah, I have.
So,
I need to dig.
We can look. Yeah, we'll look into that further. But
yeah,
here we go. Blast off. I actually did do a that circle butterfly.
Oh yeah, yeah.
That I did from Fast Market. Someone was basically doing symmetrical or asymmetric on the debit side, on the downside in circles. So I did that one. That was a $250 win or something like that. But it was the 170, 135, so a 35-point wide spread, and then a 20-point wide credit spread on the put side. That was for July 18th. But yeah, got a little bit of a sell-off and a big vol crush, and that maintained the value of the 170, the 135, 115, lost a lot of value. So I closed that this morning.
Yeah, to touch on the selling of those puts, it is very interesting, especially if you have the capital to do it. It's a big position, but and we've talked about this with other squeezes and just super volatile underlyings that move, in magnitudes like this. The volatility that gets pumped into these products, it makes being short them and making money on out of the money puts very, very hard. And I just pulled up just for an example. I wanted to find something that has enough, open interest and volume to really see that trade activity. But like the 100 strike puts 40 days out in time trade at, $3 and change. And that's, a 3% premium to the cash secured value of those. And they're, nearly 100% out of the money. It's a 50% out of the money. It's a 50% down move to be even tested on those puts. And when you pull up the option chart, those puts have basically not moved over the last week or so. And the stock itself has gone from 280, 290 to 180. You've realized this 50% down move, but those puts are so juiced. The implied volatility on those is 300% or more probably, to where those options don't move. And so if you're buying those puts, it's a very hard trade to make money. You have to kind of structure it how Mike did, where you're buying, you're getting value via potential intrinsic value and closer at the money options, and you're kind of selling those tails. So I think it's a very interesting trade.
I want to probably sell puts in there. I mean, to speak to that for a second, right? Like high level, you have this fundamental driver. You have stablecoin legislation making its way through Congress.
Yeah.
That's going to invite more participation from institutions. Again, getting back to financial service companies, they're going to look to either, use Circle stablecoin, USDC, others launch their own, right? I think it's a net positive for the space. If you believe that DeFi is going to grow, if you believe that on-chain participation is going to grow, stablecoin market cap grows as a function of that, right? We're looking at something that's 250 billion or so, give or take here today, could be $1 trillion in market cap by the end of the decade. I don't think that's unrealistic in my opinion. Mm-hmm. So if you look at, does Circle, USDC play a larger role in that growing ecosystem and in that market? Arguably it does, and it's one of the few companies that you can invest in the US. It's a crypto native company. Also is being somewhat integrated into the larger financial system. So great, story is what it is. When I go in here and look at something like the September puts or the August expiration, but you go out there with a little bit more time, you've got obviously a bit more juice in these. Pick your spot. It can correct, to your point. These are pretty expensive options. I don't know what the arbitrary level is. You can eye up the chart. Let's say it's a 30 delta strike. It's 150 in September, or it's 140. You're taking in close to a $2,000 credit against a margin requirement that's about 12 grand. Decent return on capital for 3-month period.
Yeah.
Obviously, there's risk, but you're getting paid to take that risk. There's also the fundamental growth story here on the other side of it. You're not able to lock up capital on a 3-month basis in treasury bills and get, $2,000 against a $12,000 capital requirement or a $12,000 investment, if you look at it that way. You take assignment of the stock, certainly some things you can do to manage that as well. And last time I checked, those call options were pretty juicy.
Yes.
So,
no,
this is a really interesting trade right now. It's not going to exist forever, but I like the idea.
Yeah. Even if you wheel into this, like if you sold the 150 in August, let's say it actually gets tested, you take the stock, you can sell the 200 for probably more premium than you sold the put for initially, and now your basis is at 100.
Yeah.
Like you can rip through this cost basis pretty easily if you can do it in a way where you can hold it through any volatility.
Yeah.
Yeah.
Big
Have to
boy
have the
trade.
capital for sure.
Yeah.
Yeah.
No doubt.
Lovely.
Yeah.
I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat. If you want to join us there, we're streaming live. Just go to the Tasty Live channel. But yeah, should we blast through some slides and then see if we've got any questions, trade ideas in the chat?
Let's do it. Before we do it, though, I want to just plug crypto at Tasty Trade for anybody that is interested in trading these products that we're going to talk about here. When we go through our market update, we focus on the tokens that are available to trade through the Tasty Trade brokerage. If you have a cash or margin account, individual account, and you want to trade crypto, spot crypto, in addition to everything else that we talk about here on the show, you can do that by enabling crypto, enabling crypto on your account. You can do that in the trading preferences section once you log in.
It'll also prompt you if you don't have it enabled, like, and you go to the trade page and you go to the crypto section, it'll prompt you if you don't already have an account. There's a link there that you can click. It's very, very quick. It's one little enable button and you're pretty much through. I think it takes, overnight to stick, and you're off and running.
Yeah, what I found is that we talk about this quite a bit on the show, but not everybody knows that Tasty Trade offers spot crypto trading.
Yeah.
Across 23 different tokens and more coming soon.
Yeah. And Ryan is giving you the alpha on the follow page too. You can see he's buying and selling and when he's getting in and out of the crypto. He's been posting those as well. So you get that too.
Haven't been as active recently, but we're starting to heat up again.
Yeah.
Nick. So maybe here with some of these signals we're going to talk about, there might be a couple things to do.
Beautiful.
All right, you guys want to jump into it?
Let's do it.
Okay, here's your Bitcoin update, or crypto update more so, for June 30th, 2025. Price hasn't done much, as you mentioned at the beginning of the show. Little bit of a bounce here off of that pullback that we saw a couple of weeks ago. 107.5 at the time of putting these slides together. Nice move on a 1-week basis. But really, again, when you look at momentum, it's been in the favor of Bitcoin. Bitcoin Cash is the only asset that we track that has outperformed Bitcoin year to date. So 1% versus Bitcoin. Everything else is still down quite a bit. But Bitcoin Cash kicking off some, positive price momentum here, bullish trend, have seen a handful of other alts shift from bearish daily price momentum, that's just measured by 3 different exponential moving averages. You're now seeing that shift back into neutral territory. I personally wait to see that then inflect higher and get that buy signal. When that happens, depending on kind of the structural setup here, whether it's bullish on the weekly or the monthly, that can precede a larger run. So those are some of the signals that I use to enter into these, because it is a market where you're not able to short the spot cryptocurrencies. You can come into the derivatives market and put some trades on. You can hedge via those vehicles. But mostly this is, momentum based, and you want to be on the right side of that trend, or at least you want to be out of it and trying to sell potentially if that shifts, right? And so I'm waiting for those signals, but you've seen it in Bitcoin. It's been pretty strong here. Bitcoin Cash, we talked about Aave. I'll mention that in a second. But Solana, SOL, XRP, Litecoin, LTC, all flipping to neutral from bearish, which is the first sign you want to see if we're going to get that larger up move. But it's been low vol across the board. I mean, guys, we've done this show where XRP volatility was well above 100. It's half of that. Solana, it was 90%. It's 66. This stuff isn't moving. It can move. This can all get a lot more volatile. So don't get lulled to sleep.
What What market cap do we have to be at for the volatility to not be super, super high again? What do you think? For like the whole space? Like, you think once the whole crypto space is a $10 trillion, if it gets there, if it's $10 trillion, volatility is not going to be like what it is now? Or you think it'll always just have that volatility?
Well, I think the volatility will be anchored to lower levels. And you're probably seeing some of that process play out here already, right? You have the ETFs, and those have induced huge flows that you have different types of participants now. You have derivatives that are starting to become more liquid. You have options on the ETFs. You have call overrights. So there's certain things that at times will suppress volatility. But I do still think that even though you're in a larger secular trend of lower vol over time, over multiple years here, you still will see volatility trade within a range, just like you do with equities, right? We might have a lot more people that are participating by selling premium, and we've had a lot of call sellers in the VIX at times, and you see those flows show up. But it doesn't mean that you can't rip to a 40 vol or a 50 vol or a 50 VIX when you look at the S&P. Same thing here. I just want to call out again, Bitcoin implied vol at 38 is a 0 on your IV rank on a one-year basis. It can go to 40, it can go to or 45, 50, 60 really quickly.
Buy that gamma, baby.
Yeah. So I don't think it goes back to 100 anytime soon, right? You have a $300,000 Bitcoin price with 100% implied vol, maybe. But no, I think that you could definitely obviously get off of this the 38 level here. So low vol is the theme. Bullish trend has been in place for the most part. It's been Bitcoin over everything else. Pick your spots. That will, I would imagine, change at some point. If we jump to the next slide, though, a couple others that are trading a little bit better than they have been versus Bitcoin. They still look pretty trashy. But Aave has been one that I've been in and out of on the follow page. Probably working order in there again to buy any pullback now that we got the signal. It's not perfect, but that's kind of what I go off of. So really quickly, you can get a 25% move in a week in some of this stuff. The market caps are low, but that's one where on the other side of Bitcoin, Aave has a 90% realized volatility here on a 30-day basis, 272 price. We were in this at 250-ish and sold closer to 3. It's pulled back a little bit. Signals have kind of bounced around. Looks a bit more bullish right now. Same thing with Aptos. Maybe some early signs that you got some more to the upside off of these levels, though the broader trend has been pretty weak. Other than that, there's not much that really gets my attention, guys. I've got a SUI position, SUI, at the bottom there, but that's been pretty weak as well recently, down about 50% versus Bitcoin. But a couple signals kicking off on Aave and Aptos when we look at those moving averages. On the next slide, this has been bright red for the most part for the last few months. Nothing here that stands out to me. At some point, you do get something like a Pepe, a meme coin that reverses. You can see the same thing with Doge, but they're all trading the same way, and they tend to at times. When you get to that point in the cycle, and maybe there's a catalyst, or maybe it's just there's a broader rotation out of some other stuff that's gone up a lot, you might see a bid in Pepe, you might see a bid in Doge. I would expect that you do, but for now, those memes are down 60-ish% versus Bitcoin. You can catch a 10% move in a day or a week, and there are trades. Exactly. There's trades to be had, but if I'm trying to stay on the right side of the trend and just stick with what's working, well, these haven't really been working.
I love that Pepe pulls in the image of the frog in the platform.
Yeah, you got the memes galore, and we're looking to add a few more. They can be fun trading vehicles at times, but again, I think from the investor perspective and my argument around Bitcoin in your portfolio, well, it's exactly that. It's Bitcoin in your portfolio. There are other opportunities to trade some of these more volatile tokens, but again, you just haven't seen that environment right now.
Yeah, these take the are the option side of the Bitcoin trade. Are like some of these.
Yeah, you've got some leverage, right? If you want something that's going to be 150% annualized volatility, well, that's got to be something that goes up more than it goes down. But like they can trend down 80% for 3 to 6 months before they get that pop. And you've been in that period where you've had a lot of weakness. Maybe we're bottoming in some ways. That's a process. But, you know, you look at the other side of that, Bitcoin's trading near all-time highs. These are trading near their lows.
Mm-hmm.
So next slide here, just a quick check of Bitcoin market cap dominance, BTC spot D, 65.5, flirting with 66. It's been a little bit higher as of last week. Trend there largely intact. You see that as well with Bitcoin's performance over those time frames. ETH BTC got the pop back to bearish. Solana versus BTC, same thing. You see that with Doge. Solana versus ETH, some noise. There's been a bit of chop here, but again, the theme remains for now. Bitcoin is in the lead, Bitcoin over everything. I just think you stick with what's working. And when you see the signals change, there's an opportunity, but I'm not trying to force anything here. I would love to see ETH go back to $3,000. It's not doing that today.
Yeah. It's pinned at 2,500.
Yes, and eventually that does probably change, right? But you could see it swing $500 both ways. It could be back at 2 real quick, and it could easily trade up to 3. The all-time high in there is closer to 5. So again, Bitcoin near all-time highs. Everything else, even the biggest stuff against it, on a relative basis, has really underperformed. To our final slide here of our crypto market update, check on those 1 standard deviation weekly ranges here and the implied vol. Yeah, this is low, man. I mean, we've been looking at this every single week. Solana has been bouncing between a $14 and $16 move, sideways. ETH, like maybe $250 at the high. Vol has come in there. Price has gone lower, so you're going to have a smaller move. There's that BTC move I'm talking about as well, 56.74. Gives you a range that gets you a new all-time high, which is what you want to see. 101.8, 113.2 to the upside there. If we were to see vol go back to 70%, though, those numbers double. You're looking at closer to an $11,000, $10,000 move on a 1 week basis. So just be aware of that. Very, very low volatility here, but you got to trade the market that's in front of you.
Yep. And speaking to what could move IBIT or Bitcoin's implied volatility higher, going to something like IBIT, I'm just looking at the 100 strike in Jan 2027, trading for $7. It reached a low of $5 and changed at the lowest point during the tariff stuff. So, I mean, it is trading currently at low levels relative to implied volatility and the price, even though the price is at highs. So, speaks to the low IV in there for sure.
Got anything fun coming up with the crypto app / crypto offering on the Tasty Trade platform?
Yeah, on the
Anything
product
good you can
side,
tease?
team is very hard at work on a couple of things. So we've mentioned stablecoin funding coming soon. So month of July, be on the lookout for that. That's stablecoins in, fund your account. And today, if you have crypto approved on your account and you have crypto transfers enabled, you can deposit crypto or you can withdraw crypto from the ecosystem via the wallets that are in custody with zero hash, but through your Tasty Trade brokerage account, you can move crypto in and out. So if you have a margin call, for example, and you really quickly needed to move assets in, you wanted to do that, that's one way you could do it. We're expanding on that with stablecoins, which you're going to see everybody do this, right?
Yeah.
Pending legislation, Circle, IPO, like this is the future. It's a superior funding mechanism.
Yeah.
It's crypto on one hand, but it's also just, an evolution of the technology, the funding rails.
Faster, easier.
Yeah, 24/7.
Yeah.
Maybe not as accessible today as it certainly will be in the future. But I think this surpasses when you look at like what your volume of ACH is as a business, or wires even. I just think this becomes a primary funding source. So you're going to see that become available here pretty soon, and then also the withdrawal side. So you can kind of think of it as, I need to acquire stablecoins for use somewhere else, or want to trade tokens on chain, whatever it might be, through a decentralized exchange. You're going to be able to source those stablecoins and a few different stablecoins through Tasty Trade. It's going to be USDC, USDT, PayPal, and the Ripple Ledger dollar stablecoin. We'll look to expand on that as well. We've got some other cool stuff coming in terms of, services. So some things around recurring purchases, price alerts, automated push notification price alerts, a lot of work that's going into the mobile app, redesigned order ticket, more tokens. I think we're targeting another 10 tokens to launch in July. So very quickly. There's probably a lot more that I'm missing.
The reoccurring buy is going to be a fun one.
Yeah, you know, we're looking at staking. There's a lot happening in crypto. We're going to continue to put the pedal to the floor, and we're super excited about the growth of the product.
Awesome. Love it.
Sweet.
Yeah.
Colin pointing out that we got a big move in Solana at 10:30, just ripped up 5%.
I love it.
Maybe there was some kind of news that broke. I'm not sure, but yeah, it's a pretty swift move.
It's just more of the same, man. You get these pockets of realized volatility, and it's beautiful.
Anything new going on with Sui?
I haven't seen any specific announcements in terms of new apps launching or developments there. This is something that's going to chop, right? We're talking about a token that is typically pretty volatile. What was the vol that I had on there? 92% is the 30-day realized volatility if you annualize it. You're going to continue to chop. It's a lower market cap. This is one where maybe from a fundamental perspective, if you want to try to understand, is the chain growing? Are there more use cases, more users? You look at exactly that, right? What's TVL on Sui? Well, right now, if I pull it up, I've got TVL of 1.74, underneath 2 billion. If we look at where that was a year ago, you're at, let's say, 600 million, 700 million. So significant growth there. You want to see that. If I look at, volume on chain, users, active wallet addresses, you're seeing growth in those areas. Trying to pull up stable coins here. I think another kind of proxy for chain growth or just like adoption is going to be stablecoin market cap growth on these chains, right? We're talking about stablecoins as this bridge between these two systems. Stablecoin, dollar-pegged token that you can use in DeFi. Well, if there's use cases for it on the chain, that should incentivize activity and participation. You should see that show up in more people bringing or inflows of stablecoins on chain. And so if you look at stablecoin market cap on Sui, it's at $1 billion. We talked about TVL at like almost 1.75. So you're probably, my guess is that it's up a lot in terms of stablecoin market cap from where it was. I don't have it in front of me. I'll see if I can pull it up. But those are some of the things that I look for depending on what your investment is. But if I'm looking at Sui or Sui, at the beginning of the year, on January 2nd, stablecoin market cap was 366 million. It's just above $1 billion here today. USDC is the dominant stablecoin on that chain. It's about 75% of it right now. So it's up and to the right. Yeah. Now, that's not going to change things on a day-to-day basis, but that's the trend that you want to see at play. I also think that with some of this stuff, you need to have a little bit longer time horizon as an investor. But, there's promising signs, I think.
Yeah. On the stablecoin front, because we had the Walmart stuff, we've had other companies talk about issuing stablecoins. The yield from that, do you expect that to be passed through? Like if Walmart has a Walmart stablecoin that they back with USDC or something else, is that just a way to hold it's like the Starbucks model, how Starbucks has a lot of their profit comes from just yield they get on cash in app.
Yeah.
Right. People just holding money.
Not today. The Genius Act is written in a way that prohibits that in terms of those stablecoin issuers passing it on to the end user.
Okay.
So those companies themselves can clearly invest capital into treasuries and then generate income off of the U.S. Treasury yield. That's why Tether and Circle are just fantastic businesses.
Yeah.
Not a ton of overhead. You just take massive flows in. You create a token on chain. You facilitate this process. but you largely make money off of the interest income from those balances.
But that's getting passed.
It's not getting, no, it doesn't get passed on to the end user. So when you hold a stable coin, you hold just this token that represents $1 one for one on whatever blockchain network it's on. It doesn't accrue any interest. Now, there are platforms like Coinbase, for example, and others that kind of act as, I guess, a pseudo bank in some ways, right? When you think about it, because if I hold a stable coin balance with them and they have a relationship with the provider, they might have something in place where they can pass that yield on as an incentive, or it's a cost to them and they're just adding it on top. So there's that, but the stablecoin issuer itself, like when you hold the stablecoin, if I just have a balance of USDC in my Tasty crypto wallet, it doesn't accrue any interest income. That could change, but the way that the law is being written right now, it prohibits that. I think it insulates the banking industry in some ways, but I think here's what you see happen instead, right? This is now just an evolution of participation on blockchain networks. And we won't even really think about the networks at the time in the future. When you're using these products, it'll just work.
Yeah.
You don't really think about like, how is my payment being processed today when I swipe my credit card?
Yeah.
But there's a bit that goes into it. I think what you're going to see in the future is that the use of stable coins just facilitates flows into other products that exist on chain. So if I hold stable coins, just like today, if you have money in your Chase account or Bank of America or whatever, they give you some like really low interest rate. There might be something attached to it, 0.01%.
On a checking account, it's like 25 basis points.
But you can do something else with that money. You can move it to a connected brokerage account. You can invest in treasury bills or an ETF that's going to invest in treasury bills. I think you're going to see the same thing on chain, right? That's real world assets. That is primarily going to be, or what it is today, credit instruments, treasury instruments. It opens up an opportunity for inflows into treasuries. I think it helps to find a buyer of treasuries globally in a world where it's always like, well, this country or that country, this government could just dump our debt. They hold so much of it. There's a large set of the population that would probably want to invest in dollar assets if it's easier to do so.
Yeah.
And I think that's what you're going to see. And so it's not so much that the stablecoin doesn't give you any interest, but like the stablecoin can then just be used to invest in products that exist on a blockchain that will generate yield. Or, throw it like me into a USDC ETH pool on Uniswap and generate a little bit more yield than the treasury bonds.
Yeah, I think
liquidity and speed too.
No, that's exactly right. There's nothing like.
It's like if you had to go
if you have to wait a day
for everything,
right.
If you have to wait 2 or 3 days to get cash, if you click like cash out from somewhere, like that's ancient times. Like that's the nice thing about
you got to talk to DraftKings about that.
Well, no, I was gonna say DraftKings. They're the pinnacle. They're the best. It doesn't matter how much or how little you're depositing or withdrawing. Like if you click withdraw, literally by the time I can even log into my checking account, it's already there. Like that's where everything is going. And I think this, like the blockchainization or tokenization and using crypto to get there is certainly going to be.
Yeah, I would say the industry for the better part of 5, maybe 10 years has been waiting on some form of regulation, some rules to adhere to. Now, we were at one end of the spectrum where the regulators were actively coming after the industry versus working with the industry. But now you're transitioning away from that and you're going to have a set of rules and regulations. You might not love them as a participant, but it's better than not having a framework. And so I think you get to a point where it'll be commonplace that we're using stablecoins. You're not even thinking about the technology that's powering those numbers on your screen. But to your point, Mike, your money will be back in your bank account almost immediately, no matter what day of the week it is. When you move it out of your brokerage or you move it out of your sports betting account or your contract market account or whatever else pops up, right? Vendors can get paid quicker. Remittance payments are going to be faster, cheaper. There will still be associated costs with this. Don't get me wrong. It's not like, it's just free all of a sudden. But I think people are willing to pay a few basis points for that convenience. Exactly. Yeah, this is just superior in many ways. It's just like early. Let's see where we are in a couple years.
Yeah.
Go on.
And you can get there like Venmo is another good example. Like if you do the standard cash out, you get it the next day. But if you want it immediately, you pay a fee. But if you can pay a fee that's less than the current fee, like that's how everything works. It's like 20 years ago when you're trading options, there's a ticket charge and all these things, and now there's nothing.
Yeah.
And it's like that's eventually where everything gets to. Everything gets to cost parity, and then it's just a matter of experience.
Yeah. Is the change in interest rates and U.S. rates, is that a problem? Like, assuming that rates I think there's like 6 cuts projected into next year. Is that does that hurt the stablecoin space in terms of like those companies are, it seems like, are very, very exposed to whatever U.S. rates are, or is there other yield coming from stable?
Well, I think there's an interest rate risk component to it. Yeah, absolutely. As a stablecoin provider, if you have this massive cash flow, it's a function of this capital being invested in treasuries or the overnight Fed funds rate, and that comes down by 50%, and it goes from 4 to 2%. You're going to make less money. That impacts banks. That impacts brokerages from a net interest income perspective. And so you're going to see, those kind of cyclical headwinds as a function of monetary policy impact stablecoin providers. But at the same time, there will likely be associated fees, partnerships, relationships, and just the broader adoption of this technology and the kind of convergence of these two systems, I think offsets some of that. But if you just simply look at, okay, well, are you going to have more or less cash flow from your business based on a 4% interest rate or a 2% interest rate? Well, clearly you're going to have less money if it's a 2% interest rate. So there is that. But how important is that to like the paradigm shift? I don't think it stops the paradigm shift.
But USDC can't charge a fee for the USDC.
Providers could, or so let's say you want to use it and deposit it somewhere. Let's just use the DraftKings example.
Yeah.
DraftKings could say, well, we're going to charge 10 basis points for USDC. Now, your ACH, like you mentioned, might be free, shows up in 3 days or whatever.
Yeah.
Fine. You want this instantly, it's 10 bips.
Yeah, but it's going to be charged by whatever the receiving entity, like Circle itself.
Well, Circle could charge DraftKings something.
Yeah.
Right. There could be different agreements in place to facilitate this whole thing in the same way that you see that with payment providers and with associated rates to transact with a Visa or another payment provider. I think there's that exists today. There's going to be a lot of that. So the companies will figure out different ways to make money and to insert themselves as intermediaries, but the technology is still far superior from a kind of speed perspective and a settlement perspective than what, arguably than what we use today.
Beautiful. Any other YouTube chats? We got a couple minutes left here.
Yeah.
What's moving here? Nothing. Everything's
Yeah,
up 20. Market's up 20. Hasn't stopped.
Holiday. I mean, come on.
Yeah. Come on.
The V bottom is nearly complete. We're there. I was talking with Mike.
And it is wild, isn't it? Because every time that happens, we joke about it. It's like, this is just going to be back at new all-time highs in like 2 months. And you can't believe it at the time.
No, you can't. You can't. And then it always seems worse than whatever happens. In the hindsight, obviously.
Yeah.
Thought the world was ending a month ago, and now we're, at all-time highs.
I thought my phrase "until proven otherwise" was dead in April. It's not. It's not.
Until it actually goes to zero, you can't.
Until we sell off and we stay there. It's just really insane.
Yes.
Flower Power is talking about rates. Unless rates go down greater than stablecoin revenue growth, it would be better if stablecoin operators were allowed to offer credit, as consumers love credit the most.
You think that's a possibility? I mean, why not?
Yeah, I look at this as this is a payment rail that uses, it could be Ethereum, it could be an L2, it could be Solana, but it uses a blockchain as the settlement layer.
Yeah.
And you gain, the efficiencies of blockchain networks as a result. And so therefore, you can just move things in terms of this distributed ledger. You can do things a lot quicker. What other services are layered on top of that? Absolutely. There's going to be, I think many more financial services, and again, this convergence of this kind of legacy system and this new system into this, 2.0 paradigm shift underway. But it's largely just a function of, well, what can you build on top of a blockchain network, or what exists today that could just possibly settle faster or have less intermediaries through this decentralized mechanism. So I guess it's a long-winded way of saying, like, yeah, sure.
Yeah.
Anything's possible, really.
Right. We're seeing the tokenization of securities. We're seeing real-world assets. We have dollars on chain in stablecoin form, which has existed for some time. You've got decentralized exchange. I mean, this is what I was hoping everybody would get to. We started to talk about this a couple of years ago. We're like, you have to realize there is this paradigm shift underway, and that's continuous as technology evolves. This isn't the first time, and it won't be the last time, but you have technology now that is going to give you a lot more efficiencies in the financial system over time as there's rules and regulations to adhere to, and more participants begin to adopt this technology as a function of that. Like, it's happening.
Yeah. Can't stop it. Train's running. Last one here. Do you know what the latest version of Tasty Crypto wallet is off the top of your head? 0.40 or 0.40 is older.
Yeah, I don't know what the exact number is, but in the iOS App Store, the Google Play Store, the most recent live version is in there. So if those numbers match,
yeah, you can go.
That's it. Otherwise, update it. If you have any problems, hit us up, support@tastycrypto.com.
Sweet. That's it for us. Thanks for tuning in. If you've got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Ryan is at Ryan Fred Grace. And go give Tasty Crypto a follow as well. I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat. Totally free. You can just go to tastycrypto.com. You'll find it on the homepage. Scroll down a little bit as well. But yeah, short week for everyone. We'll
not for the crypto markets.
True.
Crypto markets don't sleep.
Never close, man.
They never close.
They don't
trade
they
those.
don't know what the 4th of July is. They just keep going.
You light some fireworks and buy some Bitcoin at the same exact time.
Internet doesn't care.
Come on.
We got plenty more content coming your way on the YouTube channel as well as tastylive.com. So stay tuned. We'll be back same time, same place, 11 a.m. Central tomorrow. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4,000, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Look who's back testing. tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We're back. It's Monday, June 30th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, we're wrapping up quite the quarter, quite the first half of the year here with, dare I say, a nice little bang to go into the end of this month.
It's an interesting end because, of course, we started more optimistic overnight here before going into the U.S. market hours. But it's a interesting sort of end to what has been a very, very, let us say, topsy-turvy second quarter. We've been here, we've been there, we've had a war, we've had tariffs on, we've had tariffs off. It's almost like we've lived a whole presidential term in just 3 months.
Oh, well, thankfully, we're only halfway through the first year of Trump's 4-year term, so there's much more ahead. But there has been quite a little bit of political noise here as we get to the end of this quarter. For those that perhaps have been paying attention, last week, the week before, not much talk from Lutnick, Bessent, Hassett, right? Even go Stephen Miller, they're all quiet. But the past few days, everyone is speaking up about tariffs. And we know that there's a July 9th deadline coming. Of course, the White House last week let leak that this July 9th deadline maybe doesn't matter so much. They're aiming to have trade deals done by September, of course. So now there's a little bit of tough talk to incentivize people to move along. We hear some chatter about a Fed chair potential replacement. Will there be a shadow Fed chair? Wow, what talk. And yet, where's the signal throughout all of this? Ilya, it's a lot of nice chatter. It's interesting to look at, but the markets really don't seem to care. We'll get into that for stocks and for bonds. I'm going to posit whether or not the Trump team wants to unload a new regime of tariffs on the market akin to what happened in early April, right as he tax bill. Do you think it's good to sell the American public a tax bill with markets crashing? I don't think so. But let's do something we haven't done in quite some time. Let's look at the CFTC COT report. And this time we're looking at it through the vantage point of the Z-score. If you are, say, a +1 on a Z-score, you are 1 standard deviation above the mean for that period of time. And if you have a -1 Z-score, you're 1 standard deviation below. I'm looking at the rolling 20-year basis for the futures market here from the CFTC COT report's most recent update. And we're looking at speculative net positioning right now. In this case, S&P 500, NASDAQ, actually traders are still net short here. But I've highlighted in yellow where we're at least 1 standard deviation above or below the mean in terms of the 20-year, past 20 years. And in notes, you could see here, we are still pretty net short. In silver, fairly net long. In the euro, in the yen, still fairly net long. In the yen's case, 2.6 standard deviations, a little bit more than that above the rolling 20-year mean for positioning. I think this is informative insofar as when we look to something that's going on in like the precious metals market, Ilya, where it feels like gold and silver are starting to feel a little toppy. You can't ignore the fact that most people are sitting on the long side of these trades. And if these markets begin to break, you could see a period of covering, for example, longs getting out of the market. On the other hand, you and I have been sizing up potential trades in long dollar, and we still have this evidence in our hand. So as we look to the second half of the year, and knowing this is the positioning for how the table is set going into the second half of the year, do you still feel convicted about your dollar long looking for a tactical bounce here? I can't help but notice on a day like today when bond yields are lower, the dollar is itself suffering.
It is, and it's a bit of a mixed bag because when you look at sort of the dollar against the basket of currency, you get one picture. When you look at it against individual currencies, you get a different story. So where I've started to lay out a little bit of long dollar exposure is in the pound, which looks, I would say, especially soggy relative to some of the others. Pound unchanged on the day so far today, for example, whereas the euro is up 0.4%, the Aussie is up almost 0.7%, Canadian dollar up here today, looking like a little bit softer, 0.4% than the Aussie, say. But the pound is dragging its feet, and that's a thing that's been happening basically since last week. So I've started to lay out a little bit there, and I'm operating very modestly here because it does look like the dollar still has some room to fall. But I think watching the price action is going to be very, very important here. Just because something is stretched for positioning doesn't mean it is ready to roll over. So let's look at the Z-score, let's say, for the euro here, 1.37. Well, obviously, if you look just one row down and you look at 6J for the yen, you have 2.62. So positioning can be stretched and then more stretched. So you don't necessarily want to assume that just because something is firmly tilted in a direction that it can't become more tilted in that direction before something snaps. So I am looking at sort of a tactical opportunity to buy some dollars. I'm overall bearish here still, sort of in terms of the architecture of the dollar, because I think obviously we're all still waiting for rate cuts and they're all still coming, and the market thinks that there's more of them that are coming than the Fed is acknowledging. If we look at Fed funds futures here, we're looking at a much more dovish setting than what the Fed is saying. 60 basis points now on the menu for this year. That's starting to approach close to 50-50 for 3 cuts versus the Fed's 2. And for next year, we're at 64 basis points. So we're very much tilting toward at least 2 cuts with a more than even chance, better than 50-50 chance of a third cut to the Fed's 1. So there's still a lot of room here, it seems, if you see the Fed move to true up what it's doing relative to what the markets are telling it to do. We saw this, of course, in a great effect last year where the Fed had to scramble and in September went really, really big. So we have still, I think, a bearish story for the dollar overall, but it does look stretched. And it does look like maybe there's an opportunity here to look for the other side, but tactically in a choosy way, not just because there is a skew. The price action has to tell you this is the time, or at least this could be the time. I think it's a similar story when you get to looking at the bonds. They look underbought, as it were. And I'm still long there. I'm not quite sold that gold is ready to roll over. It's finding a little bit more support here. So maybe whatever pullback we've seen is done. We're sort of right at the bottom of that range again. We'll see. But if the dollar bounces and the bonds don't keep going necessarily, yields don't come off as hard, gold's going to have a hard time. It's going to have a lot of conflicting influences to parse.
I mean, you talk about, kind of similar trades here. People short the dollar, long gold, still coming off of short stocks.
Yeah.
This is still the relic of that sell America type of trade, even that net short position in treasury notes, right? Still relics of that sell America trade that were prevalent at the start of the quarter. End of, February 21st onward, growth scare. You get into the tariff scare in March. That crescendos in April, early April. Dare you say April 9th? All right. And ever since then, though, it's been a slow, steady unwind of this sell America trade. And as we make our way into the third quarter here, you can still see remnants of it sitting around. So perhaps that drives what could be a seasonally good July for stocks, more in that direction, which here in today's session, as we end out the second quarter, stocks are finding brand new highs again. It's not quite at the session highs right now. The S&P is up 0.27% at 6240. We're about 15 points off the high at 6255. Our NASDAQ here up by 0.4%. Again, 22,840 and a quarter, slightly off the high of 22,915 here. Volume's fairly light today in the top two. We're only at 613,000 contracts traded. So I suppose in one regard, it's that typical low volume, low volatility, positive technical drift kind of session. But this is the one thing that continues to stick in my craw here. Volatility's up. Volatility is up now after we find ourselves pushing into new highs. There is this, perspective that markets enter exhaustion territory, right? When you're hitting new highs and volatility starts to increase at those highs. Call buying activity is actually, demand for calls is pushing up volatility. And so you could see how things are kind of spiraling, maybe getting a little bit too frothy up here. I digress, though. July is a tough month to fade seasonally. We've talked about this a lot in recent weeks. You don't sell in May and go away. You buy through July. Because in part, July's been, that ace 10 out of 10 for the past decade in terms of green for stocks. Ilya, when we go into this month of July,
unless of course it's 2008, in which case everything hits in July.
But in that case, 85%, like you're talking about 17 of the past 20 Julys have been green for the stock market. When they've been red, they've been really red. Okay, but when they're it's typically green and it caters to an upside move. Okay, but
this is exactly it.
We're looking at now a NASDAQ here that's pushing these highs here. Why would this stop when the calendar turns to July 1st?
I don't think that the calendar turn to July is necessarily the trigger. It's possible that it is. Obviously, there is a new quarter, and even from an accounting perspective, for money managers, for anybody sort of going, okay, obviously there was a very scary bit in the second quarter. We have fully recovered from that. If you were underinvested, or even if you sat through the whole thing, just kind of closing your eyes and hoping for the best, and now you're back. Worst case scenario, if you held or if you tried to catch any part of the upside, you've probably done okay. If you've attempted to fade it and you didn't get overly heavy, you're probably fine. And so on the whole, you've just had a lot of volatility, a lot of back and forth, and obviously a lot of an emotional roller coaster over the past second quarter. So now, with the changing of the calendar, you get a chance to say, okay, I've locked in my my P&L. I can start to think new thoughts and lay out new capital, at least tactically to some extent. So yes, with the turn of the quarter, you might get a little bit of a rearranging of portfolios, where you lock in what you did for the second quarter. You don't look crazy for the most for most market participants. We know that the stock market is biased long, and obviously we've recovered all the way. So for the most part, market participants are okay. So when you look at this, then, is there necessarily sort of a new catalyst in the second quarter? Well, we've We've no shortage of catalysts. The question is whether the market cares. And that, I think, is really where my focus is. You see this disparity between what the Fed is saying and what the markets are saying. And it's a yawning disparity at this point. We've seen this before. This is an important motivator for markets. Somebody is wrong and somebody is going to have to readjust. So the data from here is going to be really important. And it seems like if the story of the second quarter was don't get stuck on tariff headlines, nothing is permanent, everything is possible, then it's really that growth element that's going to be the most important. And I think we're almost sort of back to mid-February, early February, where we're just looking at the data now. We're just waiting to see what the evidence is. And if we start to see the evidence come together, whether it be fading U.S. economic data, whether it be the perking up of volatility on an up day in the stock market, whether it be the disparity between the markets and the Fed, as we were just saying, there is a lot for us to see here and not a lot of opportunity for the Fed to act until that fateful meeting in September. So this will be very interesting now. And if ever there was a period where markets might be vulnerable to snapping, and this is why I bring up, July is positive unless it's very not, then this would be a place to watch carefully.
We talk about growth and tariff shocks hitting the market here and whether or not the market's digesting it. There are two charts that came up of interest that I saw today or past few days from Goldman Sachs with respect to this. They anchor April 2nd as the policy shock date. The dark blue line is about growth and the light blue line is about policy, so we'll call that tariffs. You can see that growth takes a big hit and the shock that tariffs induce, if only temporarily, persists. But net, the market actually is leaning a little bit tighter, all things considered, on the other side of the cumulative effect of these. The market doesn't think tariffs. He's talking about it being, where are we in terms of tariffs being a shock relative to where we were at the start of April 2nd. The markets actually see tariffs as less of a shock now than they were back on April 2nd. Okay, it's not like we've returned to where we were pre-April 2nd. We've actually gone below there. And the data have been holding up a little bit better than people have anticipating. But this comes in line with another one of these charts from the same chart book from Goldman, which was about how soft data and no, we want you to drop. Let's see, that's not going there. This, we're going to try to paste you in here. And there we go. Hard data has been deteriorating, right? There had been this rebound in soft data in recent weeks, okay, once we got away from April 2nd, where people saying, okay, this isn't going to be so bad. Consumer confidence is coming back. Business confidence is coming back. But throughout this entire time, hard data has slowly been eroding. We've seen that now there's been a little bit more of a turn in the soft data again. We've stopped with our soft data rebound. We're going into the first quarter with perhaps, I wouldn't say a negative impulse to growth, but along those lines again, the Atlanta Fed GDP Now growth tracker here is at 2.9%, which is still pretty good. But the thing is, we're no longer at like 4.6% growth and directionally over the past few weeks. The growth
you get the
impulse,
tone of the data in the direction of that green line. You're absolutely right.
Right. So we're looking at this from a few different ways. We've seen that the soft and the hard data have peaked again and have started to erode once more. The growth trajectory in recent weeks for the GDP tractors still positive, but not quite the way it was.
The City Economic Surprise Index has been fading. It's bounced pretty heartily last week with that very, very sharp jump in durable goods. But when you look at where that jump came from, it's mostly a statistical anomaly, not unlike what we've seen in an episodic jump in retail sales that then falls away, a very weird first quarter set of GDP numbers that ultimately ends up being a mirage. So you still have that story there of increasingly negative data outcomes relative to expectations. They're not negative in the absolute sense always. In fact, the PMI numbers are actually relatively decent. But when you look at the sort of overall story here from the Atlanta Fed GDP now model and the way that takes in incoming data and gives you a sense of the overall vibe, the way the Citigroup numbers do. And most importantly, I would argue, forget the data. Just
New York Nowcast too, for what it's worth. You can see how
you can
slowly
see it there.
falling off there too.
It's falling off, yes. But let's leave this alone for a second, right? Because this is almost a secondary source. Let's go to the price action. What do the markets think? What's in the price action for the markets themselves? Forget what we think. Forget what these models say. Never mind. Break-evens are down, and the market is pricing in 120 basis points to the Fed's 75 through the end of next year. Do the markets think that everything is going to be peachy on economic growth? Well, obviously, no. So the question then becomes, well, at what point do we notice? Because at this stage, this isn't necessarily something that ought to shock anyone. The markets are priced for a weak growth environment. The real question isn't necessarily, is growth going to be good or bad, perhaps? Because the markets aren't saying it's going to be good. The question is, do the markets care? Or are they just okay with growth being weak and convinced that once it shows itself in the right set of numbers, the Fed will change its mind? And then what happens when it doesn't? That sort of is the primary kind of question on my mind, because it isn't the question of whether growth is going to be weaker. The market's telling you it is. And that's really all we have to know, because we don't really need to care about actual growth outcomes. This isn't an academic exercise. We're not weathermen. We're not attempting to actually forecast what the economy is going to do. We're forecasting what the price action is going to do so that we can be buyers of things that go up and sellers of things that go down. What the economy ultimately does from our perspective as traders isn't terribly relevant. But for, does it give us an insight on asset valuation? And the market is telling you it's going to be weak. The question is, will it sell off on that? Does it have a set of assumptions that it's over extrapolating in a positive way?
Well, I'm thinking about looking around the corner. What does the calendar look like in terms of being able to provide growth catalysts or something to upset the apple cart here? Mm-hmm. Just looking at a little bit in time, I'm looking for that inflation report from the U.S. It's not over through July 13th. Okay. Mm-hmm. So thinking about how the calendar falls off here, we have non-farm payrolls on Friday. We're not going to have inflation for 2 weeks. We're not going to have the CPI, the FOMC meeting until July 30th. We're only sitting at 20% odds for a Fed cut. It's like 19.8 right now. It feels like the only, with the erosion of hard data and soft data again, earnings are going to be really, really important for stocks this quarter. You need a robust earnings picture to keep the rally going through July, because it looks like you're not going to get it by way of the data, because the data is moving in the wrong direction. And so if Fed cut odds move up here henceforth, consistent with the way the data has been evolving, Fed cut odds are going up for the wrong reason, and that's not something the stock market's going to like.
Right.
So just keeping that in check here, I'm still leaning long deltas throughout all this. I am sizing up the opportunity because one of my theses, Ilya, has been you get through the middle of May, we get the U.S.-China trade detente. Everyone is still short the stock market from early April. Professional fund managers would have to chase this thing higher through the end of the second quarter. And we're at the end of the second quarter, and the NASDAQ is sitting at an all-time high today. So I think we can declare that having been the correct, thesis now, with hindsight being 2020.
Making our way through, like it, yeah.
Making our way through July, though, if we're focused on earnings and we don't have a Fed to worry about until the end of the month, I do want to address this title of today's show, which is, political noise and market signals. And the political noise, of course, that you have this cadre of Trump advisors who have been very quiet in recent weeks, out here talking up the one big beautiful bill, talking up the tariff deadline, talking up Powell ultimately being replaced as Fed chair, which, funny enough, interestingly enough, I'm not sure if people saw this earlier, but Donald Trump's war, I'm just going to save that for the bond portion of the show when we talk rates and Powell a little bit more. Either way, there's been a lot more political noise here.
Yes.
But the timing of this, Trump wants to have his tax bill passed by July 4th. Okay, that's Friday. Markets are closed Friday. They're closed on the 5th and the 6th because that's a Saturday, Sunday. The first day that we have the ability for the markets to actually digest a bill that may be in front of President Trump, if that is the case, let's just say all things go well, they pass today's vote-a-rama, it goes back to the House, it's ratified. Okay, markets are going to react Monday, July 7th, 2 days before the tariff deadline. Do you think the administration wants to risk the messaging that the stock market's going down because of the tax bill, when in reality it's the tariffs they're freaking out about again? Probably not. So I'm going to take the under on the tariffs being a potential landmine that sinks the public perception of the bill's passage vis-a-vis markets, both stocks and bonds. And that tells me that, the runway here, it's going to be, again, earnings. There's a lot of political noise right now, but when volumes are this low and volatility is this low, it's so difficult to stand in front of a market that's kind of just melting up. And if we're going to take bearish exposure, it has to be long dated enough. Like we've noted, think about the second half of August on the other side of that Chinese tariff deadline, when the Fed isn't meeting that month, right? You're going to get a Jackson Hole, but they're not going to do anything at Jackson Hole. They never do. In terms of actually delivering.
They'll just tell you something. They'll tell you how to think about things after Jackson Hole.
So, but that gives you an interesting window where let's just walk down a path here. Trump kicks the tires on the China tariffs again. Powell and co. have been saying they can't cut rates all summer long because of the uncertainty around tariffs. And now we have a new layer of uncertainty and tariffs injected right before their September cut. That just little bit of maybe the Fed can't cut in September. There's your late summer catalyst for a pullback.
No, there you go.
Right.
Take a look at a chart of the ESU5 contract and take a look at it on a 4-hour. Because I'm starting to look at this and go, is that maybe the beginnings? Because if you look at this, you see a lot of long wicks down, not a lot of long wicks up. You see fading momentum. Go up to an 8-hour. And this is just sort of the kind of exercise I do to look at intradays and kind of see where momentum is. You start to see this kind of flattening out of momentum. You have this really steady march higher, and then a kind of rounding appears to be taking shape here. It doesn't mean anything other than looking at the dynamics of the price action and going, I should be paying attention to higher frequency charts here and not just dailies, because if something were to roll over, that's where I would start to see it, and if I'm not careful, I might miss it. So does this market architecture, do these price action signals mean anything at this point? No. But for you should be paying attention, because if you're going to see something that does give you an early nod to some kind of a pullback, even back to, let's say, like 6,000, even back to 5,900, something modest, you nevertheless would be looking for these kinds of precursors.
You make a 5% pullback from here, get you down to 59.25.
Yeah.
Right.
So
that's not even 59.25.
Keep an eye.
That would be, would you get to the June low? The June low is 59.21. Okay. So let's just call that here. A 5% pullback does not clear out the low for this month.
No.
Would it be unheard of to have another 5% swing to the downside at some point over the next few months? No.
Not unheard of in the slightest.
Right. That's why thinking about protection, I'm of course greedy. Jamal was once again doing the correct thing where he's rolling forward his exposure in the Nasdaq already. I'm still holding on for the ride right now. There's still 31 days to expiration, so perhaps by the end of this week. But we're stiff. This is my problem. We're so close to 23,000, Ilya. And when those 23K calls were purchased several weeks ago, those were kind of lotto tickets-ish, if the theory that people would chase into the end of the quarter was correct. And they've worked out nicely. But we're not at 21 DTE yet.
Well, it's also important to see where you are contextually. I mean, if you look at all of the current contracts, right, the U5 contracts, be it S&P, be it NASDAQ. I mean, S&P is at the mid-February high, just, a hair shy. If you look at where you are on NASDAQ, you're testing it. You're testing the high for the contract, and you're not breaking it. I mean, today we tried, and right now it looks like we're retreating back off that level. So it's an auspicious spot. It would be wise to be paying very close attention. And volatility is very, very cheap. Still.
Volatility actually is really low right now. While the curve is still in contango, which if you are a fisherman like myself who just likes to, you see low volatility, it's summer, buy your at the money calls, buy the market, go fishing. It's a 15.59 right now. Front month, back month here, which is the April 17th, 2026 expiry is 22.03. So it's, nearly 6.5 points front month to back month spread. So a pretty steep contango, some of the steepest that we've seen in recent weeks, in fact. But again, Ilya, markets are up at highs today and volatility is bumping up, right? Are people really buying so many calls in this thin market that is pushing up vol? I don't know if that's a great sign.
It's not a great sign.
Well, let's talk about bonds here, though, because bonds are at a turning point. There was an excellent thing that I just saw come across, and I saw verification for it. And so I will need to subject everyone to this directly from the president himself. Trump War Room on Twitter, which is his official communications group. No. Oh, perfect. Here it is. It's still up. I just wanted to make sure. We're talking about rates, so let's talk about the Fed here a little bit. The President of the United States has sent a signed letter to the Fed chair, which is official as of 23 minutes ago. Jerome, you are, as usual, too late. You have cost the USA a fortune and continue to do so. You should lower the rate by a lot. Hundreds of billions of dollars being lost. No inflation. Donald Trump, which among the world central bank rates you see here, the United States is in the neighborhood of Cameroon, Equatorial Guinea, Gabon, etc., nowhere close to other developed nations. Now, perhaps Trump has a point because we here have said in accordance with whatever literature the Federal Reserve has put out, going back to Trump's first term, tariffs are a one-off price hike. Inflation's going like this, you get your tariff bump, you go along your aforementioned path. The Fed is more concerned with the decline in real output on the other side of it. We've been saying that for so many months now here, Ilya. And so we haven't seen the bump in inflation, right? Growth seems to be eroding. Where are the cuts? The Fed also is always a day late and a dollar short fighting the last war. Time and again, COVID, global financial crisis, post-COVID inflation, they always make the same mistake. Or not the same mistake, the mistake being that they think yesterday's problem is today's problem. So they're always applying the old toolkit. I digress, though. We do have the president going after Powell. We've had talk of a shadow Fed chair. I'd remind everyone that Fed Chair Powell would need to be impeached by Congress. I don't think that's happening anytime soon.
No.
So this is all just noise. Ilya, should we as traders be concerned with this noise of autographed letters and charts being sent to the Fed chair by the president?
Well, besides the fact that they speak to a total lack of understanding of monetary policy, of how interest rates work, of the interplay of interest rates and inflation, of the different circumstances. Because if you look at the countries that are low on this list, they are deflationary countries like Japan and Switzerland, and China, and the absolute last thing you'd want is a deflationary economy. It's actually much better to have an inflationary one if you must pick a devil. Inflation is the easier devil to slay than is deflation. Just ask Japan. They haven't had any growth or anything that even smells like it for going on 4 decades. Only now are they perking up a little bit, and even that's very uneven. So let's leave aside the fact that what the president is saying here is, from any kind of a reasonable understanding of monetary policy or economics, utter nonsense. Let's put that to the side for a second and say, let's say we get a nomination that's announced early, that doesn't run afoul of the legal bounds on what the president can do, with removing a chair, removing a governor from the board, none of which, by the way, the president has capacity to do unilaterally. And the Supreme Court has been very clear on that. You've been highlighting their ruling on the Humphreys executor that might have given an avenue for the president to do something here, but they've very clearly made the point that it doesn't, and no. So let's say you get the announcement, a pre-announcement of who the president would nominate, and then you get a long arc of Republican congressmen saying, we will vote for this nomination when the time comes. So you develop over time this sense that, let's say, somebody like a Kevin Warsh or a David Malpass, something like that. These are just some of the names that have been out there. That they will be nominated, that there are votes to pass them, and that they are going there with the intent of cutting rates. Okay, what does that change? Fed under Powell wants to cut rates. They've been saying they want to cut rates for over a year. In fact, last year, I know the president seems to have a bit of an accuracy issue with this one. Last year, they cut by 100 basis points. What's stopping them here is uncertainty around the medium-term path of inflation and the economy, and they do, in fact, have an economy with a 2.4% inflation rate, which is modest. They do, in fact, have an economy with an unemployment rate at 4.2%, which is historically low. Not the lowest, but low by historical standards. Why wouldn't they be waiting? It's logical. So let's say you get
and yields are kind of like right where they should be as well.
Yeah.
Bill Gross, the inimitable PIMCO bond guy who goes over to oh my gosh, where did he go? Janus? Yes. We find that his long-term research shows that the 10-year yield is basically headline CPI plus 175 basis points. 2.5% inflation gives you a 4.25% 10-year yield. 10-year yield right now is 4.247%. Yields are kind of where they should be.
Pretty much. And so when you look at then, what would it mean to nominate somebody ahead of time and just have them exist in the ether and start to take media appearances and start to say things? Would that change anything?
Well, that's what I'm thinking about
Not
here, right?
Really.
There's a few things that kind of get to me about this whole conversation, which is why political noise. I go back to something I tweeted in 2018. Okay. Yeah. Because Paul Volcker had written his memoir, and I think this is
a fantastic book, by the way.
Yeah, and I'm just like
highly recommended.
trying to stay grounded and, you know, being intellectually consistent here, because there was all this talk about Trump being so vocal about replacing Janet Yellen and ultimately, you know, him then leading into Powell and pressuring Powell. The fact of the matter is that Volcker wrote in his memoir that President Reagan just did this directly. Granted, it wasn't in public, but the conversations were happening. And it was noted in the book, like Greenspan had these conversations with Clinton. And this is not unusual for presidents to do it. It just happens a little bit more privately. The difference, of course, is that we live in the age of social media. There was no Twitter during Reagan's years, or I guess Bill Clinton could have used AOL Instant Messenger. But that, you know, jokes aside, the reality is there was no public social square for communication there is now, and this is Trump's preferred medium of communication. So this pressure campaign on Powell, I've said this a lot here, I don't think this is new. It just happens to be out in the open as opposed to behind, you know, closed doors and smoke-filled rooms. But yeah, it's just regardless, it's louder. Okay, but regardless of that, Powell was announced as Fed chair, right, November 17. He's not confirmed until January 23rd, 2018. Janet Yellen doesn't step down until February 3rd, 2018. So Powell is announced basically 3 months before Yellen is expected to step down, right? He's confirmed a little over a week before she steps down. I suppose the sticky scenario could be a world in which Trump nominates someone and they're confirmed, and then there's like this 9-month-long ethereal period where there's a confirmed Fed chair in the wings, but there's no spot on the board of governors for them, so they can't do anything. Yeah, I guess that could happen. But again, the voting doesn't change. So this is, to me, is just all noise. I think that's the point. We're talking about market signals and political noise today because there's been so much chatter out of DC. This talk of Fed Chair Powell being replaced is the noisiest noise you will find. It's not informative or helpful for any trading decision whatsoever.
Not at all.
What will be interesting this week, however, we do have 3 auctions, 3s, 10s, 30s, Tuesday, Wednesday, Thursday, respectively. This week, of course, is a big week for jobs data. JOLTS, jobless claims, ADP, non-farm payrolls, Tuesday, Wednesday, Thursday, because of the holiday shortened week. So bonds have other things to actually worry about besides this public haranguing of a Fed chair, which outside of this particular historical period of time was just happening behind closed doors. I'm going to beat that drum because I think it's really important for folks not to don't get over your skis over something like that, even if it seems uncouth. You know what's uncouth, Ilya? Gold, 3 of the past 4 sessions has closed below its 50-day moving average. We have not seen that occur since the first week of January, end of December, at the turn of this most recent year. It's what has me particularly nervous about being any semblance of a bond bull or gold bull right now. 3,300 seems like a line in the sand. I know that you mentioned you have your 4-hour chart here. I don't see those recent swing levels getting cleared out. And if anything, we're kind of running into that resistance right now around this $3,300 an ounce. We think about the gold positioning and the silver positioning being a little bit on the long side right now. What's your take on gold and silver? It's obviously been a great quarter, a great first half of the year, but second half seems like the start of it could be not so hot.
I'm begrudgingly still long gold. I think you can see on the daily chart why. It's basically still testing the lower end of its range. If you look at where support seems to have emerged here, it's that kind of zone that we were talking about last week around, let's call it 3260 to 3230, something like that. That has been an inflection zone going all the way back to mid-April. And so what we talked about last week was, okay, maybe what you have is a breakdown here, but if nothing else, off this support zone, you might get a little bit of a reaction bounce to get out at better levels. Herewith is the reaction bounce. So now I'm looking to see if there's any kind of upside momentum that we build off this, or in fact, this is just going to be an opportunity for me to exit. And the line in the sand seems to be somewhere around, let's call it 33.40, something like that.
Sure.
If you can get back north of that, okay, you got something to work with still on the long side. And then if not, then if you start to anchor there and you're having a hard time, I'll probably get out. I'm hoping to get the timing right so that this bounce ends up being an opportunity for me to exit with better P&L than otherwise. And that'll be kind of a delicate dance here. But generally speaking, I think the bias is higher. It's just a matter of picking your spots.
I'm hoping that maybe the start of the third quarter gives us a little bit of a clear out where some of this long positioning in gold and silver is negated and some of the short dollar positioning is neutralized. There's this talk of, and one thing that Trump has said, which is actually very interesting with respect to the Fed chair conversation, he doesn't want the Treasury issuing debt beyond, maturity window that stretches beyond Powell's time at the Fed, because you get a new Fed chair in there and they start cutting rates right away. Trump's idea is then they could start refinancing the U.S. federal debt at cheaper levels. That might be something good in the short term for long end bonds, because you're going to create if we're no longer issuing long-term debt until Powell's out, okay. But that could really hurt the U.S. dollar. And that would be really, really good for gold and silver if you're a gold and silver bull. It would be really bad for your U.S. dollars. But for gold and silver, that'd be excellent. So let's just go through that there all of a sudden, right? Is silver at a breaking point? Gosh, I am so conflicted today. We have a doji candle up here at that 1 month moving average, right where we had highs in October and March pinned out. Is this a head and shoulders pattern up here? Let's go to that 4-hour time frame. It certainly has the trappings of it. It has a left shoulder ahead of right shoulder, where the right shoulder comes in lower than the left shoulder, so technically checking those boxes. And the uptrend off the recent lows that we have here in April, very much coming under pressure. So is this a long or a short here? I think either way, it's a tough spot to make the trade if you're going to be directional, and certainly directionally neutral up at these levels. That seems insane to me. But if I'm going to be long, I see that we have last week's swing low near 35.535. So if we're below 35.5 bucks here in silver, long exposure probably no longer applicable. We will have lost the uptrend from the April and May, early June swing lows. We'll have lost this October 24, March 24 swing high area. You'll have your neckline breached in your head and shoulders pattern. Being long is not the play. And we know vol's been coming in. Being short, though, you don't really know if you're wrong until you're through the highs of 37.70 or so. Would you rather risk 60 cents on the downside or $1.60 to the upside? So if you're going to be directional, the risk to reward is play it long. But this is, again, a market where if it begins to break, let's think about that, CFTC COT report earlier. It's basically 1.5 standard deviations above the 20-year mean in terms of positioning, right? This could be a trade where if you do get a breakdown below 35.5, you get that covering. The longs liquidate. You get a more significant pullback. It brings you into 33 or so. We'll have to see how the dust settles if the positioning gets cleaned out. But this is I'm very conflicted here. I'd like to get long. I know if this thing breaks, could break really hard, just given the setup, and a little bit more patience, perhaps. I don't want to be wrong in that, because when silver moves, that thing tends to move very, very fast. And in the futures market itself, those can be thinner markets. So you have to be careful.
One thing to keep in mind here, just to put a pin in the sort of bonds, metals, and even stocks conversation here. Obviously, we've just talked at length about the president is raging against the Fed. The market is obviously thinking that there's going to be a lot more easing next year than the Fed is currently anticipating. It'd be tempting to say that that's because the market expects that after Powell's term expires mid-2026, you get this new Fed chair, and then there is an abundance of cuts, and that's why the disparity. Except if you look at the breakdown in Fed funds futures, you see that of the 63 basis points, 39 veering on 40 are expected to happen between January and June next year. So you're not really looking for a new Fed chair to give you most of the cuts. It is, in fact, a growth scare. And so that gives you a little bit more optimism about something like a gold, but it should worry you more about something like a silver, because there is a growthy element there, and you have to be careful with thinking that silver is just high volatility gold. If stocks were to take a leg lower, if looking at sort of energy's capacity to rebound here, suspect though it is, if you look at why this is so heavy, you get a sense that, okay, if there's a growth scare, maybe silver is not my vehicle.
You know, we go into energy. Let's start with the good or the bad before we get over to the very ugly. After that pullback following the Iranian U.S.-Israeli detente, whatever we'll call it, crude oil prices basically returned to where they were prior to the whole episode flaring up, which was basically just starting to creep through 64, 65. And since then, we have been pinned. Shortly after we had that pullback, Ilya, you and I were both of the mindset, let's get out of our short delta positions. Let's go into something a little bit more directionally neutral. So that's where I'm still sitting. I'm thinking about the CLU5 contract, the short iron condor trade, as well as the short call spread. The short iron condor is 52.54, 72.74. The short call spread is 76.78. Those continue to remain viable. If you've been really if you've been really short deltas over the past few weeks, just think about this price action here. Maybe it's a precursor to the next leg lower, but it's where we have those March swing lows. It's where you have the April and May swing highs. It's effectively the 50% mark of the post-Liberation Day to maximal Israeli-U.S.-Iranian tension high range. I'm playing for chop here, personally, but being directional right now, you're flipping a coin. And I think it's a very dangerous game when you're looking near highs and lows. And you know, if you want to be long, I guess be long above 63.5, but that's the only slack you can afford.
I'm not touching this right now. I got out of my my short vol position. Obviously, you and I were both sellers of vol after the whole Israel, Iran, U.S. conflagrations started to unwind, and we sort of saw the rhetoric. The U.S. did its thing over a weekend. I think both. I got short that Monday once
the Iranian government was producing Lego videos of their victory. It was over.
Right.
It was over.
Right. So once the Lego videos started to happen, once the pebbles started to get moved around, once the counter-strike came and it was pre-announced to everyone involved, it started to sound like, okay, everybody's angling for the off-ramp here.
Iranian state TV had a video of the Statue of Liberty being demolished. They declared victory. I'm like, that didn't happen. So
yeah, it's like, well, in their part of the multiverse, maybe, but not in this one. So, okay, I got short there. I've since got out, as we've talked about, and I'm standing on the sidelines now. I'm waiting. This thing is completely listless. But not natural gas. Listless it isn't.
No, certainly. This is the ugly. This isn't working today. You know, there's two sides to this. One, hoping that the bottom side of the range holds, which is why selling put spreads down near the 3.4 level seems to make some semblance of a sense. Today, not really working right now because we're kind of in the teeth of it. We'll see if the range holds. Otherwise, I'm out. That's the whole point of this trade. It's just that natural gas is going to stay range bound. What's changed? There was a slight downgrade to temperature forecast for the 2-week ahead period, according to NOAA, as we've brought up here previously. The whole country was expecting very likely above average heat, going into the middle of July. And now that's been downgraded to leans likely for most of the country. It's going to be hot, but it's not going to be like 95, 100 degrees hot. It's going to be like 85, 90 hot. And that's a totally different strain on the nation's energy grid and demand for something like natural gas to power air conditioning. Plus, inventories are up in the data that we saw at the end of last week. So the 1-2 punch here fundamentally doesn't help. I'm still going to lean short deltas, but I would love a bounce. If there's a place for a bounce, this would be it. Ilya, you need and I need to wrap up here because Dr. Jim is coming on for From Theory to Practice. Before we go, though, it's a bad day for the dollar. You and I can dig into this a little bit deeper later on overtime. I would point out that the yen here, which is having a decent day, dollar up as yields are down, so kind of classic FX to a certain extent. My beloved Japanese yen is getting pinned up against the 1 month and the 50-day average here.
Yeah.
If we find ourselves scaling 0070, 0070 and a half, I might cut short my long put positions, if only to maybe get in at a better price, because vol is still pretty cheap. And again, we have that very large net long yen position persisting at 2.62 z-score over the past rolling 20 years. Outside of that, though, Ilya, I don't know if FX is all that inspiring. Yields down, dollar down. That's kind of how the world is supposed to work, right?
I've sold a little pound here, as we were mentioning earlier, because it seems to be diverging from this entire narrative. It isn't able to rally when the dollar is getting sold elsewhere. That's the kind of price action that gets me excited. This is what I like to see when I look at the price action and go, everything is doing one thing, but this thing, it doesn't want to do that. Believe the thing that stands out. If it can't rally in an environment where everything else is, and it should be rallying, there's probably a good reason why it isn't. Don't fade it, go with it. So if the market is telling you that something isn't like everything else, believe the market. So I'm short a little bit of pound here because it seems iffy. But other than that, I'm approaching very cautiously.
What's next on the calendar for tomorrow? We officially turn over into the month of July. Euros and inflation's due out tomorrow morning. We have JOLTS job openings, ISM manufacturing. It's a nice triplet of data that could actually move these markets. Plus, we have that 3-year note auction in the afternoon. And I'd say pay attention to what's happening in D.C. The Vote-A-Rama could wind up around 9 p.m. tonight, so we'll see what this new Senate version of the bill looks like. Will it go back down to the House to get rubber stamped? Will it go to President Trump's desk later this week? That's all very much in play. So that could be a headline. But we are talking about all the headlines over the weekend, Ilya. Thin volumes today. Volatility is still pretty low. IVRs are in the low teens for stocks. Maybe we get a better close. Until then, though, we have more great programming coming up next year on Tasty Live. Dr. Jim's up first. Then you're going to have Jamal Chandler, then Tim Knight. So it's the usual run of show on Monday. You and I are taking a break. We'll be back for overtime, of course. Until then, good luck trading. That's right. Up next, we have the one and only Dr. Jim Schultz from Theory to Practice.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do. And guys, welcome to the I Straight Up Ghosted Y'all edition of what it is that we were trying to do. So on Friday, so if you guys remember, Friday was date night for me and Autumn. So Friday night, we were going to a comedy club, going out to dinner, all those kinds of things. But like late in the morning, like early afternoon on Friday, man, my throat just started like locking up. Like I think my kids took me down. It was Amelia, it was Penelope, it was Eli, it was whatever. I was like, man, I need to grab a nap so that hopefully we can have some birthday celebrations later on tonight. So I had to rally Friday night to make it out for my wife's birthday, but that is why I had to call in last second. And so as a result of my calling in, we have an absolute circus in our Nike position because we had that Nike butterfly on Friday that was working out extremely well. But because I was not feeling great, I did not think to go in and like clean things up and do whatever. So we are going to do that here today. And let me tell you, it is a little bit of something that we're going to have to take a look at. So Josh, bring us into the market here. And let's take a look at what's going on. So we look at, and oh, by the way, if you have a question for me, drop it in the chat box. Also, next Saturday, we've got July 13th in Boston, Options Crash Course Live. You can go to tastylive.com/events to sign up. It's totally free. I will be there. Hopefully, you will be there. It's going to be an amazing time. So if you haven't done that already, please do it. Bring a friend, bring a family member, bring a foe. We just need bodies in the seats. And so next Saturday, July 13th in Boston, I hope to see a lot of you guys there. All right. So let's talk about, man, I don't know, guys. Look at this. It's bad. Man, look at Oracle. Look at Oracle up another $8.50. I mean, look at this thing. Look at this thing. Did they have another earnings call? Like, did they go from round number 5 on the earnings call front when it comes to Oracle, Q2 2025? I mean, they're like, man, once, twice, thrice wasn't enough. Like, let's do number 4, number 5. And so Oracle up another $8.50. We'll come back to that in a minute because I do want to make sure that we take a look at Nike here for the most part. So Nike, okay. So if you look at what I have on, it took me a minute. It took me a minute to figure out what happened as I was preparing for the show earlier today. And I kind of had to get my wits about me. And I was like, I don't remember having a position that was like, this looks like a calendarized strangle. I'm like, did we do a calendarized strangle in Nike together? I mean, I wouldn't put it past us. That sounds like something we might do, especially on a Friday edition of the show. But I was like, I wasn't even in on Friday. I'm like, did we do this on Thursday? This doesn't sound like a Thursday typo from Theory to Practice Trade. I'm like, maybe I'm totally crazy. But then I'm like, oh, you know what? It's the Friday stuff with the butterfly assignments and exercises and shares going away and shares coming back and then going away again. And so lots of things have happened here in this Nike position. So we're going to unpack all of it right now. Now, I'm not going to – I don't know what my basis is on this trade. I have no idea. Have I made money? Have I lost money? I'm actually not sure. I know that on Friday morning when Nike opened up, the butterfly was like, it was looking really, really good. In fact, here, let's actually take a look at it together. So if I go to, because this is the main thing that I want to do today. So that means prepare yourselves. It's going to be the entire show. And so we did this trade on 6/26, Autumn's birthday. We did the 63, 68, 73 butterfly in Nike. And oh, by the way, so to prepare for today's show, so I have another ghost flavor for you guys. So I think the last one I had on, what was the last? Was it like electric feel or something? I don't know. It wasn't like electric or limeade or something. It was good. It was not amazing, but it was good. The sour green apple is still number 1. So this one is another one that I've been wanting to try. This is the Bubblicious Strawberry Splash. And I will tell you guys, It's the greatest thing I've ever tasted. So I would definitely give that a look. I have no affiliation with Ghost. I don't care if you do it or not. But if you like things that are absolutely delicious, I would give the strawberry Bubblicious Splash a look on Ghost. And so, all right, so I did the 63, 68, 73 butterfly. Let's take a look at Nike. And oh, by the way, market's green, of course. I mean, because market's always green. You guys didn't need me to tell you that. You knew that. You knew that before you even looked at the market today. So market is up again. Don't even worry about it. But if you go into a chart of Nike, okay. So this is obviously the gap from earnings. You can see it right there very clearly. Like boom, there you go. A little gap and go action for Nike. What I want to look at though, let's actually look at the intraday action for Nike on Friday, because I'm pretty sure in the morning there were plenty of opportunities to manage this guy for a nice winners. Okay, so here is your day, or maybe not that many opportunities. Maybe you had one opportunity on the opening bell. Looks like you had about 4 seconds. If you got out in the first 4 seconds on Friday, you had an amazing trade. And by amazing, I mean you made 20, maybe 30 cents. But after that, you basically lost all your opportunities because it got away from us. Like it was too good. It was too strong, like too much upside in Nike. And so because our 73 strike, like this is our top side of the butterfly. So basically anything around there is going to be problematic. It doesn't even need to go through the 73 butterfly. Anything around there is going to be problematic. So you would have had to have been incredibly dexterous on the open to actually have a good trade in Nike. Now, for us, that was okay because we had the long shares. We had the covered call. We had the short put. Like we were mega pint bullish going into earnings for Nike. So it ended up working out okay. Again, I don't know what my basis is. Maybe we'll figure that out tomorrow. I think that would be a good use of the show tomorrow, because I know this is something that happens to you all a lot too, where it's like, man, I've got just a complete mishmash of different trades and assignments and exercises and whatever, and I'm trying to figure out what my basis is on this position. And so I think that would be a very, very good use of our time. Actually. So we'll do that tomorrow. That looks like a little sombrero here on the show. So here you go, a little Taco Monday, which there's still a couple hours left in the business day. We got to look at Trump's Truth Social account. It could very well be a Taco Monday, but yeah, we got a little something going on right up there. And so it could also be a witch's hat, but either way, I digress. So Nike, it was a difficult trade on Friday. Now that we've actually looked at the data. Okay. What I want to look at though, so going into Friday or Thursday night's earnings, the three positions that we had on, they're basically all on the screen here. They're basically all the trades that we did on 626, just to make sure we all have our bearings set. If you're brand new to the show, hey, welcome aboard. This is one of the things that I tried to do for this show. I don't do as many trades as some of my brethren might do on the network. We don't do as many transactions. We don't do as many positions, but the ones that I do, I try to unpack them to the best of my ability with as much detail that I think might be relevant and helpful for you. And so that's exactly what we're doing right now, of course. So on Thursday, we had on three positions. We had on a short put. So we had on a short put at the 60 strike, which you see right there. Then if I grab my Diet Strawberry, we also had on this butterfly, right? We had on the butterfly, which we just looked at basically, but just to get everything kind of neat and tidy in one spot. 63, 68, 73. And then the other position that we had on is actually going to be this short call, but we had long shares against that short call. Or I guess you would probably say short calls against the long shares, but either way, they were indeed a package deal that were intended to go together. So we had our 100 shares in Nike, and then we had a short call at the 70 strike. Okay, so understanding all of this is going to be helpful for piecing together what we have on in the portfolio now, and also what happened when we go back into the history tab and the activity tab and all of those kinds of things. Okay, so knowing that Nike closed around, I don't even need to bring up the chart because I don't want to, because it'll kind of mess up what I'm working on right here. Nike closed around 71 on Friday. Okay, so if you look at the butterfly now, you can see very clearly that that would mean that my 63 strike was in the money. So that's going to be exercised because I'm long that call. My 68 strike was in the money. I had two of those. Those are going to be assigned because I'm short those calls. And then the 73 call was out of the money. So nothing happened with that. So that's essentially what we would expect to find when we go into the history tab and we try to make some sense of what happened on Friday when the options expired. Okay, so let's do that now. Let's go into the history tab. If I go to the history tab, I have Nike already kind of populated for us. You know, it's Nike. We're going back 7 days, and this will give us everything that we need to know. Okay. The essentially the assignments and the exercises are right here. So you can see that we sold Nike at, hold on, June 20. I want to make sure I have it all right. Okay, so first and foremost, so removal of the 73 call due to expiration. So this guy just expired worthless, which is what we expected. Okay. Then, if you look at the June 27th, you can see the 68 call. We sold 200 shares of the 68 call. Now, remember that because we had 2 short calls that finished in the money, right? So that means I'm short 200 shares, right, of that, or from that assignment, I should say. Okay, now try to keep track. You can see I'm kind of, even I looked at this earlier, and I'm still like, man, this bubblicious needs to kick in here pretty quickly because the show is falling apart very, very quickly. But the 68 short call, we had 2 of those. We were assigned, so we're short 200 shares from that. Okay, the 63, you can see that we bought 100 shares right here at 63. So let's go ahead and use our black space down here. You can see that I'm short 200 shares right at the 68. Okay. I'm long 100 shares from right here, right? From exercising my 63 call. So I'm long 100 shares up there. I'm short 200 shares right there. And don't forget, I was already long 100 shares coming into the position. So I'm no Julius Spina, but it looks like this should all cancel out. It looks like when the dust settles, I should not have a share position at all in Nike. And that's exactly what we find when we go back to the positions tab, right? With the assignments and the shares that I had and the exercises, everything just went away. Now, again, we have to figure out what is the basis, what was the P&L in the position. I'm going to come back around and do that tomorrow. But I knew this was going to be, quite a feat to do just this part on the show. So I didn't want to try to do the 2 together. So, okay, so we should not have a share position because you can hopefully clearly see why, because they all essentially netted out to nothing. If I go back to my positions tab, you can see Nike, I do not have any share position. The only thing that I have on, which again, when you look at it, on the surface at the outset, it looks like I have a calendarized strangle on, which I guess I do technically, but these are 2 very, very different positions, right? One was the short put that we put on for earnings, that's right there, and the other one was the short 70 call that we sold against the shares for the long shares that we had. Now, right now, you might be wondering, okay, but wait a second, Jim, hold on. Why wasn't this 70 call also exercised or assigned? Because it also expired in the money. Excellent question, sir or madam. Let's unpack that a little bit. Remember, for the butterfly on Friday, that was set to expire on Friday. So anything in the money when the market closes and it goes all the way to expiration, it has to be assigned. It has to be exercised. It's kind of an automatic process. As long as your option still has time to go to expiration, there is no automatic assignments because it's not expired yet. Now, the other side of the contract may choose to exercise or assign you that contract. But again, with 46 days to go, that's a really, really, really long time. As long as there is an appreciable amount of extrinsic value in the contract, it's very, very, very unlikely that the other side of the contract, the long side of this call contract, would choose to exercise. And as you can see right now, there's still almost $300 worth of extrinsic value in this call. So that's why I still have this call. And it was not automatically assigned, even though it was in the money when Friday came and went. Okay, what am I going to do now, though? Okay, the short call that we had that I was just talking about a second ago at the 70 strike, it doesn't make sense to hold that anymore Now, obviously, well, Nike's down a little bit today, so I guess it's helping us just a wee little bit. But it doesn't make sense to hold this anymore because the spirit of this trade was to be paired up with the long shares. Well, the long shares just went bye-bye. Like the long shares are no more. Like they had to be used to cover the assignment on the two shorts in the middle of the butterfly. And so now I'm like, man, let's just buy back this call. Let's not try to zig and zag. Let's not try to like squeeze out, more juice from the orange. It's like, all right, this thing's done and dusted. Let's just kind of move on to the next trade, which of course would be the 60 put here in a second. So let's go ahead. Let's close out of the 70 call. I'm going to pay $360 for it. That makes sense because there's still 46 days to go. It is, it's in the money by just a titch now. And so it makes sense that it's going to be a fairly sizable debit to go ahead and close this position. So let's go ahead and let's buy this thing back. Okay. Okay, so we're out of, man, that bubblicious. That's amazing. It's amazing in like a very fake synthetic way. So if you like things that are very, very obviously man-made, but man, they had some really talented men making this, then you need to look this thing up because it is phenomenal. Man, that stuff is incredible. Okay, so we got rid of the call. Now, what am I going to do with the put? Okay, so now I only have the put left. This should be pretty simple and straightforward for you guys. You can see that we sold the put for $1.95. Because Nike rallied from earnings, it's now only worth 8 cents. And so another situation, it's pretty, pretty straightforward, pretty simple. There's no reason to hold this anymore. We would only be going after another 8 cents, which quite literally makes no sense, pun intended. Like there's just nothing left to make on this. We're just holding risk. It just does not make any sense to hold this position any longer. So let's go ahead and let's buy back this short put. And then that'll be it. The Nike project will be officially now over. Let's see if we get if we can buy back this put. Boom, there you go. Okay, so we bought it back for 8 cents. All right, perfect. Okay, so now again, I will work through the basis because it's more than just this. We have to go all the way back into other things we did from the first busted earnings trade and whatever. But we will work this out on the show tomorrow together. So if you are curious how I did on the Nike position, the trade package that lasted about 3 months, I guess, because we kind of did this trade for last earnings, and we're now getting out on this earnings. And so come back tomorrow, though. We'll work all of it out. I'll have you out the door in no more than 26 minutes. And so, all right, let's see. That's Nike. Man, Oracle. Man, I see you guys in the chat, though, and I appreciate you guys. Man, look at you guys. See Sam L's in the house, man. Ross is in the house. Man, RC's in the house. David Gallimore's in the house. Man, I appreciate you guys so much. Gregor V. Dub in the house. Gregor V. Dub saying, did you make any money is a question. I don't know, Gregor. You have to come back tomorrow. I mean, hey, man, how am I going to build drama into the show? How are we going to make this show like Lost season 5? It's a little too much to ask to make this show like Lost season 2. I think that would be a bit too grandiose of an endeavor. But Lost season 5, I think we can maybe hit that mark. It's a pretty low hurdle to jump over. But all right, we'll take a look at that tomorrow, though, Gregor. So all right, now let's take a look at the rest of our positions. We have Best Buy. Not much to talk about there. We have GDXJ. It's humming along just fine, so that's good to go. Man, Oracle. Man, I don't know, guys. I don't know what to believe anymore. This is so brutal. Look at this thing, man. Wow. So we're at about almost 2x, I guess, credit received on this trade. So you can see here are all of my my credits collected. So I've collected almost $11. It's currently marking at about $28. Right. Again, I am no Jacob Perlman, but that looks like a very large loss. Let's just say that. Yeah, man, I don't know. I think so. Let's hold on just a wee bit longer. If we get to 2x, then we'll close it, I think. So I've got a few more dollars to work with, but I'm like, hey, let's let this thing run all the way to 2x. Maybe we get a little bit of help tomorrow. Maybe we get a little bit of help the next day, whatever. I'll take help any day of the week, any night of the week for Oracle. I think we just need a day where Oracle doesn't report earnings. If we can just get a non-earnings day in Oracle, which it's been a while since we've had one, I think this thing might cool off just a little bit. All right, so for Oracle, I'm going to sit tight. I don't love it. You don't love it, but it's the move that we're going to make. So all right, so that is Oracle. So now we've got Starbucks. We have our 100 shares. We have our short call. Oh, look at that call. It only has 28 cents left. So this is another situation where it's very similar to the short put that we had on Nike. It's becoming less and less attractive to hold this position any longer because we're capping our upside and we're not getting anything in return. Like we've already basically, we've already squeezed over $1 out of this trade. We sold it for $1.33, which you can see right there. It's currently marking at 28 cents. Again, no Julius Spina. Looks like a little over $1 approximately. So I'm thinking, let's just take it off and let's just hold the naked long shares. Because again, this is the investment style covered call that I've been working this project basically since December of last year. And so my plan is to hold this for a while. Let's hold it at least through this year. Then you guys will have a full 12-month case study where we've already basically experienced all the things that you would experience in a covered call. Like we had situations where the stock was getting crossed. I mean, that just recently happened. We had situations where, the stock went, the short call went deep in the money. It wasn't deep in the money, maybe $3-4 in the money. So we had a situation where the call went in the money. Like, what do? We talked about all those things at the time that they all happened. And so this has been a really good case study because I know that there are so many of you out there that are doing these. You're doing these covered calls. Tom hates them. He hates them, which is why I love them. And I love talking about them because I know that this is going to help a lot of people out there that are you guys are trying to make your way into maybe a more active approach, maybe doing some more things like strangles, straddles, etc. But you're not quite sure where to begin. Like you're like, man, this is a lot to take in. It's a lot of information. I'm not quite sure what to do. The covered call on a stock position you've held for a long time is a great way to transition into a more actively traded portfolio in the derivative space. So all right, let's close out of Starbucks. And then it looks like we're about halfway through the show. So that means we're going to turn to the old YouTube. Hold on a second. Did I go above the ask there? Yeah, I don't want to do that. We'll go to the old YouTube and see where you guys are at. All right, so we got filled at 29 cents. All right, perfect. So there you go. So there is Starbucks. We got out of our short call. We did the whole Nike. We unpacked the whole Nike fiasco. And so hopefully that made a little bit of sense to you guys. And so what I want to do now is, man, let me go to you all in the chat. Man, I appreciate you guys. And I'm going to go to somebody. Let's surprise and delight somebody in the middle. Let's see. Well, sorry says, after your comments about your wife on her birthday, I thought you'd have a black eye. Yeah, what? So, yeah, maybe that's why I called in on Friday, right? But again, guys, I talked about this on Thursday. I took a couple of shots. They weren't my best, but they were right there in that B- lane that you guys are accustomed to. But here's the best part. Unless you guys rat me out, right? And don't forget, snitches get stitches. This is basic stuff. I don't have to tell you guys the rules. Unless you guys rat me out, the delta that Autumn sees those comments, it couldn't be more zero. There's never been a more zero delta trade on the board. I promise you. I promise you. She hasn't seen one of my shows, and I've been at Tasty for 10 years. She watched my very first show. She's like, yeah, I see that all the time. What people don't understand is I get that the other 23 hours of the day, so I don't need to see it again, right? So it is 0, 0, 0. The probability that she sees it is quite literally non-existent. And so, but I appreciate you there, sorry. I appreciate you very much. So let's see. All right, let's go to the beginning. Sam L is in the house. What's going on there, Sam L? I appreciate you. Sam L says Nike did it. Time for a victory dance, victory lap. I don't know. Did Nike do it? That's the thing. I don't know. We have to postpone the victory lap, and so we'll have to revisit that tomorrow because I don't know. I mean, like I said, the butterfly worked. You had a 3.5 second window to close it on Friday morning, and if you didn't do it in that window, that's on you. Like I don't know what more I can do for you, man. Like 3.5 seconds is about 3.5 more seconds than I normally give you. So the fact that on Friday you had those 3.5 seconds, you're welcome. I'm not quite sure what else I can say. And so, but did I make money on the whole thing? That's what I want to know, because we got to go all the way back to last earnings, and we'll work it all out tomorrow though. So, but Samuel says, but Oracle did also a big pop this morning. So how to manage the call side? Yeah, right now it's a do nothing in my opinion. Like right now, if you wanted to roll up the puts, right, and like go to a straddle or go inverted, you could do that. This move has been so crazy to me. I'm just going to sit tight and I'm going to see if there isn't a little bit of calming down, a little bit of a calming down effect. Now, again, you could roll the puts up, you could turn it into a straddle, you could even go inverted if you wanted to. Right now, I'm going to just sit tight. Maybe we'll have more time to revisit this tomorrow too. I knew the Nike thing was going to take most of the show today, and so I wanted to kind of prioritize that. And I also knew I was going to sit tight in Oracle anyway. And so maybe we'll have more time to talk about that tomorrow. But Brian Dowdy's in the house. Hey, Dr. J, looking for new trades to put on. Yeah, I don't know, man. I kind of got nothing. Well, we can find something. So I think, if I'm not mistaken, so obviously we have a shortened week, right? Because 4th of July is Friday. I think Thursday might be a half day in the markets. And so Thursday is, going to be kind of probably, well, Thursday is a crazy day. So Thursday is a half day in the markets, but I don't know if you guys know this, but on Thursday morning, guys, we have an NFP print that, man, everything you've been working for, it all comes down to this. Like your financial future, it is all tied up in whether we gained or lost 10,000 NFP jobs in June that will be revised 19 times after the fact. It all comes down to that. And again, I don't make the rules, man. Like, I do not make the rules. That's Thursday morning at 8:30, if I'm not mistaken, for a half day when a lot of people have already left for the 4th of July, like holiday weekend and stuff. Man, that could be crazy. It could be some fireworks, pun intended, on Thursday during the trading day. So with all of that said, I think tomorrow morning Powell is at 9:30. Doesn't Powell have some kind of like testimony, Grateful Dead concert? Like something's going on at 9:30 tomorrow morning with Powell. And so I'm sure he's ironing his purple ties right now because he has many. So he'll have to choose which one he's going to go with tomorrow morning. But I would imagine he irons out a few just in case, when he wakes up, he's like, do I want to go light purple? Do I want to go like dark purple? So when I walk out, they think it's black and then realize it's purple. Like that's very, very different. And so I would imagine he's ironing out the whole stable of ties. But tomorrow at 8:30 or 9:30. So I was going to do an SPX butterfly. But then I was like, I don't really feel like lighting a stack of cash on fire. So here you go, Brian Dowdy. Why don't we just do – so let's just go into IWM. This is going to be a standard, right, plain vanilla cookie cutter, short strangle in one of the indexes. The IV rank, it's not totally putrid. Like, is it amazing? No, but again, it's 16. I've seen worse. We have lots of earnings coming up soon. I mean, tomorrow is going to be July. Oh, happy monthversary eve to you all. For anyone out there who might celebrate like we do. And so, yeah, tomorrow's July. It's like, man, you've got all the earnings coming, your Netflixes, your Chipotles, your General Electrics, like they're all coming. I think Goldman Sachs was this morning, and they kind of kicked off the season. Or maybe, wait a minute, was Goldman Sachs this morning? Because they don't kick it off, though. Isn't it like Wells Fargo? Like on Friday or something? I don't know. The banks always kick it off, though. I think there were some banks on Friday, and then Goldman Sachs was, I think, this morning. And so earnings season, like, it's underway now, but the heavy hitters are coming here in a couple of weeks. And so it can be more challenging to find trades that aren't necessarily associated with earnings or an earnings call. So you can go to an index, man. Like, let's go to IWM. Let's go into August, 46 days to go. And I'm kind of thinking, I don't know, Brian, like, let's not reinvent the wheel, man. Like, let's just go ahead and maybe we sell like a 20 delta strangle to collect a little bit more than we would at maybe a 16 delta. So if I sell a 20 delta put, that's a 202 put. And then I go down and I sell, looks like about a 22 delta call. That's going to be the 230 call. And I can collect $4. Whoa, buying power effect. Look at that, man. They're coming to get you. $2,900. Wow, that surprised me. I didn't realize it would be that high. Okay, so we're going to have to make some adjustments now. It's a little under 10% of my account. It's doable. Like, it's doable if there's nothing else that can be done, but there is a lot of other things you can do here. So I wouldn't necessarily stop here and just say, well, this is just the best I can do. It's really kind of not. Like, we could, push the strikes out more. That will increase the probability. So that's a good thing. It'll take down the buying power. That's a good thing. The gotcha, of course, is we're going to collect a lower credit, but still we're collecting $4 on this guy right now. That's a pretty hefty credit for this strangle. So I'm kind of thinking, instead of doing a 20 delta, let's clear this away. What if we did a 16 delta? Which truly is more of the standard cookie cutter approach. So we're going to sell a 199 put, and then we're going to sell a 255 call. Oh no, sorry, that was a 17-cent bid. That's not what I want. We're going to do a 235 call. And it looks like the buying power. Yeah, okay. So we took off about $400, $350 of buying power. So now we're just under 9% of the account. But now my pop is much higher at 74. So that's really, really nice. My P50 is also higher at 84. I didn't actually see what the P50 was on the previous trade, so it may not be higher, but that still feels pretty good. 84. We've got a credit collective 283. That's good. It's pretty delta neutral. That's what I would expect. And then we have a nice amount of positive theta. And so I like the way this looks. And of course, the max profit is going to be the credit collected, and your maximum loss at negative infinity is certainly going to scare the children. But remember, in order to lose that, you would need IWM to print positive infinity. And again, I mean, with Trump changing the debt maturities and now he's only going to print bills, it could happen. Like, I would say it's about a 20-25 delta that it could happen this week, actually. And so you might want to be on your toes, but I'm going to roll the dice that we won't see a positive infinity print on IWM at any time in at least the next couple of days. So, all right, so let's go ahead and 284 credit. Again, this is a pretty standard trade, like nothing crazy, nothing super fancy there, Brian. Pretty much what we would just normally do. But I think it's a good option going into earnings season, right? So, all right, no takers at 284. Let's try. Well, we'll do like 281. I think this is below the bid. We should get filled. Oh, yeah, we got improved to the bid, which is 282. Okay, so that's good. All right, so we're in IWM, and boom, there you go. Okay, so thank you, Brian. I appreciate you. That's a good trade. I actually had that on my little scratch board here, and so that worked out really, really well. Adam Armfield, hey Jim, please arrange for Netflix to take a nice ride in an elevator. Yeah, man, I don't think I can help you. I mean, this market is super strong. It's kind of it's fizzled out a little bit here in the afternoon, I guess. I mean, you've got EME S&P's only up 8 now. You've got NASDAQ up 60. You got the boomers up 114. And so it's kind of like, I think this is the end of the second quarter. This is the final day of trading, right? I'm very surprised that it's been so quiet. I expected it to be, whether higher or lower, I expected it to be a lot more active. And so I'm wondering if they're going to have all that activity concentrated for, the final 90 minutes of trading. And so I wouldn't be super surprised to see a good amount of activity in the markets for the next 90 minutes as you have, the end of the quarter. All the portfolio managers are closing their books. Like, are they going to mark it up? Are they going to mark it down? I mean, the chalk is usually to mark it up because most of them are long. And so they're all kind of helping each other out. And by helping each other out, they're helping themselves out. And then they help themselves out, which helps each other out. And then it ends up being an incredible feedback loop until it just blows up in everybody's faces. And so maybe that happens today. Maybe it doesn't. I mean, we don't know. I certainly don't know. But the market's been pretty quiet. The morning was very strong. And then it's been very quiet basically ever since then. And so, but yeah, Netflix, you were asking about Netflix. Yeah, Netflix is, man, look at that. $1,300. That's crazy. That's some crazy stuff. Man, wow, that's unbelievable. 1339 for Netflix. That's quite a stock, man. That's quite a stock. If we go to the chart of Netflix, I'm kind of curious now. If I do we'll do like a year to date daily chart. Yeah, wow, look at that. That's crazy stuff. So back in April, like Liberation Day, Netflix was liberated from its own stock price. It was down to about $8.25. And now, there you go, man, $13.39. Just a quick little 65% gain. Like nothing crazy. Like you won't even really know what happened unless you're looking closely. And so, yeah, Netflix at $13.40. Man, that's a move. That is an absolute move. And so, James Bond, number 4. Hey, Dr. Jim, I have a put spread in SPX 0 DTE with you bought the 61.65 and sold the 61.75 for a credit at $1.45, almost testing my short put. If it does, how would you manage it? Thoughts? Great question. So when it comes to So I don't sell a lot of premium on the 0 DTE front. I know the research team has done some amazing research in this regard, and so it gives you guys a lot of information and a lot of different things that you can do and test out and see what you like and see what you don't like. Personally, selling premium still doesn't make a lot of intuitive sense to me in a 0 DTE framework, simply because, you know, if I'm wanting to sell premium and I'm wanting to take advantage of time decay and I'm wanting to take advantage of, you know, the passage of time, and the research, like, you know, for the first half of a cycle from 45 to 21 is so promising, it's so incredibly promising, then I'm kind of like, I'm not quite there yet. I'm really not quite there. So I'm not the best person to ask when it comes to making adjustments on short premium. My gut tells me, though, because I think about what I would do in a 45-day horizon. Like, what would I do with a similar trade, James Bond? That's, you know, I've sold a put spread, you know, my short strike is almost tested. What would I do? Personally, I wouldn't do anything. I wouldn't do anything at all. I would just leave it be. Now, this is obviously where, you know, things change and the rubber meets the road, because you don't have as much time left in a 0 DTE world. So should you do something like roll it to the next day or something like that? I'm genuinely not sure. You know, if you have to pay a debit to roll, that would obviously be something I would probably not do too often. You know, if you can get a credit to roll it out to the next day, maybe you do that. You know, now obviously you're taking on more risk, because you have taking on more risk from the standpoint of, you know, there's a longer time horizon that you need to be right on the trade. But I guess that maybe isn't even the right way to look at it, because, you know, you have defined risk. The risk is actually controlled. You're not really taking on more risk. You know, you have more time for it to work out. So you could look at it that way too. I guess it depends on whether you're a glass half full or a glass half empty type of guy. And so I would probably do nothing, James Bond, just because that's my natural default setting when it comes to defined risk, kind of irrespective of the day's expiration. So that would be my go-to, is do nothing, and hopefully that helps a little bit. Let's see. Gregor V-Dub, next Sunday, not Saturday. Yes, that's correct. You're right. Sorry. Yes, the show is next Sunday. Sorry. I'm so used to doing Saturday shows. We've always done Saturday shows in the past. That, yes, the show is next Sunday, not Saturday, July 13th. And so, yes, please make that change in your notes for today's show, because I know all you guys are taking diligent notes. And so Joe's in the house. What's going on there, Joe? Guys, speaking of the Nike earnings butterfly, did I lose money by not closing the position and letting the options auto exercise and assign? Come back tomorrow. So, Joe, if you had a similar position on, then I'm sorry I couldn't get to it today, but I just knew, because I wanted to get to you guys and I wanted to get to some other things in the market and whatever. I just knew that if I tried to do all of that in one show, it would have literally been the entire show. And so I wanted to just unpack everything that happened today. We'll come back, we'll circle back tomorrow, and we'll take a look at what the basis was on the overall package tomorrow. And so that's what we'll do. Let's see. Wandra's in the house. What's going on there, Wandra? I appreciate you so much, my friend. Brian Dowdy's in the house. Interesting. I thought you'd be up on Nike. I might be. I'm not sure. Like I said, I'm not sure. We'll have to take a look at it. I think I'm probably up a little bit if I go all the way back. Now, again, remember, there's more parts to this than just what happened on Thursday and Friday. There's like a half a dozen more parts for those of you that have been following the show for the last 3-4 months, basically, since we put this Nike trade on to begin with. So I think I'm up a little bit. If I had to guess, it's not going to be a lot, but I do think I am up a little bit. And so let's see. Ross says, I'll see you in Boston, man. That's going to be amazing. I can't wait, Ross. It's going to be great to catch up. And so that's really, really awesome. Good stuff, my friend. Brian Dowdy, I see that's why. Maybe related to the Nike thing. Let's see. Sparky Dog shouldn't have gone long the Aaron Rodgers 2 left foot Steeler flip-flops. I certainly didn't go long that. I'd be selling those all day. And so if you did, then, man, caveat emptor, because that one is on you, my friend. And so let's see. Sam L. Doc, how's the heat in St. Pete? Man, it's 45 degrees Celsius over here. Ooh, I'm definitely no Julia Spina on the old Celsius to Fahrenheit conversion live. I have no idea what that means, but I think it's over 100. You even say that's 113 Fahrenheit. There you go. Feels like we're doing sauna cardio just standing outside. Yeah, we're not quite there yet. And so I think you're in France, I think, right? If I remember correctly. Yeah, that's hot, man. That's really, really hot. I remember when I studied in Nice in 2003, I was there in January to May. And I remember I flew from Detroit because I studied abroad my junior year, and I was going to Central Michigan, so I was right there kind of in the middle of the state of Michigan. So it was very, very cold outside in January. And I remember stepping off the plane in France in January, and it was very pleasant outside. It was like 70 maybe, like Fahrenheit, of course. And so I was like, wow, this is absolutely beautiful. And then by the time it got to like May, though, like it was cooking, man. Like they were cooking with some coconut oil overseas there. And so, yeah, that's we're not quite there yet, Sam L., but it's definitely warm. So let's see. There's Sorry. I appreciate you again, my friend. Adam Armfield says, I closed my Nike Butterfly for an $80 profit before the IV crushed. Oh, look at you. Oh, so did you close it on So wait. So you closed it on Thursday or Friday? I'm curious. You can drop it in the chat. I'll probably scan it after the show. I'm very, very curious, and I'm sure everybody else is too. You put it on Thursday and then closed it on Thursday? Or you put it on Thursday and then on Friday morning, like you got out, I guess, right on the bell, I would imagine, before the stock kind of took off and then the IV absolutely got crushed. RC's in the house. What's going on there, RC? David Gatmore, did Dr. Jim just say dodo live on air? It could have been doo-doo. Oh, it was doo-doo. I probably did say some doo-doo. I'll mix in some doo-doo from time to time. Alex Spencer's in the house. I have the July 18, 69.75 credit spread. I'm hoping it dips. No good way to roll right now. So you must be talking about Nike. That's correct. I mean, if you have a 69.75, yeah, it's in the money, right? So usually when you have a defined risk spread and it goes in the money, if you try to roll it, it's going to be a debit. Like you can't roll that thing for a credit. So, oftentimes when that happens, it's very much just a sit and wait type of scenario. It's very much just a sit and wait, and you've got to size the position correctly on entry, and then you just kind of deal with the consequences. Like if you can roll it for a credit, then you do that. If you take it out for a winner, of course you do that. If you can't do either one of those two things, though, then you're typically in just kind of a sit and stew type of situation. And so it looks like you're in that situation now. The good news is you're in July, so you still have a couple of weeks left, like 2.5 weeks. I guess it's going to be 2 weeks from Friday when that's going to expire. And so let's see. Gregor V. Dub, did I make money? Yeah, we'll figure that out tomorrow. And then let's see. Where did I leave off here? Richard Garcia says Spice. The short interest is 30%. You haven't traded Spice. I don't think like ever. So I'm probably not going to start today, Richard Garcia, with only a couple minutes left in the show. But I appreciate you. Bring Spice back another day and maybe give me a strategy you'd like to take a look at, and we'll take a look at it together. Margin Walker, what up, Dr. J? Appreciate you, man. I appreciate you guys so much. Rancher says, hey, I'm a little late. Hello, Dr. Jim and Tasty Crew. What's going on there, Rancher? Thanks for being here, my friend. Let's see. Sam L says, Doc, I feel you. I just closed a losing short call myself. The one bumped deeper than a dry scoop of pre-workout. Yeah, I'm not a dry scooper on the pre-workout, man. Some people do that, which is crazy. I definitely dry scoop creatine, because if you don't, that stuff is just nasty, like super nasty. So you got to dry scoop creatine and just be done with it. But pre-workout, usually, I mean, obviously the Ghost cans are different because it's a ready-to-drink can. But if you're doing like regular powders, usually they're pretty tasty. Like most of the time, pre-workouts are pretty tasty indeed. And so, So Richard, let's see. Oh, Trev J, when's the new JPM collar? Yeah, do they do it the same day? I think that they probably I think they just roll it, right? If I'm not mistaken, I saw something come through the wire earlier that they normally roll it around like noon, like between noon and like 2 o'clock. They roll their collar, so they probably already rolled it, and that might actually explain some of the crazy spikes we saw in the market, like right before this show. Like in fact, if you go to like ES, it's kind of dropping now, which is interesting. But if I go to like a 1 minute chart, it was right before the show start. Yeah, right here. So yeah, like right here. I wonder if that was kind of like that was like a 15, like almost a 20-point range in the S&P 500 futures in like 3 minutes, when it didn't have a 20-point range all day. Like it didn't move 20 points the entire day, and then all of a sudden it has a 20-point range in 3 minutes. That looks like a JP Morgan collar roll to me. And so I bet you that's when they rolled it. And I don't know how transparent they are with their trades. Like, will we ever figure out when they actually rolled it? I don't know the answer to that question. But it would not surprise me at all if this actually turns out to be the actual roll of the collar. But, man, I'm totally out of time. Guys, I appreciate you guys. And I see you guys in the chat. Man, look at you guys. If I missed you guys, come back tomorrow. Come back tomorrow. I will do the full Nike breakdown. We'll see exactly what the basis was, and come with any questions you might have. We can talk about Uncle Jay. We can see what he said. We can obviously talk about his tie color choice, which we all know is going to be purple here on the Jay Powell Eve, because that's the only color that he goes with. But guys, I appreciate you. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I'm at jschultz_F3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal come up next with engineering the trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
What do you do to keep emotions and psychology out of trading? Do you have any specific strategies on that front?
Yeah, I coach little kids in baseball. No, really, actually, it's interesting because you can see them get frustrated at things that aren't going their way, especially in a hard sport like baseball. To help coach them through that, it kind of makes me check myself and keep my emotions in check when it comes to trading.
Something I talk about on the road a lot is having a game plan before you actually get filled on the trade. I like having an internal conversation with myself of, okay, if this is what I can make on entry, this is what I can lose on entry. If I'm doing a more static position, like buying a micro future or something like that, I like to use a percentage of the buying power as my profit.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Hey, what's going on, everybody? S&P 500 is trying to wrap up a banner quarter. We'll talk about all the things we've seen in the past 3 months here. U.S. and Canada going back to the drawing board. That's right. Once again, you heard a little bit about it last Friday. Markets didn't move as much this time around, though. You notice that? Yeah. But nevertheless, they're back to having discussions, so we'll see what happens. And then Home Depot, little acquisition today. Home Depot buys a company aimed at trying to do more business through the contractors nowadays. So we'll talk about those 3 things and more. We'll take a look around at equity markets, which are kind of quiet today in this kind of unorthodox week as we sit here with markets near all-time highs. Welcome to the most dangerous show on the tastylive Network. It's Engineering to Trade. I'm your host, Jamal Chandler. Hope you all had a great weekend. I watched F1 this weekend. I liked the movie. I actually loved it. It was really good. It was really good. Very, very action-oriented. I mean, as soon as you see Jerry Bruckheimer is one of the wait, who was it? Was it Bruckheimer? I think it was Bruckheimer. One of those dudes who do a lot of action movies. As soon as you see that name on the screen, you know what you're in for. I think it was him. I think it was that dude who ended up doing this one with F1. I'm pretty sure. Yeah, he did. The same guy who did the Bad Boys movies and all those other things. I mean, a ton of different movies throughout the years. So you're in for some action, and sure enough, that's what it was. Obviously, Brad Pitt's a draw. Also for me too, the other guy, number two billing in the movie, Damson Idris. Really like the young dude's career so far. I watched him on Snowfall, which was a phenomenal show. Not sure if you guys ever heard of it. You should check it out. At the very least, a very interesting storyline. It was great, man. I liked it a lot. Came on FX. John Singleton, who did Boys in the Hood, the late, great John Singleton did that show. So it was fun to watch Damson kind of like, this dude's blowing up, man. You know what I'm saying? Now all of a sudden, this dude's doing movies with Brad Pitt. It was great to watch. Great movie. Really enjoyed it. Liked it a lot. The other thing I learned this weekend that I never really noticed. It's funny. I've seen these shoes when I think about it, but I never knew the storyline behind them. So Golden Goose. I don't know if you guys ever heard of this shoe store. I'm walking with my daughter the other day. We're shopping. We're looking around and stuff. And I see that place. I'm like, Golden Goose, what is that? And she's like, oh, they do these shoes. They're like kind of worn, if you will, almost dirty looking. And they charge ridiculous prices for them. They'd be like $400 to $500, $600 for some of these shoes that look like they are worth $25 because they're just that old. I mean, you wouldn't buy them normally for that amount of money, but yet that's what it is. Those are, I couldn't believe it, man. I've been looking up this guy. I'm just like, what is happening with designer shoes and sneakers in particular these days? It's kind of wild. I don't know, man. I don't know. I can't place the finger. Maybe I'm getting too old. Let's pull up the slides. Let's talk about what's going on. Like I said, stock market, as you know, near all-time highs. And we are actually not slowing down to some degree. I'm not surprised the markets are up today. I'm still waiting to see the end of the day close here, honestly. I'm curious to see if they're going to be buying up. What do the market on close look like? And if they're going to buy up in a frenzy. I actually kind of feel like that could happen. I I am sort of watching with bated breath, if you will. I would not be surprised. What's all-time high in SPX? I think it's 61.95. So we haven't gotten to 6,200. I almost want to buy like a weekly 6,200 call just to see but it wouldn't be worth it. I mean, I think if they do buy them up, it's going to be at the end of the close. I almost want to do it in SPX, but again, that's the index that closes, I think, at 315 maybe. But it's been a great quarter. I mean, honestly, like when you look back, it's obviously this quarter began with April, and obviously we know what happened in April, big tanking. We've bounced like 24% from the bottoms, and it's been nothing short of breathtaking. You've seen a lot of things change over this month. Oddly enough, at the time when we were falling in late March, early April, obviously we saw gold going much higher. It has not pulled back as much as you would think with the market turning around, right? So that's been one of the interesting things to me. Interest rates, we've seen those fluctuate. I mean, like, I think it was in February we saw interest rates at 4.5% on the 10-year. During this downturn, sometime in April, we saw interest rates at 4.5% on the 10-year, and very different reactions from the stock market during that time period. So it's been wild. Scramble Everything talks about the euro. Euro needs to cool off. Yeah, that's the thing. The dollar has been tanking throughout all of this, and I do think at some point in time that might turn around. But again, that's a tough trade. You better be prepared to be in that one for a little bit and not commit too much money. Because again, I liken that trade. Trying to get long the dollar right now is like trying to play the 210 spread inversion and go for it going back to flat. That was a hard trade that took a very long time, as we all know. So just temper your expectations. But this has been a wild quarter, man. And you look at some of the Mag 7 names, I'm not sure what they've done on the quarter, but when you look at on the year, I mean, there's been 4 of them that were in the negative. Amazon might be in the positive now, but it was, I'm blanking on it. It was Google was in the negative, right? I think. No, Google's in the positive. Who were they? Tesla, obviously. Apple those two were in the negative for sure, and at least one other. So it's been an interesting quarter, man. I mean, to say the least. All the talk about tariffs was so frightening in the beginning. Now, when you hear about tariffs and you hear things like, the U.S. calls off all negotiations with Canada, there's really not much change in different assets. Speaking of an asset, Canadian dollar, that's been on the run. I think if and when I decide to try to get short the dollar, it might be the euro. That might be the one I might play. But right now, I'm not wasting time in that trade at all. Donald knows. Donald, that's right. Snowfall was legendary. The ending was kind of bogus. I'm not going to lie to you, bro. I really didn't like it. Like I said, U.S. and Canada, they're going back to the tariff drawing board. You heard that on Friday, that Trump administration said they're calling off all negotiations with Canada. Fast forward to today. It seems like that happens quite a bit nowadays. They're calling off they're calling off any meetings. They're not talking. And then by the time the weekend is done, well, we're trying to summer. It's a trip, man. It's really kind of hard to figure out. Home Depot, they made this $4.3 billion acquisition of this company, GMS. And they're trying to do a lot more business with the contractors, which seems to be a big thing, obviously, at Home Depot. Obviously, we know a lot of contractors use them, so why not just go ahead and acquire one of those? I mean, it makes sense for their business. I wonder if this is something that Lowe's maybe eventually does. I'm not sure. But I think it's been interesting to watch how some people are using their money at this point in time when you look at an economy where interest rates are still at 4.5%, even though there's been a lot of pleading to bring those lower. But you're still seeing some acquisitions here and there, right? Like, I just find this kind of interesting. And who knew Home Depot was just sitting on? I didn't realize how much cash they were sitting on. But it's an interesting way they did it, too. They bought. It's one of their subsidiaries that they kind of just bought not too long ago, and then that company is the one who acquired GMS. You usually don't hear about acquisitions in that manner, so kind of fascinating. Leftovers, the things parents wish their children could grow up without. Let's move to the next slide. I thought this was interesting. This is a share of parents who wish the following had never been invented when thinking about their children growing up. It's funny. We don't think about these things when we grow up, but you have kids. You want to shield them from everything. You want to shield them from everything. So take this with a grain of salt. The red, obviously the real strong red is strongly agree, and then the light red is somewhat agree. So adult online content, We're going deep in the weeds right away. 43% of the people strongly agree that they wish it wasn't created. 29% somewhat agree. I'm in the somewhat agree category. I think it's a necessary evil. I think it's going to happen anyway. I mean, it doesn't matter if it's online or whatever medium form it takes place. Look, it used to be Playboy magazines once upon a time. That eventually transitioned into VCR tapes. And before you know it, it's online. It is what it is, man. You can't stop it. All you can do is explain it to them and hope to contain it. That's all you can do. Now, social media, 26% strongly agree. Interesting that only 29% somewhat agree. Again, I say take this with a grain of salt because the idea of never being invented is kind of funny to me. It is what it is. It's a matter of limiting exposure, I think, to kids and helping them understand these things. Like, again, social media is power. One of the things we've always said to the kids is don't do anything on social media that you would not be comfortable putting up on the bulletin board at school for everybody to see. I think when you put it in those terms to the kids, they get it. Messaging apps, 20% strongly agree, 24% somewhat. I tell you what, that's a slippery slope, the messaging apps. Even within social media, I mean, there's messaging apps, right? I mean, there's the DMs. They say that's where it goes down. But that's one of the things, man. I mean, again, you gotta, that one is the difficult one because, again, anybody can just message. You know, you have to make sure settings are set up so that just anybody can't message your kids and things like that, you know. Smartphones, obviously, where a lot of this stuff is readily available without smartphones. I mean, again, you have an iPad, you have computers, but I think smartphones make it just so much more readily available. 12% strongly agree, 26% somewhat agree. I don't know about never invented, but again, it's interesting because our oldest kid, who's an adult at this point, but we waited until it was like 10. I mean, it was really early that he got a phone. It was in 4th grade at the time, but he was the oldest and it made it easy for him to get home from work at the time. And again, there wasn't this like work from home type of situation. You had to go and pick a kid up, school and whatever. But we only lived like 2 blocks away from school at the time, so we just figured it would be great for him to be able to walk home and he could handle it. And we did it. What we didn't know, and this was, again, for that older kid, getting the phone at the time was equivalent to those kids who were, as the time was social media was exploding, IG and all these other things. And it's interesting how it's interesting. You know what I mean? Like, it's just really fascinating. So that was, smartphones are just powerful things. What can you do? Again, you just got to have education about it. Video games, this should be 0%, okay? I mean, the video games are great hand-eye coordination. Matter of fact, I don't even know why this is on the list. Doesn't count. The internet, 9% strongly agree, 19% somewhat agree. Streaming services, again, this is lower on the list. I mean, if streaming services are the worst thing going on in your life, come on. 9% strongly agree, get a life. 6% television, also get a life. I mean, come on. I mean, what are we talking, Dark Ages? These are the type of people who strongly believe that streaming services or television were never invented are the ones who are preventing their kids from watching them now. And then when they go to college, they're just going to lose their mind. Let's move to the next slide. These are the top performing names in the S&P 500 to date. NRG. We've talked about energy. We've talked about AI. These are, this is the perfect sort of stock that is the proxy for energy capabilities and things going forward for AI, if you will. I mean, you might as well put Palantir on there in the next on the next on the list. So you might as well include Palantir as a part of that situation, right? In that equation. NRG is up 82%. And again, that's a utility name, but I think between just energy and nuclear, stock has really taken off this year. Palantir up 73%. Big drop on Palantir, like 14% on Friday. I still have no idea what that was about. I don't know if you guys do. That was a crazy drop on Friday. HWM, I've never even heard of this name. Aerospace defense name. That's up 69%. Never heard of it. Never seen it. Wow. But again, doesn't matter if I know it. It is up 69%. Seagate, I'm shocked. I felt like for a while there, this stock was kind of dead in the water. I don't know what has really happened. I'm guessing it's an AI story. I really haven't paid much attention. Since April, the stock has doubled. Crazy. It's up 66%. GE Vernova, That's the I think it's the electrical equipment, but also like kind of airplane parts, right? If I'm wrong, for G, or is it just regular GE now is airplane parts, and then like GE Vernova is electrical and wind turbine units probably. Up 58%. Supermicro. Everybody thought this stock was left for dead. Stock has really staged a rally more recently too in the last month or so. That stock's up 56%. CVS Health, they're clearly doing things different than Walgreens. They're up 56%. Newmont Mining got a little gold name in there, up 54%. Dollar General, oh man, this is one I had in the long-term account for a while. I got it, I want to say maybe late 2023, and it was doing well until that earnings last year in August, and then tanked and really has not performed well. And I just got out of it, but looks like it's trying to turn the corner more recently. And then Philip Morris. People still seem to care about tobacco or whatever other stuff they're investing themselves in these days. That stock's up 53% year to date. Interesting. Let's move to the next slide. And it is not the reverse of the last slide. Who cares about the losers on the year? I still always like to look at volatility from this standpoint. VVIX to VIX ratio, as you can see, the long-term average is 5.8. Right now, we're 5.3. Again, when this thing is 5.8 and above, that means a low vol environment. When it's 4 and below, high vol environment, we're basically right about the average right now, which I think kind of comports what we're seeing with volatility. When you talk about July VIX futures are 1870, July VIX future 1870, August is 20, September is 20.6. The VIX itself is 1672. Volatility, again, I like this fall. I like this fall environment. VIX at 16, between 16 and 20 always makes for a really interesting market, and one that you can actually trade. You know, if it's like 35 and the market is just tanking, it's really hard. There's a ton of things you can sell, but the market is probably moving too much, like on the order of 2+% a day, which means those names within the S&P 500 are moving anywhere from, 4 to 5% a day or more. And it's just hard to sort of harvest volatility when markets are moving that much. But when it's a VIX of 16, 1% move in either direction, that's simply pretty good, let alone 17 or 18. I think it's pretty good. Let's move to the next slide. This is interesting. Again, we talked about the dollar earlier, and this is definitely something that bears watching. This is one of those things that makes you want to buy the dollar right now. And I'm trying to think about the best way to put the trade on. Again, I am short the dollar vis-a-vis being long stocks, I guess, if you will, also being long gold, long silver. But I might need to find a long dollar trade here, small, just to start to put it on, let sort of work into the trade, because again, I do feel like this is one of those that could turn around quite a bit. And again, if you look here, remember dollar and this is the 10-year yield. Dollar and the 10-year yield were moving together, obviously a lot in 2022 to 2023. That's when rates went from 0 to 5.25%. Remember that big drop we had at the end of 2023 in the dollar as markets started to sort of price in this idea of rate cuts coming? And you remember that? The end of December 2023, stocks started taking off, dollar tanked, rates even tanked a little bit. And then they held their course, and then we had to deal with the whole election year thing, right, where both of these sort of wavered back and forth. But still in line, they still moved together, right? This year has been a trip. They were moving together until they weren't in about March and February, March, and that's when things have changed and the dollar's gotten rocked this year. And now we're sitting at lows that we last saw in January of 2024. So I think it might be time to start to try to, again, it's not going to be a trade that I put a lot of money in, but I do want a trade. It's always nice to have a trade that works on the days when the other stuff doesn't, and I don't even want to call it like a hedge. Just in this situation where you see an extreme, and make no mistake, this is becoming an extreme at the way the dollar is looking compared to rates. So unless rates are going to drop really soon, which I'm not sure if they are, at this point now they're pushing out to September for a potential rate cut. And again, potential. We don't even know. We'll see. Again, they changed, the rates did drop from Sep to December of last year, right? 100 basis points of rate drop, but we will see, man. It's an interesting time. Let's move to the last slide. So obviously there's not much earnings going on right now. It's just, who cares? really. We're a couple of weeks out here from the real earnings getting in play, but PRGS, MSM Direct, which is basically a comparable of Granger, has earnings. We got the job soup coming up. Jolts is on Tuesday. ADP is probably in there somewhere while we're before or after holiday. A non-farm payroll is going to be on Thursday. Market closes at 1 p.m. Eastern, 12 p.m. Central on Thursday, so half-day market on Thursday, and then obviously markets are completely closed on Friday. Number of S&P stocks above the 50-day moving average is 69%, around 69, 70%, 347 names. Markets are doing well, again, near all-time highs, at all-time highs. Let's go to the platform. For the rest of the week, we have, look at that. See, markets are perking up here. You can see it. Markets are perking up. I've kind of been waiting for this all day. I wanted to do a little put spread here in SPX. SPX is probably my biggest loser to date, mostly because I've tried to do these trades that just haven't worked, whether it's these put spreads or call spreads or these iron condors. A lot of them haven't really worked, but whatever. That's why we're here to trade, right? Yeah, I want to do this for Thursday, and again, it's a half day. I don't know if I get that much. 61.75, 61.50. Let's see if that Monday is better. 61.75, 61.50. It's about 70-something cents more. Yeah, this is a trade I want to try. Just get some, put exposure. I do have a lot of upside exposure, so I'm good. Speaking of exposure, I guess I could update you guys a little bit. I'm curious. Let me see. Any questions here in the chat from anybody? No chats. None of that. 28 days later, I've never seen any of those that movie. What's up, Ryan McBroom? How you doing, man? What's going on? Christine, how are you? Scramble everything. We already hollered at you. Oh yeah. That stock has been on the run. Hood, can't even lie. That stock's been on the move. Good to see you, Donald. Good to see you guys all in the chat. Filled on that SPX spread. There we go. That's for next Monday. We'll see if the markets turn around here between now and next Monday. A little $700 in premium. It's about 3%, right, of the portfolio. I can live with that. Let's see. I will make sure that I get that in trade and soon. What do we got going on here? Gold. What are we doing with gold? Looks interesting. Well, I got to tell you, I have already been in gold. I got long gold last week. What day was that? Let's go to the tree here. I got long gold on the 5 days ago, as you can see, and it was more because I saw the bounce. Right, I was playing it for a bounce after it went through the it touched the 50-day moving average. I got long on the very next day, right here. When it did this, that raised the alarm bells for me. I got long right here. Did not expect it to fall through the way it did. It did on Friday, big move to the downside, but I'm playing it for the bounce back. Again, I know that is a short dollar trade, if you will, but I like the idea of the trade, and this is one of the reasons why I'm starting to think about the idea of trying to find small ways to get long the dollar. I am bullish gold and silver. Is like I said, you can see that's my gold trade. Silver is one that I've been in for a while. I got long silver once it had this big breakout. Still hanging on. It's very noisy, as we know. Silver can be noisy. Again, another trade where I'm like in the August expiration, and it's further upside. So 40 to 42 is the play here for me. I can just show you the long-term look on silver here. Let's go monthly. Let's go 10 years, right? And we've had these times where silver's had these breakouts. Again, when you go back to, I want to go further back than this. Let's go 20 years monthly. This is the one. So this was, let's see, like this, /SI. As you can see, before here, 2010, 2011, big run up in silver. I remember trading this at the time. It was wild. Big fade there. I feel like it's, gone through its peaks and valleys at times. It tried to mount a comeback there. 2016 couldn't do it. Tried to mount a comeback in 2020, and it did, of course. Obviously, there was a lot going on then and couldn't and sort of trailed off. But I think it's time again. And so I'm trying to see if it's going to break out this time. Maybe it's the third time's a charm and breaks out above 40. That's basically what I'm playing for here. Giving it a lot of time, going out to August to give it the opportunity to do it. So that's been my play. Bonds is another one you mentioned. I've noticed that I have a lot of futures options positions these days. /CB. Obviously, we're in a historic drawdown here when you're talking about bonds over the last 5-6 years. And is the next move to the up? Who knows? But I figured right now with very low vol in bonds, if you've noticed, really. By the way, this market being bought up at the end of the day is not a surprise to me. If you notice things that I've been saying, or even on Twitter, I tweeted this idea. I expect the markets to be bought up into the quarter and close here. 17 vol. Feels like a decent time to try to see if at some point, all this rate talk is going to actually mean something in bonds. This is the long-term chart. Again, long-term drawdown here that we've seen in bonds. If we go to the one-year chart, we can see that bonds are trying to mount a bounce. That 116 is basically the 200-day moving average, so we can get that above there. Maybe you can see a little bounce back towards these highs, but I don't know how long it takes. This is another reason why I'm in August and here. So some of these trades are really sort of shoot the moon a little bit, August things further out type of trades, if you will. What else we got here? I know, like I said, I've realized I have a bunch of different futures options trades. Told you about the ZB, the gold, the silver. Copper is one where I'm short upside against the long silver and long gold. Pretty straightforward on that one. Nat gas, I just got in last week. I'm short the August put spread here. Obviously, of course, it immediately makes a big down move. I mean, what can you say in natural gas? But I am short the 323.10 put spread. Why did I choose those strikes? Well, this is basically those lows. And so if it's going to dip back down here, at least I'm shorting it against those lows that we've seen over the past 6 months or so. So we got some room there. I still have a crude oil iron condor. Obviously, we've seen the wild moves that crude has had more recently. These are my strikes, 61.59 on that side, 72.74. I am not rolling down anymore. I'm going to keep that there and just kind of see what we can do. Any plays on AMD? No, I don't have any plays on AMD. I mean, I don't necessarily see any reason to be super excited about it. For me, if I'm trading any sort of names with semis, it's really more NVIDIA than anything. I mean, I know it's still the boring play, but I would just rather play that, honestly. Yeah, markup for quarter end. You could see it coming, right? You could just tell. I guess the biggest thing to tell you guys, remember that NASDAQ call spread I've been talking about for the last several weeks? I was long the 23,000, excuse me. Was it 23? Yeah, 23, 25. I was literally just long this. Wait, was I? Hold on. Now I got to go back and look at my trees. Yeah, 23. Yeah, this is what I was long. 23,000. No, not 23.35. 23.5. So this was the one. I was just long this for the last couple of weeks. Again, it's a sort of winding trade. I mean, originally I was long the July 18 expiration. Then I rolled out, and there's a lot going on here. But nevertheless, it's been a great trade for me. Made money on it. I rolled out even more. This was a sizable, like the notional value of it. Or the size of it, again, it was a $4,000 trade at this point. And so it was kind of big. I decided to close that one down, roll further out and up. And so now I'm long 24,000, 24.5. So obviously a solid, I guess you could call it a little under 10% move to the upside in NASDAQ. And it's out in August. I figured, I could still have some exposure, not have as much money at risk, and not be so near term. Again, if you're going to play upside, or just call it out of the money options, whether it's upside or downside, you got to keep in, obviously you guys know about the decay curve. You know, a lot of times the 45 to 21 day window is huge. And so that's one of the reasons I'm going further upside, but further out to take advantage of that. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. See ya.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Hey everybody, Tim Knight here, and today is the last day of the quarter, the last day of the first half of the year, and it's a shortened week. We're going to have a full trading day Tuesday and Wednesday, and that's kind of it. We get a few hours, half day on Thursday, and that'll be it till the following Monday. So we'll be well into the summer doldrums at that point. The market, as seems to be required by federal law, is at lifetime highs again. With the exception of the small caps, which is kind of my obsession, small caps remain down double digits from their lifetime high, unlike just about everything else, which is at lifetime highs. And I've got a bunch of symbols loaded and a few things to talk about, so let's dive in together and catch up on the charts. Here's the spider. We are hanging out exactly at the midline. This, as I've mentioned before, there's a channel that goes back a full 16 years. And of course, that channel has a lower line and an upper line, and right down smack in the middle, 50% is a midline. And that's exactly where we're at right now. Here's the channel all the way up. We're bang right there at lifetime highs, yes, but at that midline. We'll see if that exhausts itself. I just read that this is the fastest recovery ever from a greater than 15% drop off. Never in history have we seen anything bounce this fast and this hard since those April 7th lows. So that's worth remembering. One little blip we had on Friday was, of course, the news that Canada was going to have a digital tax. And Trump said, well, trade deal's off. And over the weekend, Canada's like, never mind. And Trump's like, fine, never mind. So let's talk some more. So with that, EWC, the Canadian ETF, is at record highs. We've jumped on this one after a very brief, literally like 2 or 3 hour slippage on Friday. But yeah, lifetime highs on Canada. Longer term, a little more domestic, here's the EWC, not EWC, this is the ES, the S&P 500 futures going all the way back to their creation. This was a bull top here, a bull top there, and then the everything bubble, which began in 2009, and it's been really pretty much uninterrupted since then. The only pauses in the everything bubble has been, of course, the COVID crash, which lasted literally just a few days. In fact, if you count 2 or 3 days, that was almost the entirety of the COVID crash. Then there was the, I don't know what you want to call it, but basically the Powell tightening for a little while. We had a drop late 2021, pretty much ending in June 16, 2022. There was a nominal low on October 16, but you pretty much got a 7-8 month bear market in this vicinity. And then after that, it's just been straight up. So here we have it. We are the Fibonacci's on this did a fine job calling the bottom right there, bang, like to the penny, and then they had another drop, which also bang, pretty much to the penny. After it slipped above this fib, it just rolled its eyes and blasted forward. So we're above all of that. At some point in the future, when it's clear that we've got another top, we can drag that anchor point higher as it is now. It's just kind of there as a interesting little memory of times past. Not really useful at the moment. In Q, it blasted above the fib earlier than its compatriot there. But here too, we had a nice bottom here, bottom of this zone, and then another one here. And then once we cross this highest segment, zoop, up we go. I would also point out, interestingly, this also has a channel, the NQ. There's the base way down there. This goes back, not as far, this goes back to the start of 2023. So there's the lower line, the upper line, the midline, and we are tagging the lower line now. In other words, it's a shorter term channel. We've stayed below the channel ever since last, about 3 months ago, early in March. So we broke it early in March, and we fell, push, and we are tagging that for the first time in about March, April, May, June. Yeah, about 4 months we've gone through. So just saying, worth noting. As I mentioned, the Russell is not at lifetime highs, unlike all that other stuff. And as I've mentioned repeatedly, but just bears repeating, there's an analog going here still, in which we have this distribution top and this distribution top, this bullish reversal and this bullish reversal, and we're kind of at the moment of truth right now. Last moment of truth was right back here, back in March of 2022. Here we are with this one, and it's unclear yet what's going to happen. It keeps teasing it, but it doesn't break through. The peak on this so far has been what I call the CPI high at June 11. And we've got very close to it last Friday, very close to it today, but it has not followed through in spite of a lot of strength elsewhere. At this moment, the RTY, for example, is up half as much percentage-wise as the NQ. So it's still acting like a laggard. And if for whatever reason, this weakens away from that dashed blue line, maybe this has a shot of actually doing what I'm hoping it'll do, which is ape the behavior it had back in the spring of 2022. Here's the IWM itself. Those same markings are shown here on the ETF. And as you can see here, we're just kind of hanging out below that dashed red line. So this is the sort of you are here moment back in late March of 2022. What else is going on? Just in passing, I mentioned the diamonds. The diamonds are not at lifetime highs, and it has gone awfully far, awfully fast. As I said, record recovery. And it seems to my eyes that it's going to take an astonishing amount of extra power to push it past those peaks right here. There's a lot of uncertainty now. The big, beautiful bill, is still floating out there, uncertain whether that's going to pass. They're trying, and July 4 is this kind of symbolic day, I guess, for it to pass. So that's been telegraphed loudly that it must pass by July 4. But as with all the other deadlines, I don't think it really matters. I mean, there's this July 9 deadline for the trade deals. I think that they will happily just say, oh, well, we really meant the 19th. We're going to give them 10 more days, whatever. All these artificial deadlines are just that. They're just, PR. I don't think they're really going to say, like, all right, BBB didn't pass July 4. We give up. No, it's not going to happen. But there's the trade deals. There's the big, beautiful bill. And, of course, just this touch of geopolitical uncertainty. Palladium got smacked down pretty hard. It actually was quite strong at times on Friday and Sunday and so forth. But short term, this has been smacked down pretty badly from the zip higher we had on Thursday. It is a very understandable retrace to the base. I would say that the first important line of support is down here at 97.70 on PALL. But yeah, that's backing off from its strength late last week. But long term, it still looks fine. Over in quantum land, it's a mixed bag. ARQQ down 5%. Qubits, on the other hand, is up 3%. And I say again that this is, I mean, I think quantum has its, is obviously very speculative, but as a chart, this to me is still the best looking chart. QUBT is up quite strong. And it's just sealed up its gap. So it'll be interesting to see whether or not it pushes past that or not. This has been a very strong performer, but I think that it's more vulnerable simply based upon the fact that it gapped down and it sealed the gap. So QBTS seems a little more solid. This isn't quantum related, but I did want to note UMAC, Unusual Machines, is showing some very interesting strength, particularly when you turn on the volume. You can see here it was just trading, a few hundred thousands of shares. Now it's trading in the millions and sometimes even the 8-figure volume. And they're a drone maker. So if you assume that U.S. drones are going to be an important shift away from DJI, et cetera, this might be worth looking at, UMAC. Getting low on time here. Let's pick up the pace. Interestingly, although we're green across the board, almost all my shorts are down today, which is nice. Just a few odds and ends I plucked out. AMD down about 1 2/3%. Caesars CZR down also about 1 2/3%. On Semiconductor down a bit more than 1%. Avis Budget Group Car down a little more than 3%. Delta Airlines down about 0.5%. DLTR Dollar Tree down just a little bit, but that's at a nice, very powerful bounce up to that dash red line, which I'm considering resistance now. HOG, Harley Davidson, this is down about 1/3% beneath that big topping pattern. And one last one, actually I'm not in position on this one, but I just wanted to mention it. Roblox, RBLX, down just a touch. It has gone very far, very fast, and very richly valued. It's hard to conceive that it's just going to keep trumping higher like that. It seems that move, I would say, is close to the end. But again, no position on that. As far as crude oil goes, we're down about 1% on CL. Of course, the mayhem from about 9 days ago is a distant memory now. So we went blasting higher, cut above this trend line, collapsed below it, and now we're just kind of hanging out. Wednesday, Thursday, Friday, Monday, barely moving from the support level like so. So if we can cut below that, I think that really reintroduces the prospect of this right triangle pattern failing. I'm short XOP. This is down just about 1%. So yeah, that's energy. On a very different industry, I would also mention semiconductors. You may have noticed a lot of my shorts are semiconductor related. This is SMH itself, whose lifetime high were very, very close. But again, it'll be interesting to see if it has the renewed energy to push past that level. It hasn't done so thus far. Over in crypto land, Bitcoin is doing a whole lot of nothing. We're just kind of hanging out at a level that we saw 6 or 7 months ago. Back in December, we were at this exact same price. We felt hard, recovered it all, but we've been kind of lingering in this little wave. So I just want to point out that 7 months have transpired. We're pretty much at the same price after this just explosive move higher. But in spite of the fact we're barely budging, MicroStrategy, MSTR, is up almost 6% today. And so the spread between strategy and Bitcoin itself, and remember, strategy pretty much is their Bitcoin holding company. It's interesting that this spread has gotten so large. You can see starting around February of last year, they were pretty much in lockstep, but then the spread's getting wider and wider and wider for whatever reason. I call it the Saylor premium per Michael Saylor, but it's just worth noting that spread's become kind of a chasm. Just to wrap things up, Russell 2000 once again. There's the cash index itself. Same deal. I don't know if this will resolve this week in terms of pushing past the red line or succumbing to that force, but we've only got about 30 minutes left of selling left this H1 2025. So we'll see what happens Tuesday, Wednesday. Anywho, thanks for coming by. I will sign off at this point, and I will see you here tomorrow. Take care. Bye-bye.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
If you missed the live show, here's our cherry on top weekly recap.
Question for you guys.
Yes.
Vanetta this morning was giving me a little flack. It was lighthearted. She meant well.
Okay.
For my particular baby face.
Yes. You are
just question for you guys, because I look up to you both. How much of your success, I don't know, financially with the ladies, do you attribute to having facial hair? Is it something I should work on actively?
Ooh. See, the thing, I can hear John laughing out there. See, the thing is that, you either have it or you don't have it. And
all right.
You just don't.
I could put together a pretty gnarly neck beard.
It's a manly thing.
But last time I shaved my face, it was to dress up as Sting for Halloween. Like Sting the wrestler.
Every time I leave Tasty, I miss it. Even like when I go home after work, I think about Tasty. I'm like, I wish I was really in the office.
No, you don't.
I don't.
You just went abroad. Were you able to just fully disconnect?
Fully.
Yeah.
We saw several artisans, but the sword maker. 3 months to make a sword.
Yeah. When does yours get delivered?
50,
you didn't do the sword?
50 grand. And
but that's,
and a 2-year wait list.
It's a couple spoons.
Yeah, that's, come on.
Going to Rockford for a wedding. It's going to be a very fun wedding.
Your friend that's getting married, or is it your girlfriend's friend?
Girlfriend's friend.
Do you want your girl to catch the bouquet?
No. That never ends well. Like in movies, that happens. The guy's like,
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. At tastytrade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. tastytrade, make your move. The market doesn't stop, so why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm, listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call, the last call, the last call.
Tomas, we are back, my friend. You know what that means? Time for the last call. Even the S&Ps make a little run for the roses here, my friend. About $3 off of their highs, up $29.50. They've been creeping for the last hour or so on the heels of what you so eloquently pointed out to me. Apple up $6.20. NASDAQ, up 130. Russell up $6 and change. That's the weakest of the group ever so slightly. The Dow up 228. Volatility in by 25 cents. Volatility's basically been unchanged for most of the day, down a nickel a dime for a little while. Kind of staying bid until this last hour or so and selling off ever so slightly. Bonds up a full point, Sadnoff. Bonds caught a rally, 115.14, 115.17 is the high for the day. Bitcoin up $520, taking a little bit of a breather there, just going sideways in mid-range. Oil down 55 cents, going into the 4th of July weekend, 64.97 on oil. Gold up $31. Sadnov, what do you think about the biggest mover here today to the upside? MSTR up $16, even though Bitcoin itself, although it had a little bit of a rally over the weekend, is only trading 108,000. Before you answer that, you got Carvana up $16, Goldman Sachs up big $15, FSLR up 14, Netflix up 13, Robinhood up $9 and change. Robinhood, $92 stock. I don't know if you realize this. We were buying it in the 40s. 92 bucks.
I was buying it at $8 last year. Yeah, I mean, I think it's probably the most, well, I put it in the league of the 10 most overpriced stocks.
Is it going bankrupt like RCL is, Royal Caribbean? No, it's not. Okay.
They have a good business. I just think that it's pumped in so much crypto premium, it doesn't make any sense. I mean, it's not based on their stock business or their option business,
It does seem like the crypto space and you mentioned it a little bit, is getting a little bit crowded.
Crypto. It's all crypto premium. I've been traded Robinhood since it was probably in the 40s, I think.
So my question to you is, let's say it is a buy the rumor, sell the news kind of thing, and Hood is kind of an anomaly as an equity stock to be exposed to crypto. Do you really think if crypto were to slide, it takes the market with it?
No.
Crypto, Bitcoin goes from 108, 109, maybe it gets to 112, it goes down to 95.
That's a misread. I don't think this Robinhood has anything to do with the price of crypto. I think that Robinhood's not up because Robinhood's rallied from $70 to $95 and Bitcoin hasn't moved. Robinhood's not trading. Robinhood, Coinbase, MSTR are not trading based on the price of crypto anymore. They're trading on the potential of a deregulated business that they are the Coinbase as being the last of those four stocks, where the market perceives them to be the four market leaders in what could be, an explosive stablecoin space and could be an explosive tokenized space. So I think that is where all the hype is right now, and that's what's moving these stocks. This has zero.
So I get that. I wasn't clear. So I get that. Let's just say it's a buy the rumor, sell the news type event like we've had in the past. Yeah. Do you think it's enough to take the market down with it, is my question to you? Or is it kind of...
So my answer to that is, if Bitcoin goes lower, no, it is not enough to take the market down. What I think these stocks have a lot of risk in the sense that I think the street is going to realize that they're grossly overpriced based on the potential for that particular space. I just don't see it as big as everybody else sees it right now. So I think those.
Well, you still got a ton of call skew in coins.
Well, why wouldn't you? I mean, of course you should. I mean, if I was making markets in there, my call skew would be 2-to-1 over puts.
It is actually 2-to-1.
Of course. I mean, you got to be there. If you're not there, you're out of business. So. I mean, no, I expect everything to stay the way it is until it doesn't. And I don't think it's a very easy trade. Let's put it that way. But I think if you're going to nibble, you nibble from the short side there if you're going to. But I don't think it's an easy trade, and I think you stay away from it. I don't think there's a lot of liquidity in there right now. And if you're going to trade it, there's not enough volatility for me to really want to be short it. And it's in that hyperbolic stage, so I'm just going to stay away. But I do think they're grossly overpriced relative to the cash markets, and I don't think the cash markets at this point mean anything. That's all. Mm-hmm. Mm-hmm. So I think they're just flying up on their own, speculation that they're the market leaders and nobody's going to be able to take that away from them. And the whole thought. I mean, I don't want to go too far off track because we got a lot to do today, but the whole thought was that we were a long way away from some form of tokenized offerings, which have not been legal really in the U.S., and tokenized stock trading, overnight or whatever, anywhere, so that they're, everything will be cleared differently. It'll sit on some blockchain somewhere. It'll be sitting in some wallet. You know, it's very different than kind of traditional. And I think that has, you know, it's given these stocks like almost like an AI kind of boost, or almost not probably AI, but almost like let's call it a quantum computing type of boost. And I don't think it's necessarily sustainable, but I also think, you know, listen, it hasn't paid to be on the short side of it, so I think you just got to wait until they roll over. That's all. That's kind of.
You're not going to catch the top. You're going to catch the second or third day.
I think so. And I think they're all overpriced. I think the move in MicroStrategies today is ridiculous. I think the move in Coinbase has been ridiculous. I think the Robinhood move is completely ridiculous. And what was the other stock? There was a fourth one. Oh shoot. Well, you could say Circle, but that's too new.
You did have a couple of buckers today. Tesla, big names too. Tesla down around.
Okay, so that's a different story. Tesla, Google, and Amazon. I think they sold those three stocks to buy Apple.
Is that the rotation?
Honestly, I think that's the rotation.
Did you get a newsletter?
No, but Apple was down $1 in the middle of the day. We're down 80 cents. The next thing you know, it's up $6. And then Amazon makes new lows for the day. Google makes new lows, and Tesla makes new lows. I think it was. I think that was pretty straightforward and evident. Selling those three that have had huge rallies and buying as much Apple as you can get your paws on. It was like a little bit of a sector rotation.
Mm-hmm.
I mean, unless you got a better answer. I mean,
no, it's as good as any. I mean, it's a guess. Volume was pretty good. Even the S&Ps will probably get to a million cars today. I mean, it was good, not phenomenal, but neither was the market today. I mean, up 27. You've got about a $50 to $60 expected move for the week when we started the week earlier this morning.
Yeah.
I mean,
Yep. Yeah, I mean, 68. You mean what the expected move for the week was?
Yeah. And now we've got 56 going into the last 3 days. July 3rd is all I'm trying to say.
Yeah. I mean, so my feeling was that, I mean, it's the end of the quarter, so obviously anything can happen. And I think that the NASDAQ, although it hasn't taken out the highs from this morning, it's still a little, it still got very strong based on this Apple run up. I thought because they ran them up almost 100 points in the NASDAQ and almost 25 handles in the S&Ps on Friday, that there might be a little weakness going into the end of the quarter, but it doesn't look like it because I think Apple kind of put a floor in and saved this market. So now I don't think that much of anything is going to happen. Maybe tomorrow you get a little bit of a sell-off. At one point today, they had the S&Ps up about 9
handles.
18. No, I don't mean that. But at one point, they had the S&Ps up 17 or 18, and the VIX was up $1.
VIX you're talking about.
Yeah, VIX.
Mm-hmm.
Anyway, and also they rallied gold and they rallied bonds. Bonds rallying is not a weird thing. I guess gold rallying is not that weird either because gold has kind of got a little oversold. And
I think Texas I think Texas has officially recognized gold and silver as legal tender. Sadnov came out.
I'm not sure what that even means.
I'm just saying now you can buy food with gold. Is all.
Good.
I'm saying.
So you're going to take your silver bars and go.
I'm going to take my bullion and I'm going to buy myself a bull. That's what I'm going to do.
You take your bullion and go into 7-Eleven and see if they accept it.
See if their scale can weigh it. That's correct.
I'm not sure if most of the cashiers in America can even do math. Without a calculator. I really want to see them do a gold and silver conversion. It would be. I think it'd be hysterical.
It's going to be on Saturday Night Live this weekend.
I think it should be. I think we should ask America. Did you ever see that? There was a guy that would go around. It was an old video thing, and they had some guy that would go around and he had like a gold coin, right? And he would say, and I think at the time, it was like an ounce of gold, and it was worth, let's just say it was worth $2,000, right? And he had $100 bill in one hand, and an ounce of gold in the other hand. And he would say to people, he'd walk up to random people on the street and he goes, I have an ounce of gold in my right hand and I have $100 bill in my left hand. People would snatch the 100. He goes, you can have either. People would snatch the $100 bill before he finished the sentence.
Sure, I get it.
I mean, it was like 99 to 1. Nobody had any idea what the price of gold was, or that the other thing. And he would go, he goes, you took the $100, but the gold piece was worth $2,250. And people were like, what?
What? Now you tell me, right?
Well, no, that was the whole thing.
I know, I get it.
I know, but it's listen, most people don't know what this stuff's worth. That's all there is to it.
Yeah.
All right. So what time do we got here? 2:45,
and no real earnings to look at. We do have, of course, the guess the market.
Yeah. No real earnings. There was one stock, I forgot what it was, Constellation Brands, but it's.
Yeah, you don't want it. STZ is the acronym.
Yeah. All right. So have you looked at this this little hyperbolic move that we've been involved with here? Now it can go on forever, as we know. We've watched this movie many times.
Sure. Never sell a creeper, Sal. No, this is a creeper.
Today, I would say today is. I thought at one point at about one, and this is not too long ago. This is only about 115 or 130. They had the NASDAQ up 40 handles. That's it.
Yep, and even the S&Ps were up 9. I was watching it like a hawk. Kidding me? I got my eyes on it.
Oh, I can't get anything past you.
No, you cannot.
Can't get nothing past you. Anyway, so somebody sent me an email earlier, and they said it was for an interview they were doing. They said, "Can you tell me 3 stocks that you think are cheap here?" And obviously, this is before Apple exploded, so I said Apple. What else would you think is cheap here?
Nothing.
Yeah,
I mean,
what would you?
There really isn't anything cheap here.
That's right. I mean,
what can you say? I mean, I mentioned some of these like fringe EV stocks because I said Tesla has no competition on Sunday night. I mean, there's really nothing, Saad. There's nothing.
I mean, I said Apple was my main one, and then ENPH I go relative is cheap, because it's down on its butt.
Apple's still cheap relative, up $6 today.
I'm not arguing. I'm agreeing. Apple's still cheap relative. I said ENPH and I said Baidu, and those are the 3 stocks I could think of that are cheap relative. But if you said find me some cheap stocks relative, those are 3. If you said find me some expensive stocks, you could throw a dart.
There's a lot of stocks on their highs, of course, for sure.
You could throw a dart.
Yeah,
so
you certainly could.
Yeah. Well, it's like when you get to extreme, because people always say to us, they go, well, because we'll say something like, well, I look for price extreme. Well, how do you define price extreme? Well, it's really hard to define a specific price extreme. But when you look around and you can't only find 3 stocks that you think are cheap, and you have 197 that you think are expensive.
Well, you got all the financials are on their highs. I mean, XLF is on its highs.
Oh yeah, everything. There's nothing. You don't have
even utilities are on their highs. I mean, XLU is near its highs. I mean, there's nothing.
Don't even try trading that, because if you can.
No, I know. I'm just saying, as sectors go, everything is there. There's not a sector that hasn't been taken with this market.
If I was hiring market makers today, and we gave them XLU as a stock to trade, and they could make money, I would
not only would I buy them dinner stocks,
I would promote them.
I would try to clone them.
I would promote them to be my number 1 trader, because if you can make money in XLU, you deserve something bigger. There's nothing you can't do if you can make money in XLU.
I was just talking about as a sector, the XLF, the financials. You don't think of the financials as being a leader in the market. XLU, you don't believe like the utility is the leader in the market. Everything is high. There's nothing you can find.
I talked about it this morning, and I was very clear in that there's a time when you always want to buy the noise and sell the calm, and This is about as calm as you can get. I mean, there is no noise. There's no chatter. There's you could hear a pin drop in this market. And very little noise. So got to be really careful. And look, for the second straight day, kind of powering the close. All right, let's take a look and see where we are with our little contest here. Every year,
guess the market here. We're gonna do it. We're gonna get to it. I love it.
Every year we play this guess the market game with our customers, and thousands of people sign up. You can't sign up if you missed it earlier. There's nothing we can do. I'm sorry, because we have to sign up. The cutoff date was December. I think it was December 30th.
Yeah, something like that, or
the cup is December 31st, and we don't play. It's not a crazy amount of money. It's $1,000 per quarter and $2,000 at the end of the year. And we've been doing it.
All of a sudden, a year to you, man, you forget.
No, I don't want these. I don't want these numbers. I want the real ones, John or Beth. Yeah. So let's see.
We're 62.10 right now, Beth. So
and by the way, this is the SPX. This is the SPX, everybody. Yep. So it's not the ES markets or anything like that. And the SPX right now is
62.10.
62.10. So who is closest here?
We got Australia and Oklahoma. Hunter, and then we've got a few.
Well, there
Boca Raton, Reno, Marietta, Georgia is in there. We keep rallying. We're gonna get Des Moines.
Oh, we got him on right here at the end. Yeah, there's a bunch of players. Now, this is amazing because every time, here's the crazy thing about this game, is every time at the end of every quarter, somebody is right there.
At all-time highs, too.
At all-time highs, at lows, it doesn't matter what it is. Somebody's always right on the freaking number. And let's see, right now we're
62.12 and climbing.
With 8 minutes to go.
39.
And it's where they settle. It's not where the market is at exactly 3 o'clock in the SPX cash, because sometimes there's a little runoff after the close. So
yeah,
it's
a couple of minutes, 2-3 minutes afterwards.
So it's the actual settlement. Who won last time? Do you remember? I don't remember who it was.
Yeah. I don't remember your name most days. You want me to remember who won last quarter?
Well, I just want to know why there's so many people at 62.12.
Well, everybody knows that was the front runner, 62.12, 62.10.
1, 2,
right there.
3, 4, 5 people randomly chose 62.12.
And they didn't learn their lesson. 62.12, 02, that puts you in, or 62.11.98. That puts you in the catbird seat. Otherwise, you got to split it with all these other jamokes.
Yeah, so your favorite one is John from it looks like Marietta, Georgia, because he picked 62.10.43.
He learned.
He learned. That John from Marietta, Georgia, he is one smart freaking dude.
He's one smart cookie.
Yeah.
John in Richmond won last quarter, Thomas. Don't you remember?
John in Richmond, Virginia, or Richmond where?
Virginia.
You're just making that up. You don't know. There's a lot of Richmonds in America.
John in Richmond, Brooklyn.
John in Richmond. We'll go with John from Richmond. We'll like it. Yeah, this is a new high.
62.14, Sadnoff. 62.14 and climbing. Even the S&P's up 40.
Yep, a lot of new highs. A lot of new highs.
Now it's closest even if you go over, right? So if it was 62,
of course.
62.14, it was 62.14. Joe and John and Ben, who didn't learn their lesson, would all be splitting it, correct?
Yeah, this is not The Price is Right. You can't go over. Isn't there one of those stupid games where you couldn't go over?
Yeah, I think it's The Price is Right.
I know, but that made no sense to me. Like, why would you do that? Like, what? Closest is closest. What does it mean you can't go over? Like, it didn't make any sense.
Play by the rules, Sadnov. Don't hurt the player. Don't hate the player. Hate the game. What can I tell you?
Well, we got people from all over here, so it's going to be a fun one.
62.13 now, Sadnov down tick. Even the S&P's up 39.50.
I really thought after yesterday's rally that the last move of the day today would be a little bit of a sell-off. Now,
can you do a newsletter that we can fade?
I should.
That would be
so.
Pretty
Let me
good.
ask you this. Let me ask you this question.
Sure.
Is this the Batista blow-off you've been looking for?
Yeah, it's 100 handles over the Batista blow-off I was looking for.
I know, but is this the? But no. I don't mean the price. I just mean, is this the tape action? Yeah,
this is the end of the quarter. You could put a fork in him here. Yeah, that's right, Sadnoff.
Hold on. Let me load up I gotta load up my sales.
You waited as long as you could. You got it. Sell any rally tomorrow. You can mark my words.
I think you can sell a rally tomorrow, right? I agree with you. 62, where are we? 62.10
62.10 now, Sadnoff down ticking a little bit. Even the S&P's up 35 and change.
Oh, there's a lot of 62.10s on the board here too. Robin
back
from
down
Boca
to
Raton.
James and Robin. That's correct. What's the next? What's one below this one, Beth? How many 10s we got? We got two more. Australia and Oklahoma. Aditi and Hunter.
Moscow,
6208 now, Sadnoff. We're getting near Moscow, not Russia, Pennsylvania. Arnold.
Then we got our local boy Gary right here in North Aurora, Illinois. You can drive.
Come on, Illinois. Come on, win one.
You can drive the check over to him.
save you the postage.
Hand delivered by the bat. All right.
It's 108.19 right now. Still 108.19. Arnold looking good. You still got 3.5 minutes though.
It's always so much fun. Let's go. Let's bring on the Rat Pack.
Sure. You've got them all, Sadnoff.
Gentlemen.
Hello, boys.
Hello.
We got Ilya, Chris, and Dylan. We're playing our end of the quarter game, boys. You know, this is where we give away our money.
The best kind of game.
Whoa. What's with this? What's with this hour bullshit? It's your money.
Who are we giving it to?
Well, since you guys came on the screen, I can't see it anymore.
I have it. Hold on.
Instead of an anonymous donor, it's anonymous recipients.
Yeah.
Beth, I can't see it anymore, Beth. You took it off my screen.
We're 6207, Sadnoff. We're 6208 and a half. So we're back to Moscow, Pennsylvania, Arnold.
Yeah, leave this view, Beth. Yeah, because this is the one that's fun for everybody.
Screw those other guys. They'll just be voices in the void.
Yeah, well, we don't need to see their faces,
Of course not.
All right. Do we sell them here, Mr. Batista, on the close?
I just told you. Yeah. You can sell any rally going into tonight, tomorrow, whenever you want. Pick your poison.
Dylan, can we sell any rally?
Of course. I mean, it's the only option you've got is to sell a rally at this point. I mean, what if everybody lost their mind? I was talking to some investment banker last week who was making the argument that the stock market should be up more, that the reason that the Trump effect is not that the market doesn't care about Trump, but that the market would be up much more if it wasn't for Trump. And so it just sort of spoke to me the fact that really nobody knows anything. And so you might as well sell the rally because what's the difference?
Well, I just sold.
I can't believe these 150 days have such a bearing on this market. That's hundreds of years
old. It could be
old.
one day, pal. But when you got a policy fruit bird in the room running the fruit stick on everybody, I mean.
All right. Before you go into your first stick,
you could ruin I don't want to say the bad word, but you can ruin one of those dreams, Dylan. We're at all-time highs. We got
Omaha policy fruit bird. By the way, that's a technical term.
Policy fruit bird. I do like it.
Is it me or is it?
And by the way, I just want to go on record. I was able to sell them at 20. I forgot already. At 23.
You did sell them at 23.
But I missed
you
the
did.
ES.
NASDAQ futures.
I missed the ES up 40. Right now, the SPX is, let's see, what do we got left? We got 1 minute left.
6207, Sosnoff. We're back to Shannon.
Beth, can you go down one page? Take it down a page. Perfect. 6207. We're at Gary. Ooh, Gary from North Aurora, Illinois. You're right there, Gary. Oh, even below that. Edmund.
No.
I don't know.
6207.41, Sosnoff. Right now, you're going to have to split the baby between Gary and Edmund.
I like Betty here from Santa Rosa, California.
Oh, Betty, he just put the kibosh on you. 6204.81.
6205 is going to be the winner. Jeremy.
Leavenworth, Washington? What's
Leavenworth? Isn't that where your dad was in prison? I mean, it's something. Leavenworth. I mean,
he pops up in the most unusual places.
Is this Tony's dad? It could be.
6204.88. Sound off. 6204.88.
I think 6205 from Leavenworth, Washington.
6204.94. Sound off. 6294.
I think this is 6205. Jeremy, you missed it by 6 cents.
You stink, Jeremy.
5 cents now. 6 cents. 6 cents. You know, that's so ridiculous how close that is. I think it's Jeremy.
I think you are correct. 6204.94. Haven't seen it move in the last minute or so. Sound off. I think. Betty, I told you he was going to put the kibosh on you. I told you, everybody took all their chips off of Betty. As soon as Sadnov said, I think Betty has this, we all knew that Jeremy was a winner.
I mean, that's
West Coast, though.
That's an incredible move. What are you thinking here, Mr. Batty? You're going to declare a winner pretty soon? Let's bring the boys back.
We have ourselves a winner. It hasn't moved, Sadnov. You're all good.
You think so?
Yeah.
6204.94 means that Betty missed. Not Betty. That Jeremy missed it by 6 cents.
Yep. And Betty got kiboshed by you. Yes.
I didn't mean. I'm so sorry, Betty. I really didn't mean it. I felt I was rooting for you. But Jeremy, nice job, man. 6 cents off. Beautiful. All right, let's bring the boys back on for a sec here. Hey. So Chris,
we're like the side in it. You do whatever you want and leave us here like a mushroom, and like the peanut gallery. You're like, where's the boys? You got a few. What do they think? You know, Vecchio hasn't said a word since I showed up.
Hold on, we're gonna try something, Dylan, because I learned something last week. Chris, is this the blow off top that we've been waiting for?
Part of me thinks so, if only because as we ticked into new highs, we've started to see volatility perk up a little bit. It's almost like call buying is driving some increase in vol, maybe.
50 handles on that bet.
Yeah, on the back call. Yes, you're welcome.
Hold on, Chris. Sorry, say that again.
It maybe feels like it, but who's going to bet against the month of July? 10 for the last 10. It's green, baby.
Dylan, can you translate that into Italian?
I mean, listen, it's not going to be good. That's all you need to know.
I mean, I kind of like.
And they would say some Omaha words. Which can I swear in Italian? Or is that also? No.
I was never more impressed than listening to Dylan order food in Italian. I mean, honestly, Tony, I think you would have. I think
Pizza,
you would have.
Spaghetti.
Oh no!
It's not like that, pal.
No. This man is a professional. This man is a professional.
You get me in any restaurant, any grocery store, or any taxi. Master of Italian. Sports money and women. I got nothing. So I got some major black holes in my Italian, but I'm good in the restaurant. So at least I'm eating.
All right. Well, we're gonna.
One might argue that's the most important thing.
Tony, no change, right?
No change, my friend.
Jeremy from Leavenworth, Washington is going to be the winner.
It moved
here.
a penny. It moved to 95. 6204.95.
So he's off by a nickel. God, he stinks.
Nickels, 5 cents. Yeah.
Anyway, all right, boys, it's all your show for the rest of the night, and we'll see you guys tomorrow.
Thank you for bringing home Sosnov. Not. We'll take a quick 90-second break. Overtime next. Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, $4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Success is a combination of lots of non-correlated or lightly correlated underlyings to reduce risk.
It's better for your investments to trade volatility than it is to own S&P index funds at Vanguard. That's what you're saying.
I can't sleep at night as a passive investor.
Why not?
Because I think the risk is too great. Here I am, I'm a derivatives trader. I have hundreds, if not thousands of positions on, and I sleep fine because I know what I've done. What we do, it's a mathematical equation. What asset other than fear is mean reverting? And it requires no additional capital to play both sides of the market, then why would you even be directional in the first place?
The problem with what you're saying is it makes a little too much sense.
Yeah, it's logical.
And so it raises a lot of
scares the crap
skepticism because it makes a little too much sense.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Stocks hit new all-time highs as we close out the quarter, the first half of the year. What happens next? It's Monday, June 30th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. Dylan Radigan is back in Milan, here to take you through the rest of this hour. Futures market closes at 5 p.m. Eastern, 4 Central Time. If you're joining us on tastylive.com on the platform, thank you for joining us. Of course, you should come over to YouTube. Tell us what you're trading, what you think of today, this quarter, this year so far. It's certainly been a first half to remember. 3.5 more years left of this, guys. Maybe 4 more years thereafter of a third Trump presidency or Vance 1.0, but let's not get too far ahead of ourselves. We close out the quarter with an all-time high here in the NASDAQ. We close out the quarter with, relatively speaking, new highs here in the S&P 500. Not quite all-time highs in the ES U5 contract. But nevertheless, bonds are trading a little bit weaker in terms of yields today. Prices are higher. We ultimately see gold have a fairly decent session, closing up closer to 1%. Natural gas gets smoked. The dollar is off a bit here versus its counterparts following those yields. I suppose that's normal. Dylan, in the green room prior to starting, you were mentioning that it's been a few stressful weeks, but volatility is low and stocks are at all-time high. You know, what do we have to be worried about?
Yeah, but you're not launching a European luxury brand on the side.
How do you know?
Well, I didn't see it in Paris last
Okay. All right.
I slept in 77 days. No, I'm kidding. My stress is not market related. The market is keeping me calm. The nice thing about that, if the market was behaving like a lunatic, then I'm not sure I would have made it through the whole situation. Thank God the stock market is indifferent. If anything, it is. Here's what I think. I think the dollar is where it is. I think that if you actually look at the stock market returns on a dollar adjusted basis, the stock market is nowhere. What's happening is you're seeing the entire country of America marked down substantially, and the stock market returns are an illusion. It's a rising index inside of a shrinking currency. Thanks for nothing. How about that?
That's one way to.
Dollar has
to put
certainly
it.
been shellacked since
Not
the
to
beginning
not
of
to
the
be
year.
bitter, but I mean, when the dollar's in as much as it is, I mean, what's a dollar adjusted return on the index? Probably nothing. Basically, we're trading in our currency for the illusion of prosperity. And I think it's an absurdity and an outrage and an indignity, and I don't like it.
You did mention, though, at the end of last call there that you were talking with a banker last week who said that were it not for Trump, the markets would be trading higher than where they are now. How much of that is a guiding principle, you think, for how markets have behaved in recent weeks? We have his one big beautiful bill. We have all this tariff talk in recent days. Are we still just checked out to lunch about what's coming out of D.C.?
I don't know. I mean, on the one hand, there's the whole thing where Trump never does what he says, so you can just got to discount it. But on the other hand, a piece of legislation like the one that's flying around is more than Donald Trump, and that something's going to get passed. What it looks like.
Here's the amazing thing: stocks are up since the beginning of the year. ES futures up 5.65%. The dollar is down 9.5%. So I'm just taking an active continuous contract view. So expect a little fuzz around that 5.6, 5.7 number, but the dollar is down more than S&P 500 futures are up so far for the year.
Yeah, which means if you're a foreign investor, right, you're let's say I'm in Europe or the UK, I decide that I want to get long the S&P 500 at the start of the year. So I have to take my British pounds, my euros, I convert them into US dollars. I'm now buying the dollar-denominated S&P 500. So the S&P 500 is up 5% this year so far. I now want to, at the halfway mark, convert my dollar-denominated S&P 500 back into my home currency. And so I take my 5.6% gain and I convert it back into the euro. And now the euro is 11% more expensive. And so net accounting for exchange rate movements, I've lost money as a foreign investor holding U.S. equities in the first half of the year.
It's also how I've made money this year. Is my sins shorting the stock market have been overwhelmed by being short the dollar as well, and that one's moved more.
But that's interesting. So if your dollar short's paid. Obviously.
Yes, very much so.
Your equity short has not paid.
Obviously. Not consistently. I mean, it paid from February to April and then not.
Sure, but if you net your equity losses against your dollar gains, how does it net out, plus or minus?
I'm up. I'm up about 11% on the year.
And is the position sizing similar in both cases? In other words, is the dollar down more than the equities are up?
Mm-hmm.
Yes.
So I rest my case. What are we doing here? The whole thing's in contraction. This is a joke. It's an illusion. It's smoke and mirrors.
Maybe smoke and mirrors that are possible. You mentioned that this thing potentially is getting overcooked here. We are more than 3% above our 1 month moving average in the S&P 500 right now, which is an important consideration that has been consistent with tops having been carved out, at least in the short term. If not a brief pause in the rally for things to settle down. You could make the argument that we are getting long in the tooth. It's a 10.9 IVR. But, I think it's a good time to also check in on what's worked, what hasn't worked. Dylan, I think it was obvious now in hindsight that the call for looking for markets just to kind of squeeze higher into the end of the quarter, people chasing the market rally from mid-May onward, that was a good one. What was also a good one that you weren't here for last week, which I'm curious about your take on all of this, because the first thing I thought of when I saw the U.S. was bombing Iran was, I wonder what Dylan's going to do with oil here.
I shorted it. I mean, that's the best one of all time. Look at that thing. Oh my God. That was unbelievable. It's the only thing that's worked for me.
It was down almost 12% last week.
If it wasn't for that oil trade, I'd be in the streets.
Okay. Right. The European luxury brand collapses because you don't get.
Listen, that thing. That's a cost. There's no revenue there yet, pal. That's overhead. My equity trading is useless. Dollars, the oil's the only thing I got a handle on.
Okay, but I want to like go through that a little bit because we did miss you last week and the week prior when this all started kicking off in the middle of June.
I was here the week prior.
Yeah, well, I asked you, should we short oil yet? And you said, no, wait a few days. And that was on June 12th. And we get through this for a few days. And even going into that weekend, you said it's almost time. So when you're thinking about shorting it, you had to ride out that Sunday open.
Right. But when you saw the open on Monday, when nothing happened, I was at the event with Sosnoff here in Milan, and we were expecting lock limit 50 ways, war, all the things, and nothing.
Has your theory of geopolitics survived another episode? Is this something that you will forever go back to the well to?
I would say at the highest level that this is the biggest test in the history of my theory. I mean, this is active, direct military intervention by American B-2s in Iran. I mean, that's as hot as it gets, and still nothing. Unbelievable.
Elliot, should we continue to,
I'm not complaining.
No, of course not. Right. We're the kind of people who ride trade ideas into the ground until they stop working. And
I'm saying I'm not even complaining. I'm glad for the people. Thank God. I thought that thing was going to free. It's good as a trade, but also the reason the trade works is the war never happens. Thank God.
Well, you always got to bet against World War III, right? So
that's right. The fundamental premise.
Ilya, in the second half of the year, if we have geopolitical episodes like we have seen here in recent weeks, are we going to continue to do the WWRD, what would Radigan do approach to oil and wait for a few days and then fade it?
I mean, it certainly seems like that's the thing to do. It's just very important to watch the price action because obviously the markets did react to this. You do get to a point where the markets go, okay, well, fool me once, shame on you, fool me twice. The point is you can't fool me again. This was not that. Obviously the market ran up and ran up hard. I was short oil under 64, then we broke that range, thankfully, before the real holy moly kicked off. And so I was able to get out just on the price action alone. And then you and I sold it at the beginning of last week. We were just talking about this on Futures Power Hour earlier today. A week ago from today, you and I both got short. Both short oil, short vol in oil. And it worked.
Mine was short vol. I went
splendidly.
directionally neutral with the short iron condor and closed out existing short deltas. Yeah, Dylan,
I went short vol. I went short directionally. I mean, I was selling calls.
It worked out well.
Yeah, it did.
Yeah, Dylan, I think this is one of the ideas that has worked out. We've been riding this train, and we talk about the compression cycle of how when volatility creeps up into these markets, the S&P has had a shorter and shorter window of attention. April 24, really, you can actually go back to like October 23, but that takes a few weeks to work out. And you get to April 24, and it's about a month from the market to go from low, from high to low to back to the highs. And then October 24, it's about 6 days. And when this pops off in June, it's about a day for stocks to recover where they were. But oil, it takes 3 to 5 days for this to wash through the system before it seems like it's appropriate to begin laying in those short, the short call exposure. I think in the second half of the year, given what we've heard from, if we believe the U.S., Israeli, Iranian officials, it's all propaganda to a certain extent. But if you believe what's going on in that realm, you can't say that we're not going to bomb them again. And so if we find ourselves going through the same motions, right, what have we seen in recent months? Diego Garcia, the island in the Indian Ocean, not for the tariff reasons, but for the fact that it's a military base where we keep a bunch of B-2 bombers and long-range military assets. When we see these carrier strike groups moving into the region and oil vol is starting to puff up, just don't try to fade it right away. I think that's a lesson we've learned. You have to take it seriously, let it run its course. And then, dare I say, it also helps to watch some of the foreign news. Dylan, we were poking fun at the Ayatollah last week, who still has yet to respond to any of our direct messages. Oh, and I would be heartened to let you know, Dylan, as you were not here last week, several people have actually, in fact, now reached out to share the fact that they've been DMing the Ayatollah as well. Team America.
Really?
Yeah, it's nice. Yeah, solidarity here for what we're trying to accomplish. But what we see through all of this is ultimately, like last week on Iranian State TV, they were showing up pictures of the Statue of Liberty being demolished. And then they did a reenactment of all these Lego pieces attacking each other. to say that the war was won. And like when you see that the Iranian state television declares victory over something, it means that they're trying to end whatever's happening. So you get that, you get the collapse in the oil vol. Keep it in your pocket for next time we see geopolitics go nuts. Dylan, I'm curious as we think about the first half of the year as well. We've had this whole craziness with rates, with Trump talking about replacing Powell, with this, with that, the other thing. As we make our way into the second half of the year, what are you worried about most? What do you care about most?
Dollar.
Is that still the U.S. dollar?
I mean, obviously, it's supposed to be the dominant currency on the earth, and it's not behaving like it because it's been attacked. And so you're in this sort of dollar attack situation. I think that the biggest risk is a weaker dollar for the rest of the year. I don't know if it's the biggest risk, but I think it's the biggest secular shift in years. Because I think AI is off to the races beautifully. I think transportation technology is about to go full crazy. I think it's really going to be big. And I think we haven't even really kicked in on so I would say the one thing I'm most optimistic for is transportation technology. The thing I'm most worried about is the dollar. And the thing that I'm most perplexed about is the market's relationship with the Trump tax policy.
Ilya, what's your take here on the risk? Is it the dollar the biggest risk for the second half of the year, or are we still waiting on what the Fed's going to do? You know, just draw a number out of the box in terms of concerns out of DC. Is it DC or is it something else?
I think you're getting to a place where economic growth has to start to matter because you're getting through all manner of headlines. You're shrugging them off for the most part. The weaker dollar is certainly a thing, but it's not weakening in any kind of way that would make you think, oh no, this is the collapse of civilization here or anything of the sort. We flirted with that idea, certainly, in the sort of Liberation Day shenanigans where the bonds were moving like bonds don't move. We can see it on the screen here. The dollar was moving in a untoward way, obviously, against that backdrop. It's not surprising, really, that the dollar is down. It might be a little overcooked here at this point. We might have a little bit of a correction. I'm still bearish, but I'm not actually exposed on that side anymore. Now I'm slightly long dollars against the British pound, just because that one doesn't seem to want to move like all the others. The dollar is down again, not negligibly, let's say, against the euro, against the franc, against the Aussie, against the Kiwi, against the Canadian dollar. You go down the list, but the British pound for some reason can't rally. So I'm short it because it seems to be weak-kneed here for whatever reason. I think the dollar is a little overcooked on the downside. We'll see. But for me, the biggest thing is forget everything else. The bond market is telling you that rates need to be lower. Break-even rates, that is, inflation expectations in the bond market, are down. The Fed funds futures structure, as a consequence of that, is telling you the Fed is lining up for 60 basis points in cuts this year and next, which is a lot more than what the Fed itself is saying. As of today, the markets are at 125 basis points in cuts between now and the end of next year. And lest you think, and we mentioned this on Futures Power Hour, lest you think this is all this chatter around we're going to have a new Fed chair in the second half of next year, and that's why, no. Because the cuts are front-loaded to the back end of this year and the first half of next year, with Powell still there. So the market is very clearly saying the Fed is going to have to cut more than the Fed is saying by a good bit, by 50 basis points, more than what the SEP said just 2 weeks ago. So this is a big disparity. This is the market saying you have a growth scare on your hands and you're asleep at the wheel. You won't cut, whereas you should. And maybe you don't cut for political reasons because the president is goading you and you want to look like you're still in charge, which is the right thing to do. Tactically, perhaps, the Fed's credibility is incredibly important to everything it does. The president might consider that the more he goads Powell, the less likely it is that he's going to get what he wants, which is rate cuts. But at the same time, the market is screaming at the Fed that, in fact, cutting rates is the thing to be doing. And somehow this disparity is going to resolve itself. So I'm watching economic data very closely. Obviously, we have ISMs this week. We have NFP this week. There's a lot of big data. And Powell is speaking at the ECB forum in Sintra. Now, is he going to say anything materially different than we heard in the testimony last week and from the FOMC press conference 2 weeks ago? No. But what a contrast it would be if the data tells him you should have been cutting and you better be going in July.
Second half of the year, rate cut odds, they are bumping up a little bit, but it's really not for this year where the action's at. It's for the end of next year. And this is the third highest close in year-end 2026 rate cut odds that we've seen since the beginning of October of last year, right? Rate cut odds have been higher intraday, but this is the third highest close that we've seen in 2025 for year-end 2026 rate cut odds. So the market's starting to get a little bit worried about something.
Just for fun, by the way, take a look at SR3M6 so that you can see this is not a Powell thing. This is the first half of the year here through June of next year.
Mm-hmm.
This is not linked to changing a Fed chair mid next year. This is not the market saying, oh, we'll get a Kevin Warsh or a David Malpass in there by the second half of the year, and then the cutting comes. Nope.
No, the market's beginning to say that the Fed is going to act organically prior to Powell leaving his position. Yes. But Dylan, I can't help but think this is just a ton of noise. Trump's obviously being very vocal about this. He's been tweeting about it. He sent him a letter today, an autographed picture to Powell. Do we care, knowing that Trump's actually not going to fire Powell? Should we just ignore this and stop talking about it?
Obviously.
Oh.
Yes. I mean, the only thing that Trump may actually do is this piece of legislation, because he's got buy-in from the Congress and because everybody has the interest in the wacky ass tax cuts. But some of these other things from the executive side, I think that there's a lot of bark and not a lot of bite. When it comes to tax cuts, there's a lot of consistency out there.
What's the consistency?
The Republican Party, when they come into power, cuts taxes for the rich.
Do you have a particular feeling on this tax bill that's making its way through DC right now?
I mean, I don't think it is in the interest of conservative financial management. How about that? I mean, I think that the idea that Republicans are conservative as they tee up $3 trillion deficits.
Well, in fairness, we're cutting taxes for coal and increasing taxes on solar and wind. So if you dislike clean water and clean air, this bill's got something for you.
I agree with that.
I don't think, does the market care about this, Ilya? This is why this whole tariff talk, we focused on Futures Power Hour today about this all being noise. Where's the signal? Because are we really going to get the tariffs extended as Trump's tax bill is about to be signed into law? Will the administration really risk the messaging that the stock market's crashing right as the tax bill signed? Because it's so easy to say that the market's crashing because of the tax bill. And if they go, no, it's not the tax bill, it's the market reacting to the tariffs, then you go, okay, so the tariffs are bad? And they're like, no. It's not exactly a story to sell politically, right? I'm taking the under on July getting off to a rocky start because I just don't think that they're going to do much of anything that, at least on the tariff front, to upset the apple cart right now. While you have, look at industrials, XLI, industrials sitting at a fresh all-time closing high here. Same thing for XLF financials. You can make the case if we go over to something like XLK, technology, a new closing high. Banks, industrials, tech. That is still early cycle kind of bull market behavior, which sounds so ridiculous as we close at all-time highs here today. But the breadth is good, Ilya. Why can't this thing run for another few weeks before it comes crashing all down?
I mean, it can. Nothing says that it can't necessarily. But I would take a step back and go, why do we assume that the president cares about any kind of electoral calculus, considering in any kind of a realistic sense?
Because of what he said yesterday. Did you see what he tweeted out yesterday?
Sure. Realistic sense.
He said, Trump said, for all cost-cutting Republicans, of which I am one, remember, you still have to get reelected, which kind of like portends the political character, which is if you pass a really aggressive cost-cutting bill, which a lot of Republicans want, and Trump says he wants but not doing, then you have to go back now in district in late 25 and early 26, running up into the 2026 midterms, telling your constituents that you just closed down the hospitals.
But this is exactly it. Why does the president care? The legislature cares. But why does the president care? And
Trump
this
does
is
not
to
want to have a back half of his second term with a Democratic Congress investigating him, because we know that's what's going to. Dylan, if Democrats take back the House,
this goes to the
again?
tariff conversation.
Yeah.
Just last week, and Canada has off-ramped this, kudos to them, but just last week, in the midst of all of this, the president moved to blow up negotiations on trade with Canada. And he did it because of this this digital services tax that was going to go into effect. Now, Canada, of course, has scrapped it since. And now, apparently, we're back to negotiating with Canada. But my point here is the president is showing us, in his mind, he's going to do what he's doing. It's up to legislators to fall in line. So I'm not sure that we're necessarily not going to have anything happen with the July 9th deadline, or more importantly, I would think the August 12th deadline with China, because if the president doesn't like the vibe, he's going to do what he's going to do.
Dylan, it sounds like they're running it hot. It sounds like they're just going to keep spending the money, tax cuts for the wealthiest. It's going to help people who are the kind of people who gamble in the market, invest in the market, trade in the market, whatever you want to call their market behavior. We've seen the meme stock activity in years past, which I don't think you could say is tied to anything or anyone's fundamentals, right? There's no strategy there. It's simply just finding a shiny object and bidding it higher. I would consider that less trading or investing and more gambling for what it's worth. But if they're going to run it hot, why shouldn't we trade it hot? Why shouldn't we just be levered silly in things like Bitcoin and gold and anti-dollar assets?
We probably should. We probably should. I mean, the last time I went through this, I was wrong 10 ways, because I was like, this is because I was criticizing a policy as opposed to accepting reality. And I think you're probably right.
I mean, the question is, running it hot would necessitate that it is hot. But the level of economic growth has slowed. We are already not at the place where we were at the second half of last year, by any stretch. Right? Name an indicator. So,
sure, but if we pass
running it hot would necessitate having a hot economy.
But if we increase deficits by like $300 billion a year, that government deficit becomes a private sector surplus. Right? Doesn't that help cushion the economy from a significant pullback with all this new spending going on?
We're going to have to see. Because it's not like we've had a major retrenchment in spending so far. This entire Doge idea has not cut any meaningful amount of government out.
Doge was never about cutting spending. It was a power grab. It was a power grab.
Well, so this is the thing. Why are we slower now? Is it because the government is less expansionary? No. So we're already running the part of the government that we were going to run as hot as we're running it, this monstrosity of a bill, it's long, it's big, whatever you think about it, good or bad, its impact is spread out over a decade and some change. This isn't like all happening right instantly now. So the question is, okay, how much new demand do you add immediately to 2025 and 2026? And does that change the market's calculus on growth? Because the market is telling us the Fed's wrong, it should be cutting, and it's because the economy is slowing. So is that going to change the calculus for the next 18 months? I don't know.
Dylan, Bitcoin still feels like it's underloved here. I know it's.
I agree. I agree with that. And I hate Bitcoin, but I think that as a trading thing, it's probably a very good opportunity to make some money.
Ilya, forget the ticker here because I know you're not a big fan of crypto, but if you saw this in a textbook, would you think this is bullish or bearish?
I mean, time will tell. Because in pure technical terms, what this is either the rounding of a top or a continuation, flag, pennant, something or other. And you don't know. So far, you've had an attempt to break this would-be double top, and you failed. So upside break, failure, second upside break, failure. Now we're maybe making a lower high. Maybe at the last kind of gasp of this indecision before we get a really convincing break higher. With the dollar as weak as it is already, with gold looking kind of long in the tooth as a kind of proxy for anti-dollar sentiment, this might have a hard time getting off the ground. This might be toppier than it is, more toppy than it is a continuation pattern, but it is a textbook continuation pattern if it plays out that way. We just have to see.
Could you squint and maybe see what I'm seeing here, guys?
No, you can see the cup, you can see the handle, sure. The question is, do you get the confirmation? You need the breakout.
Well, this is, I guess in this stage, right? Resume buying from the bottom into the right side of the cup. That represents this portion here, which means 7 stock once again tests its highs, 8 into another pullback, testing the highs into another pullback. This feels pretty darn textbook to me. Cup and handle. There's also the whole, maybe this is a left shoulder head, right shoulder. Maybe this is just simply a continuation. But I'm trying to slice this up a number of different ways right now for Bitcoin. And I just see a world in which we have this gigantic deficit and debt coming. It's a backdrop in which people are questioning the role of the dollar and maybe even the fiat system in the most considerable way, not just the US dollar, just fiat generally, for the first time since 1971, outside of the brief episode of the euro, right, and the Eurozone debt crisis, there really hasn't been a check or question about fiat's long-term viability. And the timing just feels right. The fact that this is so underloved, there's no volatility pumped into this. No one's out there posting videos of themselves on yachts in Miami again, or renting Lamborghinis and claiming it's their own car. Like, you don't see those videos anymore.
That might be for a good reason.
Yeah, it's because no one's participating right now. Everyone got out back in January and they got their exit liquidity. And then the people who bought above 100K got bled out over a few months. And then the whales stepped back in again down near, 80K in Bitcoin. But I would think that we've talked about this in recent weeks about going something long in that 75 neighborhood. Dylan, I think the time is right now. And we could do something in the neighborhood of like a 20% probability of profit, risking $7,200 or $720 to make $9,280. Looking for a vol expansion, perhaps a breakout, maybe a tail wag the dog kind of thing, where because the market's breaking out, people are buying deeper out of the money calls, so it pushes up price. But assets like real estate, gold, silver, Bitcoin, I don't know. You talk about the dollar being down so bad in the first half of the year. What's the reason why it would stop falling at this point in time? I just don't know.
I can't find it. I can't
maybe Chat
find
has.
it.
Maybe Chat can tell us. I just don't have the answer right now. And then Trump's comments this weekend about the Fed, not being able to lower rates, so he doesn't want the Treasury to issue any debt with maturities beyond 9 months. That could really hurt the dollar, Ilya. We're just going to deprive the world of greenbacks. Like, sure, but on an exchange rate basis, what is it going to do?
I mean, I don't think we have anything here that hasn't been thoroughly priced into the dollar for the past 6 months. I think and I'm bearish, so I've been bearish. I think the question is what's going to make the dollar go down incrementally from where it is currently. That's the larger question. If you ask the euro, nothing. It's rallying. If you ask the Aussie, nothing. It's rallying. But if you ask the pound, unclear, because it isn't. And so, from my perspective, you have to look at the price action here now. Because all of these larger narratives, it's not like they're new. So they're baked into various extent in various assets. And the question in my mind isn't why shouldn't the dollar be down? It is down. It's down a lot. The question is, why is it going to keep going down from here without a correction? And I think that's increasingly a more difficult argument to make. At least for now, at least tactically. I fully expect to be short dollars again this year, and in size. Your sound's gone.
Sorry, I was just looking at the CBOE's volatility report here as you're talking about all this. And, there's still perhaps a little bit more volatility to be squeezed out of these markets. This just popped up of interest, this particular slide here. We think about S&P 500 at the month implied volatility. It's not back to where it was prior to the February 21st growth scare starting up. The same thing can be said for the Russell and the NASDAQ. Maybe that's what we need to do, Elliot. We need a round trip on volatility. We need to kind of like wipe the slate clean. And then at that point, it becomes a new ballgame. Dylan, this is a holiday shortened week, though. Ilya talks of an environment where we're starting to see growth concerns percolate a little bit. And sure enough, we shared some stats and some charts today on Futures Power Hour showing how both hard dollar and cents data is starting to deteriorate alongside softer feelings, sentiment-based data. Do you have any strong feelings for the importance of this week's non-farm payrolls report? Could it creep up us on here and scare everyone that the Fed is behind the 8 ball? Or does economic data not matter in this brand new, brave world we find ourselves in?
No, it matters. I mean, if anything, I always have felt that the single most important number that will exist, does exist, whatever, is that number. So it always matters. There's never a situation where the jobs number doesn't matter. There's situations where the jobs number matters less because it's so pinned to expectations that it's baked in. But the thing with the jobs number is, of all the numbers out there, it is the one that is capable of swirling out both in one direction or the other. So the forecasting with that number has always struck me as less reliable than certain things. So I don't know how dialed in this week if it is this month, but I don't think you can ever dismiss it, and I don't think the holiday shortening is relevant to it. And I think that it's really the relative strength of the number, or at least the relative consistency of the number compared to expectations, that is the foundation upon which all of this fruit birdery goes on. The jobs number it's jobs and inflation are the two things that can call the whole thing to a halt in a hurry.
Ilya, you and I touched on this briefly, earlier, swallowing my tongue there. We see that 10-year yield is down below 4.25% now.
Mm-hmm.
Are we of the mindset, where does the jobs number leave the greatest impact in the coming days? I suppose I should be asking. Is it stocks? Is it bonds? Is it the dollar? It feels like rates, big picture. I mean, you can kind of see here, we're basically in the midst of a multi-year trading range right now for 10-year yield. I mean, do we care? What cares about this jobs report Friday?
I think we have to care. I think the disparity between what the market thinks is going to happen and what the Fed thinks is going to happen, I think demands that we care. Because here is a piece of data that can actually start to tell you either this side is right or that side's right. The Fed is worried clearly that they're going to let inflation out of the bag because these tariff impacts are coming. And obviously the 90-day delays on their implementation has obfuscated what the impact is going to be. So the White House is raging, but it's their doing that the Fed hasn't had the clarity that they need to make a call this way or that, because first they decide to roll out these tariffs that muddy the water, and then they decide to delay them for 90 days and muddy the water further. We're still not to the end of that delay period, and they're wondering why the Fed is wringing its hands and waiting. So the situation here, I think, to Dylan's point, is very much that of a fruit birding kind of approach to policy. So fruit birdery, as it were, which I think is a term we need to coin now and for all time.
Consider it properly minted. I mean, it's obviously fruit bird, and there's a lot of fruit birding going on.
That's right. That's right. And so, of course, you have to care about this data because the markets are telling you one thing. The Fed is telling you something else completely. Either the Fed is right and the markets are wrong. That's happened before. Or the Fed is going to get cajoled and pulled along. That's happened before. We just saw it last year. So let's see. But if you asked me what would be the more impactful thing, I would think it's actually numbers that are weak. If you get a miss, as you've tended to see on U.S. economic data over the past month relative to forecasts, if that's what this ends up being, then the markets are right. The Fed is off sides. And then you get an impact in the bonds, almost assuredly. You probably get an impact in the dollar. You probably get an impact in gold. The question is probably the most interesting in stocks because they are the most extreme and the most seemingly complacent relative to what's on the board. Like people have expected a lot of Fed rate cuts. Dollar is down, gold is up, bonds are starting to come off the lows. All of that makes sense in context. Stocks are at the highs for the year if you look at the continuous contracts. And then you go, okay, or frankly, even the September ones. Doesn't matter. S&P is the S&P ESU 5 is at its high for the year. So what happens if this is built on a premise of the Fed is going to let the recession happen and be late? Does that still make sense? Not to me. But
well, the Fed's always late.
Well, no, there's late, and then there's normal, which is a reactive central bank, late. And then there's late, right? The central bank is reactive, not proactive. That's every central bank. That's normal. So are they late or are they just reactive? And I think the markets are telling you they're late. That's why they have 125 basis points and the Fed has 75.
Do you think we're going to is that one surprise that we're going to have after the end of the summer, we're going to have a 50 basis point cut in September? The Fed's going to be so late they have to do what they did last year? Is that the world we're going in?
The question is, will the markets react the same? Last year, they said, oh, ho, 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 ho. We weren't saying all that. You did too much. When the Fed did 50 and said there's 50 more and 2 meetings, you do the math. So when the president, by the way, says that the Fed isn't cutting, they did cut by 100 basis points last year. So there is that. But nevertheless, they cut a lot. And when they did, make a move in September. The market said, that's too dovish. Hold on a second. And the markets adjusted immediately. To what? To higher yields and a stronger dollar. So this pause that we're watching right now, ostensibly, it fully got baked in last year. Because the market said, you're not going to do as much as you say, you're going to have to walk this back. But now the pendulum has swung the other way. Now the markets are more dovish than the Fed again. We saw this movie last year. Between mid-April and mid-September, when we had this identical setup, the dollar got shellacked, bonds rallied. Now, obviously, the dollar has already gotten shellacked, so maybe that move doesn't have much more in terms of legs, but the bonds are just getting started. And stocks look way offsides.
Dylan, I'm just so intrigued by that comment you said earlier. It's still rattling around my brain that if it weren't for Trump, the market would be higher, which, yeah, true, right? I've seen this really silly thing, and this just really grinds my gears of people saying like, oh, Trump was right when he said in April that, it was over and it was a good time to buy stocks. Yeah, because the guy who caused all the damage told us that he was done causing the damage. He didn't make some solid prediction about how this was all going to work out. He said everyone's going to be groveling for trade deals. We have one verbal agreement signed with a country that we have a surplus. Right? All of this has stopped. Like the market's back to where it is because Trump backed off of all of his things. It's not because he implemented a new policy. He pulled the gun away from our head. And we're cheering that like this, like, look what he did. Look at the markets now. The market's doing this in spite of him, not because of him. That said, there are some things that could make the market go higher, of course, that he's doing. Maybe some of we'll see what the final bill looks like, because it seems awfully generous if you are someone who plays with financial assets for a living, right? What does it do for the long term, though? We'll have to see. Guys, let's end this session with our biggest mistakes from the first half of the year. What were your worst trades? What did you not do correct? What do you wish you did differently? I suppose I'll start while you guys think about this, because I've thought about this a little bit. I have repeatedly said that when the leader of the world's economy, who has his hands on the levers of the economy, says something like it's a good time to buy, you should not think about anything else other than buy. And we know that because that's what happened in March 2009. 3 days after the S&P 500 bottom on March 6th, President Obama came out and he said, now's a pretty good time to buy stocks. And sure enough, the economic policies that come into place are all the things that inflate stock prices. President Trump said that in the first week of April. And while I wasn't long the stock market in any considerable form or fashion while we had that huge sell-off, I was pretty diligent about avoiding it, which I'm content with. I did not shut up and buy stocks to the degree that I should have. It took me a few weeks to come around to the idea that like really, okay, this is over and done and we need not worry. So I've been able to participate in the chase for the past 6 weeks or so, but I did not follow my own rule. Maybe that's for bias reasons. Maybe it's because whatever, right? But I have a rule that I always typically, and we've talked about this for years, Ilya, and I've said it here on air. When someone with their hands on the economic lever says, right, when Powell said it back in April 2020, guys, I'm going to throw the kitchen sink at this, don't worry. It was so easy for me, and this is why I'm so pissed about this. I've talked for so long about how it was so easy for me to just shut up and buy stocks in April 20, because psychologically, I was on paternity leave. I didn't have any active trading positions on while the market collapsed. So I get back to work and like, here's the Fed chair telling us to shut up and buy stocks. Easy peasy. No psychological damage. And now I see that I really, that did wear on me here this time around. And so I need to do a better job being diligent about letting my own biases get in the way and letting like the shell shock not set in for such a long period of time. So I'm glad that I didn't lose money during the downturn to any substantial degree. I wish I was a little bit more aggressive coming out of it because I broke my own rule. And I got to follow my own rules, because they usually are a rule for a reason. And they're not like guidelines and exceptions. They're rules. When people that control the money say buy, you got to buy. Ilya, what was your biggest mistake in the first half of this year?
I mean, I was having a really great time being short stocks and even being long them off the bottom, but clearly I got back short way too early. And thankfully I did it as I've been doing, with lots of duration, 60 days rather than 45, in a risk defined way that kept the losses very contained. But nevertheless, and it's a similar story to you, is I was looking for it a little too hard. I was looking for the turn too hard and not giving myself the kind of confirmation that I would normally allow myself to get. If you look at the S&P chart without knowing it's the S&P and without wanting to be short the S&P, the technical signals are not strong enough to get a short as quickly on the way back up as I did. This now makes sense where we are now. Not because there's a strong technical signal, but just because the risk reward is so amazing here. Vol is dirt cheap. You're at the high. It's the end of the quarter. Roll the dice. The risk reward's amazing. So that's one thing. But on the way up off the lows, there wasn't as good of a technical signal to get short as I would have normally demanded of myself, and I got in way too early. And thankfully, I didn't add a bunch of positions and attempt to fight the market. I just put it on, let it expire worthless, and that was that. But that significantly ate into my equities performance, which up until, let's call it mid-April going into May, was riding the waves pretty well.
Dylan, what's your biggest mistake from the first half of the year?
Anything related to stocks?
Anything?
Everything and anything related to stocks has been, I mean, not everything, but might as well be everything. I just really didn't think that the market would look past the Trumpian trumpery. And it did. And so that I was not anywhere near that rally coming out of April. And I also didn't think that the dollar would do so poorly. So between the dollar and equities, I've got to be quite irritated. If it wasn't for the oil flippity dip, I'd have real problems. But fortunately, the short World War III thing keeps me in business.
Short World War III is always the right side to take because, like Pascal's wager, you just work out the math. If you're wrong about there's no World War III, your counterparties are vaporized in the nuclear war, so you don't have to worry about paying them or topping off your margin. That's kind of a joke, but it's really not a joke. And that goes back to the 1960s. Before we end out the show,
as much of a joke as you might like.
No, it's no, that's like a legitimate trading strategy of mine. When World War III pops up, I fade it. Here is from the Congressional Budget Office and the Committee for a Responsible Federal Budget what happens if the Trump tax law goes into effect. One of the reasons why I say we're going to run it hot. The current law as written has a little bit of a fiscal cliff here, where at the end of 2025, the Trump tax cuts from 2017 in the TCJA would become permanent. And that's why you see deficits fall, because there's an automatic tax hike that goes into effect. Okay, if the TCJA is not made permanent through Trump's One Big Beautiful Bill Act, or the OBA. Okay. The Senate's version of the bill, as written right now, increases deficits from where they are about 6.4% to, well, gearing up towards 7% over the next decade. The current law as written is 6.1%. If the Senate bill is made permanent, deficits go up to 7.8% over the next decade. So when I say run it hot, right, we're talking about increasing deficits as a percent of GDP net over the next 10 years. And it's not like there's any significant pullback whatsoever to get the federal budget and deficit and debt under control. So if you think that government spending is the problem, this probably doesn't work for you. If you think government spending is a problem, but not for assets that tend to inflate when government spending goes up, then maybe if you're a Bitcoin, gold, stocks, real estate kind of person, this looks just delightful. But we'll have much more to cover because overtime is out of time for today and this month and this quarter. But we'll be back tomorrow with the start of the new month, the new quarter, the second half of the year. Same time, same place, as always, 4 p.m. Eastern, 3 Central here on Tasty Live. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. Good luck trading. After a brief break, more Tasty Live. Ilya's back with macro money. See you there.
See you there, everybody.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Traders, start your platform. Tom Sosnoff and Tony Batista are hitting the road for their first ever live trading event, At Work by 11. It's unprecedented, unpredictable, and unlike any other financial event. Watch these masters make real trades in real time. Doors open at 8, the action starts at 9, and we'll have you back at work by 11. Sign up today at tastylive.com/events.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty 2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today. You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
What's something that traders tend to obsess over that you think doesn't really matter?
That's a hard one. I think, of course, it's different for everyone, different psychological mindsets. For me, it's I found myself getting ahead of myself, trying to manage too many trades at one time, and also trying to focus on your narrative, your strategy, and holding to your cards when things can turn against you. So kind of your conviction.
Honestly, it would have to be news. I would say, and this has been one of the things that I've sort of fine-tuned myself since I've been at Tasty. News is something that we all kind of look and pay attention to, but it doesn't always have to drive your opinions about trading. And I think the less that we allow that to happen, I think the more clear-headed we are, and then we just end up using mechanics.
People get a little too nervous about it.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Well, we are on the last day of this second quarter, and what a quarter it has been. Stock markets finishing the day with a little bit of further push, ending up at the very top of the starting line for the year here for the S&P 500. A quiet day, nevertheless. And a lot of questions swirling about what comes next as the second half of the year gets underway. We're going to look at the macro headwinds and maybe tailwinds too that are on the menu for this week. As we always do, this is Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we'll do is we'll take a look, as we usually start, with how the markets performed last week. You'll notice once you look at the breakdown there, it was a pretty one-sided sort of a situation. But once we get that done here, we'll take a look at what the markets actually did and why they did it. And that's not the table we're looking for. This is the major markets as they behaved last week. And not surprisingly here, sharp decline in yields, bringing a sharp rise in stocks. And certainly the 11.3% drop in crude oil does not hurt. That's sort of the main takeaway here. Not surprisingly, of course, that decline, that massive decline in crude oil, speaking to the situation in the Middle East and how that has worked out here. Obviously, there was a very legitimate concern that there was a significant sort of geopolitical disruption in the region as the U.S. moved to involve itself directly in the conflict between Israel and Iran. But since then, we've obviously taken a step back into a more contained sort of setting. And not surprisingly, once it became clear that both Tehran and Washington were looking to walk this thing down into a less acrimonious, or at least less explosive sort of setting, that's given us a significant come down on crude as worries about supply disruption there go away. Gold comes down 2.9%. The dollar weakens. We can see it here down against both the euro and the yen. We have a decline in yields that seems to suggest that maybe the Fed is going to have to do more easing despite their protestations. We'll get on that momentarily here. But stocks ultimately find reasons to like the canceling of a broader war in the Middle East and a pullback in borrowing costs. not surprisingly. And so the S&P and the NASDAQ here on the upside with formidable gains last week, very spirited, as a matter of fact. And we start this week in the same sort of tone. Shares higher, yields continuing to fall, crude oil now just idling, but gold finding a little bit of support, and the dollar kind of a hodgepodge, down mostly, but unable to make gains against the pound for what it's worth. And so it is with this backdrop that we begin this week, where despite shortened price action because of the U.S. Independence Day holiday, there is plenty of macro on the calendar and lots of reasons to be paying attention. We start in the euro area with Eurozone CPI numbers. They're expected to give us a slight wiggle higher to 2% from 1.9% in the prior month. And this perhaps is most interesting in terms of what it might mean for the ECB next year, because what it means for the ECB this year seems pretty well established. But if we look at the policy breakdown here, we can see the ECB on track to do one more rate cut this year, 27 basis points baked in here through the end of this year. But if we look at what's going on for next year, there are no more cuts on the menu. In fact, we're actually quietly inching a little bit into positive territory. And although it's only 5 basis points so far, it's not quite the rate hike scenario where it looked like maybe we were 50-50 on a rate hike back in March, when it looked like there was all this emphasis on the defense spending that the Eurozone is going to do next year to beef up NATO. We now have a little bit of a cool down here, but we're starting to see this perk up again. And indeed, looking at break-even rates in the euro area, these are German stand-in for region-wide numbers. And we can see here, although we're not where this spike occurred in March, this was all those spending plans being front and center, and things have cooled off since, we have sort of started to anchor on inflation expectations, and that's suggesting that maybe we're going to get to a place where the euro is better supported by a positive rates story. Now, what's maybe most interesting about this is we already got the German numbers earlier today. They tend to be a good precursor for region-wide CPI, and those numbers were a little bit weaker than expected. And that has certainly not prevented the euro from rallying up a storm. In today's session, the euro is up a pretty substantial 0.6%, putting it at the highest level since September 2021. So we're essentially talking about a 4-year high. So perhaps the market isn't prepared to beat down the euro just because immediate inflation is a bit on the low side. And that, interestingly, gives us some good backing. The German numbers came out with a 2% inflation rate for June versus 2.2 expected. The core coming out, or the harmonized version rather, coming out at 2 as well. So looking at the situation here relative to expectations for the overall, maybe this then comes out a little bit on the soft side, maybe steady at 1.9, maybe even a little bit softer. But the real question is, does this ultimately hold the euro back, or does it even still care? And maybe the answer is no. In any case, looking at the makeup of inflation, the most recent numbers have food near the top of the list, as well as energy. And that perhaps is one reason why the ECB is maybe not paying a terrible amount of attention to these numbers, because if in fact you started to shave off these readings, then you're left with sub target inflation. But of course, the ECB doesn't have much agency over global food and energy. And so maybe they're content to just stay on autopilot with what they are already intending, and then let next year's fiscal dynamics drive what they do next. Then, of course, the spotlight shifts back to the US and the Fed. And here, things are very interesting indeed, because, of course, we've opened up quite the disparity in the market's policy expectations and that of the Fed. Just 2 weeks ago, the Fed gave us an updated set of economic projections, the latest summary of economic projections released with the FOMC announcement. All of that followed last week by 2 long days of torturous testimony from Fed Chair Powell, first in the House of Representatives, then in the Senate. And the message in all of this communication was the Fed is in no hurry to do much of anything, because with an inflation rate at 2.4%, and a jobless rate at 4.2%, there seems no hurry to try to guess what tariffs are going to do. The Fed's expectations are that tariffs historically are a good guide for tariffs now, and tariffs historically, the Fed would argue, and evidence would support them, are bad for growth and tend to lead inflation higher. And it's the leading of inflation higher that the Fed is most concerned about, having so painstakingly been fighting inflation since 2021, 2022. So what the Fed is saying here is, look, we're not going to cut because the economy isn't screaming for us to be fighting inflation or fighting to boost employment. We know that the tariffs tend to have these influences. We're going to see what happens, because, of course, the impact of the tariffs has been muted by the White House's decision to pause them for 90 days so that we don't really have clarity. It already takes time for things to work their way into the overall economy. It's not instant by any stretch, but when you extrapolate by 90 days the actual impact of the policy, well, then you're going to have to wait longer. And the Fed would argue that they have all the time in the world based on how the economy is performing currently. The markets, on the other hand, are not clearly seeing things the same way. Whereas the Fed baked out 75 basis points between this year and the end of next, the markets are at almost 125, which means they are 50 basis points more dovish, give or take, than Fed officials. And not surprisingly, the question then becomes, well, why? Why is it that the markets think the Fed is going to be more dovish than the Fed is saying this year? 61 basis points is clearly greater than 50, which is what the Fed has, and is about 50-50 now, 11 basis points on a third rate cut this year. For next year, the Fed is at 25 basis points and the markets are at 63, which means, again, 2 cuts are priced in and we're about 50-50 on a third. So this is not about, as some have posited, the idea that the president wants to have a new Fed chair in the second half of next year. Powell's term expires in May, so perhaps, or at least the theory would go, the president is going to nominate someone else for that role, and that someone is going to be very dovish, and they're going to be cutting rates a bunch. Well, as cute as that is, if we look at the breakdown in Fed funds futures, we can see that actually rate cuts are front-loaded to the first half of next year, at least for next year's outlook. 40 basis points up front in the first 6 months of the year, and the remainder thereafter. So the markets are seemingly saying that there's some kind of an economic necessity for easing that the Fed is not appreciating. We can see that show up in the economic data. So looking at the outlook on data surprises, we can see this index from Citigroup that measures the way that data performs relative to forecasts. It is the most downbeat for the U.S. Now, we did have this errant spike last week around a very buoyant durable goods orders number, but that, of course, on further reflection, seems to be mostly smoke and mirrors and front-running of tariffs rather than actual demand. So at this point, it's difficult to make much hay of it. In any case, though, we can see that before that aberration, there is a downward slope to global economic data performance, which obviously isn't coming from emerging markets where things are holding steady, and is instead coming from the G10. And in the G10, it isn't coming from the Eurozone where things actually look pretty well anchored. So if it's coming from the G10 and not from Europe, where is it coming from? Well, obviously, here. So we can see that the U.S. economy, at least in terms of economic data performance relative to forecasts, is now a drag on global performance as a whole. We can likewise look at the GDP Now forecasting from the Atlanta Fed, and there are a couple things that stand out here. The first one is that the range on second quarter GDP growth expectations is shockingly wide, from 0 to almost 4%. So nobody really knows where growth is going. But more importantly, if we look at the trajectory for this GDP Now forecast, we can see that since late May, the data going into the bucket has been negative. The way that this nowcast works, and there's a little explanation right here, what we have is a model that takes in incoming economic data and is sometimes updated as often as every day. So what you have here then is a sort of running tally on the tone of the data going in the model. And you can see that the tone is increasingly negative over the past month, which of course lines up with what you see right here. Then, on top of all of this, there is of course the bond market, which, not surprisingly given where Fed funds futures are, is telling you that the Fed is wrong to feel ambiguous, that the market is in fact not ambiguous at all, that there isn't a concern about inflation expectations, and that the concern really ought to be about growth. We saw this in the beginning of the year, where the implementation of tariffs left the market so worried and so thoroughly concerned about the cyclical implications once business and consumer confidence surveys began to show that the tariff rollout was impacting them in a very negative way, that inflation expectations and stocks were falling in tandem. Stocks have obviously rebounded. Here we are back to the starting line on the S&P 500, as we mentioned earlier. But inflation expectations have not. The bond market still thinks inflation expectations are going to be just about right-sized relative to where they were near the lows in April. That obviously tells you that the market envisions some kind of disinflationary weakness in the business cycle. And of course, with all of these pieces put together, the weight of economic data this week ought to be relatively significant. First up, the ISM economic surveys, the manufacturing numbers due first. They're expected to show that the sector continues to contract, as ever these are done in terms like any other diffusion index PMIs, just like the S&P global numbers, where 50 is neutral, above 50 is growth, below 50 is contraction. The further you go above 50, the faster the growth. The further you go below 50, the faster the contraction. So the implications here are that we're going to have a further contraction in manufacturing. In fact, This would be the fourth consecutive month of contraction for the U.S. manufacturing sector, but at a slightly slower rate than in May. So up from 48.5 to 48.8. For services, the expectation is that is going to hold basically steady. 50.5 is basically neither growth nor contraction by very much. It's modestly positive, so I suppose it's a little bit growthier than the alternative. But it's basically standstill after a reading of 49.9 in the prior month, which was the first reading below that 50 mark since December of 2022. So quite sharp there. And you were at sort of nominally, episodically as a one-off below 50 in April 2024, but of course that very quickly gave way to positive readings. There was another episodic one in June at 48.8, but again, that gave way very, very quickly. So the question then becomes, was May one of these strange one-offs, or are we looking at a more structural slowing of the U.S. service sector, which is, of course, where most growth lives? Given that U.S. economic data has tended to surprise on the downside, as we've just seen, and the overall tone of the incoming numbers, the implication would be that the risk here is for a downside surprise. But even if you don't get one, the upshot here, since services is a much bigger part of the economy than manufacturing, is that when you take these together and you kind of mentally construct a composite PMI index, you figure about 2/3 services, 1/3 manufacturing is how you'd weigh these. So you'd end up with an economy basically at 50, an economy at standstill. And then a little bit earlier than we would normally on a Thursday instead of a Friday, we get U.S. jobs data. Here the expectation is you're going to come down to 110,000 jobs created from 139 in the prior month. And the jobless rate seen ticking up to 4.3%. Again, not very high by historical standards, but certainly a move in the wrong direction. And again, the expectation is that the risk in these numbers is of a downside surprise, and that the market is already screaming at the Fed about that risk, putting the Fed off sides and suggesting that the central bank is going to have to do a lot more easing than anticipated. If, in fact, these numbers end up endorsing the market view of policy, well, then we probably start to look higher for bonds. We start to wonder what the dollar is going to do and whether it really is done falling or whether it has a further leg lower in it as you get more of this view cemented as likelier than what the Fed is saying. Might get a bounce in gold. Then, of course, we'll see if stocks can manage to sustain this disparity. Or if, in fact, this starts to look more sentiment-driven, whereas this is where we ought to be closer aligned with economic reality, and if that means that stocks now have a vulnerability and might pull back. And that is Macro Money for today. As ever, we are here Monday through Thursday, although because of the holiday, we are not going to be here on Thursday. It's a Monday through Wednesday kind of week here. And that's right after Overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'll be on, as always, with Victor Jones for the Price of Truth on Tuesday this week. On with Victor again for First Call alongside Tom on Sundays. Writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back tomorrow. Happy trading.
You can get up to $4,000 when you open and fund a new account with tastytrade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new tastytrade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? tastytrade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Coming up on Bad Money with Jim Blamer. Blamer's hot stock tip of the day.
Trade ideas? Trade ideas? You're coming to me for trade ideas? I'll give you a trade idea. Trade me for tastytrade.com. Those guys are great. I love those guys.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. And with me today, Dan Cecilia and special guest Cole Kennelly from Valmex. No stranger to the show. Cole, good to have you back on. How are you doing, my friend?
Hey, Ryan. Hey, Dan. Great to be here. Excited to be back. Looking forward to talking today.
Absolutely. You're here. So, of course, we're going to talk crypto markets. We're going to talk crypto market volatility. If anybody has a question for Cole or for us, I suppose, get your ass over to YouTube, pop out the chat, and type something in there. If we have any questions, we'll take questions, I suppose. But happy Monday. Hope you guys had a good weekend. Cole, to kick things off, for anybody that didn't catch you guys on the show last time, you're the founder of Valmex. Can you talk a little bit about how you got here, maybe hit on your background for a second? And what is Valmex? I think what you guys are doing is awesome, but would love to hear it from you.
Thanks, Ryan. So I'm Cole. I'm the founder in Volmex. At Volmex, we build the leading Bitcoin, Ethereum, Solana implied volatility indices. So we have the leading vol index franchise in crypto. We have a number of different integrations with TradingView, CoinMarketCap, Bitfinex, GTrade, Gains, and have kind of achieved this ubiquity around this vol index standard in the crypto market. We also have a family of rates indices called the Volmex Prime Rate Index family, where we track different rates metrics across crypto market, like funding rates and on-chain lending and borrowing rates. So I've been following the U.S. equity options market my entire life. My dad has spent about 40 years working at a couple of different U.S. equity options exchanges. And so, I got into crypto a long time ago. I've been working in crypto startups for about 6.5 years. So I was an early employee at a staking company, which was acquired by Kraken in 2021. And so I'd worked there for a couple of years. And when I was there, I was trading, options and vol products in my PA. And I was really surprised that there was no sort of VIX standard. Around the same time, I was also experimenting a lot with DeFi. And so I kind of had this vision to build basically a DeFi version of the VIX for Bitcoin. And that's kind of the precipice for Volmex. So yeah, really excited about, where we're at today. We have a lot of different integrations in market, as mentioned. And, we're kind of at this inflection point around this Bitcoin volatility index and, achieving a real ubiquity and sort of omnipresence around it.
Awesome. And I think if anybody wants to check this out, we can throw it up here on the screen as well. We've got volmex.finance is the URL here. We've got your site up here. I don't know if there's anywhere you want us to bounce to on the platform, Cole, or anywhere you want us to go with the charts. Happy to pull those up. But maybe just to start off, when you look at what's going on in the market right now, you've got Bitcoin kind of flirting with all-time highs, has shown some resiliency here in the face of geopolitical risk, and clearly is well within the bull market. But volatility is at, last time I checked, a one-year low here, both realized and implied. What do you make of the lower volatility environment that we're in? What do you think is driving that? And then maybe what trade ideas or kind of opportunities do you see as a result of that low vol environment?
Yeah, so, it's a really interesting time in crypto. Bitcoin's hovering around 107, 108, around all-time highs. But we've sort of been a little bit range bound the last couple of weeks. And so I think that the advent of some of these Bitcoin strategy companies, Bitcoin treasury companies like Metaplanet, and several others, number of others, utilizing option strategies has taken a little bit of the juice out of the market. And so I think that has definitely played a role. MicroStrategy, Metaplanet, others utilizing various option structures, selling options has, sort of tapered vol down. I also think that the advent of IBIT options and the introduction of structured products in the U.S. Institutional market, I think, has definitely had an impact on vol as well. And so between Bitcoin treasury companies, structured product creation and growth in the U.S., I think that these things have definitely, tampered vol. I would say that it's really interesting where the spread between the BVIV and EVIV indices are. For anyone unfamiliar, BVIV is a 30-day implied Bitcoin volatility index, and EVIV is the 30-day implied Ethereum volatility index. Basically, this is kind of at like an all-time high, as we've been printing these indices for about 3 years now. When the Bitcoin ETFs launched, the BVIV, was actually inverted EVIV for a little while. The introduction of Ethereum ETFs and then Ethereum options sort of, brought that spread back to like 10. Now it's around 25 or 30. And so perhaps there's a, besides just betting on, vol to sort of mean revert to, sort of like the average, over the mean over the last couple of years, I think that, playing some mean reversion around BVIV and EVIV spread could be really interesting, as 30, 25 is a bit of an outlier. And so really interesting time in the crypto market. I think, just today, there's, Robinhood getting in the market in a big way with their L2. You have, BlackRock, Fidelity, firing on many, on all cylinders. And I think it's a really exciting time in the crypto market. There's a lot of institutional interest, fervor, and, feels like Bitcoin is due for sort of a leg up. And so we'll have to see. I think that if Bitcoin goes to 130, 150K, you could see some positive spot vol correlation where, BVIV and Bitcoin become kind of correlated. As Bitcoin gets bid up, options get bid up, vol's increasing. And so perhaps we see some positive spot vol correlation when Bitcoin inevitably makes that move up to, 130, 150, let's call it.
Yeah. On that note, is there any catalysts or events on the horizon that you see kind of causing Bitcoin to maybe go up to that range, or even on the EVIV side, like Ethereum, is there something where you see that spread tightening and coming back more in line with where it's normally been?
So I think it's, the fundamentals generally are quite strong. There's been many tens of billions of inflows into the, Bitcoin ETF market. Now, ETH ETFs are gaining adoption. You have things like Solana ETFs with staking coming soon. And so I think that just increased, growth in the sort of institutional products and, fundamentals, sort of just continuing to improve. I think that, we could see, Bitcoin just naturally sort of bid to 130, 150. I think the introduction of more sovereigns getting in the market. I think El Salvador in last cycle showed there is interest from sovereigns and buying Bitcoin on the corporate sovereign balance sheet. I think that more nations might start to do that as they do with gold, and so that could create sort of a flywheel of different countries, different sovereigns buying Bitcoin as some sort of reserve asset. And so I think that's quite interesting. And then obviously like the biggest companies in the world getting involved with Bitcoin, maybe on like a treasury level, maybe on the stablecoin level. It's been interesting to see like Stripe and Robinhood go deeper in crypto. I think we'll see more of that from, the JP Morgans, the Amazons, the biggest companies and corporates in the world. And so, really interesting time in crypto. I think that fundamentals are very strong and, who knows what's ahead.
Yeah, from everything that you see, it would appear that there's quietly this race to accumulate that's underway by bigger and bigger players that enter this market as it grows. Cole, you talked about the correlation maybe shifting back in terms of spot and volatility. Do you guys have a way to measure that here through Volmex? I think I was poking around on the charts earlier and I thought I saw something, but I can pull it up if you guys have something.
Yeah, so something we measure is the correlation between Bitcoin returns and Bitcoin volatility returns, and ETH returns and EVIV returns. So we've actually created a series of indices called BV Core, EV Core, which basically measure exactly this: the return between Bitcoin over some time period and BVIV. And so, when the market is fearful, this becomes very negative. As does the VIX index, right? When the stock market crashes, the VIX spikes. You typically find a similar thing in the Bitcoin market. BVIV spikes when Bitcoin market is fearful. It's measuring sort of the risk in the market, right? What's very interesting about crypto is that, I was kind of mentioning before, when the Bitcoin market gets very greedy and bullish, you can observe that Bitcoin price is increasing, options are increasing, and then, vol is increasing. And so you can kind of observe this positive spot vol correlation anomaly, which you don't really see in the US equities market. And so, you can find this sort of anomaly in different risk assets like levered ETFs and such. And so, the BV Core, EV Core family, spot vol correlation indices is a great, metric and indicator to kind of track this negative, correlation, positive correlation between Bitcoin and BVIV, or Ethereum and EVIV. So pay attention to that. As the market becomes more bullish, I do expect that we'll see some positive spot vol correlation, and, vol will be rising with the price of Bitcoin.
We have it up here on the screen. I'm not sure if you can see it or not, but we have the BV Core indices here. Do you have a preferred time frame that you like to use to analyze this or to measure it?
I think they're all pretty relevant. Okay. Maybe the 1 month is always a good, tenor, or 2 weeks. We can definitely link some of these in the, YouTube show notes and stuff for the users and answer any questions. But I think that 1 month would be great, or, 2 weeks perhaps.
Awesome. Yeah, I've pulled this up and we're looking at the daily here going back to about mid-January or so. And you can see exactly what you're talking about, right? You look at the rally that we had in May off of those April lows. I think we went from about 75 to 110 or so before pulling back. And that positive correlation between spot and vol just screamed higher from, a slight negative correlation, if any correlation, all the way up to, it looks like spot 4.0 at that point in time when we look at the 1 month here. So definitely a great indicator to keep your eye on through Volmex.
Thanks, Ryan. Yeah, we think this was really useful for traders and investors. Retail, pro-tail, institutions can all leverage this type of product index for their analysis. Go ahead, Dan.
Yeah, no, I really we really love looking at this stuff. Like, it's very relevant to our traders here, especially on the crypto side, because, as you know, there's not very many volatility products out there or ways to measure this. So I'm wondering on your end, since you guys are kind of expanding some of the indicators and some of the indices, is there any other tokens that you're constructing these volatility indices for? Is there anything interesting that stands out when you're looking at some of these altcoins?
Great question. So we have an SVIV index for Solana. And so, zooming out, Volmex is kind of constrained to implied volatility indices, creating implied volatility indices around assets that have liquid exchange tradable options markets. And so, the crypto market structure, you have Bitcoin, Ethereum. There's a pretty big drop off after those two major assets. Solana is kind of the next biggest asset that has critical mass in the derivatives market. Deribit has listed XRP, and so we plan to roll out an XRP implied vol index, which if you look around, you might be able to find that, teasing some alpha for listeners. And then there's a couple of other assets that have liquid, pretty deep and robust options markets, XRP. And so, really it's BVIV, EVIV, SVIV, which are kind of the flagship implied vol indices. We plan to roll out XVIV for Ripple and XRP, and then we'd obviously like to do it for as many assets as possible. Something we're really excited about is the advent of the future, coming of a proper top 10 or top 15, maybe top 7 index, which has options on it, right? Because then we could really easily construct like a top 7 vol index, which is sort of missing in the market right now. And so, it's really interesting. There's sort of no canonical standard for a broad-based sort of top 7, top 10 index. And so there's a CD20 by CoinDesk and Coinbase 50, which are potentially synergistic initiatives to what we're doing at Volmex. If we can get options on those, we could price a top 50 or a top 20, implied vol index. And so looking forward to that. I think it's really exciting what could be done. There's a couple of other assets. I mean, Deribit has PAXG, which I don't think there's enough liquidity per the last we looked at it to create implied vol products and indices on that type of product. But we definitely would love to support as many coins and tokens as possible. But there's definitely the most interest in BVIV, right? Our Bitcoin 30-day implied vol index. One note, we do have an entire term structure, right? So we have BVIV 7-day, BVIV 1-day, BVIV 14-day, 30-day, 60-day, 90-day, 120, 180, or those might be in staging still. But we have all entire tenors, various tenors of BVIV. And so you can sort of look at the vol, term structure and see like where things are at. And so I believe if you, Ryan, if you search BVIV and then scroll down on the page, you'll be able to see that that term structure.
Yeah, we've got BVIP here on the screen. I've got a current price of 39.77. And what I love about this as well is you've got the IV rank, same way that we tend to approach it here on tastylive. You've got the percentile as well. So everybody can see that we're at very, very low levels of volatility. And I'm assuming this is maybe a 1-year time frame you're looking at, but you'll see the same thing on a 3-month, a 6-month basis. Vol is very low. And as we scroll to the bottom of the screen, here's that term structure that Cole is talking about. You can see where we were in terms of implied volatility 2 weeks ago, 1 week ago, and where that is currently. And gives you a sense of just really how flat that curve has become over time. I mean, in my opinion, Obviously, cheap vol can get cheaper, but if you believe that we are going to see a move higher, there's fundamental reasons to believe that Bitcoin can get to those levels you mentioned, 130, 150, whatever it might be. There might be an opportunity here to buy some longer dated kind of upside optionality through call options, buy that upside tail risk, because arguably it can get cheaper, but it's pretty cheap right now versus where it has traded in the past.
Well said, Ryan. I mean, could be a good entry for, different option structures, vol cheap, of low, meaning, it's, less costly to enter those type positions. And so very interesting where we're at right now.
Yeah, we've been doing a bit of that on the show, just trying to buy some, 95 strike calls, 5-10 delta calls, kind of taking a flyer here on some upside in IBIT. Not so much based off the idea that you're going to see the price double or go up 50% in the next couple of months, but just simply that your option on a per strike basis, which is trading at a, say, 45, 50 IV, maybe that gets back to 70 on that delta move. And you do see, a nice increase or profit as a result of just owning a bunch of those upside call options. We'll see. But again, when you look at it from this lens here and you go back to what we're showing here on the Volmex dashboard, where the IV rank is 2.5, percentile is 0.29. I mean, you are at the cheapest levels that we've seen. And I'm assuming, is this a 1 year scale that you're looking at?
Precisely. It's a 52-week high and low. So basically we're at the lowest range of the lowest end of the range. Vol has sort of never been lower over the last 52 weeks. And so, we could see some move to the upside based on that, or whether it's negative or positive move, right? I mean, you could see sort of negative spot vol correlation if the market moves down a lot, which, obviously a lot of people are bullish right now. Personally, I don't think that's as likely, not financial advice. But then if the market moves up, you could see some, positive spot vol correlation. And so could be a pretty attractive bet to, long some vol or long some options and inherently long some vol. Talking my book, though, I mean, I want to see more trading, and
me too.
We're all options guys.
On that note, on the trading note, you recently launched the BVIV index on Gains, right? And Bitfinex, it's available on Bitfinex, but you recently launched the tradable indice on a platform called Gains Network. Could you take us through that a little bit, like how that works? And I could have Ryan pull it up, but just want to discuss that because these indexes are tradable if you're, in DeFi.
Yeah, sounds great. So I can send you the link, Ryan, if you want to pull it up. That's helpful.
Yeah, I think I've got the Bitfinex derivatives, and this isn't going to be accessible to everybody. If you're watching the show in the U.S., probably harder to access this market, but this will give you a sense of maybe what's coming soon globally, but how you can trade the actual index in the same way that you could trade VIX futures or buy options on the VIX.
Yeah, so BVIV is an indicator, right? You can use it to understand expected risk, expected volatility, expected moves in the crypto market, but it's also a tradable product. BVIV is very versatile. And so, in the crypto market, in the equity market, obviously there's a complex, entire complex of futures, options, ETPs, ETFs, OTC products that all make VIX tradable. Our vision is really for that, very similar complex of futures, options, tokenized products, what have you, to make BVIV tradable. And so today we have two perpetual future offerings that we've partnered on that make BVIV tradable. We have Bitfinex, which is a sister company of Tether, which is really exciting because, sort of buy-in from the Tether cabal, into our product, which is great. And then we've also recently launched a collaboration with Gains or G-Trade, which is a decentralized exchange that trades on Arbitrum and Base for the last couple of years. And so just last week we announced a collaboration with G-Trade. Basically, we pipe our data into the G-Trade perpetual futures exchange, and they make BVIV and EVIV tradable through their through their exchange, which is based on smart contracts on both the Base and Arbitrum networks. And so we've seen about 1.25 million US notional traded over the last of contracts traded over the last 6 days or so. And so I think it's been a major success. There's been a lot of exchanges reaching out to us about doing something similar. And so, we do have a pipeline of various different exchanges that, want to list BVIV across CeFi and DeFi. And so really we're building this ubiquitous, vol index standard for Bitcoin where you can find BVIV on, Bitfinex and CeFi, Gains, and soon other dexes, in the DeFi world, and ultimately want BVIV to be on every major exchange. And so, if you'd like to hedge with this type of product, with the, negative correlation once, BVIV, spikes during a sort of negative, bearish price action, or, bet on the positive spot fall correlation or bet on mean reversion speculation. This is a pure volatility product that allows you to express a view on implied vol without managing a multi-legged option structure. And so this is actually a major unlock for the crypto market, where for the first time ever, you can just buy one single contract with a couple of clicks, or really one click, and have exposure to pure implied vol, which previously wasn't really possible. And so really excited about the progress with the G-Trade. There's going to be a bunch of other exchanges that list BVIV. And so super excited to share those with everybody.
Starting with BVIV, do you see an opportunity for tradable products around eVIV, the Solana Volatility Index, XRP eventually, and others? Do you think that's what's next?
So BVIV and eVIV are both tradable on Bitfinex and Gains. Maybe I wasn't clear. We definitely want to see more implied vol indices tradable on our different partner exchanges. And so perhaps SVIV will be tradable on chain on Solana at some point, or just BVIV generally. And so, yeah, super excited about bringing BVIV and eVIV to more exchanges across CeFi and DeFi, and also making some of our other indices tradable. Perhaps this is a good segue into, the Volmex rates indices, which we rolled out a couple of months ago and track different metrics, like funding rates and, on-chain borrowing and lending rates. Basically we saw, in the equity market, there's obviously SOFR and LIBOR, which have become very, LIBOR no longer, but SOFR has become sort of the standard for, pricing credit, lending rates. And so we sort of noticed that there was no such standard in crypto, and built this family of indices called the Volmex prime rate indices. And basically we have a vision to, build a standard for interest rates with the Bitcoin volatility, a Bitcoin prime rate index, which we've created, Bitcoin Volmex prime rate, and eventually make those tradable. And so I definitely think that some of the exchanges we're on already and some of the exchanges in the pipeline would like to list the rates indices that we've built. And so we'd like to see many more Volmex indices trading in both CeFi and DeFi.
Awesome. Yeah, we have those prime rate indices up here as well. And then I guess out of curiosity, is this something where you might see the market extended one way or the other? Let's just say that it's very expensive to finance a perp position. That could be a signal that you would look for in terms of a short-term reversal, or if you wanted to trade this, if it was a tradable product, you could short that rate. Is that how you might think about it?
Yeah. So I think as the market becomes more bullish, the demand for leverage increases, and you should see that reflected in some of these Volmex prime rate indexes. The DeFi lending rate specifically measures the cost to borrow stable coins against your Bitcoin on venues like Aave, Morpho, and Compound. And so the demand for borrowing, increases as the crypto market becomes more and more bullish. And so you can also observe something similar with funding rates, to get levered long via a perp position. And so I think that you could sort of trade that sentiment via these rates products. And so we think it's a really powerful primitive. It's really surprising that there's, not more adoption, not for these products specifically, but just broader, rates trading in crypto. I think that perhaps after the 2022, some of the stuff that happened in 2022 with folks like Genesis and BlockFi, the crypto credit market kind of dried up a little bit. I think as that comes back with the introduction of institutional players, we'll see a lot more people and firms and, pro-tail, retail, institutional want to trade this type of product. And so very bullish on the prospect of, rates trading as of course, vol trading in crypto. So yeah, definitely you can observe like sentiment being reflected in this type of product.
Awesome. Yeah, and I think the one other thing I'll mention too for everybody that's following along here with us, we a couple times a week put out an email and a data dashboard, and we'll construct one standard deviation expected moves based on the volatility. So we just take the spot price, take the current implied vol for Bitcoin or for ETH using some of these numbers here. You could use the 30-day index if you want to. That's what we typically will use, and that can be a great way, I think, to kind of come up with realistic expectations for a trading range. You can use the input here from Volmex, use the spot price, and you can calculate that one standard deviation move. So you get a sense of what's realistic, right? Everybody thinks that Bitcoin can go up $50,000, but over the next month, what is the option market actually pricing in? Is it a $5,000 move on a weekly basis? Is it a $10,000 move? You can start to understand what different vol inputs ultimately look like in that calculation. And so this is a great resource for some of that if anybody's curious as to how we calculate those ranges.
Yeah, and that's a good point, Ryan. And we'll have to add some of these indices into the newsletter going forward because I think it is a good complement to our dashboards. Real quick, Cole, because we got about a minute or so left. I have a question from the chat, which I thought was interesting. They asked how you will compete, Volmex will compete or work with CBOE and CME when they inevitably start getting into these type of things.
Yeah, so the U.S. capital markets are the deepest and liquid and the most liquid in the entire world. We are very excited to build products that are, regulated and tradable in the U.S. market. And so we have a couple of initiatives behind the scenes where we're working on, bringing, regulated data into a new family of indices and creating, some of these type of products. And so potentially, those type of firms could be partners to Volmex or their peers. And so we definitely would love to, integrate with the biggest exchanges in the world, which sit, in the U.S. typically, and offer these products to U.S. retail. And so super excited about that. I think, the Bitcoin ETF market and the options on those markets is a perfect backdrop for those type of products, and should make for a great foundation for U.S. tradable products for vol and otherwise. And so that's a great question, and we're definitely really excited to enter the U.S. market. Obviously, the perpetual products are generally available outside the U.S. right now, but that's definitely on the roadmap.
Well, Cole, that's going to do it for our show. Sadly, we've run out of time. I'm sure we could talk to you for many more hours here, but excited to see what you guys do next with Volmex. If anyone is interested in checking out what you're doing today, volmex.finance. And if they want to hear more from you, where can they find you, whether it's on X or anywhere else? What's the best way to get a hold of you?
So follow Volmex on Twitter, VOLMEX Finance on Twitter. You can follow me as well, Cole Got Tweets. Check out our charts, charts.volmex Finance. Check out our website, volmex.finance. Add BVIV, EVIV, SVIV to your TradingView watch list. If you search for Bitcoin implied, Ethereum implied, Solana implied, we're the top result. We're also in the CoinMarketCap mobile app. And then if you'd like to express a view on BVIV, EVIV, you can do that via Bitfinex, Gains, and soon more. And so definitely stay tuned with what we have coming. We have a lot of big plans. Thanks so much for having me on the show. Always a pleasure. Looking forward to next time. Thanks, Dan. Thanks, Ryan.
Absolutely. Looking forward to having you back on the show as well. But that's going to do it for our show. Until then, I'm Ryan.
I'm Dan.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
The future of trading is here. Join Mike and his whiteboard, plus the Tasty2 live crew for 90 minutes of probabilities, punchy portfolio mechanics, and trade tactics. It's totally free and unreasonably fun. Come Come early to enjoy a drink with the crew and stay for a Q&A after the show. Space is limited, so register today at tastylive.com/events.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Oh, yeah, it is Monday, June 30th, last day of the month and the quarter, a little bit after 5 p.m. Central Time. The best time, you know what that means? It's time for Tasty Live's evening show, a little podcast, little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world, and we got a handful of them today. They're definitely making us earn our money. More on that in just a bit. For now, we should say what's up to all the people watching. Shout out to everybody watching on Tasty Live desktop. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them. Do yourself a favor. Just make your life much easier. Go get both of them. But if you want to be part of Bing, this little guy, this little chat box on your screen, there's only one place to do it, and that's over on the evil Google YouTube. So head on over to YouTube, subscribe to the Tasty Live channel, and start moving those phalanges, those metacarpals, even bash your face into the keyboard to create random ass characters, and spoof the Google algorithm into putting us in front of as many people as possible, and live stream your thoughts onto this little stream. Put a little part of your thoughts, little imprint from yourself on this stream. Make it yours. Shout out to everybody already in the chat. I see all of you. Shout out to Lone, Gary, I see you. Mark, great to see you as well. Cato, what's up? Martin Walker, great name. And all of you, I would shout you out, but I'm contractually obligated to say something that might be construed as meaningful or substantive. So off, and away we go. S&P 500, my babies, climbs ever higher. S&P 500 up 0.5% today. The NASDAQ up 2/3. Dow Jones up 2/3%. The Russell, a little engine that could, trying to do something to the upside, but not really able to do much. 12 basis points to the upside. The distance, the performance distance between the NASDAQ and the Russell has never been greater. We've surpassed, if I'm not mistaken, levels that we saw during the dot-com bubble in the late 90s and early 2000s. That's where we're at right now. Everything's fine. Everything's fine. What's up, Catan? But doing some numbers here in the NASDAQ and just, I don't know how you guys feel. I'm sure some of you sort of enjoy 0.5% climbs higher each and every day. But that's not really my style, my friends. I like when things are rocking and rolling, people are scared, and we're playing poker. In the world of 0.5% moves to the upside, everyone starts to think that they can predict the future because the distribution curve has kind of condensed. It's not as wide. And so when there's a little bit more, quote unquote, uncertainty in the future, people start pretending like they can predict the future. They make bold and boisterous and proclamations about the future. To me, I don't really particularly love that environment. What about you guys? I like when the distribution goes wide and it reminds everybody that you don't know what the future holds, and you never did. And anyone that claimed to, they sort of get exposed for what that racket is. But right now, we're in the proclamation phase, everybody. I can read you a set of headlines that could prove what I'm saying. And by the way, I love Dan Ives. He's a great guy. I've done a couple of podcasts with him. He's super generous with his time. And, he wears the wildest stuff I have ever seen. But I'm going to give you an example. Here's a headline. This is over on CNBC.com. Analyst Dan Ives says it will be the summer of $4 trillion market caps for surging tech giants. Rick Reeder says there's a generational opportunity for income right now. I could go on and on down the line. If I'm not mistaken, the gentleman from Morgan Stanley is on television right now telling everybody about the future. Just not my style, man. But VIX at 1673, a little bit pop in the VIX, 40 cents or so, but /VX has not moved. We're at 18 and change, and the VIX term structure looks the exact same. You can basically take a picture of this and put a sticky note up on your screen, as it's called. Front month futures are almost always in the 18s, and back months are almost always in the 22s. And this thing doesn't have much of a slope to it. That's exactly what it's looked like for the last couple of weeks, and it is not changing. It does not seem like it wants to change anytime soon. I wonder what the moment will be that unclenches sort of vol to one direction or the other. Is it getting past this 90-day pause window? Is it signing some meaningful trade deals and getting to ultimately to this 10% universal tariff rate, which we're going to get to at some point in time? Is it a new administration? Is it appointing a new Fed chairman? Like, what is the thing or the set of things that sort of allows vol to normalize? And when I say normalize, I just think to be in back month volatility in the 22s, almost all of them flat, and then front month at 18, it's sort of I don't know. I haven't seen that very often, put it that way. Let me pause for a second, see what you guys are squawking about. The future, Conan. Oh, I missed those. Those were the days. I actually want to talk about a lot of stocks today, but before we get there, I'm obligated to just hop on over to the bond market. Another sort of very boring trade, but it is working. The play from me was at some point to start betting the upside in bonds. It's not a fun it's not a sexy trade right now. There's not a ton of volatility here, so it's totally directional, and there's not a lot of gamma here. There's not a lot of speed. It is working. We are moving to the upside from 109. We're now at 115, which is a bit of a resistance area. We're at 115 and 30 seconds. And I think we can get past this little congestion area at 115, next stop 117. And that was my play, that we could see bonds get back to this 117 pivot point. And We'll see if it happens. We're getting close though. When I made the bet, I think we were at like 112, 110. No, not 112. Like 110, something like this. 111. So it's been a slow grind, but we're almost there. Just a quick look at the yield curve here. The long end of the yield curve is settled down a bit. We're no longer pressing 5%, 4.78 in the 30-year, and the 10-year at 4.25, which seems like that's probably the level. It seems like the 10-year between 4 and 4.25 is probably the level we're going to settle at here. And I just don't know there's going to be a lot of fireworks. Same amount of cuts priced in effectively starting in September. And I'm very curious. Do you think so? The market now has 3 cuts priced from now until the end of the year. And we keep playing this over and under game. And I'm fascinated by it because the market moves fairly quickly. At one point, we had like 3 or 4 cuts. I was like, that's not happening. Let's take the under. Then the market moved to almost 1 cut. I said, that feels too hawkish. Let's take the over. 2 weeks later, we're now pricing 3 cuts. It seems like the bond market, the entirety of the curve, is starting to see one of 2 things, if not both. Starting to see slower growth, starting to not be as concerned about inflation as the overall narrative that the Federal Reserve is trying to sell. We had said at the beginning of the year that the tariffs were going to be a really convenient aspect for the Federal Reserve to use to sit on their hands and not do anything. And that's exactly what's happened. But in order to not do anything, as people see growth numbers come down, they have to be concerned about inflation. And I suppose we can say inflation we're not down to 2% in the official numbers. True inflation and a lot of other data points are saying something different, but in the official numbers, we're not anywhere close to the Fed's target. So on one hand, inflation has not gone away, quote unquote, the painful inflation above 2%. But on the other hand, there isn't a ton of evidence that you've seen this big tariff price shock or that you're going to. Because I think a lot of people, and I'm in this camp too, think there's going to be demand destruction based on higher prices at this point. That we're going to see elasticity of demand, that the consumers have blasted through a lot of their COVID savings. And as unemployment ticks higher, that's going to create a slow, if they're lucky, a slow destruction of demand. I'm sort of in that camp, which is one of the reasons why I'm taking this very small, I don't want to say it's small, but like this risk-defined upside bet in bonds, and why I continue to go back here and talk about it. Taif, I'm going to take a moment, just read a couple of comments, and we'll get on with a couple of more topics. Victor, Taif says that's what's annoying about this BS. I wonder what happened to all the Trump hate. Gone now that markets are back in highs. Was and always will be about the dollar, nothing more. That's why he pivoted. Dollar slash rates. I'll say that. And there's still, I don't know what you mean, where'd all the Trump hate go? We're still a 50-50 polarized environment here, my friend. Let's see here. Logic say we should be 68% if the economy is strong, but the market seems to be pricing in recessionary rate cuts. Thoughts? Yeah, I think some part of that is true. I don't know if it's recessionary rate cuts, but I do think some part of that is true, that the market is now getting pretty dovish in what they're doing with the curve. And I think that's gonna be pretty difficult for Jerome Powell to ignore. I don't think he'll move on in July. I don't think they'll move in July. I think they'll wait, and I think ultimately September. You'd need a miracle not to be able to move rates in September. Like he's going to need a really, really hot inflation report, and he may get one. I think just based on base effects alone, he could end up getting a hot inflation report between now and September, which could give them the ammunition to not go in September either. I don't know that I'd bet that though at this point. Yeah, I don't know that I bet against the curve right now, saying that rate cuts start in September. But the biggest problem, here's the biggest problem. Am I long dollars, Victor? No, not right now. I had a long dollar trade against the euro, but it was really short term. I'm not really I played this fade. But that's about all I've done in the dollar in quite a while, directly. Let's see. Oh, he cut me off where I was going there. Yeah, I wouldn't bet against the curve here. I think it's probably about right. If we get a hot inflation report, then that all bets are off. And that's what'll be interesting is if we get sort of a warm CPI between now and September, this whole thing, the whole 2 years, is going to shift. Which is why I really like talking about and trading the 2 year, because we've had this schizophrenic market that can't figure out, are we going to get 3 cuts? Or are we going to, in the next couple of months, or are we going to get none? And so I like that tension. I think we're going to keep getting this volatility in the 2 year. So I like the 2 year or ZT futures as a trading vehicle. Short dollar has been one of the best trades on the board. It definitely has been. Dollar's getting absolutely smoked. They are turning that stuff into toilet paper. Congratulations. Congratulations, everyone. Here's your Zimbabwe dollars. And Bitcoin's not doing a damn thing, which is kind of a head scratcher, is it not? Yeah, we'll get there in a second. I'm fascinated by a couple of stock moves here today. I normally don't do this, but I'm fascinated by this story. So I'm going to go here. I'm going to talk about a little bit more stocks. Stock stories today was this Robinhood story. First of all, it's up 13%. I cannot believe this thing is nearing $100. I bought this stuff in the single digits, I think. Maybe like 8, 9, $10, maybe 12 at the most. And I thought when it was at 25 or 30, I was like, damn, good. I'd be patting myself on the back, like, good trade, Victor, good pickup. And we're nearing $100. That is absolutely wild. I'm going to read the headline, the sort of the catalyst of today's move in Robinhood. Robinhood gives out tokens of OpenAI and SpaceX in Europe. They're now offering tokenized shares of OpenAI and SpaceX to users in Europe, sending its shares up nearly 13%. The company's making the launch by giving €5 worth of OpenAI and SpaceX tokens to every eligible user in the EU who onboards. So effectively, in the U.S., if you remember, they were one of the first ones to do sort of the free stock giveaway when you opened up an account. And it could be anywhere. It could be a couple of bucks, like $5, or it could end up being $200, $300 worth of stock. And the idea that you're giving away tokenized shares of OpenAI and SpaceX, which are non-publicly traded in the U.S. markets, obviously, that's a pretty exciting move for people to. It's a pretty exciting incentive to get people in the door in the European markets. I got to give it to them, man. That's a pretty dope marketing launch for sure. But we're at $95. That's absolutely insane. What do you think? What would you do for tokenized shares of OpenAI and SpaceX? Would you move to Europe? Mm-mm. Yeah, Palantir. After a 9% dip, I was talking to Nick in the green room before first call on Sunday, and I asked him, it had a 9% pull, about a 9.5% pullback on Friday, and I asked him, "Do you buy the dip?" Sort of as a tongue in cheek, but I was being dead serious. And he goes, "No, it's not ready yet." And I go, "Man, this thing doesn't give you much of a chance." And interestingly enough, you got a 4% upside move. It didn't recover all of the damage from last Friday. But I would say it's a pretty healthy bump at 4%. Tom Banjo says, "I'm shorting that stock." Which one? Tom's going to delete Victor. Which one are you shorting, Tom? Are you talking about Robinhood or Palantir? Which one? I'm going to keep moving here. Another one that had a pretty decent move that I hold today was up 11%, which is Joby Aviation, JOBY. This is one of my sort of like, you'll all own nothing and be happy globalist basket. I talked about some of them on Sunday. HIMS. So this idea that you're going to need to pay to have children. You have to pay to conceive at some point in the future. So HIMS on the front end, and then Progeny, PGNY, sort of like it's a fertility company. That one's been sort of a dog. It hasn't really moved. I like the theme. There might be a better way to play it. But then there's the sort of the drone, the electric vehicle angle on this. This got overhyped sort of in 2020, 2021, when a bunch of, like, that post-COVID era, when a bunch of people had more money than sense. And so they bought up like the electric vehicle stuff. And the drones got hot for a little bit as well, and then they left them for dead. Now there's sort of this resurgence. JOBY is one of my preferred plays for just the idea that you're not going to leave your house, and eventually there aren't going to be delivery drivers. There's going to be robo-taxis picking you up, and you're going to swipe something on Amazon, and a little drone is going to take it from a warehouse and drop it off on your doorstep. You might laugh now, but give it like 3 years. And so this is sort of my angle. This thing was up 12% on the day. So just throwing it out for you. Another performer on the day, even though the indices are not doing anything. The indices are so incredibly boring at the headline level. But obviously there's really decent movements if you look a little bit further. CCJ puts a 1% on the board after being weak on Friday. And then SMR, which is my high beta play in the nuclear space, was up 3.5% today. So, and this thing's gone crazy too. I think I got this in the single digits. I think I'm up like 700% in this thing. Absolutely crazy. But you know what happens when you smoke your own currency? Gold, your precious metals, your rare, I don't say it like that. Your rare assets. That's not the word I'm looking for, but I'm going to keep moving here. 3,300 held. Jeez, Victor, I can't believe you do this for a living. 3,300 held in gold, up around 1/3% after sort of looking like it might have wanted to violate this level, 3,300. We held, and along with it, my babies, the miners had a nice little day. Newmont Mining was up something like 2.5%. If you like to play individuals, the junior miners had a pretty decent day, up 3%. Silver miners, PAS, had a pretty decent day as well. Pan American Silver. This is one I like. I've been playing silver. I think 36 level holds for silver. I don't know why. I shouldn't say I think it will, because I have no idea. I'm betting that it will. So I'm betting that we've established a new range up here, that 35, 36 is a bit of a new floor, and 38 at least in the short term, looks like it's upside range? And if so, I still like the silver miners, even though PAS looks like it might. What are the odds we fill this gap? I'd say pretty high. I'd say pretty high this week. This island breakout to the upside. I wouldn't be mad if we could go back and fill this gap and I could pick up some of this stuff a little bit cheaper. That's the thing. Finding value right now, it's tough. There's not a lot of things that are like cheap. You can find relative value, but there's not a lot of stuff right now as at all-time highs. I don't think I'm saying anything that's shocking, but you can't find a lot of cheap assets. It's all a relative game right now. And those are the most boring games because those are the buy high, sell higher games. Super low vol, grind higher, and the only value to be had are things that are cheap relative to other assets. Except, and I know some of you guys are getting sick of me talking about this stuff, but except the home builders, I would say these things are actually relatively cheap. And I think if bonds continue to move higher, and I think if the dovish aspect of the curve is right, and this is a big if, so the markets are now pricing in more cuts. The markets are getting more comfortable buying up U.S. debt in the long end. 4.25 seems to be a comfortable area for the 10-year. Now the question becomes, this is a big question. As we get closer to September, if you don't see any inflation reports that spook the Federal Reserve away from moving in September, that's your first hurdle. And if they actually cut in September, then if the long end does not throw a temper tantrum, meaning the long end yields don't move higher. This is what happened last year. When the Federal Reserve cut rates, the long end rejected that cut. The whole curve did not shift down. We got a steepening in the curve, which means the short end came down. The long end actually lifted. And people are like, hey, man, what gives? And they got a lesson that the Federal Reserve controls the short-term interest rates. The market dictates long-run interest rates. And if we see another situation where the Federal Reserve lowers short-term interest rates and the long end says, F you, I'm not moving, like a Wolf of Wall Street, F you, I'm not leaving. If you see something like that, we are in I can't tell you how much of a bit of a pickle we're going to be in, how crazy of a world that's going to be, because the market is going to effectively tell you that the Fed has no tools. The only tools, I shouldn't say they have no tools, they would effectively at that point have to do some sort of operation twist or yield curve control if they wanted to influence long end rates. But you would basically be looking at a situation kind of like what we've been seeing for the last year. Like the Federal Reserve can't do anything. They're going to need to just sit down and wait and watch unless they want to do yield curve control. That's a wild world to be in. But if you imagine we don't see a hot inflation report, that they start cutting in September, and that the long end accepts those cuts and eases ever so slightly, just looks like it's going to play ball. And that's a lot of ifs, my friends. But if you get all of that, I actually do think we're in an interesting environment to buy the home builders. And I know Pulte has been all over CNBC, just absolutely ripping the Federal Reserve, saying that they need to cut. They're going to be late. I know the president has been saying this. I know a lot of people are saying this. I'm not 100% convinced that they're right, because if they do cut and the long end rejects it, we're in pain town. We're in crazy town at that point. We're in Banana Republic. And I'm sure Powell and the Federal Reserve do not want that outcome. I'm 100% sure that's not the outcome that they want. And that's why they're going to wait until they're 100% certain that a cut will be accepted by the bond market. And I say all that to say this. If all those things are right, I think you're getting a pretty decent price on home builders. And so I'm going to keep accumulating, and I might just absolutely wear this. I might wear this. And I keep taking these bets. I keep taking these bets that could end my career, like the silver thing. And I'm just getting lucky that some of these things are working out. But this is the next one. This is the one this is the one that ends me. The home builders here. You are seeing some recovery in some of these. Like you don't think of them as a traditional home builder, but like these guys got just destroyed. Cavco Industries, they basically make trailers. They got destroyed, and they're seeing a nice little rally off of 400. I mean, they've already recovered 10%. So this was just as a trade alone, it was interesting since the point we started talking about it a couple of weeks ago. The problem is most of the options markets for all of these underlyings are trash. They're absolutely trash. So it's basically a stock play. Look at these at the money. Look at these options. 8 by 17. Good luck. So these are basically all stock plays. Even, I think, what's the biggest home builder? I think this one, D.R. Horton, is the most liquid. And look at these options. 30 cents. So, pick your poison. These, unfortunately, are not going to, if you want to go to crazy town with me and start scratching around with these home builders, you can. Obviously, it's your money, but just know that they're stock plays for me. They're not option plays because the liquidity in the option markets for all of these underlyings are so poor, unfortunately. Let me take a moment, see what you guys are talking about. If you want to be a contrarian but still bullish, get the defensive stuff that everyone loved earlier in the year. They're on sale. XLP, XLU, XLV, etc. Even better if you do homework and pick single names. So Taif, I really like this point. And I like it. I like healthcare especially. So there are aspects in healthcare that I agree with you 100%. People left this whole space, they left it for dead. And they left it for dead because almost instantly after the market had decided that Donald Trump was going to appoint RFK Jr. as the Secretary of Health and Human Services. Almost instantly, the market was dumping all of these underlyings. So I like that theme. I don't love a lot of the sector ETFs like XLV, XRT is the absolute worst. A lot of those sector ETFs, like even XLE, which is the energy ETF, I don't love them. I don't really love the construction. Even XHB, the home builders. Word to the wise. Don't trade one of these sector or industry ETFs based on its name and based on what you think it does or should do. Open these things up and see what the holdings are and see what the percentage weights of each of the underlyings before you trade them. That saved me a lot of heartache, just opening these things up and going, what is this? If I buy this, what do I actually own? And I've said this a couple times on the podcast, but just in case you're new or this concept is new, XLE, for example, is nearly 50% two stocks, ExxonMobil and Chevron, which are big sort of blue chip names. So if you wanted more vol, you probably wouldn't use XLE. If you wanted exposure to energy, you might go pick individual names, maybe higher beta names, something to this extent. Maybe you wouldn't. Maybe you like the idea of buying an ETF that basically only gives you exposure to two stocks. Maybe you like that. I don't. XRT is an example of another one. It's a horrible, they might have changed this, but this used to be the worst ETF, in my personal opinion, at tracking versus what you think it is and the actual underlyings in that company, or excuse me, in the ETF. Same thing with the home builders. If you open it up, there is some home builder exposure, but there's like a lot of Lowe's, Home Depot, a lot of building supply companies. which is fine, but you just need to know, like, it's not a direct home builder exposure. I think one of the only things that's actually good is the Jets ETF. Now, liquidity aside, this thing is 9 airliners, or excuse me, 9, airliners. There's no other weird stuff that they put in here. Anyway, that was a weird little aside. Let's get going. But anyways, back to the point, which is, I do agree with you that defensive themes, if the market gets a little rough, which we are not pricing, but if the market does get a little rough, then defensive themes, if you get there first, okay, if you get to the theme first, once you start seeing the articles that are posted of like you're in a recession or you're in a growth slowdown, and like what, now you start seeing the 5 stocks that work in a recession or 5 stocks that will pay off in a growth slowdown. Once you start seeing it, it's too late. Usually those underlyings have already made their moves, and now your exit liquidity, you're reading it going, oh, maybe I should buy the consumer staples, and you're providing exit liquidity to people who already played that theme. But now I would probably argue it's early. But I've never done that. I've never played I think playing the staples into a recession is a sucker's bet. I'd rather go cash, or I'd rather have my money in gold or something like this. The reason people go to staples, mostly, they'll say is like, oh, well, you still have to buy toothpaste in a recession. That's what everyone will say. But really, staples are low beta. So a professional money manager, if they have money, okay, people give them capital. They can't, in a recession or during high periods of volatility, they can't go to cash. Because if you ask somebody, you're paying 2% of your assets to this person, you go, what are you invested in? And they tell you you're in cash. You're like, are you out of your mind? I could take my own money, put it in cash in a checking account or in the treasury, and get 4 or 5% of my money. Why am I giving it to you to lose 2%? So they can't do that. So what they do is they go buy low beta assets. They have to buy something. So in growth slowdowns, they go buy low beta assets, and staples are one of the lowest beta assets. And yes, it is true that you still will see some consumer demands in those things, but it generally is not going to pay. Generally, correlations go up. Generally speaking, this might be a unique circumstance because we're turning our currency into toilet paper. So nominal prices may lift. But I'm speaking more broadly as a concept. Generally, these things don't actually pay. You're not going to make money in them. They're just going to lose less money than the overall market, which is why professional money managers use them. But they pitch this idea during a growth slowdown to everybody, and sort of but I would say there's usually not much money to be made unless you get in there early. You wait for the professional money managers to realize, oh my God, I need to be in low beta assets. Then these things lift. You sell it to them. Then you're out. Yeah, but anyways, I don't know. I'm going on these weird tangents today. I do think, speaking of cheap assets, or it being hard to find cheap assets, I think there are a handful of names in healthcare that are fairly cheap. I think home builders are cheap, and there are some names in healthcare that are still cheap. This Moderna being one of them. I don't know if they've done irreparable harm to their brand. But if the globalists win, man, there will be a resurgence. Mark my words. I'm crazy. I'm out of my mind. Pfizer, not bad. A little bit of a rally here. Yeah, they're starting to realize that these things were too cheap. Eli Lilly, this thing never moves. It's a $780 stock always. Yeah. But there's a handful of these I do like. And I should probably pick up some more, honestly. Catan, we're here for you, brother. I appreciate it. Catan says Lilly is the one to track. Moderna can't make a profit. I agree with that, Michael Anthony. But, never. It's basically a bet on manufactured crisis. If you know, you know. It's a bet on, I did the same thing. Now I can't even remember the ticker symbol. But when the bird flu headlines started floating around, I was like, all right, who's got a bird flu vax? And then there were basically 3 companies. One was a decent, had decent liquidity, was publicly traded. And we caught a sick little move in that. So, I don't know. It's not, put it this way, betting on these companies is not betting on like natural profitability. Okay? Betting on these companies is a bet on one of two things: a growth slowdown, and so capital flows go, oh my God, I'm only in Nvidia. I should probably go get some healthcare or certain consumer staples. Meanwhile, we've been buying up these things at rock bottom prices, and then people figure out, oh, I need to be exposed and defensively positioned, and we go, okay, here's your stuff at much higher prices. It's either that or you're betting on manufactured crisis. So the question you have to ask yourself is, what's the right price to bet on either of those things? I don't love Moderna, by the way. I just think it's too cheap to not take a bet, for me personally. If I was I'd bet on something else. I'd bet on like probably Pfizer, Eli Lilly, Merck, something like this. But I think Moderna's kind of too cheap to not bet on. I'm probably wrong, though. Taif says, what's interesting is I asked Copilot, which one is Copilot? Is Copilot Microsoft? I asked Copilot, what are some non-correlated stocks? Listed the following sectors stocks: Moderna, Duke, what's that, Nextera Energy, I think, CVS, Procter & Gamble, and Coke. To be clear, it listed those as examples. I think I own Nextera. Novo. Yeah, here's the other one we talked about on Sunday, which was Hims. A nice little gap down last week. This is the most schizophrenic stock. It can't figure out if it wants to be $70 or $30. But from a trader's perspective, in a world where you've only got a 16 vol market, if you want heart palpitations, you want a little bit of volatility in your life, take a position in Hims. And wait for the $30 move. It's a very strange story, but they effectively have so obviously their main business model, I don't know, obviously you might not know, but their main business model was erectile dysfunction pills. Then I think they got into hair pills, so selling stuff to help people regrow their hair, which seems to be the package deal. And then they're able to use basically a generic version of Novo's weight loss drug, kind of an Ozempic type of deal. And that's what catalyzed their massive upside. But they were only able to do that because of sort of this temporary regulation that had expired. And so now the market can't figure out how to value them and whether or not they're going to get an exception from Novo to offer these drugs and continue this business line or not. So they're all over the place. It's decently liquid. It's not the best, but it's decent. 15 cents at the money's in July. I told you, it's not the best, but it's decent, and it's going all over the place. But I told you, this is part of my globalist basket. You're gonna have to pay to conceive one day. Self Omaha. I get it. Mark says, yes, Victor, Hims goes up and down. Zing. Tom Banjo says, Hims is snake oil. I think the biggest problem with this company is it's so easy to destroy this business. They really don't have a moat. And there was a time, one of these big crashes in Hims stock was the idea, I think Jeff Bezos and Amazon at some point was going to get into this business model. And I believe they have. So it's so easy to just completely destroy this business. There is no moat other than their brand recognition. But I think if Amazon wants to sell these things at a quarter of the price, it doesn't matter if people know your name or not. They're going to outcompete you and you're going to disappear. So I think that's their biggest problem right now. You know, maybe their best bet is to just try to get Amazon to buy them. I don't think it's snake oil. I mean, you know, people buy. I mean, the reason I think, okay, I make the joke you'll have to pay to conceive. That's not really it. So what over the last, I think it's 50 years, male testosterone has been dropping at an annual pace of 2% per annum. And I think that has a lot of implications. And so, you know, there's a part of me that goes, okay, well, what are the effects of male testosterone dropping 2% annually for the last 50 years? What are the effects of that? And at one point, you know, in a different life, maybe I'm, you know, some social activist that tries to bring attention to this matter, tries to change certain aspects of the food supply. I try to help people understand the importance of filtering their water, or maybe we go out there and we get those forever chemicals out of the water, the birth control that's in it, you know, change diet, improve exercise. Maybe there's a world where I'm some social activist and I go to try to create social change. But I don't know, that life is not this one. So then I go, well, if these are the obvious impacts of what I believe are environmental externalities that will be very difficult to change, what happens? Well, more people have to buy stuff like this at an earlier and earlier age and use it for longer and longer periods of their lives. So that was sort of like some small part of the investing thesis a long time ago. Yeah. Herb Immunity says, nah, man, I just let my body filter the water. Yeah, bro. That's so funny. Pfizer has no lifeline, my guy. But this is the thing, Catan. I don't disagree with you. It's just, what are you investing for? You know, you're either investing for high growth. You know, if you want high growth or interesting names, you go to biotech, right? But if you're investing in just a theme that's going to attract capital flows, you go to the liquidity sponges. And Pfizer's a liquidity sponge with a gigantic regulatory moat. Pfizer has effectively captured large swaths of our health regulation. So those are, I always think those are tends to be a decent bet. Like this, the sucker's bet is to sell a Boeing plane that falls out of the sky. And I mean this, I'm not trying to say this with no empathy to those that lost their lives most recently in India. I think the Indian flight. But it's, and I hate that I think this way, but in a weird way, participating in markets for nearly 20 years have like rewired my brain to think this way. But like the worst thing you can possibly do, I don't say that, it is a sucker's bet to sell a Boeing plane, sell Boeing stock based on a negative news headline, like on an individual flight. It is a sucker's bet every time, every single time. There is no competition for Boeing. They are also a defense contractor. They disappeared a whistleblower and a key witness last year. Like they're playing a different game at their level, bro. Like there is no competition. At some point in time, SpaceX might get into commercial airlines. And I know people are like, well, no, we got Airbus. Yeah, we got Airbus. And we also have a nationalist movement in this country and a nationalist president that wants people buying American goods right now. Do you think a Boeing plane falling out of the sky is going to change that? No way. So not only did it not change that, but we just negotiated a deal with the UK that gives Boeing preferential pricing on airline equipment. I never understood that. And again, I don't mean to ignore the humanity of those events and the lost lives and the tragedies that those events are. I'm just speaking about it through a pure capitalist point of view right now. And I kept saying throughout all that period, if you go watch my Twitter, I was saying I was accumulating stock, and I was talking about it through Twitter throughout that whole thing. And now we're back up to 220 because there is no alternative when it comes to Boeing. Right now, there is no alternative, my friends. And when you disappear a whistleblower and nobody cares, nobody cared. They did it in broad daylight, and you all know they did it, and nothing happened. All right. Sorry about that. Who said Viking Therapeutic? I just saw that. Katana, are you in Viking Therapeutics? All right. SLG says, Victor, I should probably pre-read these, but let's just go with it. Victor, since you were talking about nationalism, then what are your thoughts on USAR? They are trying to go vertical on rare earth minerals and magnets. No idea. No idea. I'll have to look. Let's talk this week, Bunker Talk. Highest time in America is the Talk on Military podcast. Yeah. Mark, I was trying to turn a new leaf today. I was trying to talk stocks. I was trying to, smile and stay positive, and you want to pull me back in. You want to pull me down into the muck. This one's wild. I totally missed this one. I'll go a little darker later, but for now, I totally missed this one, and I'm kicking myself. There was a point. There was last week when I looked at this. I looked at Nike. And I was like, should I? Just because it was so cheap. And I think I sort of talked myself out of it. That like, now people aren't ready to buy this stuff again. And man, was I wrong. What a move in Nike from $60 up to $72.50. A little bit of a breather today, but not much of one. Totally filled this gap. Kicking myself. Always buy the dogs, Victor. Always buy the dogs. That's basically my whole thing. What does everyone else hate? And can I get it cheaply? This Albemarle's getting cheap again. For whatever reason, I know the reason, I suppose, but the electric theme has totally fallen out of favor post-election, almost exactly post-election. Here's your November 2024, and you see what happens to Albemarle. This is a lithium provider, but if you were to look at a lot of other stocks except Tesla had this really crazy run post-election, but a lot of the electricity theme has just gone out of favor. This is the best one to look at. it's had a little bit of a resurgence over the last month or so. Yeah, see this PBW. I kind of like. I think I should buy some more Albemarle. Sometimes I feel like a straight boomer with some of the things that I buy. A straight boomer. Lithium. Meanwhile, we're living through like the greatest what they tell me is the greatest technological revolution of all time, the most important invention since the internet, since telecommunications, since fire, since the wheel. And I'm over here going, I know lithium's in a glut for the next couple of years, but maybe I should buy some more Albemarle. Meanwhile, Nvidia's hitting all-time highs. What's wrong with me? What's wrong? I haven't even talked about AI at all. And I won't. Nvidia up 15 basis points, nearly 160. Just stick the knife in, man. I'm over here trying to do my best, like value plays. Meanwhile, the trade for my entire adult life was just buy tech stocks, buy the liquidity sponge tech stocks, just buy out of the money calls, in the money calls, doesn't matter. Just buy them and wait. Don't do anything else. For my entire adult life, that's been the trade. And some part of me is just so angry at all the people that I see around me who did that, who did no risk mitigation at all. They couldn't tell you what a distribution curve is. They couldn't tell you what a non-correlated asset is. They just bought Facebook and Nvidia and Apple and Google. And they're on an island somewhere. Meanwhile, I'm doing all this deep research and these formulas, eking out a few basis points every day. You know how infuriating that's been? Me and Nick talked about that one time. It's absolutely infuriating. He's just somebody who came in and was like, I'm going to buy this magical internet money at $50. And you're like, well, I don't know if I would do that. You should spread your money out and diversify yourself. Let's talk about correlations. And, the Federal Reserve might cut more than it's like, bro, I'm buying the dog money. Leave me alone. Now they're a billionaire. Now they're a billionaire with their own YouTube channel that has millions of subscribers, and they want to know which shitcoin they're going to buy next. That's the world we've created. Again, I've said this a few times in the past. There's a guy, his name's David Morgan. He is a silver stacker. Basically, he's one of these guys that was talking about hard money before it was a popular thing, before the Bitcoin explosion. He's an OG in that game. I had the opportunity to do a podcast with him years ago, and he said this thing I've never forgot this quote. He said, a society is only as honest as its money. And I've thought about that quote and its meaning, its implications. I don't know, man. Hours at this point. I probably mentioned it maybe close to 10 times now. I have never forgotten that quote. A society is only as honest as its money. And the more dishonest the money becomes, and the more shell games we play with the money, you see it, because the incentive is the root. So you pervert the incentive, you pervert the root level, everything around it will be impacted. And I thought, as soon as he said that, I thought, what a profound statement. Never forgotten that. All right, let's keep cruising here. I'm kind of betting the farm. I could really use another Tesla pump. I don't know if this is just dead money. but I've got a pretty decent position size in Tesla. I was long some upside call spreads, scaled out of them, and then I let one or two expire in the money between the strikes, meaning so I ended up with a long stock position in Tesla, which I don't normally have. And usually I'll offset that and I'll bring my portfolio deltas down or I'll spread around the risk. But I'm not doing that right now. And for the life of me, I can't tell you why. Maybe it's a bit of greed. But I do kind of I like the bet. I think as soon as he took a step back from Doge, I was like, all right, they're going to stop. He's going to disappear from the news, basically, because he's only in the news because they're trying to gin up everyone to get angry at him, to put pressure on them politically. And as soon as he steps back, there's no reason to do that anymore. And surprise, surprise, you don't hear a damn thing about Elon Musk anymore. Nobody's setting his dealerships out. Isn't that funny? Nobody thinks about this stuff. Nobody cares about Elon Musk as soon as he says, okay, I'm going to step back from the government. Why is that, people? Don't you think that's funny? Don't you think it's weird that this dude was just in everyone's feeds for a while when he was combing through the government's affairs? Then all of a sudden he says, okay, you can close the checkbook. I'll step away. And no, now nobody cares. Isn't that strange? Manufacturing Consent. If you haven't read it, go read it. And you don't even have to read the whole book. You can probably read the first couple of chapters to understand the gist. And if you haven't read it, reading those first couple of chapters will probably change the way you see all media afterwards. Let's keep going. I made a ton. Tiago says, I made a ton on Fartcoin, Vic. Been saying this to you for some time. 100% you did. I've seen them. I've seen you say that in here. And sometimes I thought you're being facetious, but some part of me was like, oh, I think he's serious. And I've laughed a couple of times, but 100% you're right, Tiago. And I'm not mad at it. I'm not mad at all. One of these days, I'm just going to come in here and let it ride. I'm going to go Black 13. And we're going to see if we're going to hit. I think that's what happens. I think most people that end up blowing out, they just get to this point where they're tired of waiting. And then they know they shouldn't do the thing, but they do the thing. And then it ends the way you would think it ends. They just go, I'm tired of waiting. And they put it all on a bet. Trying to double down, disappears, and they never come back. I guess since it's Monday, we can do our look ahead for the week. Obviously, it's a shortened week, so markets only open half a day on Thursday and then closed on Friday. I believe the futures are going to be open, though. They'll tick until noon on Friday. So there will be a little bit of movement. We've got some pretty decent data for a light week, a shortened week. Jerome Powell's going to talk tomorrow. Yay. PMIs, ISMs, JOLTS tomorrow. All this stuff is early. I think JOLTS usually comes out on the Wednesday, if I'm not mistaken. I might be wrong on that. But the employment report is going to come out on Thursday. It usually comes out on Friday, so it's a day ahead given the holiday. Mortgage applications, normal time on Wednesday. Motor vehicle sales, we're going to get a bunch of Tesla delivery numbers. Did we already get them? Is that why they had a 2% dip? I didn't catch that in my prep. And I apologize. I should know that offhand. I don't think so, though. don't think they're out, but we should get Tesla delivery numbers. I'm guessing they're not going to be good. Let's see here. Wednesday, with all of the motor vehicle sales, we'll get the delivery numbers. I got a decision to make. Do I keep the risk on, or do I hedge it off? Do we play a little? Do we gamble a little this week? Delivery numbers will be weak, but the question is, weaker than expected or not? I'll read you the headline of this article. Tesla delivery numbers are out this week. Analysts think it will be a bloodbath. That's the headline, I swear. Analysts on average are expecting Tesla's biggest year-over-year quarterly decline ever. Yeah, obviously. So this is, I kind of like these moments, right? I like when everyone expects them to be bad, because then it's in the price. And if they're just not as bad as expected, then you get a rally and people are confused. I love lowered expectations. There's nothing better in the market than lowered expectations. See here, Tesla's reporting Q2 deliveries Wednesday, and judging from the leading indicators and analyst estimates, it's not looking good for the electric car maker. Monthly sales have been dropping across Tesla's biggest markets, including the US, China, and Europe. Why do I do this to myself? The company's most successful robotaxi launch last week isn't likely to move the needle on vehicle sales, obviously, which make up the lion's share of Tesla's revenue. After all, the launch only includes 10 to 20 sort of autonomous cars whose technology is not yet available in the wider Tesla fleet. Ooh, what do we do, chat? What do we do, chat? Jay Powell is now Donna. Whoa. Donna says Jay Powell is dead to me. Why is that? Why is that? I'm down. I like the messiness. I'm kind of liking this whole messiness between the president and the chairman of the Federal Reserve. I mean, say what you want, but people I saw people on Twitter calling him the greatest Fed chairman of our time, and I'm like, that's an oxymoron. Bro, that dude lit our money on fire, man. It will never be the same. We increased the money supply by 27% in 1 year. That's unheard of. Over the sniffles. Don't get mad at me. Sorry, give me just a second. I'm trying to bring up a poly market, and I can only do it on my phone because gambling sites in Singapore are restricted. So on my phone, I can get to it, but on my computer, I'm not. So I'm not just like off texting or something like this. I wanted to get this market, the poly market, for will Trump remove Jerome Powell in 2025? The odds right now are 14%, but they have spiked up to 20%. And I think that's a sucker's bet. I do not think he will remove him. I think he might try to jawbone him into resigning early. I don't think he's going to try to remove him. It's not worth it. The juice isn't worth the squeeze. He's going to get caught up in court. And by the time it's settled in court, his term is going to be over anyway. So I think that poly market for will he remove him at 15%, it's a sucker's bet. So I would tend to sell it. I don't think you're getting paid a lot at 15% though. But if it spikes, like if anytime Trump tweets about Powell, it'll probably spike. You might get a spike up to 20, and then I would sell it at 20. Because I don't think the juice is worth the squeeze. I do think he's going to jawbone him into trying to get him to resign early. I think he will do that as long as he can get away with it. In other words, if he jawbones Jerome Powell into resigning early, and you get a little bit of a tantrum in rates, then he's not going to do it. But I don't know that you will get a tantrum in rates because the market is forecasting sort of a dovish replacement. So it just depends. And I think that's one of the most interesting tells about the long end of the curve right now. That if you take us back to April, when the president was jawboning Jerome Powell, or sort of intimating that his termination can't come fast enough, just the idea of sort of an uncertain monetary policy back in April, at the same time we had uncertain global trade, the bond market threw a fit over that tweet, and he walked it back a couple of days later. If you remember, I think he said it on a Thursday or Friday. Over the weekend, he comes back on Monday, and he was like, "Oh, I wasn't threatening to fire him. I was just saying his term ends in 2026, and that can't come fast enough." So he walked it back, and he walked it back because it created an issue with long-term interest rates. And I think as long as he can jawbone and not have a tantrum in rates, he's going to do it, and he's going to do it more often. And I think there's a little bit of a tell in the fact that we're having that same uncertainty in monetary policy right now, but long ends are not throwing a tantrum. It does really seem like we are in a slightly different demand environment for long end of the U.S. Treasuries than we were in April, ever so slightly. I could be wrong and misreading it. Could be tons of other reasons, but I do think just the termination can't come fast enough line was enough to throw bonds, create some bond volatility. Now he's openly saying, he's flirting with the idea. He's calling him a loser. He's too late. He's like, every day he's riding him, and he's doing it because the long end is letting him. The bond market's letting him get away with it. But if that's true, there might be something to the idea that he might be too late. He might be too late. There might be demand for the long end, which is why I can't wait for September. I really need to get out more, but like September for me is going to be, I'm psyched for two reasons. One, Canelo Alvarez is going to be fighting Terrence Crawford in September. And then two, we're going to get the FOMC meeting, and hopefully we're going to cut and figure out if we should be cutting. I don't really think we should be cutting, by the way. I don't think we should cut. But I'm kind of crazy, and I think we have done so much damage to our economy with our COVID response that we need to normalize it. Otherwise, we're going to live in just a funny money world for the rest of our lives. But nobody wants that. Let's see here. All right. Tom says, I have a propensity to double down again and again and again and again. Yeah, that's a rough one, Tom. I guess the way that I solve that problem for me is I significantly reduce my trade size on first entry. So basically, I almost always assume I'm wrong about my entry point. So if I convince myself that you're picking the wrong price, it puts me in this mental space that says, okay, how many bullets do I want to fire? So maybe that's 5 bullets, or maybe it'll be 10 bullets. It's usually something along that line. So then if I say, let's say 10 bullets, so whatever my max position size would only be acquired after 10 buys. So that means my first entry is going to be 1/10 of what I would have wanted my position size ultimately to be, because I've convinced myself I am going to enter at the wrong price. And so then mentally I'm prepared for lower prices. And also from a risk perspective, I'm prepared for lower prices and to double down or to layer in, basically diversifying entry price is a fancy way to say that. So yeah, that kind of helped me, like psychologically. Just I always convince myself it is the wrong price. And that way, when it goes against me, I'm excited because I get to enter the additional tranches of my position. And I actually get bummed out when it goes the direction I wanted it to because I don't have the largest position size that I want. So in some ways it doesn't pay off because I have smaller positions on immediate winners, but more often than not, I'm able to get off a few more entries and psychologically prepare myself for markets to go against me. Grumpy Mike says, I want 1993 back. You and I both. How old was I? 93. I think I was 7 years old. I think I was in first grade or something like that. We might get 1980s 20% rates. No way. There is no chance. I like 8% rates would basically just clear everything out. It would clear everything out. We are 4 times levered in the global economy right now. There's no chance of getting to 20% rates. Everything would be destroyed. I think at 8%, 8% is sort of like this functional equivalent. Technically, if you think about it, it's four times levered. So it means a 5% rate today is kind of like a 20% in 1980. Sort of. I know it's not exact, and that's not exactly the way we want to think about it, but it is. That's why 5%, it's like everyone's hair catches on fire when we get to 5%, because everyone knows we're in a 4 times levered economy. At high rates, it's almost unsustainable. So if you could imagine like an 8, 9, 10% treasury, bro, like nothing's moving, everything's dead. So 20%, I don't know. I don't even know how you'd get there. That's like, in a movie, I don't know, this is going to get dark, but in a movie, or a video game, you shoot something and it falls down. It's like you don't have to keep shooting the body on the ground. 20% is like shooting the body 10 more times than you needed to. That's a crime of passion. That's what they call those. All right. Let's see if you got any more, and then we'll sign off here. D-Chat says, oh, you got the similar strategy. Minimum of 3 buys to build a position, 50%, 30%, 20%. I do them opposite. So I'm kind of similar. Sometimes I usually do more than 3, and I'll do the smaller end first. Like I'll do the 20%, then the 30%, then the 50%. I don't really use these splits, but if I were doing it, it would reverse because when you get cheaper and cheaper prices, but you're entering in with a smaller position, in my head, I'm not taking advantage of the cheaper price. I'm not scaling my cost basis down as quickly as I could. If I flip it, if I go to 20% and I get cheaper prices and go with a bigger position size, I'm taking more advantage of the cheaper price. Then it goes cheaper again and I get my 50% off at a even cheaper price. I'm taking my cost basis down much more than I would if I flipped them. Catan, Victor, wow, bunker talk. I'm only responding to the comment here. Mark said we might get 1980s 20% rates. I'm just responding to it. I guess shooting the body is the bunker talk. Yeah, I know it was dark. I couldn't think of a better analogy. My apologies. All right, everybody, that's going to do it for us. Shoot my trading account, says Mark. I never averaged down, so we were doing similar. I see. I see, D-Chat. I got it. All right, everybody. That's going to do it for us. This was a fun one. We didn't go too political, I don't think. And we did a lot more symbols than usual. Talked about a bunch of themes. Decent start to the week. Tom Banjo says Tesla's grossly overvalued. I agree. I don't know what I'm doing. I probably need to hedge off that risk. I'll figure out the cheapest way to hedge my downside, leave my upside open. That's what I'm doing. All right, everybody. I will see you back here tomorrow. We're going to have our regular schedule, I believe. So we've got our conversations lined up with Ilya and Chris this week, if I'm not mistaken. So I'll see you back here. Same time, same place, same great network, only on Tasty Live. Until then, peace.